Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday pre-market prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. Today we are being nostalgic. We're going back to our roots and we are reconnecting with fundamentals like our old high school boyfriends and girlfriends. We're reconnecting with our long-lost love of the fundies. And we'll talk about that. We'll talk about PayPal I want to discuss. We'll talk about ARK Invest and their new space ETF. We'll talk about ATVI had a headline. Tesla had a headline. What else is new there? There's always headlines with Tesla. More fallout from this Archegos blow-up thing. I think I saw some estimates that Credit Suisse would lose as much as $7 billion. I don't think they even know how much they're going to lose yet, but it's going to be a lot. Two guests on the docket for today. First up at 8:35, Joel Kalina, who is the head of technology and media trading at Wedbush Securities. He is great. He will join us at 8:35. And then Jay Young, president and CEO of King Operation, an oil and gas firm, will join us at 9 to talk energy. That being said, everyone smash that like button. Joel, bring up those charts and tell us how we are doing in the pre-market session.
Oh boy, I'm almost worn out from the pre-market show, man. You guys had me in stitches there. But let's look at the S&P, and we were doing okay, and then we fell apart here around 7 o'clock. We're down 13 1/4 handles at 39.45.75. I'm just going to call this whole 39.70 area, 70.78, super extra major resistance. That pre-market low, 43 1/4, folks. I don't see much down until Monday's low at 28.75. Crude down $1, but still over $60. We're down $1.01 at 60.55. With gold, I hear some of this forced liquidation is kind of leaking over into the gold market. Gold down 25.80 at 1688.90. Silver marching towards 34. That's down 46 cents at 24.32. And Bitcoin, what's bad for everything else must be good for Bitcoin. This thing will not go down. It's up $1,750 to 59,950. Before I bring Triple D in, I just want to say that everything I say is strictly for informational purposes only. I am not myself today. I got a Michigan game at 10 o'clock tonight. It's a pajama game. I'm going to be a nervous wreck the entire day, and I'm going to have to stay up past midnight. So for Michigan to make it Final Four. So please take everything with a grain of salt that I say today. You should anyways. You should do your own investment research and consult your own investment advisor. Triple D.
What's up?
What are you seeing? What are you seeing out there? I mean, did you get to your desk in time? I hope you got there by like 7 o'clock because we've had a pretty decent sell.
It's just Groundhog Day. It's the same stocks getting hit every single day, and it's the growth names. I mean, they're oversold. They've been oversold. We've had a couple little bounces, but they continue to be oversold, but they're oversold for good reason. A lot of these growth names were trading at ridiculous valuations. And you know what? This is the market that is reconnecting with reality. And the similarities back to March of 2000 when the tech bubble burst there's so many similarities. What happened was, and everybody thinks, oh yeah, we just crashed. That didn't happen. It took over 1.5 years for the NASDAQ to fall the 81% that it did. It was a slow cascade. We called it death by 1,000 cuts. Every day you'd come in and Lucent Technologies would be down another 3%, the most widely owned stock back then. You know, every day you'd come in and your growth names would be down a little bit more. And you're like, okay, they're going to come back. They're going to bounce back. And also what happened early in that, which people don't realize, is that they flocked out of the high PE stuff, out of the growth names, and they flocked into the value names. They flocked into safety trade. We're going to move safe. And then what happened a couple months later? Everything rolled over. And that was because you had the growth names that just could not catch a bid. Stocks that were trading at 70 or 80 times earnings couldn't catch a bid. So then what you have is portfolio managers coming in and starting selling good stuff to raise money for their bad holdings. So, I mean, this could just be getting started, this party in the growth names. It could also be 1998. And maybe we're going to, bounce back here. Maybe this is just another dip. But it's been significant enough and long enough now in some of this PE stuff like Zoom that you start thinking, I think, that it's coming to roost. Tesla, same story. I mean, you look at the company. Yeah, the story was awesome. We've been trading on story for a year, not caring anything about fundamentals. But at this point in time, we are starting to care about valuation. In the last 2 months, you can definitely see the rotation. We're starting to care about valuation and fundamentals. So this market is reconnecting with valuation. And you know what? Valuation matters to this market all of a sudden. And you know what? There's a lot of stocks still trading at ridiculous valuations. If you're in a stock that's trading 50 times sales, if you're in your DoorDashes and saying, well, the stock is cheap, it was $200, now it's $129. I mean, is it cheap? Do your homework on your stocks. Crunch your numbers, because your CFA hat didn't matter 3 months ago. It sure as hell matters now. So, yeah, people are going to say, well, what about GameStop? There's always going to be outliers, but, GameStop will eventually come to roost too. So I think this is the market where you actually do some fundamental research and you buy companies that are at reasonable prices. Like, look what I've been buying. Lockheed Martin.
That was a great call.
Everybody laughs, and say, Lockheed Martin. Who the hell wants to own Lockheed Martin? When I was buying it at $325 or $330, I paid $330. But when I was buying that, and I took heat, it went all the way down to $320. I didn't get the bottom, but I was like, you know what? Reasonable valuation, dividend, space. Kathy's, we talked about Kathy's. This will give you a segue into Kathy's ETF on.
Before you do that,
yeah,
you brought up a term, and in two terms here. And I don't know if you're day trading, you're swing trading, or long-term investing, but if you're looking at a chart on something and you're saying it's oversold, it's got to bounce, or it's overbought. Those are two of the probably most misused terms on Wall Street, because something can stay overbought for a really long time and something can stay oversold. Yep. So you got to have a hell of a lot better criteria than saying, it's oversold. Like, yeah, you can jump in Viacom here. It's oversold. Well, you know what? There are people that bought this in March.
It was oversold at 70.
Yeah, and it went to 100. So just maybe we should ban that term from the show. Overbought, oversold. It's so nebulous. But go ahead. Let's go into.
I mean, I use it just because it's the timing of it. I'm waiting for that rip to sell. I hate selling on dips. So I'm like, when something's oversold, I'm looking for that rip to lighten up. And every time we go up on the cues, every time we get that rip roaring rally like Friday night, I'm selling more growth names. I'm selling more names because I have the barbell approach too. I mean, my barbell's always leaned more value, so my portfolio obviously doing very well with a lot of value names in it right now. But I've got some of those smaller growth names too. I had a little bit of those, and I lightened those up for the last month. And I've been talking about every day on the show. So, I'm not hurting as bad as some people, but don't kid yourself. I still have a couple of those growth names. I still kept a small piece of the Fisker. That's been garbage. I have a couple other EV plays. Those have all been garbage. It's difficult to just come in here and say, okay, now is the time it's going to turn. And if you've been trying to time the turn, you're not doing well. If you're doing the Kathy Wood style, though, she is just buying the growth in the high PE stuff continuously. She bought 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 25 names yesterday. They are all high PE. So she's all in. She's not going to change her investing style. She's growth at any cost. And it's hurting right now. It's hurting. And is it going to turn? It could. Like, I'm not saying, that Kathy Wood's party is over. But if we are in April of 2000, where we've seen the top, but we don't know we've seen the top, because it didn't just happen suddenly. We got to go back and look at history. If we have topped out in the high PE stuff, and if people all of a sudden matter about valuation, can Teladoc continue to go lower? Absolutely. Look what they hit yesterday. They're starting to hit the growth names that they haven't hit yet. I mean, Penn Gaming had a terrible day yesterday. DraftKings, which has been holding up till 5 days ago, made a new high 6 days ago. Down from that high in 6 days.
People are out of money.
74 to 50. They're not out of money. They're not out of money. They're just rotating out of this stuff. They're starting to say, hey, I'm not making any money. I mean, we used to just say, I'm going to buy this stock because I think Kathy Woods, if it's down significantly, Kathy Woods will come in and buy it, and then it'll get announced at night, and it'll pop up the next day. Well, let's look at Kathy's buys from yesterday. DKNG. It's actually up. So DKNG is getting the Kathy pop. So I was about the first one to look at.
Yeah, I mean, look at the day that it had yesterday.
Yeah, but that's up because of Kathy. Teladoc is down. So there is a few Kathy pops in here. U is down. Square doesn't care. Shop is down, doesn't care. Roku's up. Maybe that's with Kathy. I don't know if there's another news there. It's up $4. So she still have a little bit of influence in here. But when we were talking about Kathy Woods 2 months ago, she'd buy a stock and it popped 10%. Some of these smaller names, some of the smaller ones. So we're not seeing that now. And you know what else we're not seeing is you look at Jim Cramer and you look at Mad Money. He'd feature one of these SPACs, on Mad Money, and the SPAC would pop 20%. Think about the tweets, I was tweeting back 6 months ago. This SPAC comes on, and boom, it's popping 20% because it's being featured, and Jim Cramer says it's a buy. He pumped that BFT last night relentlessly. I mean, he is saying this is not like the other SPACs. This is a company. This is fully. Kramer was, and he may end up being right. Maybe this is going to be one that we want to own. But, he was just relentlessly pumping it, and it's up 20 cents. I mean, that's telling you that people have been burned by growth, and they're staying away from those names right now. They're spooked. The market is spooked to just go and grab any SPAC right now. That's why the SPACs are really struggling. So the question is, how does this resolve itself? And I see one of two ways for the overall market. I see one of two ways. So there's two ways this could happen. One is all these growth names start to bounce back and it carries the markets to new all-time highs. Or two, growth continues to leak like it did in April and May of 2000. By growth, I mean the higher PE stuff continues to leak. And then what happens is portfolio managers start selling everything else to raise cash. And then the whole market rolls over. So I don't know which scenario is going to come. Like I said, growth is overvalued for a long time and oversold right now. So we are due for a bounce, and maybe we'll get another bounce, and maybe we're going to get taken up, to S&P, over 4,000 here, because why not? We've come this far. I kind of think the SPY could hit 4,000. It's definitely not a bear market in SPY, but there's a bear market in a lot of these growth names. So it's difficult to say what you do. I think you still take the approach. You have a little bit of growth. I like the value a lot more. I'm probably 75% value, maybe 80% value, 20% growth in my longer term portfolio. I was probably leaning a little bit more, probably 40% growth when we were really pumping, but definitely underperforming all the other growth names. So the question is, how, first of all, your own position. Do you have cash? I hope you do have some to, spend on. But am I coming in here and buying Lockheed Martin now? Are you coming in here after, it just run $40? No, I don't think so. I'm not chasing any of these names here because these ones could roll over too if, the whole market rolls over. But I'd rather have my money in a Lockheed Martin right now than a Teladoc. So, but everything could turn quickly too. Just as we are right now, though, anything with growth is highly out of favor. And because the valuations were just ridiculous.
Q, Spencer.
I talked for a long time.
I didn't realize that was me. No, I didn't realize that was my cue. There was a couple of things I wanted to add, but then you kept going, and then I sort of forgot where I was going to jump in.
You got to take notes when Dennis is on.
Yeah.
So you know where to go back to.
Yeah.
We were going to do.
Nobody listens to me anymore. Nobody listens to me anymore.
No, it's not that no one listens. It's that I kept listening with me. If I had stopped listening, I would have. Okay, this is what I wanted to add. But then you kept on going, and then I forgot what I wanted to add. So
you got to just interrupt them.
Yeah, we can go to Kathy. Since I don't remember what I was going to say, we can just go to Kathy because we were just talking about that on the pre-market show. Maybe we'll get to the space thing in a little bit, but I'm more looking at the amended filing, not filing, that's the wrong word. The amended prospectus from Friday. We did not discuss this yesterday. They quietly, well, I mean, not quietly, intentionally, but I mean, it's naturally quietly. I think this is naturally quite the thing to do. They amended their prospectus to say two things. They made two changes. One, they said now we are getting rid of the limit, whereas an ETF, one of our funds, can have a 30% weighting to a specific stock. And two, we are getting rid of the limit that said we cannot own more than 20% of a company's total outstanding shares.
She wants to go all in on Tesla,
and that shouldn't really be a surprise because what has she been saying in recent weeks? She's said is, hey, if we get into a contraction, a period where growth is out of favor for a prolonged period of time, how are we going to survive that? We're going to consolidate. We're gonna go more into the names we believe in, and we're gonna cut the crap. We're gonna cut the dead weight, right? Man. That's basically what she said. Is we're gonna consolidate into the strongest positions. So they can't really do that with a 30% limit on any fund weighting, and a 20% limit on owning any one company's outstanding shares. So that being said, I should note that they are currently nowhere near having 30% of any one fund.
How would you want to disclose? I mean, even if
she wants to be able to do whatever she wants.
Well, they have to.
Oh, I mean, oh Jesus, Murphy. Okay, let's tell everyone. I got
no. They have to, and props to somebody for noticing that. Whoever it was that noticed that. But I should add that. So they amended the rule saying, yeah, okay, so now we're allowed to allocate more than one fund, more than one position to 30% of our fund, but they're not anywhere close to that. Currently, the largest holding in any of their funds is about 10%, right?
The Tesla?
Yeah, it's Tesla. ARKK has about 10% on Tesla. ARKW has 10% on Tesla. ARKF has 10% of Square. And ARKQ is 10% on Tesla. So they are not anywhere close to the 30% bogey.
But she wants to, if it's going gets tough, she wants to be able to go all in on Tesla. I mean, one, she obviously is starting to say, I'm not going to diversify as much here because I'm getting slammed in all this small crap that I keep buying.
Right.
Which she is. And then, two is just, she really believes in Tesla. She said, what's her price target, her new price target?
Well, she gave a few, right?
Like $4,000. Her bearish price target's like $2,000. She's so much a believer in Tesla that is this good for Tesla? Is it, this is under the radar here, but if she's just going to start buying the stock hand over fist,
3,000, I guess, was like the main.
Maybe she can push it up too. I don't know. We had the Kathy push already, and the market laughed at it. Obviously, when
that was $100 ago.
Yeah, when it was 660 and went to 700 because she said it was going to 4,000 with that day to 700, and then it just went straight down since then. It's scary. I mean, this is against everything that I've learned in trading. That one, I like to stay diversified. I like to control risk. But if you're just going all in on growth and you're going all in on what you believe in,
you probably shouldn't be all in on growth. Is I think the point.
Well, she is all in on growth though.
No. But if she just runs a fund as an investor, you probably shouldn't be all in on growth, right? Like like Kathy's filings, they say that, right? Like these are growth funds. We are.
Yeah, she has to stay growth because she's a growth investor.
We have concentration risk, right?
Yeah.
If you own 100% of your net worth into growth ETFs like ARK or similar, that might not be the best thing to do. So yeah. So let Kathy be a slice. Don't let Kathy be the whole thing.
Another thing weighing on this market too, and I know I've kind of been poo-pooing this, but that 10-year yield keeps like creeping up. 1.6, 1.7, and I've always said, oh, why are people going to pull their money out of the stock market to get 1.6, 1.7, 1.8? Well, when you got the market going down, going down 5-10%, maybe those 10-year treasury, maybe 1.6, 1.7. I don't know what it's going to take to do a huge re-asset allocation, maybe 2%. But and also like the whole street, everybody except Jerome Powell's convinced that, rates are going up and we have rampant inflation, which can be a two-edged sword for stocks. But you got to keep an eye on that. I mean, interest rates, they're moving up, and that is competition for the equities markets.
Yeah, it's competition, but I think the rates are still so low. I'm not that concerned about that. I'm just concerned.
Neither am I.
I'm
but
more
it's
concerned
another
that paying 70 times sales or 50 times sales, not 50 times earnings, 50 times sales for companies like Zoom. I mean, it carried so much on the story. Everybody's the hype, and we were saying story that all that is all that matters. You had obviously Citron, Andrew left on our show saying story is all that matters. This was the market we were in 3, 4, 5, 6 months ago, even 2 years ago. We're not in that market. We're not in Kansas anymore. And you know what? Story is cool, and story might carry a stock for a day, but it's not carrying the stocks like it used to. It's not, like you get Kramer featuring a stock for the first time, people are hearing about it for the first time. It's not popping like it used to. And that's because everybody's telling their story in social media, and they're telling the stories everywhere. We got story overload. I mean, there's just story overload on a lot of these stocks, and people are back down to the roots, the grassroots, where you have fundamental analysis that actually starts to matter. So I just cannot fathom paying some of these prices for some of these stocks. So
Dennis, that's arguably a good thing because
I think it's a fantastic thing. I love this.
Yeah.
I think it's a fantastic thing because the markets need it. Makes me more confident that the process works.
Yeah.
It's been so long that I've been like, I did my CFA. I've been like taking my CFA hat and throwing it out here for the last year because it hasn't mattered. I'm like, I can't think about valuation. I just got to think about story, because that is what drives price right now. That's not the way it is anymore. I mean, you look at DoorDash. The story was cool. Yeah, they deliver, but we've talked about this, and we're like, well, how long is it before, one, competition comes, and two, how can they sustain those margins, and three, are they even making money? So when the stock goes from 220 to 129, it's deserved. It was deserved. And you know what? If it falls in half again from here, it's probably deserved. It's nothing wrong with the company. The company's done everything right. It's wrong with the investors that they were paying ridiculous prices for companies that were never going to be able to meet those higher expectations. I mean, Airbnb might be the same thing, although I do love Airbnb's business. And I do believe this is a game changer for the hotel industry. And this is why I hate the hotel stocks. I absolutely Hilton, Marriott, the runs that these companies have had, this is ridiculous in itself. For Hilton to be trading at new all-time highs when we still have a pandemic and we still have Airbnb eating their lunch,
that's a good
is ridiculous. So, Airbnb, I like a lot better than a DoorDash. It's still a crazy valuation. I can't pay it, but I can get behind that. I think Airbnb is a real disruptor. I think there's going to be a lot less people, there's going to be less business travel probably going forward, but there's less people. When I go on vacation now, we look for an Airbnb. We don't look for hotels.
We look at one.
It's cool. Yeah.
Yep.
Why is Hilton at all-time highs? If I was in Hilton, just my opinion, if I was in Hilton, I would be selling it as fast as I possibly could. I think Hilton at 119 is insanity. This is higher than it was before the pandemic started, and they still have Airbnb eating their lunch. Marriott, same story. All these hotels, because we're all in on the reopening trade. Everybody's going to flock to hotels.
Cases in Michigan are just going through the roof. I don't know about
the Airbnb. Well, real estate, Airbnb, but I mean, is the hotels full? The hotels are allowed, and maybe they're going to be. So maybe cases. We're going to run.
I'm talking about COVID cases are going through the roof.
Oh, well, that's a whole nother story.
Yeah, we won't even go into that.
But, I mean, there's other things to worry about. We haven't been talking about COVID on this show for a long time. The variant, if the reopening trade fails, that's going to be ugly for everyone. I don't want that to happen. I want to get back to normal. I want to be out of here. So I don't want to talk about that scenario there. All I'm talking about is a scenario where prices are stupid. And prices got stupid in so many of these higher growth names, but prices are also stupid, I believe, in some of the names that don't have super high PEs. Hilton's PE is probably not crazy. I just don't see it as like this business that's just going to take off. We might get a little lift from the reopening, but Airbnb is still there. And Airbnb is still kicking ass and taking names.
So again, just to sum up this entire thing, it's one, maybe have some cash, and two, you should be rooting for a pullback in the companies that you like, not the ones that in the disruptors, and the ones that have a future, not the ones that like high valuation, like story stock. if you still like Airbnb is a high valuation story stock, so you should be rooting for a pullback in that more so than you should be rooting for a pullback in TripAdvisor or Hyatt, Hilton, Marriott, etc. Jordan Restaurants I just seen chat, right? Another one, right? That's how I would approach this. I never bought Airbnb and I'm pissed off and I wish I had. So I'm rooting for a pullback.
I think you're gonna get another shot.
I would gladly scoop up some Airbnb shares.
Those names, like I feel like an Airbnb is one that I would scoop up if it went significant pullback to. You're not going to get it at like a P at 30 or 40. And they don't make. I don't even know if they make money here yet.
They don't.
You can project it out though. I feel like an Airbnb is like one of the growth names that could be like an Amazon. Like it's thrown out. Maybe we really get ugly. Maybe we don't. Maybe we just start rallying from here. But I don't want to pay $182. But if Airbnb came down to like $100. If it got ugly, scenario analysis, not saying it's going to happen because somebody will go say something. Oh, Dennis said Airbnb is going to $100. I don't know where it's going, but I'm saying if it got down there or even back to the 120 where it kissed back, back in December, that's the kind of stock that I would buy because I believe in that company and I believe it is a game changer for the entire hotel industry and not in a good way for hotels. So that's why I hate hotel stocks.
But to be
clear, hotel stocks before the pandemic.
Yeah,
they might get full. These hotels might fill up, and they probably are going to fill up right now. And everybody's like, "Oh, the hotels are filling up." That's good news, but you're already paying an all-time highs for them, and they're not full right now. So you're already speculating that they are going to fill up.
So in this specific instance, Dennis is talking about Airbnb, but that's a proxy. It could be anything, right? It could be anything. So how would you approach that? Whether it's Airbnb or insert other stock like Snowflake or insert growth stock that you like that's a little bit pricey right now. How would you approach that?
I don't know. I'm arguing with somebody on Disney because they're saying everybody likes to call out all my bad calls. Yes, I was bearish Disney at 120. Yes, very much so. I didn't understand. This was back going to March and April and May, and I didn't understand why Disney was holding up as well because the parks were closed. But if you remember correctly, 6 months ago, I turned bullish at 130 because I said that we got the day the vaccine came out. I was bullish Disney, and I was so upset that I didn't get it long, and I was trying to buy it. I had orders out there to buy it at 130, and the vaccine day when it gapped up back in November. It was November, sorry. It was November.
November
it gapped to 147, and I was hoping it would pull back to get it. Because, one, I do believe in Disney long term. Disney isn't going to be, maybe some of the hotels, but for the Disney just does everything right. So if we were going to reopen, if we were going to full reopening, I wanted to be long Disney. Am I buying it at 184? No. Disney comes back to 160, I will buy it. So, I mean, when you tell a story to everybody in the chat and say, Dennis has been bearish Disney at 120, sure. Back in July, August, definitely, I didn't get it. But, once the day they said the vaccine is coming out, everything changed. What did I was saying that day, not that day. There was 4 days later where we pulled back. Remember, Joel? We pulled back.
Yeah, I got the chart.
And I bought Norwegian Cruise Lines, and I bought Wynn, and I bought, and you could go back and listen to the show. I didn't buy it on the day we gapped up. I waited for the pullback. I bought American Airlines, and I bought all these. I couldn't believe what my portfolio looked like with all these reopening stocks. And I was like, I hope this vaccine works, or I'm going to get crushed. And I've sold out a lot of those names because, me, I sell too soon. But Disney, too. I would have loved to have Disney then, too. So I turned bullish the day that we had the vaccine announcement back in November. So, now these stocks have run so far. I mean, but then you look and actually some of them started to come off again too. So is there a buy on some of these at some point in time? Maybe. The whole point is just don't chase stocks and don't think you're not going to get another chance. This is not the environment. You need to chase your stock.
So again, I'll re-ask my question. Assuming you have a list of names that you like, whether it's Airbnb or not, could be whoever, how would you approach that going forward? You would just wait for a pullback?
Well, you can sit down and crunch the numbers, do projections. My buddy Chris Banier does this. He's an excellent trader, excellent investor. Chris sometimes listens to the show. I'll give you a shout out there, but you're never going to hear of this guy. But this guy just quietly makes a lot of money in the background, and he tries to buy growth at a reasonable price too. He figures it out, and he's looking at, okay, well, if it's growing at this rate, just doing the simple math, and it continues to grow at this rate, how much money could this potentially make? And is it reasonable enough to pay the current valuation? I've not done that math on Airbnb. I'll probably give Chris a call because he probably already did it. So why do I need to reinvent the wheel? let's let you know what's the math that you're showing on Airbnb, because he crunches it on all the big companies. And is it reasonable? He was the one that, when Apple started taking off 7 years ago, we should bring Chris on the show, but when it started taking off, when did Apple really start taking off? Like 7 or 8 years ago? It was in the gutter for a long time.
Well,
but people were saying, oh, you can't pay. And he was just projecting it out. And he's like, when he got bullish was when they came out, not even with the iPhone. So it's all going along. It was after iTunes. When they came out with, it
was the iPhone.
But no, he was bullish before that. When they came out with that, what was the product before the iPhone?
The iPod?
Yeah, the iPod that had all the pictures. Like
the iTouch. The
iTouch screen.
Yeah, okay.
He's like, this is the coolest thing I've ever seen in my life. He went out and bought one that day, and he was playing with it and showing it to me. This was like when the iTouch, was like one of the first people to buy it. He's like, this is the coolest thing ever. He's like, this was before the iPhone. And he's like, he was just loaded up on Apple. Like as much like calls, everything, like all in on Apple. And you know what? He probably made his entire life off that. I don't know how much money he made on it, but he probably made his entire life on that. But just, that's the idea is, you find the product and you're like, okay, well, this is, the future. It really is. And you really believe in it, but don't pay ridiculous prices for it either. So he's crunching numbers and saying, they could eventually get to this, and then they'd be making a lot of money. And we're talking when Apple's probably on a split adjusted basis at about $5. So now you're looking at an Apple 126, and he was the same thing with MasterCard. He gave me MasterCard back in 2010, just doing projections and saying, this company can make this. My average cost basis, I bought it just off of Chris's recommendation. So thank you, Chris. My average cost basis on MasterCard is $11. It's $362. I'm averaging at $11. So, I mean, the long-term investing on good companies can work, but you got to have, reason for it. So you got to do the numbers on Airbnb, and can it get to that level where the valuation makes sense? If it can't, you don't touch it. If it can, you do. So we didn't have to do any of this stuff in the last year because valuation hasn't mattered. I'm telling you got to do this homework now, because valuation going forward is likely to continue to matter.
Do we want to do the Kathy ETF before we bring on Joel?
Oh yeah, let's do it quickly here. I'll bring on my screen. You can see, if you didn't see it by now, there are the holdings as of this is as of today, I guess, as the fund is going live today. So cool. I saw some couple things online, speculations that these are just placeholders because they know that people know that there's no cash in this fund. So some of these are going to change. People think, I don't know. We'll find out when it launches. But a couple of weird things. Obviously, there's a lot of e-commerce in here, which is strange. JD's in here, Alibaba's in here, Amazon's in here, Netflix is in here. That's weird.
And the space fund.
I'll get there. John Deere is in here, which is strange. Workhorse is in here, and then the creme de la creme for the weirdness, if it's not Netflix, it's number 2 right there, PRNT. The number 2 holding in the fund is their own passive 3D printing fund, which is strange. So a bit of ARCception happening within the ARC universe here, an ARC within an ARC.
Did she release this? This is what she released?
This is what they released.
Okay. So these holdings are so small. Like, I'm looking at something's not right, though. Something's not right here, because you look, okay, she's got 52 shares of Google, but that's $106,000. And she got 300 shares of Deere. It's 300. I guess we are at that point in time. I guess Deere is $364. But anyways, so she's going to load. So is she going to be buying in these weights going forward? Like, this is a small amount of money. So you're not talking a big amount of money here.
Right.
So when she's only got 300 shares or 52 shares of Google, so maybe these weights are going to change significantly. So are we going to see like huge buys in all these stocks today when this goes live? I'm
not totally clear on how the fund launch process works. Maybe Joel Kalina knows. Maybe not. But they, funds launch with money. It's not like they launch with nothing. They already have. They already have assets, so they would have had to already go and buy. Is how I understand it. But again, I'm not an expert in the fund launching process. I think it was not so much playing that they would have had to already buy or that they're going to buy. It's, hey, they're going to, like, in the future, they're going to keep buying, right? Like this is like, it's basically like a Kathy endorsement or not. Like in the case of Maxar, right? MAXR, which is not on this list. It's like,
that's a weird one not to be there.
It's like an endorsement or it's not. It's how I think the market sees it. It's not, they're not looking at this, like trying to front run or chase Kathy. It's like, Kathy believes in this. Kathy doesn't believe in this. It's kind of.
I'm gonna steal one from Vegas here. Is Spacely Sprockets on the list?
What?
Nah, you guys are too young to know what that is.
Sorry. Sorry, Joel.
Spacely Sprockets, Flintstones, Mr. Spacely. You guys don't remember
Well,
that?
Mr. Spacely, I wouldn't.
Or was
I
that?
didn't
Or
know
was
his
that
last name was
Jetsons?
Sprockets.
Or was that Jetsons? Jetsons.
Jetsons.
Which one was it?
Jetsons. It's got to be
Yeah, what am
Jetsons.
I-
There wasn't space in the Flintstones.
Yeah, what am I thinking? Flintstones.
Prehistoric. It's got to be Jetsons.
I'm thinking about Mr. Slate.
Come on.
Yeah.
And the dog Astro.
Let's bring on Joel Kalina on, the head of technology and media trading at Wedbush Securities.
Yeah,
Joel,
I messed that up.
Joel, you messed it up. What's up, Joel? Other Joel.
Hey, good morning, guys.
Do you have anything to add on the Flintstones Jetsons snafu?
Oh, yeah. I mean, that's an error by Joel. It's 100% Jetsons. He did correct himself.
I love the Flintstones, though. I love Barney Rubble. Go ahead.
So yeah, it's definitely Jetsons, and a fitting way to with the Cathie Wood Space ETF. As you said, the sizes look extremely small in terms of how much money is being at least implemented to kick off this ETF. But I mean, baffling to say the least. And had a lot of comical conversations with some of my clients yesterday, as you guys just kind of ran through some of the holdings of this, and it's baffling to say the least. And this kind of adds another bizarre element to the Cathie Wood story. Clearly she was a superstar going back 18 to 24 months, and it's unraveling a little bit. She was a hero on momentum, disruptive tech, and clearly the market has been telling us a completely different story over the past 3 to 4 months.
Wait,
Well, we didn't really go into it, but what about some of these holdings? I mean, she's got deer in the space ETF. I'm trying to put it together. I guess there's going to be farming on Mars maybe one day. Is this where I like? She's really thinking outside the box here. And I don't understand why we need tractors in space.
Potentially, then Netflix, right? Netflix has a few movies about outer space, so maybe
there's a connection there. Yeah, Jimmy, we can get the Jetsons on Netflix.
No, but I have a serious question. Joel, is we noted the small size in some of these positions. Is that a reflection of the assets that ARK has raised for the fund's launch?
I believe so. I'm not 100% sure, and I'm definitely not. I can't, say I'm very well read on her process as well, and when she initially launches an ETF within her suite. So I can't kind of speak to that, but it seems like those are the horses she's going with in the near term, and kind of she'll continue to kind of back those names and probably adjust as maybe new kind of names become public or whatnot. But that's kind of just seems like the starting point.
What do you make of the ARKception thing, the print 3D printing? Like, Netflix is whatever, we can all make fun of that, but I'm sure you can make an argument for anything, right? But the 3D printing thing, the ARK fund within the ARK fund, what do you make of that?
I mean, that's the thing. It's all of this is very baffling, and like I said, I probably that name and that holding specifically came up, probably 2 or 3 times in a couple of conversations yesterday, and people are trying to figure out what is actually her strategy moving forward. I mean, we clearly her family of ETS has seen outflows in over the past kind of several months, and the ongoing takeaway has just been a lot of head scratching, right? Like she's selling her large mega cap names, the higher quality names, the Taiwan Semis, Alphabet, NXPIs, to kind of buy more, as you mentioned earlier in the show, Teladocs, the Squares, the Tesla, the Bitcoin, the Zooms. I mean, these are broken charts. I mean, Zoom is beyond broke. A great story stock from 2020. It's just not going to work in 2021, and we still have 3 quarters left. I just don't see, and we're yet to even face the massive comps from COVID.
No way they're going to meet those comps. There's it's going to be impossible comparisons from everyone was signing up for Zoom, a year ago.
Yeah, but the market knows that, doesn't it? I mean, we're not that.
Yeah, that's why they're taking it down.
Yeah, and that's why every rally gets sold. Almost, rallies are becoming a lot more shorter lived than ever before in a lot of her stocks. And again, look at the 10-year again. We had touched 177 earlier this morning. You have Biden making his big spending speech tomorrow, so that's obviously putting upward pressure on yields once again overnight. There's just really no appetite for any of these stocks, which honestly makes me think we're getting close. You can start dipping your toes into the higher quality names. You guys mentioned Snowflake earlier in the show. I think you can look for good management teams, high quality businesses. But man, like you look at names like Unity or AI. Tom Seibel, is recently launched IPO. The stock was, I think it debuted at 100 times sales, hit almost $200, and now is trading in the 60s. It's amazing the lack of a bid towards any of these names, which does make me think we are probably getting close to the bottom for some of them. But the story stocks, the Pelotons, the Zooms, these names just massively outperformed in 20. I wouldn't touch these with a 10-foot pole. Not right now, unless the tape tells us something differently. I'd rather buy them when the momentum starts going the other way.
Joel,
Go ahead.
No, you go for
We're
it.
on the line with Joel Kalina, head of media trading with Wedbush Technologies. What a day to have you on. Let's talk about the fallout in Viacom and Discovery and that sector. I know you were sending notes around earlier in the week. I mean, are these things just going to bounce right back? Is this like, Viacom, $100 last week, 2-for-1 stock split? Are these things going to settle in and go back up, or is the story over? And just get your take on these block trades, these institutional trades, when they're going through the preparation that the House is doing in front of those trades.
Well, I mean, clearly the prime brokers of the family office, of Billy Wang, just talk about lack of risk management, to say the least. And I know the brokers got together last week, and there was a few that were ahead of the curve. Goldman and Morgan Stanley. It looks like they were selling these blocks of stock during their conference call with the other brokers. I mean, their losses are reported to be very minimal. And then here you go, Credit Suisse staring at a $7 billion loss, wiping out 2 years of profit. Nomura is staring at a massive loss. Deutsche as well. I thought they got out of the equities game and even prime brokerage services a little bit. And Deutsche is going to take a hit as well. I mean, this is bizarre. I mean, obviously, it really mirrors what we kind of saw in 2007 on kind of the subprime side of things. It's just kind of scary how this is really the second kind of catastrophic event. I say that with, obviously it's not a natural disaster by any means, but a second big blow up within the, the finance community about, hedge funds that have gotten too levered up in concentrated positions and crowded positions as well. And when things go wrong, there's no way to get out. And I think Viacom, the trigger for Viacom was clearly the $3 billion share offering that was announced last week. And there's only one good trader, of this whole thing. And it's been the CFO of Viacom. Fair play to him. The stock was definitely at a level where it shouldn't have been from fundamentals. And he took advantage of it and sold $3 billion worth of stock around $85.
Joel, don't you feel a little vindicated? Because I was reading your notes all the way up, and you were just as baffled as me. Like, no one understands why Viacom and Discovery and even Fox are going up, and we don't get it.
Yeah,
and now we get it. So.
Yeah, exactly. Now we get it, and sometimes it's after the fact. I mean, I heard of a lot of conversations over the past month, and I was calling up guys, some at the larger kind of mutual funds, and really just kind of understand what is going on, what are you seeing, and really people mostly thought it was due to passive inflows and just kind of or big sector more rotation driven, right? With into value out of growth.
Well,
and because everyone knew Discovery and Viacom both held their separate streaming events. And they're not revolutionary. They're not going to be game changers by any means.
Right.
So to see these stocks go from 30 to 40 to 50, then, obviously then the big gap up. Now we know why. So are these stocks going to go higher from here? I don't know. I wouldn't touch them because you still look at the streaming landscape. You have Disney and Netflix, hands down the top two. And there's going to be so many players at the bottom, and which you're going to think their services are going to continue to face significant churn on a quarterly basis as people flip-flop between, Paramount Plus or Discovery or HBO Max, but everyone's going to have the Disney Plus and Netflix on kind of in their family kind of rotation. And the others are just going to be, at the mercy of whatever, the sentiment is that given month for a household. So I don't see them as real players. I'm still pretty negative on old media. And again, a lot of people were wrong, but at least the shorts finally got a little bit of a get out of jail free card here with the pullback in Viacom.
All right, a couple more quick things for you. As far as this global semiconductor shortage, can you real quickly tell us who is sort of like at ground zero of this? What would be the best way to play that?
Yeah, I mean, the bulk of the issues have been in the automotive industry, which everyone knows by now. It still feels like on a daily basis, you have one auto OEM coming out and talking about a plant stoppage for 1 or 2 weeks. And then you had a plant fire at one of the world's, I think, number 2 or 3 auto supplier, Renesas out of Japan. So that's kind of adding, more kind of headaches to it. Yeah, the big, Texas weather disruption in February, which kind of knocked off, fabs for Samsung, NXPI, and Infineon. So the automotive sector has just gotten crunched. You had NIO was the first Chinese kind of EV play to come out. and kind of highlight these shortages are going to impact their production. So that's kind of an issue there. Then you have Foxconn this morning. I haven't read too much about it. We're trying to get some more checks from the ground. So Foxconn, obviously a huge supplier to Apple, they're out there warning, saying that these shortages are going to impact a lot more than just automotive. They could linger down to through smartphones, through PC chain. So that's something to keep an eye on for me. But one thing I do know is that continued supply tightness, it bodes well for pricing, and it bodes well for margins. So whether it's the PC makers all had a big move overnight, so it's going to benefit really the names like Infineon, Texas Instruments. And really, who I love is the semi-trade. I mean, it's a very simple, straightforward thesis. The semi-equipment players, and this follows, Intel's big kind of capex plans announced last week. They're the arms dealers for the global race for dominance in AI and 5G. You can see continued migration to more advanced nodes from 5 nanometer. Taiwan Semi is going to 4 and 3 nanometer, increasing chip complexity, lifting 5G handset builds. To me, semi-equipment is where you want to be. And especially as Intel, I don't know if I'd, buy Intel here because I still think it's an execution story, but you can invest in Applied Materials and get paid that way and see if Intel actually succeeds. Because AMAT will make money regardless if Intel becomes a real foundry player or not.
All right, I just had to put down my thesaurus there when you were talking about the chip stocks, but before we let you go, I mean, if you just tuned into this show, you were listening to us at the top of the show, you'd be like, man, these guys are the biggest bears on Wall Street. And not so much you, Joel, but, they're talking about risk in the market. And here we are sitting 30, new all-time closing high a few days ago, 30 points off the all-time high. Who cares about, the 10-year yield? I mean, we're just hanging up here, and the path of least resistance is still higher. Do you see any other event? I mean, you had the Suez Canal blockage. Do you see, anything that like another catalyst, something or is it just going to be this kind of grinding higher effect until we have some kind of catastrophe?
Can I go out on a limb, like real conspiracy theorist a little bit, which is
yes, this is a
we love that.
Come on, Joel.
It's gaining a lot more attention in the press. And so you can Google it and pick up some articles. I think the FT had a very good article yesterday or Sunday about how there's increasing concern that China may really strong arm their way into Taiwan. There's been a couple conflicts in terms of their air forces. That's something to keep an eye on. And from what I'm reading, that's increasing concern from not just the U.S. but from Japan about a conflict truly breaking out. We all know that China has been very vocal about, becoming more advanced and more of a dominant player in terms of global technology leadership. Well, where are all the fabs sitting? Taiwan Semi, the world's probably, the best chip manufacturer on planet Earth, is sitting in Taiwan. And then you also have, United Micro, UMC as well. I mean, not too far away, they could really make one major land grab and become a dominant tech player. But obviously, it would turn the world upside down in terms of a geopolitical event. So that's one thing to keep an eye on. That's out there a little bit. But you're right. The VIX at 21 feels really off. S&P just off the highs feels off. Something's going on here. And maybe it's just been the rotation into the large caps. Look at tech, right? Alphabet's been a big alpha performer year to date. Facebook's been acting great. Amazon and Apple have had decent haircuts off their highs, but have been holding in relatively well within tech, given the pullbacks. And maybe that's what's supporting the indices. So if that large cap, bid kind of dissipates, I think that could be the risk to the indices. But that's, again, another thing that comes up in conversations is how the market's held in as well. They had, despite all these kind of bizarro headlines that continue to hit, which seems like now every 2 to 3 weeks here in 2021.
All right, Joel Kalina is the head of technology and media trading at Wedbush Securities. Joel, always appreciate your time. Thanks a lot, sir.
Thanks, Joel. Yeah, it's been a long time. We'll get you back on again real soon. That was excellent content.
I love it. All right, guys, take care.
All right. 8:51 here. Got about 9 minutes before the top of the hour. I want to hit on PayPal quickly. They had actually 2 days in a row now. We've got some like real world crypto news. The other day was Visa, or that may have been Friday now. I don't remember. Anyway, PayPal this morning announced that they're going to allow customers in the U.S. to buy stuff from online businesses using crypto. And it's a pilot program that's going to start in the coming months. And then you can convert those crypto holdings into US dollars or some sort of other currency at checkout. So a pilot crypto program from PayPal talking about the practical uses of Bitcoin. This is one of them.
Cool headline if it was 3 months ago. Nothing burger in this market because we're not that excited about these headlines here now. This chart, not that we're going to get all patterny with you, but this is a head and shoulders if I've ever seen a head and shoulders, Joel. Look at the left shoulder from December and January, the head up in February, the right shoulder is perfectly formed here in March. This thing loses the neckline, which is what's it call it? We could call it 220. This thing loses 220. This thing could be 180. So it's holding up. That's the good news. You need it to continue to hold up, even the 227 low. If I was long this thing right now, I wouldn't want to take out the 227 low from 3 days ago. That would be my bogey. So I see it up here, $1.43 on the exciting headline about the Bitcoin. I just don't think there's a lot of people that are that interested in this headline. I wouldn't be surprised this gives it back.
225 was your low in January. 223, you pierced that. So this is called 224. Under that, your next monthly low is 206.65. We see a lot of monthly charts like this, but they could always do what Tesla's doing, and that's buy one and then pay for one more.
Just double charge.
Well, we didn't even talk about that on the show. I mean, how does this occur? So give us what happened, Spencer, and then we can try to possibly come up with some scenario where this is allowed to happen.
I mean, that's basically it, right? CNBC found some people who apparently had been charged twice by Tesla for the same car.
Yeah, so I think it was that they obviously authorized, they took the money out of the account, but then a few days later, they took the money out of the account again. So they took it twice. So I don't know if this is just a deposit or what it is, but anyway, some people apparently paid twice for their Tesla. So man, like you were saying, Mitch, this is a technology company. Well, they're not being very technically savvy here. So I don't know. This is just that's a pure disaster. If that gets legs,
let's think about this logically. If you're Tesla, and how do you get these bookings? How do you actually? I mean, come on now.
You're saying they do this, and no, we're just joking. They didn't do it intentionally. It's a screw up. I mean, it's a screw up, but it's there's been a few screw ups here and there. The story has continued to carry the stock, though. The thing is just so bloody tired, though. I mean, we're 598 here now. It looks like inevitably it wants to retest the 539 low from the beginning of March. And obviously, there's going to be some support there. So we'll see what it does there. It looks to me like it wants to lose 600. Looks like it wants to lose it today. We'll see what happens with the overall market. I mean, if we start to go all hungry for growth, this will be the stock that leads the charge back. Is there going to be Kathy buying this hand over fist now that she's allowed to buy more of it, apparently, with her the way she's changed her wording in her prospectuses? Maybe, but if you're relying just on Kathy Woods in this story, it's tough. So there's been a lot of easy money made in Tesla. That easy money is not being made anymore. The trend is still your friend, though. It's held up a lot better than a lot of other growth names.
That monthly low that we touched, that 540, I talked about that before. That was also your low back in December. That is, S&P ad, people that bought it after the split. I mean, if that's not a clear, you mentioned 400, but look at that 540. I mean, that's $50 away. And even, like you said, even on these pops, I mean, that thing has been getting sold. So but they're buying a lot of Bitcoin, so maybe that's going to help them out. Didn't he buy another bunch of big chunk of Bitcoin for the company?
I don't know about that, but can I tell you the best nugget in the CNBC story? The best nugget was that they talked to this one guy, and he said, "Yeah, Tesla told me they're going to come and deliver my car between 9 a.m. and midnight."
Well,
talk about a window.
They gave you a window. We got the right day.
Yeah. We see your 5-hour window, Comcast, and we raise you the whole day, 9 a.m. and midnight. Jesus. Anyway, I just thought that was hilarious.
The one thing and everybody just talks, and obviously, I've never understood the valuation there, but the cars are cool. but they're not flashy. I mean, it's not like when I looked at my buddies, and I don't know which one. He's got the model. What's the different models that he's got?
There's the S, the 3, the X, and the Y.
He's got this one souped up like the S, I think it is, or maybe it's a 3. Anyways,
the 3 is souped up.
There's not much in there. Like inside the cars, like in the dash and stuff. It's like it looks like it's got an iPad there, like sitting there. And is that what Raz is like? Is Raz around? Maybe we should get Raz sometime. But when you're in there, Joel, it looks like it's got the iPad, for the dashboard kind of. And I'm like in the car, and he paid like $81,000 for this car. And I'm like, it is super fast. Like when you're driving it, like, wow, this thing's awesome, to drive.
How many kilometers does it go?
How many kilometers?
How fast in kilometers?
Go 0 to 60, so 0 to 60 miles an hour in 3.1 seconds.
Okay.
So, I mean, the thing is phenomenally fast. It felt like he hit it, and it felt like a rocket ship. I mean, I was really impressed with that. But it's looking, I kind of expected more when I was in it. Like I was expecting more flash, and it was kind of plain. And, maybe that's what it, but when you're buying an $80,000 car, that's a lot of money. I mean, this is Canada, right? So 60,000 or 65,000 US. When you're buying that and spending that kind of money, you want some flash. But I know how everybody's been so impressed with the cars. I don't know. I wasn't as impressed. But that's not to say, nothing about, I'm still impressed with the technology. And obviously, they're leading the front in EV. And I still believe Tesla's going to be the leader, one of the leaders in EV. I just can't wrap my head around the valuation. That's why I haven't owned the stock. Next.
Sorry, I had to make a quick phone call for our next guest. No.
I'm making phone calls during my segment.
He's the phone screener. He's the producer.
And he does it all. Spencer does
it all.
Wait.
No, I wanted to add, we talked about PayPal. What chart looks identical to PayPal is this Activision chart. And their CEO announced he's leaving suddenly. And that Activision chart looks identical. Talk about head and shoulders. APVI looks identical to PayPal. I thought.
I'd sell it too. I already did sell it. I shouldn't say I'd sell it. I already did sell it. I took the Michael Pachter run. He said it was a double at 50. It did. It doubled. Michael Pachter win out. So the gaming stocks are still good, but you're right. I don't like the chart there. 95 major resistance. It's getting a little lift here this morning. I think it's an opportunity to get out. The only game I still have Take-Two. I held on to that one, and I still have Zynga. Those are the two gaming stocks. I still like gaming going forward. And the Zynga doesn't look as great as it did once. And, it's been cricket since the Glue Mobile acquisition. Maybe we're not in this huge M&A environment here. I don't know. I'm torn on the Zynga. It's right where I bought it. The chart doesn't look good here. There's so many head and shoulders. Man, I don't even like pattern trading. I don't really even like technicals, to be honest with you, that much. But, man, all these head and shoulders are like foreshadowing something here, Joel.
I don't know. I don't want to make too many comments on that.
I don't know either. I'm still in Zynga. I'm still in Take-Two. I still want some exposure. You got to have some exposure to where you feel like, there's some growth still. I still think e-gaming, the esports. I still want some exposure to the stuff, but I'm not all in on growth. I'm not all in on story right now. I'm all in on cash. That's kind of where I'm sitting. Story,
a lot of these,
Mitch, we haven't seen you in so long. My dad says he misses you, man. He misses you.
Dad.
He used to come on more on our show, and now he's got to go watch you on SPAC Attack. He doesn't come on our show. He's like, "Where's Mitch?" I'm like, "We got to watch SPAC Attack more at 11." Because my dad says he misses you.
Much love out there. Much love for sure. One chart that I wanted to take a look at, and it's something that I've seen pulled back massively, is Zillow.
That's interesting.
So it's down to 119. It had a high 208. So it's kind of interesting. It's almost back down almost 50% from the highs.
Yeah.
Quickly. You know what? Just Gene loves
Baby
this
thrown out with the
stock.
bathwater here.
Yeah. Gene loves this stock. He thinks that this is the future. So keep an eye on that. But
how bad? I haven't done the numbers on this either. So obviously I don't see any earnings at all. So you can't just quick grab a PE type deal. You got to look at growth, and maybe there's some projected earnings here. Do you have earnings going forward? I know it's a $30 billion company still, which is something to consider. I like the story too. I've always liked the story in Zillow, so I just never wrap my head around the valuation. But maybe it gets to a point here where you can wrap your head around the valuation. I think that's what and Mitch, I think that's a good point. Just you got these storied stocks, and story still matters, but you got to get the story at a reasonable price. So if you can come in and find your storied stock now at a reasonable price, maybe you do start nibbling in on some of the growth names. If they got the growth and it's a reasonable price, I mean, that's why Facebook, has still, been all-time highs.
Yep.
And and Google, same thing. I mean, Google gets an upgrade today. Full disclosure, I'm long Google, all in on Google. You look at this and you're like, okay, well, the thing's trading 20 times forward earnings. It's got growth. They still are an awesome company here. And, Facebook's, maybe, the legacy isn't as good, but they got so much other things with the Instagram and so many other businesses here. I mean, there is still growth at a reasonable price out there. Maybe Zillow can fit that bill too. Let me do the numbers. I'll crunch the numbers or call my buddy Chris and figure out if there's something there too. But I like the Zillow story. So if it gets down to a reasonable price, I could get down dirty with you.
All right. I know, Spencer, I know you got your guest coming, but I do have some breaking news.
Oh boy.
Kathy is not putting Spacely Sprockets into her ETF.
Damn.
No.
What are they drinking over there?
Because she's going with Cogswell's Cogs.
What is that? I'm sorry.
It's the main business in Orbit City that
He's still
rivals
talking Jetsons.
Spacely Sprockets.
He gets going, man.
My buddy DP sent me that one. Cogswell Cogs. You don't remember that? It's Spacely Sprockets' main competitor.
Bueller.
Crickets.
Bueller. We got to get some transparent traders. Black Box Trading gave us $100.
All right.
Big tip there. Okay. I didn't even notice it. Get the tip bell. Tip bell.
Thanks.
Ding, ding.
Thanks for that.
Ding, ding, ding.
Ding, ding.
There we go. All right.
Thank you.
All right.
He didn't give us a ticker. We did your ticker for $100.
This show is kind of off the rails. I'm just going to try to bring it back. Jay Young is the president and CEO of King Operation Corporation, joining us now for the first time on Pre-Market Prep. Jay, good morning. Oh no, you're on mute. Turn your little microphone icon on the bottom of the screen there, and then we should be able to hear you.
Maybe that's better.
That is better. How are we doing this morning?
Hey, I'm doing great. Thank you. Thank you very much for having me.
Yeah. All right. Let's pivot here. We were just talking about technology. Let's get away from that. Let's go to energy. And I wanted to talk to you a couple of days ago, and then between the time that happened and now, the Suez Canal is freed. So I was going to ask you about that, but it seems like we're going back to normal there. Is that right?
Yeah. I mean, they said, I think it was Friday afternoon, Saturday, they were saying that rising tides, up there. And I was thinking rising tides lift all boats. And obviously it did.
All right. So we've been talking a lot about on today's show about returning to fundamentals, about stocks and sectors, pricing in that we're all the way done with this pandemic and going back to their pre-pandemic levels. At this point, where do you feel the energy market is priced at as it relates to the pandemic? Is the market pricing in the fact that we're all the way done with this thing or not?
So that's a great question. And my family's been in this business for 100 years, and my dad just swore to me to never get in this business because of cycles, and these cycles are horrendous. What my thought is going forward, you're going to see between $60 to $80 oil. Why do you see $60 to $80? Well, when it goes to 80, Saudi Arabia, Russia are going to start throwing oil in the market to lower the price. They're not going to allow the big money like the private equity funds and all the deals before, because you saw a lot of private equity companies, a lot of public companies drilling. Yeah. Our production went up to 13 million. They're not going to allow that anymore. And the way they know to manipulate the markets now is to throw a lot of oil in the market. Pre-pandemic, Saudi Arabia, Russia were selling oil at half price to sell oil to oversupply us, which they did. And then the pandemic happened, and then we saw oil go minus, for a short time. But that's what they're going to do. I don't think they need to make money. They're in the business to make money. That's how they make their money, as a matter of fact, by exporting oil and selling oil. So when it goes too high, they're going to throw oil in the market. When it goes too low, they'll take some off. But they need to see $60 to $80 oil, and that's my thought going forward.
But what about like the return of demand? We're seeing deliveries, from the EIA go up on a week-over-week basis. Demand is coming back. I'm sure ethanol producers are happy. We're reading about the price of corn as demand goes up, and so we need more supply. Demand is recovering, is it not?
It is recovering, and it will do that shortly. But it's not. Don't forget, though, we need 20 million barrels plus a day in U.S. oil production. That's our U.S. appetite, 20 million. And we're only producing right now 10. So we still need foreign oil. So the big challenge there is how much do we need from these, countries like Saudi Arabia and Russia. But you are seeing demand coming back, and it will continue to come back. And we're not producing as much. Look at rig count. Rig count's way down. When rig count's down, we're not making as much oil. Wells decline in production. They may be producing 50% of what they started out in the very beginning. So it's going to go down. And as you see the supply go down and our demand goes up, you're going to see. And the only thing that I can see, because I was on Jim Bohannon the other night, and I was thinking about it, and I was going, man, you know what? I don't see any reason why we're not seeing $100 oil. But when you think about it psychologically, from these huge countries like Saudi Arabia and Russia, they don't want it to go to 100. So I believe they'll start bringing a lot more oil into our camps and offsetting our U.S. Like Putin said the other day in the Financial Times, he said, I'll replace every barrel of oil that Biden doesn't produce in the United States.
What about like from other sources, like the Gulf, for example, or Gulf of Mexico is what I mean. Sure.
Yeah, Gulf of Mexico is a great place to drill. There's a lot of production offshore. You'll see more drilling there. Now, a lot of the federal grants and the permits and things that Biden is not allowing, like New Mexico for the Permian Basin, there's a lot of oil out there that he's not allowing to produce. And what happens when you don't produce that oil and we don't have it, and our demand continues to go up, you're going to see a shortage. I don't want to be overly optimistic, and we have an oil and gas company, King Operating, and we drill for oil and gas, and we have funds for investors and such. And I don't want to price our projects or think that the price will go to 100, because that's one of the worst things that we can do when we're looking at a prospect. So I don't be overly optimistic. What do they say? I forget. Expect the worst or plan for the best.
Plan for the best. No, expect the worst, plan for the best.
There you go. Hey, that's it. Yeah. And that's why we're putting in $60 as a futures price. Our projects make sense at $20, $40 a barrel, but I don't want to go, hey, I'm so overly optimistic that I'm going to go out here and been there, done that.
Well, it sounds like you're not. It sounds like you're at best cautiously optimistic is what it sounds like.
Exactly. Like I said, our family's been in it for 100 years, and we've seen the ups and downs. And I am very optimistic. We're putting together our funds for a 3 to 5 year exit before we get too green.
Okay.
Now, I always say greener, not green. We're not going green. We are going greener because of all of the different cars and things they just talked about a minute ago. But before all that happens, I'd like to have a big sell on our oil and gas assets.
Here we go from a chat. Plan for the worst and hope for the best. You and I butchered that, but that's the statement here.
Yeah.
So by and large, like you said, oil between 60 and 80. We're at 60. So and that's where you see this staying in this range indefinitely.
For the next few years until, I see peak demand in 5 years, 10 years, something out. So I can see 60 now. I mean, look, Saudi Arabia, Russia, they didn't flood our market with half price oil just because they wanted to, give away oil. They don't give away things. They want to make money. So
right.
I believe that they're going to shut back, which they already have. They'll shut back our oil production to the United States. We're not producing as much. They probably have 30 people over there in the offices, and they're all thinking about every oil that we produce in the United States and what we're doing to produce oil, how we produce oil, how much is coming in. They know exactly where we are. And so I just feel like supply and demand which is the reason why price does go up and down. And that's they're going to keep it there. They need to make money, but they don't want it. They don't want to make too much money. They don't want to go to $100 oil because they know at that point there's a lot of PE firms, that have said before they're not getting in the oil business. Well, at $100 a barrel, there's too many things that look good. So they don't want to get out of the business at $100 oil. They'll come back in. And Saudi Arabia, Russia, they've got too much oil and too much money to allow it to go to 100. But they still need to make money. That's why I feel like 60 is a good bottom.
Jay, what do you make? I know you're more of an oil guy, but what do you make of the run that energy sector, which was so out of favor for so long? It had, maybe not in the last week or so, but this year, the first few months of the year at least, energy just went on this huge run. What do you make of that?
Well, it's all about price and demand. We're still having a hangover, if you will, from all the stuff that happened during the pandemic. There wasn't anybody driving in cars. There wasn't airplanes. There wasn't. Our demand just went way, way, way down. Now, 40% of a barrel of oil is for transportation. So 60% is for things such as your glasses, things such as the board behind you. There's a lot of different uses for oil. So we still need demand. But when you take away the top of it, and we're not producing as much, if you see, our production went from 13 million barrels a day in the United States to 12 to 11. And a lot of that big production increase from 5 to 13 million in 10 years has come from Shell, SHALE, Shell wells that decline in production. They decline rapidly, and they're going to continue to do so. So if we're not replacing that oil, we have a problem with our supply in the United States. But when the big demand came and we're having this hangover from all the, we're producing so much oil. There was tankers off the coast of Hawaii and New York with all this oil, and oil's everywhere. Well, then that was really the oversupply that we had. And now you're seeing it come back, and I believe that we're equaling it out. As I mentioned, you have a lot of people in these foreign countries that have all the stats and all the exactly how much oil we're producing in the United States to how much they need to give us and not give us, and they're going to keep that oil tight. It's going to be tight.
I should note that we do have an OPEC meeting. Was it tomorrow? Is it tomorrow or no? Thursday, the 1st, right? There is no OPEC. Is there any developments that you expect to come out of that? Any tradable events you think to come out of that, or not really?
I don't think there's going to be anything major except for they're going to cut production and they're going to see where we are today.
Okay.
Like I mentioned, all the big money's out of the oil and gas game right now, so you're not seeing the rig count go up.
Yeah.
And as soon as you see the rig count, start sky. We're up four rigs this week, I believe, 9 the week before. We still need 300 or 400 to get back to where we were pre-pandemic. So, but I don't think there's anything major that's going to come up besides just tightening up and them watching over us, because they're pulling the strings, if you will, and I believe they're going to pull the strings a lot tighter than they ever have, because they allow this $100, $120. They got to $147 a barrel at one time. And will it ever go back there? I don't see it. Now, do I hope? I hope for our investors. That's because, our investors' tax income or tax benefits, monthly income, multiple on their investment in our funds when we develop and divest. I hope for them, but I'm very cautious to say that we'll see that big run to 100 to 120 or 140 because of things like the OPEC meeting and them watching over how much oil we're producing. And if we're tightening up in the United States with our federal lands and we're not allowed to drill for oil and gas, and there's a lot of institutions not coming into the game and allowing us the money, because it costs $100 million a year to get one rig running in the Permian Basin. That's a lot of money. And if we need 300 or 400 of those, and I can't do the math, but that's a lot for us to get the supply where we really need it to be energy independent, which I don't believe we'll ever be energy independent in my lifetime.
Here's a quick question from our chat. What about pipeline stocks or MLPs? Do you think they could benefit from Biden's infrastructure plan?
Yeah, well, Biden with the Keystone Pipeline, I don't know. I'm still not scratching my head about exactly why that didn't happen. Because trucking it on roads and it costs $30 a barrel to transport it from Canada instead of pipelines, which is a lot cheaper. But I do like pipelines, and most pipelines are on the quantity of oil and the price. So I do like pipelines right now, MLPs or energy transfers, things. I do like those stocks. I think that's really good. But we need more pipelines in the United States, and the reason why I say that is because of spillage. When we're putting oil into pipelines, it doesn't spill, and you don't have trucks, and that gets real messy. Pipelines are a lot better as long as they're drilled properly and put in place. I like pipelines. I don't know how many more pipelines. And I know the Permian Basin, big pipelines going from the Permian to the Gulf, so we could export oil. But I do like that. I think it's a good play.
All right, Jay Young is president and CEO of King Operation Corporation down in Texas. Jay, thanks a lot for coming on today. Appreciate it.
Hey, thanks for having me. Anytime. Thank you.
Right. It is 9:17 on the East Coast, which means I'm going to bring on our next show in a second. Neil Hamilton, Get Technical. You know how it works. Just a few PSAs, programming notes before I do that. We did go until 9 p.m. last night. We're going to go until so tonight we're going live until 7 p.m. But after that, what we're going to do, and I think we'll do it for the rest of this week, is we're going to re-air our Biotech Small Cap Conference, which I should mention is available on YouTube for free. The playlist is pinned to the top of Benzinga's YouTube page. It was a 2-day event last week, 2 tracks per day. So you got 4 videos that are basically all day long, and that content is available. We had speakers. I don't even know how many public companies were presenting. Several dozen public companies presented at our conference, talking about things like oncology, immunology, emerging AI, emerging therapeutics. Full 2-day event. Biotech Small Cap Conference is available on YouTube. We're going to be re-airing that on this stream tonight after we wrap up our live programming for the day, which again will be at 8 o'clock. And then starting from there, we're going to re-air some biotech content tonight. And we got a full day. As always, we got Get Technical, we got SPACs, we got Power Hour, crypto, Biotech Buzz. I might do an ETF show again later today. No pre-market prep at the close with Joel, unfortunately, today. And if we do it, it'll be myself and someone else. But Joel had to take a rain check for today, so you will not be seeing Joel at 3:30. I apologize for that, and I will pass your disappointment on to Joel when I talk to him next. Guys, once again, smash that like button and subscribe to our channel. That really, really, really does help us. We spend a lot of time banging our head against the wall, trying to figure out how do we get more content, how do we get better content, and we do it for you, and it really helps us a lot when you return the favor via a subscribe or a like. So please, please, please do that. Joel will be watching basketball. Probably. I don't know what he'll be doing at 3 o'clock, but he cannot do at the close show today, and that is fine. Okay, it is 9:20. Let's bring on Neil Hamilton. And Neil, I have a question for you. Let's bring you on now. I have a quick question. Did producer AB talk to you this morning already?
We're talking right now. What's the problem? Is the problem that I got a copyright infringement? Is that the problem?
Problem is not that you got
mad about that.
Problem is not that you got one. The problem is that you got a lot.
It's all for the one thing. It's when we play 9 seconds of a certain rat song. Okay, whatever. I'm not going to get into it.
Let's see if we can chill on the rat song.
Guys. All right. So I'm going to have to record round and round myself on my guitars so that we can do the rounding bottom thing. All right. We're the meme is not dead. We just can't we just can't use the classic recording.
No, that's the solution is like, because Luke has a soundboard too. We're gonna re-record all those sounds ourselves. It'll be better anyway. and we're just gonna redo like I just played the Bueller thing, which I don't know if that was bad, but I can just record myself saying Bueller, and that's better anyway. So that's the plan. Anyone, if Neil, if you see or hear Neil playing things you think you're playing, call him out. Call him out.
I can't be stopped.
Be a narc.
I can't be stopped. Yeah, good call, Spencer. Thank you for bringing that up. I can't do the round. I'm going to close my soundboard right now. We can still play the vibes, though. We're allowed to have our relaxing.
Right.
No matter the markets can be all crazy, but we got our lo-fi hip hop beats. We keep it cool while we find opportunities in the market. Yeah, Jason Douglas. Yeah, I know you want to go, Spencer. Do you want to go? I can tell you keep saying all right.
No. I'm like agreeing with you. I'm like, all right. I'm surprised at so I went to our channel yesterday and I was like, oh, we probably have 5 copyright claims. Nope. We got more
every day.
More than 5. A lot more than 5.
I mean, whatever. I mean, they made a great song. It's fine. I'm not gonna hate on Rat. It's those damn labels taking the money from everybody.
Smash the like for copyright claims, guys. Let's
go.
Yeah,
smash the like for DMCA. We'll figure it out. We got some great picks, though. I just want to give a little preview. We were all in X. So definitely, guys, remember what I said about X. I didn't want to pile into steel unless it closed above resistance, and it didn't. So that saved my my round in bottom. So I don't know about you guys. Metal got a little bit rejected. In fact, looks like it has an outside bearish candle reversal possibly happening, which is not too terrible. We'll get into more of that in the show, but what I'm looking at today is consumer staples. All right. Your Clorox, your Walgreens, and then utilities as well. Yeah, Viv says, does XLU have a cup and handle on daily chart? It very well may. We'll take a look at that. Little Bill is here. Yes, Little Bill, I know I've been hearing your squirrel ass reminding me not to do it. I just kept playing the Round and Round song because I thought it was just not allowed in Cuba, and I didn't think that made up a large enough portion of our viewership to be a thing. But the powers that be, namely Mitch and Spencer, are not going to let me keep playing it. It's okay. We'll keep the meme alive. I'll just bust out the old Jackson there with the Floyd Rose tremolo, and we'll make it happen, Rat style. Hey Ramon, good morning, or wherever the heck you're in Europe. So good afternoon, whatever. All right, producer AB, let's roll that intro now. 3, 2, 1, go. All right, 1 second. We're on the wrong brand here. There we go. 3, 2, 1.
Here we go.
Welcome into the open, where we get technical. You should have investments in long-term growth. Good morning. Happy Tuesday. Let me turn down our copyright-free, royalty-free music. This is Get Technical. I am your friend and host, Neil Hamilton. With me, as always, is young producer AB. Thank you for that nice introduction from Spencer Israel. And members of RAT that are watching right now, I want to thank you for making a seminal 80s hair metal hit that I know, guys watching right now that are not RAT members and RAT members yourself, those lyrics, I looked at them. It was about technical analysis. I see what you guys are doing. But don't worry, we're not going to play your music. We don't want to get you in trouble with your studio. We get it. All right, guys. Who got in on the X action yesterday? Who got in on the X action? Oh, I'm sharing the wrong screen. What the heck? 1 second, guys. But let me know. X United Steel Corp or United States Steel Corp. I don't know, but X is steel. We had a nice break above resistance for the day. Great for day trading. The stock ruled yesterday. But it did not close above the point we wanted to close at for the big move, the big positional trade. Guys, give me a 1 in chat. Actually, this occurred to me yesterday based on a question that the Raz man asked me, Uncle Raz. Let me know. Oh, Sean, did you pile in before? Yeah, I set an alarm for 3:45 p.m. Eastern before I check to pile in. At 15 minutes before the close, if it's looking like a strong close above my buy point, then I do it. If it's not, nope. But yeah, the Raz man, Uncle Raz, asked a question about a market overview. Give me a 1 in chat if you would like to start each one of these sessions with just a broad market overview where we look at, NASDAQ, QQQ, we look at S&P 500, SPY, and then look at sectors just to get a broad idea of how things are going. The show's in the morning, so it seems like a good time to do that. Leon, I see you with your pick. Okay, so we're getting some solid ones. All right, share screen and share audio. All right, let me get okay, so we're going to do a broad market overview. Really cool, but we're going to do it lightning fast. We're not going to do this like certain cable programs where they sit there and yap about it and yammer about it and then invite a bunch of people to say like, "Man, what do you see with me?" We're just going to look at the freaking market and see if it's in a strong uptrend, a sideways trend, or a downward trend, right? Is there strength behind our picks? Or what's our YOLO meter for the day? All right. Is the audio coming through? Just let me know yes, no. All right. So before I get to the picks, then let's just look at the old NASDAQ because that's the one that's been the money printer for the previous year, and it's not right now. Okay, audio's coming through. Cool. Let me know if you need me to change the levels and stuff because I think what I hear is different from what you hear. So here's the take on QQQ. Very simple, guys. We keep this simple. Here's the thing with the news cycle. The news cycle every single day is going to say the NASDAQ rallied. The NASDAQ's looking strong. The NASDAQ's looking weak. Markets are shaky. On a day-to-day basis, that's super dumb. We want to look for trends. Trends take a series of days. So let's do this very quickly. We are below the 50-day moving average. That's this blue line on QQQ. That's not where you want your NASDAQ to be. We like our NASDAQ above the 50-day moving average. All right. So let me illustrate this further. We are still getting lower highs. What do lower highs and lower lows mean? Short-term downtrend. DMA says, add 10-year bonds, please. Hey, don't go too far. I'm not that smart. So yeah, QQQ, weakness. Yes, we had a couple days up, but that's just a continuation. It's still within the bounds of the sloping line of resistance, right? So this is just it's still our little ziggy-zaggy in a downward trend. Trade stocks that have the support of an upward trend. I didn't make that up. Also, what I would say is it lines up pretty well. We want to get above the 50-day moving average. You don't want to live in if you're day trading, different story. This is just crazy volatility. You can do all kinds of things. But if you're looking for some swing trades, or you just in general want to have some strength behind the trades that you're making for them actually to resolve the way you expect, the sector must be in an upward trend if you're bullish, and it must be in a downward trend if you're bearish. But everyone likes bullish better because it's easier to trade, right? So shakiness, QQQ, SPY, 9:30 at the open. Producer AB.
3, 2, 1, 0.
All right, got that out of our system. The market's open. We'll get to the picks really soon. Broad market overview. S&P holding above the 50-day moving average. This one was, I was watching this one, right? We got the body just just holding on the 50-day moving average. Problem. We have not reached a higher high. Easy, guys. A trend is higher highs and higher lows in sequence. We haven't gotten there. Not bullet. There's no reason to be bullish on SPY right now because this is so far a sideways trend. We shall see. We shall see. Here comes the bleeding. Daniel says, hey, guys, don't have an emotional connection to the markets. Yeah. 13 says that the New York Stock Exchange is going to come after me for using their bell sound. All right. We don't have an emotional connection to the markets. I mean, we do. I do. I can't help it. When the market's down, it affects my mood. Ask anyone close to me. But we try not to. Down market, up market, sideways market, it doesn't matter. The market is doing what it's doing, and it's our job to understand that and exploit it. All right. All right. So blah 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 blah. Yeah, DMA. I agree. I'm not prepared for it this morning. Maybe tomorrow. On the bond yield thing. Blah blah blah. Markets are angry. Ooh, X. Let's check X. I just got an alert on steel. Hey, okay, so yesterday we were looking at metals. So I wanted to get into a sector analysis looking at consumer staples and utilities. Keep those top of mind. We're looking at XLU and XLP, I'm pretty sure. That's the consumer staples. Keep your eyes on those because they are showing strength. Go to my Twitter if you want more details on that. But yes, Hertz Scrambler, same page. I got the alert. We are breaking out once again, all right? We need a sound for this. We need some kind of like 80s hair metal hit to play for this. But unfortunately, my hands are tied, guys. Steel is in motion, my friends. Now, once again, just like yesterday with X, I wanted to see a close above this line of resistance. What we've got is a cup and handle as a supplement to the resolution of our longer-term rounding bottom on steel for a big old money-making breakout. Bullish. Let's go. This pleases me greatly. But we shall see because intraday things get wild in this market. Things get wild. So let's just keep our eyes on it. You can day trade it. So let's take a look at it on the 10-minute. Obviously, it's the first 10 minutes of the market, but what a start it is. Let's open up our exponential moving average for 8 and 21. Brad from Trading Grounds Live style. I mean, no surprise. Our faster line is curving up. Oh, what a beast. Look at this thing go. So what you can do, there's a couple ways you can approach this. I am an idiot and don't have my brokerage open right now because I'm all about the content. This is an entry signal. But for going hard on it, if you're not going to watch it intraday, yeah, I know. I wish we could play X Gonna Give It To You by DMX. He would probably be a lot cooler than Rat and let me do it. This is an entry point. Go United States Steel. Let me just do a thing. I got to talk to like a guy about some stocks really quick. Hold on one sec. Really quick. No big deal. Oh. Keep it going. Keep it going, Steel. And I just got to talk to a guy about a trailing stop loss really quick. Just no big deal. Okay, cool. Sorry about that. So yeah, X gonna give it to you. Still looking good though. Like this market is wild, but this is still trading within our range. It is an inside candle if you're a stratter. I don't know what number that is, but so X for options. I don't know. Are you day trading them, Tony Tsunami? I mean, possibly. The only way that I've been safely trading options is on the 10-minute chart, and I'm using the 8 and 21 exponential moving average. Fast line crosses above is my entry, which it's currently above. Fast line crosses below, that's my exit, and we're looking like we're in Fergalicious territory. So keep watching it, and remember, guys, when it comes to like really piling into these long-term resolutions, we want closes above. So it's the amateurs trade the open, pros trade the close kind of thing. Okay, that's steel. Keep me coming back to it because that's just so exciting. I wanted to look at Clorox really quick. So we're looking into consumer staples, and let me know if you want to get off the consumer staples thing. That's fine. I think it's a good idea. I think you should be looking at consumer staples. I think you should be looking at utilities. Way to go, Toddy, with the 22 calls 2 months out. You saw the writing on the wall. But if you have some picks you want to look at instead, let me know. Right now, we're just going to look at Clorox. So here's what I like about Clorox. It has broken above its 50-day moving average handily. RSI is in agreement. Momentum is in our favor. Momentum is in our favor on the MACD. The fast line is above the slow line. In fact, it crossed back on May 5th for this beast of a candle. What an entry point that would have been. All right, Leon, we'll check. Okay, Leon, here. I'll put that up on the screen so I don't forget it. Let's just do some real quick technical analysis on Clorox. We're broken above our sloping line of resistance. Looking good. We're in breakout territory. Why? Because we've got a nice little head and shoulders pattern down here. Nice little head and shoulders. Shoulder. Head. Shoulder. Reversal. Which should take us from a downward trend into an upward trend. Next line in the sand we want to get past is where this body got hit. Right here at 196. But we are in breakout territory. We are in breakout territory with a profit potential. Here, let's do our profit potential. We'll draw a line from the head up to the neckline. And then we'll add that height to the neckline to set our price target for resolution of our reverse head and shoulders pattern at the bottom of Clorox. Profit potential, where you'd enter now, 5-something%. But we are looking for a sustained reversal of this pattern that we've been in, this downward trend that we've been in. And let's look at this over a longer time frame to get the bigger picture. This could just be a big consolidating move following a broader uptrend where we would do something like this. I know I'm getting crazy, guys, but I'm going to go to about the start of this upward trend. This is on the weekly chart for Clorox. They're making the wipes. They're making the wipes, guys. You know how much we love wipes during the COVID times. These guys got the wipes. They're selling out all the time. So this is the height of our pole. And then we've got this little area where we've broken out. We're going to add the height of our pole to that breakout point for a broader, longer term price target of 287 for Clorox. They got the wipes. All right. So we're going to look at AYX because we were politely asked multiple times. So I just want to illustrate this really quick. I would really like to play Round and Round right now by Rat, but that's okay. So that's about a 48% gain from where we are today. Exactly. Big Reddington says it's a 5% move on common stock. Throw some options at it. That's what options are for, baby. Well said. So we're going to look at AYX for our friend Leon, which my years in marketing tell me that Leon's avatar here is definitely a stock photo from an infomercial. Is that like a blender? Is that a ninja? Just my my marketing spidey senses are going off. So AYX, here we are, right at support. In fact, let me bring this up a little bit. We've broken down a bit past support. I think this. I would go short on AYX. Remember, this is not investment advice. This is purely for educational and entertainment purposes only. But I am short AYX, downward trend, RSI, downward trend. Look at the volume drying up, all red. And our fast line on the MACD crossed below our slow line on February 16th, 2021. Oh, we're looking at weekly. I should perhaps choose a daily. Ooh, okay, different story. Okay, so I was on weekly. So now it's starting to look on daily. Now it's starting to look like this thing is oversold and could bounce. But we're getting no indications of bounce right now because it's red and it's going down. It's below our support line. So you could draw another line in the sand like this and say this is the absolute lowest point you want it to go. But if you are bullish on AYX, you might be able to get it at a steep discount, betting on this oversoldness and the fact that our MACD fast line is crossing above our slow line. But notice the curl on the MACD. Can y'all see that? The blue line, the thick blue line is curling. We like to see that curling. The curling is awesome. That's for fast pivot moves. But we like to see that curl going in the direction that we want the stock to go in. And right now it's curling down. So it looks like it could cross below. This one looks very, very chancy. This looks like the odds would probably not be on your side if you're bullish on AYX. All right. So moving average. So what type of solar up and up? For the moving averages, I bounce around a lot when I'm not on the show. I'm always trying to like pretty much any time that I'm drawing a trend line or like a speed line, whatever you want to call it, that is sloping on a stock, I try to find the moving average that matches it the most, because different stocks will have a different set of moving averages that really work for them. Different stocks have different personalities. So you can have like a tool chest of moving averages, either exponential or simple, regular, whatever, and whatever time frames that you use as your like default toolbox. And it's a great starting point. But if you're really going to get into a certain sector or a certain stock, it's good to tailor the ones that you're using just by clicking around and trying different ones, or even going online and seeing what other people are using for that stock. A lot of times I'll search the stock on Twitter and just yoink ideas. I'm here to tell you, I'm all about stealing ideas from other traders. No, I have no shame about that. Absolutely none. This is not a vanity thing. This is not about whose idea is better than others. All right. So that's one quick way. A lot of times I'll do that. Any chance we can look at Zynga? Yeah, let's look. Okay, what do you have the SA number in the MACD? So my MACD is 1226 and close 9. You should be. Oh no, you probably can't really see it. Maybe you can see that. I'm not sure if it's really clear. Here, let me open this up. Here you go. Fast length is 12, slow length is 26. This is the default. This is your standard MACD. And then this is also standard. The signal smoothing at 9 and the source being the close. Yeah, my RSI and my MACD are complete vanilla. I have not tweaked them at all. I don't want to tweak those indicators too much. I think that's getting too fancy. I like to stick to, nuts and what do you call them? Nuts and bolts, nuts and berries. What do you call it? I like to stick to the stuff that is the basic and tried true stuff. I'm not trying to get out here and get too fancy. Okay, so what's up next? What are we gonna look at? So we can still look at our sectors. I'm liking Clorox still. I'm a Clorox man. I use the wipes. I do in fact use the whites. Meat and potatoes. There you go, Alfred. Bread and butter. Peas and carrots. Red Bull and oatmeal. American cheese and corn dogs. Okay, so we're gonna look. I'm gonna try to go in order here. So we got PAAS. Remember to give me your time frame, guys, so I know. Silver. Okay. I already. Well, okay. This is kind of a broadening wedge. All right, so we're looking at this on the daily Pan American Silver Corp. What I will say is that most of the strength has been in non-precious metals. I'm pretty sure silver is precious. But let's go ahead and do this poll. I'm not going to use the low of COVID here in March. I'm going to use this dip that occurred after this sort of V. And hopefully you guys can see this. I'm going to take down these other indicators and really zoom in. Ooh, I should have used the Fibonacci extension on my last thing. Our guest is going to be mad at me for not using Fibonacci. So I'm going to start my poll here and go up to the height of this pattern. You must have an upward trend for a bullish continuation. We've been trading sideways, but we'll treat this as a broadening period of consolidation for the sake of this exercise. Which actually it's not. It's not a broadening. Well, actually, we can do this tomahawk style. Let's do a tomahawk style. So what I'm doing is drawing a broadening wedge or a megaphone, as some people call it. I'm going to use the first swing high and the first swing low as my first pivot point, and then the next point that follows that, the next extreme point, either to the downside or to the upside, to draw my lines. Now, this is one of there's really three ways if you're doing the Chris Capri. Sorry, Chris, I suck with names. Way of looking at things, which is you can get an impulse that has sideways or whatever is an impulse and then has a corrective phase like that. You can get an impulse down that has a corrective phase like that, or with both of them you can get an impulse and then it goes in the opposite direction before it has a corrective phase. This one is a pain in the ass. But that's what we're working with silver right now. So in any case, I'm treating this like a broadening wedge, and then I'm sure if we were using moving averages or Bollinger Bands, I can throw on some Bollinger Bands here. We can derive some insights, but since this is a pattern-based show for the most part, I'm starting with pattern. Then we can go a little bit deeper on it. So you see how this looks like a tomahawk? Like if we take the pole here, the height of the pole, looks like a tomahawk, right? You ever seen The Patriot, Mel Gibson? Guy loves tomahawks. So an important feature here is the apex. So where these two lines meet, we want to draw a line. So we're drawing a line right where these two lines meet on our broadening wedge or tomahawk pattern. Now, price target to the upside for PAAS, Pan American Silver Corp, is going to be the height of our pole added to the apex. So wherever the breakout occurs, which it needs to break above the sloping line, that's your price target, like $60. If you're bullish on the stock, that's how you're using technical analysis to assign a price target to it. You can just trade, if we were to use Bollinger Bands, I think is the wisest way to go about this. You can trade in the meantime as it bounces around up and down past the mean, because look at how range bound this has been. Touches the lower standard deviation, crosses above to the top, goes back down to the lower, hits the mean, bounces back down to the lower, goes to the top, rides it for a while. Nice trade. If you were using this as a as your indicator, you would have ridden this all the way up and then gone short as it started to pivot back down. You know, going all the way through this thing. So that's the Bollinger Band, a way of going about it. So I would do that. Daily on PLTR, you called me brother. Daily on PLTR. I haven't looked at this for a while, but yeah, I had a feeling it was going to be rough. We're trading below a really important line. We're in Bear City. This is a bearish trend. So a couple things you would want to see. We can use the Bollinger Band in this case to see if there is a volatility squeeze on the way. Eric Sullivan, sorry. PLTR just burned up my GME wins, and that should say a lot. Sorry, brother. So at any rate, this seems to be, it doesn't line up with anything in the past on the daily. Let me see around this. So this is at a previous body. But look, right now you're at support that was former resistance. Actually, not even really. It's not even lining up with the body. PLTR is a hot mess. Short, easy answer. PLTR is a hot mess. There are better opportunities elsewhere. Come back to PLTR when it gets back above resistance, looking for a breakout. What you want to see is that. And what it looks like it might do is this. Eric, that's fair. That's fair. Okay, so ARKK daily. Whoops. Okay, so previously we drew this as an important line. We've got the neckline here on what is kind of like a slanted head and shoulders pattern here. So, actually, hold on. Am I wrong about that? Yeah, I'm totally wrong. This thing just outright reversed on you. That's all there is to say about that. So we'll use the arc. Let's get our arc tool. That's a reversal. That's a top. The final swing before this bottom started is right about here. So for a full resolution of this reversal, it's going to have to be something like this. So that could line you up with this little area of consolidation, or hit your support right about here. So I would be short on ARKK. $90. Yep, short ARKK. I mean, this is, guys, don't get emotional connection to your stocks. They're not people. They're just prices on a chart that go up and down, and you want to get on ones that have prices that do the thing you like. Steel's dipping. Let's take a look back at steel. Steel is a fickle entity. We are just not getting. Let's look at XME, the metals ETF. Just check in on it. And okay, so yesterday you guys might recall that I said, "Hey, we got a cup without handle." Well, now it looks like we're forming a cup with handle. Okay. So we shall see. Now we got to break out of this sloping resistance. That's XME. Steel. still fighting that resistance. Consumer staples, Clorox, not a lot of strength behind it today. It's staying tight, very neutral. But the trend is our friend. The trend is our friend. DraftKings. Let me. Yikes. Looks like a top. So let me delete everything. All my drawings on DraftKings. No, actually, no. So looking at the daily for DraftKings. Let's put this in context using our parallel channel tool. So I'm going to draw my first point on January 5th, 2021 on this this swing low here. Draw my second point on the next lowest line, which is basically today. So this is the channel that is currently trading in. We want to hold this sloping support line, which it currently is, which lines up with the lows on these two candles. Can you guys see everything? So with DraftKings, if it's going to stay in this trading channel, it must hold this sloping support line, and we want to see it give us a nice green candle to show that it's pivoting back up. If it does that, you can target the median range here, which is like probably going to be around $68, $69. And if it passes that, you can target the upper line. Now, looking at our other indicators, we would like them to agree. So what we want to see is on our RSI curl up, which it may happen. We also want to see volume start to come up and be green. And then we also want to see our fast line on our MACD curl up. Right now, these two are mostly down, but that's because it's a down day and we're still in the downtrend. So they're agreeing. But we would like to see some agreement to the upside for entry. I don't enter at this low until I get confirmation. So I would say, once again, as always, I'd say Steel taught us a lesson yesterday. At the close of the trading day, if it's going in the right direction, and your RSI and your MACD agree, then go for it. But then we can go, whoops, stupid ass paintbrush tool. Then we can go a bit higher with this. Whoops. With this channel. Bring it up to this swing high. See what that looks like. And that gives you the full trend for this thing. The full trend. Which gives you a higher target for returning to this bullish trend that we've been in this whole way, upper trend. So it's DraftKings. Mara intraday. Mira, Don, Mira. The market is so shaky. Consumer staples. Let me look at home builders really quick. RH, nothing really doing extremely well. Home builders. Let me look at utilities really quick. Where are my utilities? Utilities are there. Oof, oof. Yikes. Let me look at metals really quick. Do I have a metals one? I don't think I do. Yeah, metals are just also getting beat up. Guys, don't trade for the sake of trading. If you're in a trade, just know that it's unlikely that you have the strength of its peers, of the company's peers going in the same direction on a day like this. All right, I'm going to delete all my drawings on this. Oh, look at hell yeah. Okay, look at VT. Yeah, I haven't looked at oil at all today. So Mara has been trading sideways. We're in a sideways trend since pretty much February of this year. That's super rough. I'm not even going to do that. You can look at this like a big flag of some type. Absolute possibility that this is breakout incoming. RSI starting to curl back up. MACD fast line starting to curl back up as we are on a green day so far for Mara. Yeah, we should definitely look at oil. Look at those dirty energy stocks. So you can trade this within the range of the apex of this pattern. You can look for bounces on the sloping line of support and a return to the apex line. Bounces on the sloping resistance, return to the apex line. It's probably the most conservative or safest way to do it. But for a positional trade or a longer term type thing, if you're looking at this as a wedge, we're drawing our pull from the start of the January 28th impulse. Actually, let's do this more conservatively. So instead of that, I'm going to measure this measure and move. So we have our first swing high in the wedge pattern to our absolute swing low in the pattern. And then we're going to add that to our breakout point. So when the breakout occurs, it's the swing high, which is right here, to the lowest swing low, added to the breakout point to establish a price target. So that price target is purely hypothetical. It's not based on anything that's actually happening. But then for your aggressive price target, you're going to do the pull added to the apex, which is where these lines meet. So that's an aggressive price target upon breakout for Mara of 72, which is, it depends on when you get in, but from the apex, that's 82%. XLF is only green. Okay, so we're going to look at VET. Oh, actually, we're over. Our guest is here. Our guest is here, guys. That means I'm off the hook. We'll get to your picks later if we have time after our guest lesson. So we've had this guest previously. This is the guest that, much like a traveling Viking, weathers the wild wilderness of Forex with his handy Fibonacci extension tool, Fibonacci retracement tool, as his weapon. So this is the wizard of Fibonacci stuff, as far as I'm concerned. Producer AB, can we bring on our guest? Andrew,
yo,
how's it going?
what's going on? How's everything?
Everything's good. Everything's good. Looking like the stock market is not easy to trade today.
Yeah, what are we buying up in the stock market now?
I'm not buying up anything. I'm waiting until 3:45 p.m. Eastern time to see what happens after all this nonsense.
Yeah, everything. Well, I'm not, looking too closely, but I see a lot of things have been in the red in the stock market. So, if anything, I'm looking to buy. I would buy and hold. I know you're more intraday trading. I would look to buy and hold. So I'm looking for maybe a next tech stock to buy. But yeah, how's everything going?
It's pretty good. We're in Michigan. We're still on a little bit of a lockdown. I got my vaccine appointment for Wednesday. I don't know. Do you still get vaccinated, Angelo? Because I believe that you did get COVID.
Oh yeah, I had COVID. No, I'm not getting vaccinated, actually. I mean, my parents got vaccinated. I technically have the antibodies. I don't know how it all works, but I'm actually moving to Florida like next week. So just like you said, a Viking out in the wild, man.
A Viking in a very temperate climate and a very nice sunny area. That's awesome, man. Florida, that sounds exciting.
Yeah, it's funny you actually comment on that. I've been told to watch the show Vikings recently, so just kind of it all coming. All the signs are pointing towards that. But yeah, like you said, I've been navigating the markets last night. Actually, we started to do this live call. So for those that don't know, obviously, the group that I'm with is called Forex League. You find us on Instagram. We're mainly focused on trading currencies and commodities. We started doing these live trading sessions for the premium members last night in the London session, and the trader that is on the team that's supposed to do it, he showed up late, so I had to hop on and do it from like 2 to 5 a.m. So normally sleeping during those hours, but I was up trading the London session last night, which I normally do like to trade. I just don't. I like to swing trade and intraday. Like I don't like to wake up and scalp the London session. So I was up trying my best to be an active mind during the session. But yeah, that ties into why I chose to choose Forex. Was it is flexible in the sense that you have these 3 sessions to go ahead and trade if you'd like to.
Yep, that's I really want to get over there. Like I've been asking chat and Twitter, although no one answers my tweets when I do this, but which brokerage to go over to. So I want to be able to trade cryptocurrency, Forex. I want to be able to trade everything on a single brokerage. I want to have ridiculous margin rates. And that's pretty much all my requirements.
Yeah, I mean, if you go over to our Instagram page, we're partnered with Prosperity FX. They're the broker that we work with exclusively. They have, fairly good spreads, very low. The commissions are pretty standard, and for the most part, from the withdrawal standpoint, the withdrawals are secure. They are unregulated, so I know a lot of people are looking for regulated brokers in the U.S. It's not difficult because I do recommend to risk 1% per trade, 0.5% per trade. But if you were to get with a regulated broker in the U.S., it's all 1 to 50 leverage, very low. With these unregulated brokers, you can risk a bit more, 1 to 100, 1 to 200, all the way to 1 to 500. But that's the broker that we work with, that I work on. If you were interested in getting with a broker or anyone, that's the broker that I would recommend. You could trade cryptos, stocks, Forex, commodities, indices, and you'd like to go with.
So we lost you for a little bit there, Angelo, but Prosperity is one. So Prosperity is one that I haven't looked at, so I'll do my due diligence on that and maybe make a decision this week. Just shout out to the chatters that X is moving above and below the line of the resistance, so we're not getting totally defeated here at 10 a.m. But Angelo, I was wondering if you wouldn't mind sharing your screen and taking us through some charts and kind of showing us how you look at your assets.
I'll go ahead and share up. I have a few pairs broken down right now, so I can run through them for everyone that's on the call that's interested. Like we talked about last time, when it comes to technical analysis, like Neil, you are performing on your stock charts. It's fairly similar. We're looking for patterns. The main pairs that I'm trading right now, I've been trading gold a lot recently. It's just when I look at the charts, guys, all I'm looking for is market structure. I'm looking to see what is the trend, on the daily, on the 4-hour time frame. And I always start on the higher time frame. I always start on the weekly time frame. So as we can see on this, this is where gold currently is right now. We're coming down to test this 1680 level, which previously price moved off of pretty dramatically to the upside here, moved up. And gold has a lot more movement in it, a lot more pips or points, as they say in Forex. This thing moved up 760 points previously off this level. We're coming in to retest it, but just starting from a blank chart perspective, what I'm looking for here on the weekly time frame, I always start on this time frame. We could see the trend is very bearish. What I look for is we had this support level established, this lower high point. We broke, retested this level right here, boom, once, twice. These are the areas we're realistically looking for entries. These are very high probability areas, considering they're the support turned into resistance. Then we broke this support level here, pushed down, came back, retested this level once again. So in this area is where I'd be down, going to the lower time frames, evaluating, what's the trend on the lower time frame, where can I possibly get on entries? And then we pushed down, formed this little level of support here, broke this, as we could see, came back, a little bit of a retest. Not my ideal situation here because of all the wicks. Then we pushed down again. This is where we're currently at. And as we could see, the resistance, supports and resistance is all the way up here. So at this point, I have to start to go down time frames and evaluate what's going on the lower time frame, so I could potentially make a decision to enter. And the daily and the 4 hour is where I'm really basing my overall structure on. I trade based solely on price action and market structure. That's the two things that I'm looking for here. Obviously, the other things that I consider, supply and demand zones. I do bring on the Fibonacci levels, mainly looking at 38.2 and 618, which I'll bring on in a second. But as we can see here, the same theme as on the weekly time frame. We came down, formed this level of support, broke lower, came up, formed this level of support right here, broke lower, formed this level of support, and then what happens? We end up falling through this low. And if I were to have my fib on here, and we did go over this last time using the fibs to kind of mark down structure, we're looking for 38.2 is the main area we're looking for reversals from, and 61.8. Those are the two areas that I've highlighted recently. There's a lot of, chatter about this 70.5% level on the Fibonacci tool. I haven't tested it much yet, but these are the main two levels. As we can see, price rejected this area twice, ended up pushing down. We're not going to move the fibs until this level, the support level, is broken, which is here. Price pulls back, and then that's when, and again, we went over this last time, that's when I would be moving my fibs, looking to see where it hits. If it hits that 61.8 area, that 38.2 area. I'm personally trying to trade very naked. Like I can realize whether it's pulling back at that 38.2 or that 618. And the main thing I'm looking for is it testing this most recent support turn resistance level? Like, look at this area, and we're still on the daily time frame. So this is a very strong confirmation. Like, as price is coming up into this area, this is the reality of where I want to get in on a trade. I don't want to get in on a trade once price makes this move back down, all the way down here. When we're all the way up in this area, we're starting to see these wicks. We're testing that resistance. This is when I want to start to put on risk. This is ultimately the best possible area that I could get in on an order. And as we can see here now in the lower time frame, it's the same thing. Just looking at market structure, we hit this high point, pull back, make this high or low, come up, and I try to be just I don't try to get in, like this little move here. Like, it's simple. We have this pullback, push up to this high, this pullback. We came up, tested this level right here, and then now, we're in this area. So from my point of view, I would be thinking, what do I need to break right now to start to get in on potential short orders? As I just mapped out this structure right here. We're at this high, we're forming a wall here, obviously. So I need to see some sort of break of this area to start to get in on entries. And guys, this is me just running through this. Everyone knows about backtesting, what backtesting is, how to do it. And this is what I would do if I was hypothetically testing, some sort of strategy right here. The first kind of order would be, okay, we're breaking this level right now, looking for the retest. We come up, retest this level, have this double top, these huge wicks. If I was stalking this really closely, this would kind of be my first entry area. But say I missed that, we're kind of just on the lower time frame now, on the 1 hour. And when am I going to look for my next potential entry? We need this thing to come back up. We need it to come back up, form some sort of lower high, see how price spikes back up there. Ideally, though, I want price to retest this level. As you see, we're starting to form these like lower time frame pullbacks, like boom, pulled back there, pulled back here, pulled back here. I ideally want price to come all the way back up to this level to actually take an entry. That's, like, in my opinion, the safest, most high probability trade. Obviously, once this all starts to happen, we get this large spike up, then we get like a break of this level, then I could start to say, okay, I want to continue with the trend. Price never retested this level. Now we're like just breaking structure here. I could even put in a little short opportunity right here. And this is all just kind of off the cuff, what I would do. I'd be looking at this, lower time frame. Does this trade make sense? Are there confirmations here? Trend obviously turned to be a bit bullish, broke the support level, spiked back up into this area. Is this, a good entry? We retest the resistance. We had our stops up here. Price is now running about 0.8. Like, that's what I look for, is I'll just look for the high value area. So originally we were looking for this up here, this support level, now turned into resistance. Price never makes it back to this area. So next, all of this structure starts to form. So then we can start evaluating this area. As you see on the 30-minute, the 1 hour, this started to break down. The way that I look at it is like this. We had this low, form this lower high, push down, form this lower high, push down, form this lower high. Then it broke up to bullish trend, form this high, form this higher low, started to consolidate a bit, form this other higher low, pushed up, form this next higher low, and then it starts to break first here, then here, then here. Now we're at this new low. The trend has reversed into a downtrend, and we're always entering on lower highs in a downtrend. So I would take this trade. I'd probably do a sell limit. I've been using sell limits a bit more as part of my trading, because it's all about getting in on the best possible entry, guys. Say I got in down here and then my stops are up here. It's just not as great of a trade as just getting in at this point. We could have had a wick fill here. I had last week this nasty wick fill on golds, and then during the week, I'll show you guys in a second, during the week, it got really choppy last week with things going on with, I guess, this evergreen shipment getting stuck and other things going on. So it got really choppy. I was very aggressive with it, trying to put my stops pretty close, which is fine, which is okay, because I'm just operating the same way that I would. But I'll show you guys in a second. So this trade, as you see, is up about 0.9. I would make this risk-free, let it continue to run and see how it plays out. If it comes back to break even, we're out of the trade, and then we just look for the next position. So that's kind of what I look for, going from the weekly time frame all the way down to the lower time frames. And you can just find structure on every single time frame. As I'm even looking at this now, on the 4 hour, we can see this level was pushed down. We just formed this lower high now. So what I would be doing on this one, and this is all just testing, guys. This is all forward testing, back testing. This is what I'll do to continue to sharpen, my craft, sharpen my skill set. I'm saying, oh, price pushes up into this high. This is my resistance level all the way up here. Let's see if price makes it back up to that area. And we can see here, price comes down, the same kind of variation here, has that support level, breaks, retest, potential trade. This one was massive. And then as I go forward, I'm just going to run through a little trade that I took last week, because market structure was really starting to form on this one. And again, daily time frame, very bearish, broke the support level, pushed down, formed this minor resistance, pushed down. Then we were just testing this resistance. And then all of a sudden we had this support level broke, turned into resistance, and we hung below this. And this is right where I was getting in on my entry, right in that area. Let me go ahead and clean this up a little bit, come down to the 4 hour. So the 4 hour, this is, a little choppier than I'd like to show you guys, but I'm trying to use this line tool to demonstrate. The 4 hour pushed to this low, broke this lower high, then we headed higher, made a new high, pushed down, this higher low form, pushed up, then we just started to consolidate. We started to consolidate, form these lower highs, had this lower high here, this level became this wall right here. And then the area I was looking in was right here. We had this, because I was trying to get on shorts. We had this little support area I lined off right there. This is where I had my original little entry, was like right in this area at the time. This was kind of how it was going down. we had price breaking lower. This was my resistance, support and turn into resistance. I put my little order there, my fill, we got filled right there. So this was like one of my better entries, to be completely honest. We got filled here. My stops were like fairly close. They were like right about here. And then we came into a good amount of profit on this one. We took some profit. I was trying to swing this because the overall move, was this to push really far down. And then ultimately, price came up, took us out at break even, and then it continued to push up a bit until the same thing happened as before. We started to break down support levels right here, and then the next opportunities presented themselves. And then this is what I'm talking about. There's nothing to do with this. Unless you're aggressively selling at the top, there's nothing that we can, there's really nothing that we can do in this area. So after this happened last week, I kind of just was like, okay, golds, I can't really do anything with at the moment. And then we came down to this low. So I'm never trying to sell at a low. I'm always trying to sell at this lower high. So going into after this was what I was anticipating. The pullback and some sort of lower high. And then of course it did pull back to this area because it's always going to form structure. And then from here, I can't tell if this was the 28th. So this was late in the week, last week, where I was just not participating anymore. But this ended up giving several opportunities to kind of take advantage of ultimately this move. And then later on, I'm just going to play this forward all the way. There was even an entry last night that I got in on where basically this thing is clearly out, very bearish, fell below the support that held for a while. And then this was kind of a little continuation I was looking at. I just went down to the 30-minute, very simple, made this low point right here, pushed up, made the support level. Then we broke support. I was either looking to retest this level, never did. Then we broke support, looked for the retest here, and we did. And then this thing freaking tumbled all the way down into this next now support area, which will probably bounce back off of. So that was a little bit more of an advanced lesson than last time. Last time was a lot more beginner-esque. This time just getting into it, getting into where are we trying to find entries? We're trying to find them at the most highly probable points. And I am using sell limits and buy limits more, more frequently lately. And I'm finding some success with them. So it's definitely exciting.
Well, Angelo, the next time we have you on, you'll have to tell us how that works. I would recommend everyone go back and watch the previous video where we had Angelo to get that sort of basic beginner-esque version of his approach to the money markets. Mm-hmm. Or if you're up to speed, I mean, this has been a really great lesson. What I always take away, was the last time and this time, what I've taken away is how you really cut through a lot of the noise that can be perceived with candlesticks, mm-hmm. And use your lines to just really get an idea of the underlying market structure. And it allows you to draw just such clean resistance lines. Your trend lines are extremely clean. So I mean,
yeah, I mean, at some point or another, it comes down to pulling the trigger. There's many situations that look fantastic. You know what I mean? You could go all day and chart and look amazing, but it comes down to which area are you actually going to put that limit at, or which area are you actually going to execute at? That's what's important here. And that's why you have to be extremely agile. There's so many different situations. Like I talk about, I only want to enter on lower highs up here within this 4-hour trend. But then all of a sudden, once this collapses, it's like a race to get in on this next potential position because of how bearish this became. Because if we were to, last time what I talked about was using the fibs, trying to figure out market structure. We were going very, very basic. Like if I go through really quickly, basically like last time what we went over, we were saying, okay, we made a low. I fibbed from the high to the low. Whenever I pull back to 38.2, I mark that as structure. Whenever we break the 0% level, I move my fib. That's what we were really going over last time in a nutshell, like how to actually mark down market structure. And you guys saw I had this all traced out. That's all using the fib. Obviously at this point now, I'm kind of just cutting, like you were saying, cutting through all the noise, and I really understand like what I consider to be lower highs and lower lows. For people that, you know, aren't as experienced, you got to use something. You know, you got to use something to validate what you're looking at, to give you a basis, a foundation of like, okay, this is what I believe to be true. This is how I'm going to use my fibs. And you're going to live and die by that at the end of the day. That's what trading is. It's like an art. You know, you just create your process, go through it. And to be profitable, you got to live and die by it.
Great words to end on. Angelo, thank you so much for joining us and for giving us that lesson. Where can folks learn more from you?
Yeah, what I would say is on Instagram is where we're mainly located. You can just look up 4X League. That's our main page. And then our secondary page is Nick Dark FX. And I say it's our secondary page, but it's actually much larger than the main brand's page. But we do live trading sessions for free on Sundays at 8 p.m. Eastern time and Wednesdays. So tomorrow at 9 a.m. Eastern time, all of our analysis is posted in Telegram. All the information is in Telegram. Link is in the bio in there. So again, just follow us on Forex League. And then we're also partnered with FX Seed. So for you guys that are worried about funding and getting capital, we're partnered with FX Seed. They're our funding firm, and the broker that we use on the funding firm allows you to actually trade stocks with margin, indices, commodities, Forex. So it's pretty cool. You gotta, how it works, you gotta pass a challenge to get funded. So check that out as well. I'm handling like all communication for that too. So yeah, definitely check that out. Could benefit a bunch of you guys.
Love it. All right, Angelo, thanks so much for being on, and we hope to have you on soon.
Yeah, no problem. I'll see you next time, Neil. Have a nice day.
You too. Take care out there.
Bye.
All right. Yeah, I know his charts look good, guys. Paul, want me to change my color scheme to white? Let me tell you something. Back in black, baby. We're not changing unless you guys vote for me to change. Give me a 1 if you guys want me to use a white background, or give me a 2 if you're cool and like the black background. What I do have to say also about the cleanliness of our guest charts is that he doesn't use additional indicators. He just uses, when he says he only uses market structure, he's only just looking at price action. The 2s are coming in. Strong 2s. All right. Thank you, Paul. All right, guys. This is... no, hold on one sec. I got to do the thing. I got to tell you, Rat's managers got me messing up my day. This has been Get Technical. Happy Tuesday, everyone. The markets are choppy. Remember, on a day like this, looking for stocks that are in sectors that have their peers all going in similar directions. The branding just changed. That's okay. Smash that like, Rat Pack. But a lesson from X that we got yesterday, if you're going to pile in toward the close. Amateurs trade the open, pros trade the close. I'm Neil Hamilton. This has been Get Technical. As always, with me is producer AB. Check out Angelo and Nick Dark Forex for some more of that Forex knowledge. Next up are the maestros of malevolence, the dynamic tag team luchador duo of Benzinga Pro, Ryan Faluna and Jonathan Mallard. Spencer's here for some reason. Nope, there he goes. All right, thanks guys for joining me. I will see you tomorrow at the same time.
I'll put this wrong video. What am I doing, guys? Wrong video.
Dude, what are you doing?
Right video, Spencer. Come on, Spencer.
What's up, everybody? Good to be here with you again for another Benzinga Pro showcase. My name's Jonathan, and this is Ryan. Wow, I guess I need more coffee or something. But Ryan, how are you while I learn how to talk?
It's okay, Jonathan. I'm a little choked up over the maestro of maleficence too. I mean, I don't know. Neil, someone needs to take this thesaurus away from Neil. These intros, they're just too much. I'm doing good, Jonathan. How are you doing?
Yeah, I'm doing great, Kelly. I love your comment. Benzinga just needs to open an office in LA. Yeah, let's do LA. Let's do London. Let's go all over the place.
Let's go all over the place. I'm with you there.
And we want to talk with you today about, I mean, we don't want Neil to have all the fun, right? You guys get to talk about tickers all the time. And, you know, TradingView is cool, but we also have charts inside of Benzinga Pro. So, Neil, I have a great lifetime subscription that I can sell to you for a great price. But no, all joking aside, we wanted to open up Benzinga Pro's charts, show you what's available in there, even though there are a few things, there are a few idiosyncrasies between Benzinga Pro's charts and the full TradingView like pro charting experience, but it's good for a lot of our users. So just wanted to take a look there. And go ahead, throw in some more tickers in the chat if you want us to look at those, and we will do that.
Absolutely. And I'm going to start off by saying I'm in complete agreement with Neil. The black chart background is the only way to go. I'm sorry. I know he was asking chat for that. People were throwing in numbers there. There's really only one right answer, and it's the black chart background. So Neil, I'm with you there 100%. Now, I do have my screen pulled up here. So if Spencer can pull this up here, thanks a lot, man. I keep a dedicated workspace that I've named Chart Tool. And in that workspace, I have the details tool only, and I have it set to the chart tab. Now, the keen observer is going to realize that these are TradingView's charts, right? So I'm not sure, you know, Neil uses TradingView. Jonathan, do me a favor and make sure he gets on that Benzinga Pro subscription. Be sure to let him know we have TradingView charts within Pro. I actually really like these charts too. When I started, I got used to the charts in Thinkorswim, and I actually prefer these now to the Thinkorswim charts. They're great, and I see some comments in the chat here. Yes, you're right. This is probably a dark gray, not an actual black, but anyway, it's better than white. So, so one of the things that I wanted to show you is some of the different things that you can do within the TradingView chart within Benzinga Pro, and it's really, really awesome. So I did pull up a stock here. I pulled up a SLGG, which is really having a rough go. Speaking of that sector, I know Neil signed off of the sector. I'm very big into the esports sector. I think that there's a huge bullish run coming ahead of us. So I like a lot of the different names in here. This one I'm waiting out because it recently had an offering, so I want to see it find a bottom before it takes its next leg up. However, in the meantime, some of the things that you can do are some basic technical analysis, and I do this on a pretty regular basis. I'll do this for stocks that I'm looking for like a short-term day trade or flip, and then I'll, of course, also do this for swing long entries that I'm looking for the crux of my trading plan. Now, it's not apparently obvious how all of these things work. So I just wanted to kind of go over some tips and tricks. The first tip that I want to go over here is one that I get asked all of the time. How do you get the shading on the chart? And it's simple, yet there's a caveat that can make it somewhat complicated. So the first things first is that this shading here represents the pre-market and the after-hours session. And for me, when I'm looking at intraday charts, this shading is very, very helpful for me to quickly identify different days and then quickly identify price action during the regular session versus the extended sessions, which is obviously much different, much lower volume in those extended sessions. So in order to turn this on, you're going to use the gear cog wheel in the upper right-hand corner of the chart. And if you click on that and then you click on appearance from the left-hand menu, one of the options in here is session breaks. Now, a couple of things. Obviously, you can change the color. So the other day, I actually had blue on. Evidently, that was triggering someone. So I can go ahead and change this to gray. So it's a little bit easier to see. If you're feeling spicy, you could change this to pink or yellow, or you could pretty much pick any color here that you want. You can also change the thickness and the opacity of the lines, and then also the type of line. If it's easier for you to see the candles with dotted as opposed to dashed, that might be something for you to take a look at. The one tip here, the one caveat, is that this option will sometimes be grayed out if you have a higher time frame selected. So if you have anything above a day as the candle aggregation, you're not going to see the extended sessions. Thus, you're not going to be able to turn that option on. So here I've gone ahead and I've selected a day chart, and now I'm going to click the gear cog in the upper right corner again. Notice that the session breaks option is grayed out. I can't adjust this. I can't turn this on or off. So if you want to adjust that setting, just make sure you select a time frame that is smaller than a day, some type of intraday time frame, 1 minute, 5 minute, 1 hour, 15 minute, whatever you'd like. So that's the first tip here. I find this incredibly helpful. The next tip here are some of the different features, or some of the different things that you can do within the chart. So the first thing here is that you can obviously add indicators by clicking the indicator button. Now, this part is fairly straightforward, right? You can either search, like for example, if you want to add a moving average, you can just start typing that, and then the list will size down as the more that you type in there. One of the other cool things is that the list is actually pretty smart, right? So if I type in RSI, it's going to find relative strength index, even though it's not RSI. It knows what you're trying to type. So it's real smart in that regard. The other cool thing is that once you add indicators, you can add many indicators, and then you can actually turn them on or off depending on what it is that you're looking for. So you'll notice up here in the upper left corner that I have 2 grayed out moving averages. Let me try and make this a little bit bigger, because that might be a little small. I have 2 grayed out moving averages. And the reason that these are grayed out is because I've opted to not show them on the chart right now. Sometimes if you put a lot of drawings or a lot of indicators on a chart, you can actually make it a little bit more difficult to see. I know the last guest there, Neil, was saying how clean the charts look. So this is something that's a personal preference for most people. The way I approach this is generally less is more, right? I want to stay as simple as possible. I don't want to put on 95 different drawings, because if I can't figure out where the price is, then I'm not really helping myself to begin with. So if you're going to do multiple types of technical analysis, you might need multiple types of indicators, and there's actually a very easy way to keep it clean. So these are grayed out here, but I can very easily turn them on by clicking the eye, and you'll see that they draw right onto the chart. So a use case for this would be if you're looking at simple moving averages and then you're looking at exponential moving averages, you might want to turn on the simple moving averages at once and then the exponential moving averages at once. Sure, you can mix them, but it just might make it a little bit easier for you to see. And the other thing is that you can load the indicators that you use frequently and then turn them on or off depending on what strategy you're using. And when you save your layout, it'll save all of those indicators on the chart. And if this ever gets cleared out, you can simply load your layout and all of that work will come back. So it's actually a really nice feature. Sometimes I'll load up multiple in here and then just turn on 1 or 2, depending on what it is that I'm looking for. Awesome. The other thing go ahead, Jonathan. I'm sorry. I didn't mean to run you over there.
Well, I was just saying, Keith brought us VTSI to look at this morning. If you want to check out VTSI. Also, Sean had a good point. Basically, they were looking for volume profile. Do we have that available? And if not, they're talking about connecting with TradingView Pro and how that would be so great to be able to have the full functionality of that inside of Benzinga Pro. So just wanted to address that as well.
Yeah, and Sean's absolutely right. And this is actually one of the things, kudos, Sean, for pointing out one of the shortcomings right away. This is actually one of the things that I'd really like to see added to our charts. Currently, right now, you can't, if you have like a TradingView account, you can't log into that and use some of those extra features within our charts. I'd like to be able to do that in the future. There's some development hoops to run through, and I would actually have to speak with the development team on that. As I understand it, volume profile is actually a custom script within the TradingView library, and that library is not available to us as a client that licenses their charts. So I would say that I don't have a for sure on if we can add that. If we can, it would be in the future, and we would probably try to develop that alongside with being able to link your TradingView account within Pro. I don't know if that's possible. And obviously I don't have a timeline for that. So
it would have to be a part of a bigger business deal. Basically, TradingView is ginormous, and basically we'd have to ink some kind of contract that would be mutually beneficial. So hopefully we can do that, because obviously that would help. I believe it would help Benzinga customers. In fact, if everybody here who uses TradingView, if you could write into TradingView and say, hey, I would love to be able to use your full functionality on Benzinga Pro, that would really help us out. And that kind of stuff actually greases the wheels for an actual contract. So that would be a huge help.
Great point, Jonathan. Great call to action too. I mean, absolutely do that. We would love to do that. I will say that really right now, the only indicator that I miss is in fact volume profile. That is a study that I like quite a bit. And I wish I did have it here in Pro. However, there are other things in here that you can use. And one of the other things that I wanted to mention here, I don't know if it's really going to be applicable for VTSI, which we'll take a look at here shortly. However, one of the things is that, you know, you might be accustomed to finding all of your indicators or studies or whatever in one menu. And so one of the things you might come into indicators here and look for Fibonacci, and you start typing it, and there's no indicators to match your criteria. In reality, with TradingView, there's also another set of tools that can help you do your charting, and those are the drawing tools. And this can be found along the left-hand pane of your chart. One thing to note is at the bottom here, you have this little button here that will actually hide this bar. So it's possible your chart looks like this, where you can't actually see those tools. Look for this little arrow in the bottom left-hand corner, and then you can expand that and have access to those drawing tools. In these drawing tools are some very helpful tools that you are probably accustomed to using, one of which is in fact the Fibonacci tool, both of them actually. So if you click this third button down, you'll see that Fibonacci retracement and trend-based Fibonacci extensions are in here. You can see that there's a whole bunch of other drawings that you can do in here, including some other Fibonacci drawings. I just don't use those myself. I would encourage you to explore this menu, because there's a number of different things in here that are quite easy to use and quite helpful. And in fact, some of the ones that I use all the time, if you've joined us for our happy hour or seen any of the other charting sessions that I've done, I like to use the horizontal line and the trend line quite a bit. These are very, very simple, but often very, very powerful indicators. So if we take a look here at VTSI, this is a perfect example of when I would use some of these tools. I want to know where the near-term support and resistance is for this stock, because obviously we've got a piece of news here, right? Shares are trading higher if the company announced or reported better than expected Q4 EPS results, EPS and sales results, top and bottom line beat. So these are catalysts that I really like trading for. And if you're going to try to trade something for a day trade, especially something with a short-term time horizon, you want to use some of the near-term data that you can get. So let's say for our example here, we want to make a day trade on this today. What I'm going to do is I'm going to look at what happened today, and I'm going to try to figure out, all right, what are the levels that are in play? Because chances are these are going to be in play later in the day. And the tool that I use for that is going to be the horizontal line. This effectively represents a price level. Price levels are going to be very, very important. So let's say, for example, let's say, for example, we don't have regular market data, right? The market hasn't opened yet. We're still kind of planning what we're going to do. We see this pop. We see that it bleeds away a lot of its gains, but we still think that this is a really good catalyst, and this might present a trade for us later in the day. One of the things that I want to do is I want to mark off some of these levels, right? Because I suspect that if the price reaches these levels again during the course of the day, there's going to be some type of interaction there, or some types, excuse me, while I misclick here. There's going to be some type of battle there, or some type of movement, or maybe a reversal, right? So I'm going to do something very, very simple. I'm going to draw a couple of lines in here. I'm going to draw my sixth line here, right here. All right. And now these are the levels that I'm going to pay attention to when the market actually opens. So you'll notice that as soon as the market opened, this dipped a little bit and then bounced right around that 687 level that we identified from the pre-market. It actually ripped quite a bit off that and stopped at this 908 level. I'm not one that believes this is a coincidence. Again, I drew these levels simply by looking at the price and simply by marking that price level. And then when the market actually opened, look how well these levels were obeyed. In fact, right now we seem to be butting up very close to the 778 level. We'll see if that falls. If it does, our next step might be 908. So these charts are really, really simple to use. They're real clean. Black is definitely better. Sorry, folks. And it's built right into Pro. So you can go from chart to news with literally one click of a mouse. And that's really important, especially for me. When I'm trying to do as much research and as much preparation as possible in a short amount of time as possible, speed is going to be king.
Awesome. Thanks, Ryan. It looks like we're out of time for today, but thank you, Zingers, for your great suggestions. And we do have a template coming into the chat to reach out to TradingView and other business partners or potential business partners as well. So until next time, happy trading.
Thanks a lot, guys. All right, it is 10:46. That means it's time for a Newsdesk update. I'm bringing on my friend, Brent Slava. Brent Slava, how are we doing today?
What's up, man?
What's up, man?
What's up?
Brent Slava, everyone, if you don't know, is the head of Benzinga's Newsdesk. And there are very few people that I would go to before Brent when it comes to the question of interpreting news and how I should interpret it, but B, how the market will interpret it. So with Brent, we don't like so much looking at like headlines in the last week. Brent likes doing some more educational stuff. So that being said, Brent, let's talk about offerings. Why?
Sure.
Because you could argue, and I'm sure people are, we've mentioned this on pre-market prep in the past couple of days, that this entire Archo blow up thing, you could argue that was initiated by an offering from Viacom last week, and that probably kicked off some of the selling and some of the margin calls there. So offerings are a common tool companies use for good, sometimes not so great, sometimes they're necessary, right?
Usually it's good. I mean, good for the company. Good for the company. That's different for investors, right?
In most cases, good for the company and good for investors, but not in all cases. So maybe you can start with the different types of offerings that we get.
Yeah, sure. And let's this is like offerings is really a pretty high level piece of news if you ask me, because remember, the whole point of the stock market is to give financing for these companies, right? That's exactly what an offering is. It's a company going to the market and going, hey, we could use some capital, or we think this is a prudent time to raise capital. Can you help us? And so, yeah, Spence, so if we're going to start with, so today I want to go over, types of offerings like you're highlighting, where we can find offerings in Benzinga Pro, how we can understand them as a news item, and then like that'll kind of be clumped in with like the significance of offerings. And so let's start with the types of offerings. So there's an offering where a company just goes right to the market, they offer capital, they're going to get proceeds from the offering, and the investors are going to be diluted, right? There also is something called a shelf offering. And a shelf offering this is the way I think about it. This isn't, technically how it works, but I think it's an effective way to think about it. Shelf offering is when a company is registering shares that they will potentially offer. They don't have to offer them. The way that I like to think about it is they're putting the offering on the shelf, and if they want to tap that financing need, they can go grab it off the shelf, and then they can do the offering. So when you see in Benzinga Pro or wherever you're looking at news, a shelf offering, what you want to know is it's likely the company is going to do the offering, but there's a chance they might not do the offering. When they're registering the shares, they're alerting Wall Street, they're alerting investors that they might do this offering, but you're going to hear about it later when they actually disclose that they're going to be doing this offering. The last kind of offering that I want to highlight is an offering via selling shareholders. And so that's when a group of investors or an individual investor reaches out to a company or to one of their brokers and says, hey, we want to sell some shares in the company. What's special about when a company is doing an offering via selling shareholders is that the company isn't going to be receiving proceeds from that offering. The shareholders are going to be receiving proceeds from when they sold those shares. So for selling shareholder offering, just remember that the company isn't going to be able to tap into that financing it was on the shareholder side of things.
And correct me if I'm wrong, but an offering via selling shareholders, that's not dilutive, right? That's not new money. Those aren't shares.
The fund is selling shares that they already have. Yes.
Right.
Not
dilutive, and the company does not get the proceeds of. It's not like the company wants to raise money. It's like, hey, this investor wants to sell.
For whatever reason. Could be good reasons, could be bad reasons.
Yes.
You have to dig a little bit more into it. Maybe, you could learn a little bit about the fund or the firm that's going to be doing the offering, the selling, and maybe you could understand some of their strategy around the sale, right?
Yep.
Cool. So that was 3 types of offerings that we're going to go over really quick.
So again, to recap.
Yeah.
Regular
Sure.
offering.
Yep.
Shelf offering.
Yep.
Offering via selling shareholders.
Yep, exactly.
Okay.
And the market is going to react differently to each of these, and we'll get into that when we talk about sort of like the significance and how to understand these things a little bit. So got about 8 minutes left or so, Spence. In those 8 minutes, I'm going to give you some direction on Benzinga Pro. I want you to pull up a couple things on Benzinga Pro, okay?
Let's go.
Whoa, look at this. You're already trying a little search there.
Yep.
So you can find offering news on source BZ Wire. If you click the sources button, Spence, thank you, sir. You can see that Spence only has Benzinga Wire checked. Benzinga Wire is all of the content that's generated by our team of reporters, whether it's somebody who's working on breaking news for Benzinga Pro headlines or a Benzinga.com article. So that's just that one there, Spence. So go back to your news feed now. Thank you, sir. And so you could use a keyword search here. You could search like Spence was before he cleared it. He was searching something much more specific. He was searching offering via selling shareholders. He wanted to target specifically those offerings for selling shareholders. You could just use the word offering. And here's a lot of the offering news. You also could use your category filter. So get rid of your.
That's probably a cleaner way to do it.
Probably a cleaner way, yeah. And so it's under news. So hit the news one, and then it's alphabetized. So click offering. Let's just see what it looks like, Spence. Cool. So here was, and again, a way to put this is here is all of the headlines that a Benzinga Pro reporter identified as being related to offering type of news item. They went into our backend system and they clicked the category that said offering. That's how it wound up here in this filter. Now, another way, and this is for a little bit of a deeper researcher, a deeper user for Benzinga Pro, you can use the offering category, Spence, in tandem with a press release.
Oh,
yeah.
Wait, walk me.
So go to your source.
Going back to my offerings.
He's going back to his offerings. So he's clicking news, clicking his offerings. Now click on your source, Spence.
Yeah.
And then turn off BZ Wire. We'll just be focused, and then hit press releases.
Right. Oh, this is a new.
So think about this way. If you are somebody who loves the Benzinga Wire, you love the work that the Benzinga reporters are doing, use Benzinga Wire. If you're somebody who is getting overwhelmed with there's literally thousands of press releases and SEC filings that come in every day to Benzinga Pro. If you get overwhelmed by all of that content, use Benzinga Wire. However, if you're somebody who wants to get a little bit deeper research, you can be looking at the actual information that the reporters on the team are looking at themselves and then making decisions about posting stuff to BZ Wire. And that's how you would look with either the press release source or the SEC source.
Yep. I've never actually done that. I've never actually filtered out a press release newsfeed by categories, but that is a way.
Kind of cool, right?
As Brent said here, let me just show, just to give you an idea of just the deluge of press releases. This is no one can read all this. This is
minutes.
This is a few a minute, right? And especially in the morning, it's hundreds in an hour.
And this is like what we're as reporters for Benzinga Pro. This is like our bread and butter. This is like what we're good at.
Right.
So we can help a ton with the filtering out and identifying of what's important and putting it into a easily consumable format for that BZ wire.
Right. So you can see just by filtering that one thing, offerings, I went from thousands of headlines today to
5 or 6. Right. Yep. Exactly. And so the other thing that I would just want to note with how you're filtering and finding these, so the shelf offering, Spence, shelf offering is almost always, I'm trying to think, I think there might have been 1 or 2 offerings in the last 100 or 500 offering news items that have not come in through an SEC filing. The shelf offering is largely going to come in through the SEC's Edgar online database. Okay. And so if you happen to be wanting to target shelf offerings for your strategy, cool. You'll just have to use the SEC feed. And I don't know if, I don't think you can do any kind of like, unfortunately, really good feedback for us. We definitely want to be able to apply some of those filters for our categories to stuff like SEC. We can do it for press releases. Why not do it for SEC filings? Definitely something we can be working on.
But again, you can always do a keyword search. So offering.
You can, that might work, Spence. The form that is specifically for offering, for shelf offerings, is at S3. So let's see if that works. Maybe that might work. Maybe I think you have to do a hyphen. Yes. Yes.
Let's see if that works.
It looks like there's some noise in there, right?
Yeah.
Not as clean as we would like it, definitely.
Not super clean. Not super clean.
So let's really quickly touch on, understanding these and like the significance. So you hit on the key for offering, Spence, at least from the market's perspective. The market is very concerned with dilution of its shareholders, right? So when a company does an offering and they're going to put out, $7 million in shares, people that are already invested are now $7 million less rich in a way, right? You think that's a fine way to put it? Each of their shares are being diluted because there's now more shareholders out there. However, if a company is like in some dire need of financing, maybe the street doesn't care about dilution. Maybe they're just like, oh, thank God they got $7 million more in capital. We really need that capital, and it was the $7 million hump that we're now going to have that we can get over, whatever hurdle we needed to, and we're gonna be fine after that. So that's the case where the market maybe would like an offering news item.
Yep.
Unfortunately, it's not as clean as, oh, there's an offering news item, short the stock, or the stock's gonna go lower. It doesn't really work that way, and especially you got to consider, like you were suggesting, Spencer. You got to consider: is it a direct normal offering? Is it shelf offering? Is it a selling shareholders offering? If it's selling shareholders offering, it's definitely not super easy that the stock's just going to start falling right away.
Right, and oftentimes these offerings can serve as the catalyst for a trend, right? So if you go, I mentioned Viacom. This was actually an unusual situation anyway, so maybe not the best example, but if I pull my chart here, zoom out and make it a little bigger. All right, so that offering was priced at the top. Literally, they offering at the top. Now, there's a lot of funky stuff going on with Viacom.
Right.
This is not a normal situation, but in more normal circumstances, offerings can serve as a floor. Like the offer, wherever they price an offering.
That's a really good point, Spence.
Serve as a floor.
Wherever it prices, you're saying, right?
So in this case,
that's smart.
In this case, it's serving as a ceiling. In this case, the offering price was what? 84, if memory serves. I don't remember.
I can't remember, Spence. Yeah.
Somewhere in the 80s. That's a long ways away. But so in this case, it's serving as a ceiling. But oftentimes they serve as a floor. And so that can help direct your trend.
And one more quick thing, Spence. Just think about, I would bet there would be investors in Viacom who, if the company didn't do an offering up there, they would have been like, "What the hell? Why didn't they do an offering? Didn't they want capital at a really good price?"
Yeah. I mean, that's what people were saying about GameStop all the way up. Like, guys, are you raising money? Because
we could raise $2 billion right here. Yeah, exactly.
Brent said it earlier. And what is an offering at its core? It's one of the main reasons why a company would even choose to go public in the capital markets, so they can
Debt
access
financing.
liquidity whenever they want or need it.
Yep.
Right. So whoever, I think it was Joel Kalina, said on pre-market prep this morning, the best trader, the best trader in Viacom. We just talked about the Viacom situation. Best trader in Viacom was a Viacom CFO. Right.
That's a funny way to put it.
Right. Yeah. So anyway, okay. Recap. Shelf offerings, regular offering via selling shareholders. Brent Slava is the head of the Benzinga Pro News Desk. The guy is the man when it comes to this stuff. Again, when you are a subscriber to Benzinga Pro, you don't just get like all the features, all the bells and whistles we just showed you. You get access to people like Brent. Like when you ask questions, he's expected to answer. Right? Yep. That's one of the key features of a Benzinga Pro subscription. And I'm going to mention, as I always do, or I always put out on the screen, but don't actually say it. If you enter the code YouTube47, that'll get you 47% off the price of a monthly Benzinga Pro subscription.
That's a nice little savings.
Annually. Yes, it is.
And for any BZ Pro members, get a hold of me.
Yeah. See, Brent's lonely at home. Say what up. I don't know how long.
Thanks for having me on, Spence. Have a good day, man. Later, everybody.
It is 11:02. The people are here for SPACs, and what the people want, the people get. So let's run that intro. And are they in the Elite Eight on SPAC Attack? I don't know what round they're in. I think they're in the Elite Eight.
What up? SPAC Attack family, how we doing today? Hit the like. Let's get this party started. Brent, you already know the DJ Brent. I hope you guys enjoyed that. I always love listening to Brent's advice. I don't know if you guys caught him on the At The Close on Friday, but definitely someone that knows the market. So what's going on, guys? How we doing? Want to say hello today. Want to take a little second here to just, if you're new to the show, say hello. You know, this is one of the greatest time. I want to give some shout outs to some of the people that we always have in our chat. Let's do a little roll through here. All right. So how we doing? Shout out Andrew, Kelly, Chris. What's going on? Sean, Solar, Z, Low, Brent, even Brent up in there. Eric, what's going on, guys? David, Renz. Who else we got in the house? Say hello. Muhammad, what's going on? It's good to see you guys in the chat. I always love to see the loyal listeners that stick with us every single day. So do me a favor, smash that like button, hit the subscribe bell. Let's get started with SPAC Attack. You know, I got to get Chris in here. I think he's working his way into here. So before we get into kind of some of the headlines, I know you guys have been seeing some SPACs out there. So let me know what's going on, guys. How are you guys feeling? You feeling excited today? What's up? What's up, Chris? What's up, Sean, Nate, Dipper, Alex? Dipper, you getting the dip today? What's going on? Trying to wake up, Kelly? No worries. We need a little coffee here. My man, Chris Catchy.
What's happening, Mitch? How we doing today on this fine Tuesday morning / almost afternoon?
Hey, it's snowing here in Colorado Springs, but I got the blue skies because I'm trying to get the blue skies to get this market back up here. So do we got clear blue skies? That's what I want to see. So what's going on today? Do we got some headlines or what, man?
Yeah, you know, we got some headlines. We also did get one new deal announced today. It was one that was rumored before, but I got some great details to share on that new deal. So let's kick it and send it to headlines.
Let's do it. Let's do some headlines, and then we'll get into our Elite 8 March SPAC news.
All right, guys. Yeah. So as I said, this Tuesday morning, some exciting headlines to get to, and then we also, want to get into that Elite 8 March SPACness tournament. And on the show today, we have a very special guest to help us get down to the Final Four that you guys in the chat are going to help us vote on. So super excited about this show today. So last night we had BFT merging with PaySafe. Shares were up about 5 or 6% after hours. They were featured on Mad Money. We told you this on the show yesterday that Bill Foley was going to be on the show and to keep an eye on BFT and some of those other Foley SPACs. Kramer was very, very bullish on PaySafe going forward. That merger has been approved. It will trade with the new ticker this week. So keep an eye out on this deal. We've talked a lot about PaySafe and, some great things in that interview with Kramer last night. And then we have STPK merging with STEM. They set their merger vote date for April 27th, so about a month from now. But, as we enter April, the calendar is starting to fill up nicely with some of these merger votes. So some of these deals that may not have gotten done in the first quarter, looks like, that second quarter is going to start out with a bunch of hopeful merger approvals. So looking forward to that. Then earnings last night, we did have 3 companies reporting. So I just want to touch on them briefly. And then maybe when we pull up the charts, we can get to them. We had Danimer Scientific, that's DNMR, report earnings. Shares are down about 12% right now. We had a Butterfly Network. Shares are down 11% today. And then our big one, that we can get into later, we had Canoe. That's ticker GOEV. They reported last night and shares are down 21% today. So not a lot of positive from those, earnings. Again, some of these companies, it's about the forward looking, right? And what they're going to do in the future. But Go EV, Canoe, just not getting a lot of love today after those earnings. And then XL Fleet also reported then this morning. Shares are down, or actually they report tonight. So that one should be kept on watch as well. That is a former SPAC trading under $10. So keep an eye out on that one. A couple SPACs to watch. We have COOLU still trading in units. The company behind that SPAC announced 2 new SPACs, which could mean, that a deal is coming soon. I do see common shares also, so COOL. So keep an eye out on that one as we kind of follow that pattern of these new SPACs being announced and then whether or not they announce deals for those first ones. Then we have ALTU. So ALTU is rumored to bring Aireon public. Aireon is a hypersonic company. We talked about this yesterday, right? So they had a tweet out sharing the date of March 29th. So there was some speculation that they could be announcing that SPAC merger on that day. But what they announced yesterday instead was a Mach 3 commercial airliner that can travel to any 2 points on the planet in 3 hours or less. So that's a pretty big announcement from them. Again, we've seen ARK Funds and Kathy Wood talk about hypersonic. We've seen a lot of the big airline companies also make some investments in the, hypersonic space. So keep an eye out. We'll see if we get a, definitive agreement from ALTU here. Then we have CCIV, which I do own shares of. So Lucid Motors, new plans revealed for that $25,000 car. This doesn't come as a big surprise, but a website, carbuzz.com, is sharing some details from Peter Rawlinson, in that race for a cheap EV going forward that could definitely help them compete, not only with Tesla, but with some of these, other large auto companies really trying to hit on that key price point, bringing the cost down for future electric vehicles. An ARC fund yesterday, the big SPAC purchase continues to be DraftKings. So added more shares of DraftKings to 2 of the ETFs that already own shares. And then we have SPCE, which I do own shares of, Virgin Galactic. They unveiled that Spaceship 3 today, which looks awesome. Lots of room for those passengers, those Under Armour spacesuits, but I have seen some people, rightfully so, critical as well, that the company still needs to get those test flights completed and, really needs to set the path going forward. And it's not just about, what the spacecraft looks like here. Then our big movers from yesterday, we had those 2 deals announced. So CMIIU still trading in units, up 8% on that deal with Soma Logic, of course, getting pipe backing from ARC funds as well. And then Ajax, AJAX, which I do own a position in, up 4% on that deal with Kazoo, the largest online seller of cars in the UK. And then turning to our deals. So this morning we got confirmation, ticker QELL. That's Quell Acquisition, announcing a rumor with Lilium, which is an electric vertical takeoff and landing company, one of several in that space to go public via SPAC. So valuing the company pro forma at $3.3 billion. Quell, of course, led by Barry Engel, who's the former General Motors North America president. He will join Lilium going forward. Pipe of $450 million includes investments by Bailey Gifford, BlackRock, Tencent Holdings, PIMCO, and Palantir Technologies. Proceeds of $830 million. So again, Lilium seeking to be the leader in this eVTOL market, saying they can save people hours with their jets. They have a proprietary vectored thrust technology that they say sets them apart. And then their new 7-seater Lilium jet was also unveiled today. They call it the best unit economics and market leading capacity for passengers and cargo in the space. Speeds of 175 miles per hour, altitude of 10,000 feet, and a range of 155 miles. And then also 30 times fewer components than commercial aircraft, which they think can help it with manufacturing and scalability. And then going forward, so they see commercial operations in 2024. They have a 100,000 square foot prototype manufacturing facility in Munich. They're going to launch operations in Florida in 2024 with 14, ports. And then they also see offering business-to-business operations in the future. And then if that 7-seater wasn't enough to get investors excited this morning, they also offer a 16-seater jet in the future that they think can really help grow in that market. They see a total market size of $1.5 to $3 trillion, $200 million in commitments from their infrastructure partners, and then also talking to more partners about additional places in Europe. So one Lilium 7-seater jet, $15,000 revenue per day, $5 million a year. It costs $2.5 million to make. They see the launch in Florida having 125 jets, $600 million in annual revenue. And then in Germany, 190 jets, $900 million in annual revenue. That's their first 2 markets. 90 jets in its first year, 2024, and they see hitting 1,000 jets globally by 2027. So revenue of $0.2 billion in 2024, $1.3 billion in 2025, and then all the way up to $5.9 billion in 2027. Shares of Quell are up today. Let me turn to our calendar. So we have that vote NPA later this week on April 1st. And then we do have earnings tonight from Romeo Power, RMO, and CLVR, Clever Leaves. So an exciting calendar for the week. And then, as I said, that April calendar filling up nicely with some of these merger votes. So that's what I've got, Mitch, for headlines. And then, of course, that deal for QELL, which has been rumored before.
All right, guys. So one thing I do want to take a look at is one stock that I had mentioned that it was probably going to hang out for a little while. it's starting to look good for me technically. And what stock is that, guys? None other than, of course, and Chris mentioned it a little while ago, but boom, CCIV starting to look good now. I'll tell you the truth, man. This is one stock that I called, and it got so hyped that it got me to the point where I didn't even like talking about it. This is one that I called at $10, and I still didn't even like talking about it because there was just way too much hype put out there. And you know how much I hate the pump and dump schemes, Chris, and people that talk like that on Twitter. So, but one thing I will mention is now we're starting to get kind of this bottoming action. I pointed out this low before, and I was trying to let it get to this low, kind of right here in this 20 area. And we had that little wick day that it went to it, but it keeps trying to turn away from it. And then that's a good sign. Showing us some signs that there is some price volume here that's starting to level out. And I'm starting to get interested, because you could kind of risk off of that level now and start trying to look at where you can start sizing in. This is an interesting chart because I think eventually you could see it up there at $60. You start seeing these get sold, start seeing these start rolling, new factory expansions, and then you could see that right back up there. So my question is, will it hit this kind of gap, this shadow? Because that shadow is going to be hard to overcome. But right now, it's starting to level up. It's starting to look interesting. Definitely starting to get on my radar there. CCIV.
Yeah, we've talked about that one a lot. I do own shares, on that chart, looking good, as you pointed out. For me, again, the story where we're still a little ways away from getting those cars in production, but I think they're going to be able to compete. They've got some strong financial backing, and that first luxury EV already reached full reservation, strong demand. It's going to become a well-known brand. So I'm definitely excited. And then, to see them talk about that $25,000 car, sounds good if they can make it happen. Definitely lots of companies out there trying to get that price point under 30,000. Who's going to be first and who's going to be best, or is there room for multiple players in that field?
All right, guys. So let's go ahead and let's get into our March SPACness. Before we get into our March SPACness, I think let's go ahead and bring on the man himself. They call him the G, but for most people, what do they call him, Chris? What do they call him?
Yeah, guys, we talk SPACs all the time. We bring you CEOs of companies. We bring you the experts in the field, and I'm very excited to bring on someone who I've been following on Twitter for a long time in the SPAC space, the one and only SPAC guru, over 70,000 followers on Twitter. He's one of the go-to sources for SPAC content and knowledge. One of the nicest guys out there too, as far as interacting with people. So my pleasure to bring on my friend, SPAC Guru. How you doing today, Guru?
Gentlemen, boy, those news comments this morning, the detail, this wasn't just headlines. This was intense, deep due diligence. Hats off. You guys are both goats. Man, that was impressive. Way to go.
Oh, thank you. And coming from the GOAT himself, that means so much. We're so happy to get you on the show. And we've got an exciting show today because along with those headlines in that deal, as I told you, we've been running March SPACness, our own take on the March Madness tournament. So we started with 64 former SPACs that have completed deals. We put them up to a vote in our chat, which we love engaging with all our fans out there in the chat. And here we are today. We're down to our Elite 8. So we have 4 matchups to dive into today. And what we'd like to do, Guru, is have you share, maybe some of your opinions and thoughts on these companies. So our chat, can get some more insight into these exciting matchups between these well-known SPACs.
Yeah, I'm ready.
Oh, yeah. I know you're definitely ready. My man always putting out information and giving some some good information there. So today we're going to have some fun, guys. We're going to get into our Elite 8. And really, we're working our way to the Final Four, and then we'll be working our way towards the National SPAC Championship. All right, guys. So before we get into that, I did get mentioned here. Hertz Cramblr is asking about APXT. Any hope here? Well, I can tell you, I love TJ. Love TJ. You know, you got to love the man. If you didn't see their interview with him, you got to check it out. But one thing I definitely say is just keep an eye on it. Just keep an eye on it. We got to get through this period right now that we've been going through. And I think if we can get through that period, you just might see some of these SPACs come back to life.
Yeah, absolutely. APXT, AvePoint, we had the CEO, TJ, on our show talking about how they're a Microsoft partner, and bridging that gap between Microsoft and small to medium-sized businesses. So, thank you for the love in the chat and that tip. I like APXT going forward. It's in that software, that SaaS space, and I think just not getting a lot of love right now. But we'll see what happens, once that merger goes through. So without further ado, Mitch and Guru, you ready to dive into these matchups today?
Let's do it. I'm excited. First matchup we are going to work our way in the West here. As you guys know, one of the good things about doing this kind of bracket was that we worked our way down to some pretty interesting companies here. I think you guys are going to see that there's some close battles here, but let's go ahead. Let's zoom in here and let's get into our first battle of the day. All right. So here
go
we
ahead,
got
Mitch.
Romeo versus RSI. Chris?
Yeah, so guys, press 1 in the chat for RMO, Romeo Power. Press 2 in the chat for RSI, Rush Street Interactive. Interesting matchup here. Very different sectors. We have a battery company and we have a sports betting company. I'm a fan of both of these companies. I do own shares of RMO. We've talked about both of them a lot. So again, 1 for RMO, 2 for RSI, and I'm going to turn things over to the Guru. SPAC Guru, what do you think of these two companies, and who gets your vote to move on for the best 2021 performance here?
Well, before we get there, let's talk about some things that have already happened. Romeo Power, as we know, called the warrants. Since they called their warrants, stocks come down quite a bit. Don't remember exactly, but I think the stock had a 40 handle on it at one time. And really interesting. We have a lot of infrastructure plays. We have batteries. We have technology. We have government saying they're pointing in that direction. Very interesting. Now, it's competitor, RSI, Rush Street. Rush Street was who the heck is that when the merger was announced? And people were saying, baby DraftKings, but when you really go and you look and you see who this crowd is and you see how big their footprint already is, it's pretty incredible. And as you guys know, and you've interviewed, Nicolo, that guy's a stud. It's part of the DMY family of SPACs. And we got two monsters here. And we're going to do this based on percentage gain for 2021. I like them both. I think Romeo Power is the winner because of where it's been. I think that there are people looking to average down. It's had a bigger fall from grace. I love RSI. Just so you know, I own them both in my IRA. Probably close to equal weight, so I don't have a bias based on that. I won't look right now to see what my average cost is because that might sway my decision.
Right.
But right now, if I had to pick one to move forward to the next round, I'm going Romeo Power.
Awesome. You heard it here from the guru. He owns both of these in the IRA. Again, you know, we're big fans of Niccolo De Masi on the show. We've had him on several times, you know, getting that Rush Street deal done. Mitch, I'm seeing a very, very split vote here in the chat. If I add it up, I think the ones for Romeo, though, actually take it. So I think RMO is the winner here. Is that accurate? Or are we still counting?
Let's see if I can change it up here. I think we got a winner here in RSI. So that's what I would say. At the end of the day, guys, you can see I've mentioned before, a lot of people try to compare GNOG, but I think in the long run, you're going to see RSI as twice the company of GNOG. And that's why I would go with RSI here. But let's see. Looks like I got another one as I started talking that. So guess what? Buzzer beater, like SPAC broker saying here. Romeo Power, Lionel, I'm going to have to reach out. He's going to have to know. He's going to have to come on for the Final Four.
For sure. We're going to have to get Lionel back on the show. So Romeo Power moving on to the Final Four, you guys. Great job in the chat. Very, very close vote out there. You know, and great comments from SPAC Guru on both of these companies. So that gets me excited when we have an Elite Eight with such a strong matchups of, you know, strong companies here, where it makes it hard for, you know, Guru to pick a winner, makes it hard for me to pick a winner, and hard for, you know, Mitch in the chat as well to pick winners. So great matchups here. Let's move on down to the East. Another exciting matchup. So we have Desktop Metal, that's ticker DM, against Open Door, ticker OPEN. So guys, in the chat, press 1 for Desktop Metal, 2 for Open Door, 2 giants. Again, we have 3D printing, and we have, you know, buying and selling homes online. Let's turn again to SPAC Guru. What are your thoughts on these two great companies in this exciting Elite Eight matchup?
Well, let's go back and do another recap. Desktop Metal just called their warrants. When these SPACs de-SPAC and they get to call the warrants, you know, it creates a little bit of drama. People are worried about dilution. People are worried about ARBs and all those things, rightfully so. So Desktop Metal, the original unicorn 3D printer that we've seen go SPAC, as you know, we've seen at least 2 more come since then. A1, AONE, and we've also seen what's the one? The 3D, the Spitfire that just came out from Barry Sternick. I own it.
SPFR, John Spitfire.
Yes. So those are 3 different 3D printers, all very interesting. Now let's talk about Open Door. Open Door, as we know, Chamath's second deal, if I'm not mistaken, was IPOB. Chamath getting beat up a little bit right now in social media. A little bit of drama. Some people weren't happy that he sold his Virgin Galactic stock. Some people didn't like some of his tweets, and then he went dark. He's done. Now, the interesting is we have IPOB, which is Chamath SPAC, versus DM, this Desktop Metal, which Chamath did the pipe. So this is Chamath versus Chamath. This is Warriors versus Warriors. So I'm going to tell you, I posted it this weekend. If you look at my screen, I was with the chairman of Desktop Metal this weekend. Great guy, Leo Hendry, and he had nothing but great things to say about Chamath as well. So I'm going to also just get into one other thing. On the Open Door, we also have our SPAC squad buddy Spencer, who's got Supernova, which a lot of people say, hey, this is the guy who started Zillow. You know, this could be an interesting play as well. So we have Desktop Metal versus the other 2 newer 3D printers, and we have Open Door versus, you know, incumbent Zillow and the new Spencer Supernova deal. So they're both pretty interesting. I looked at both of their highs, pretty similar in price. As we know, SPACs would get beat up a little bit right now, but I know the Leo Hendry crew. I know these guys do acquisitions. I remember him from TDI. The guy, he owned the Yes Network. For a short time, he owned Vice. Anybody gets in their way, any competition, they have unlimited access to money, but so does Chamath. But I know that Leo buys up all the competitors that get in his way at times, and I don't understand the open door unique value proposition compared to some others. I'm going Desktop Metal.
Awesome. You guys heard it here. Guru, talking again, the Chamath connection, both of these companies. I have owned shares of both of these companies in the past. I did own Open when it was IPOB. And SPAC Guru getting some love from the chat, guys. Let's hear it for SPAC Guru. Again, if you don't follow him on Twitter, at SPAC Guru. He's one of the nicest guys out there, one of the most knowledgeable in the SPAC space. So, we love having him on here. What great insight he just brought. And that's a key point, talking about the competition, right? Mitch, you and I have talked, about that open door versus offer pad. And then, Desktop Metal Guru, I love the comments about doing acquisitions. Even after getting that deal done, it looks like they've already worked on several acquisitions. So, to me, I got to follow that and say, Desktop Metal would be my winner as well. Mitch, what do you think before we tally up these votes here?
Well, one thing I've mentioned before is I still have my eye on if Biden does that first-time buyer credit, because I think that will shake this out of the water. I think you'll see Open win immediately because of that. I mean, at the end of the day, I know that the supply of houses out there right now is very slim. And another thing is, to build new houses right now, it's too expensive. Inflation, guys. Look at the price of lumber. Look at the price of everything that you're going to need to build a house. Then, if you really look at it, then you'll see, hey, Open actually has some move here, because with inflation, I think we get a housing boom. I think you're going to see housing prices increase 30% from their value. And if that's happening, all I got to say is homes for sale, baby. Homes for sale, because I might become a realtor if that's what's going to happen, man. I don't know about you, but they make pretty good money when they're selling houses. So
hey Mitch, how much do you like debates? Obviously, in a friendly, respectful way.
Go for it. I always love debates.
Well, let me tell you what I know. I know that about 50% of the landlords are what they call mom and pop landlords. They're not Blackstone, they're not BlackRock, they're not the big REITs. They're people who own these houses for second income, and a lot of them use them for their own income. And right now, with the rental freeze, a lot of these mom and pops are hurting, and the tenants are not filling out the paperwork to help them out. So these mom and pops are selling. And they're selling to who? They're selling to first-time home buyers. They're taking a lot of the supply out of the market. The rental market is very underserved and will continue to go in that direction. Right now, it's impossible to buy building materials. It's impossible. It doesn't matter how much money you have when they don't have the physical things to build a house. It's almost like the chip shortage right now in auto manufacturing. You can love the car OEMs, but if they're not getting their hands on the chips, they're not building the cars. And the other thing I want to tell you, why Desktop Metal, in my opinion, will be the winner. I hate drama. Get those friggin' warrants exercised. Get them out of the way. Let the ARBs have their final punch to the SPAC face. People who are anti-SPAC, people who see it as easy hanging fruit, they beat the crap out of them because they can. Desktop Metal has now executed its final SPAC hangover and is now free to fly. And Open Door has not called the warrants yet. We're unknown what's going on with manufacturing products, and the individual homeowner is right now diminishing daily.
Yeah, excellent points there, Guru. Again, that's why we have you on the show talking about, the warrant being a catalyst here as well. So, excellent point. I love that. Mitch, I tallied up the votes. I got to say, again, super close race, but by my count, Desktop Metal getting the win and moving on to the Final Four. Is that accurate here?
I'll take it. I'll take it. Desktop Metal for the win here. Moving on. Moving on. All right, guys, let's go ahead and let's get into the Dirty South here. And this is when the battles start getting tight. Chris and I have talked about it. The right side of this bracket somehow turned out to be the deaf side. You didn't really want to be on the right side because the competition was fierce. And let me tell you guys, there were some really close battles here, whether it was MP or FSR or ChargePoint and DraftKings. So let's get into the battle right now. Next up, we got DKNG here versus MP. Who's going to win this one? It's a close one. What's going on, Chris?
You know, two giants here, in my opinion. Of course, this is March SPACness. We've talked about sports betting companies. You saw RSI on the left side of the bracket make it to the Elite 8. DraftKings, you know, a dominant player in the online sports betting market. They've also been one of the dominant SPACs, right? Post-merger, trading strong the whole way. You know, but going up against MP Materials, one of our favorites on the show, we of course had CEO James Litinsky back in November when that was a $13 stock. But they have a lot going for them, right? With rare earth mining and the support of the Biden administration right now to really wean off from China and get rare earth mining done here in the US. And, you know, when we had James on the show, he talked about being able to support, you know, electric vehicle companies, wind power companies, and other industries going forward. So this is a huge matchup. I don't even know if I can make a pick here. Again, I'm going to turn. So again, guys, in the chat, press 1 for DraftKings, DKNG, 2 for MP Materials. Let's turn it over to SPAC Guru. What do you got for this exciting matchup for us?
Boy, talk about opposites. We've got defense versus offense here. So let's break it down. We have DraftKings from SPAC stud Harry Sloan. For those of you who don't know DraftKings and skills, Harry Sloan has a new unit available, the Soaring Eagle. The unit is almost at NAV. Holy crap. It's over $1 billion. If you don't know where to go, you have some money you need to tuck away. I'm not telling you what to buy or sell. My largest position right now in the trading account is Soaring Eagle and DraftKings, getting the DraftKings. So now we have DraftKings. Now, we also have other small little, not little, but we have other things that are distracting us from DraftKings. We have RSI. We have, you know, even if you, whether you want to say HZON with Sport Radar. We have Golden Nugget, GNOG. We have a lot of distractions. And this DraftKings, it's trading pretty darn high. So let's take a break from DraftKings. Let's talk about MP. Got to throw in the Chamath connection again. Chamath does the pipe on this. This is a rare earths company. Now I'm going to show you how old I am. I own this same exact rare earths mining concession block, hole in the ground, whatever you want to call it, back in the day when it was a SPAC that Goldman Sachs did called Molycorp. Molycorp was a SPAC, as you know, $10 start. Don't remember exactly where it went. Want to say 70 something. And the CEO was on an interview and he said his stock was overpriced. It was a bubble. The end. Put a fork in it. Molycorp stock plummets. And here we are now. If you live long enough, you get to see everything. Molycorp is back. It's got some new wheels on it. And rare earths are as important, even more important today as they were when this was Molycorp. With all that being said, I think DraftKings is a very high price, being we're going by percentage gain of money invested today. MP is down considerably from its all-time high. There is really no other competitor that you could put apples to apples against MP, so its rarity and its scarcity makes it very interesting. To me, it's a no-brainer for return on investment. I'm going MP material all day, every day. DraftKings had a great run. Love the company, but money goes where it's treated best. And if I had to go today, I'm going MP materials. I own MP materials. I do not own DraftKings.
Excellent points there, Guru. Yeah, DraftKings, that's the thing that stands out for me. Dominant position, but the shares are up quite a bit right now. MP Materials has pulled back, and as you said, very little competition, at least here in the U.S. I do also like, as I said, the Biden administration being very supportive of them getting, operations done here. So to me, I would also have to say MP Materials, and shout out on that Soaring Eagle, guys. If you don't know, we told you about it when it was first announced on the show. The same team that has DraftKings and Skills, which you're going to see in another minute, bringing Soaring Eagle. A ticker is SRNGU, trading as units at around $10 right now. Guru said he's a big fan of it and a large position, and I also have a very large position in Soaring Eagle right now because I think they get a great deal done in the future. But that's the future. In the now, DraftKings MP, Mitch, what do you think here? And before we get to this vote.
Yeah, one thing I'd have to say is in MP, I think one of the problems with MP is that they got a lot of pressure that they're going to see. I think they have to worry about what's going on with the whole China situation because I think that's going to be a big change. It could help or hurt them. Either way, really. I think, but I think, MP is just going to be jumping for DraftKings, baby. Jumping, trying to get it. Oh, you can't get it. Oh, nope, you're not going to get it, baby. My vote is DraftKings. Guys, because at the end of the day, I think, with the Final Four, with sports coming, I think state by state, I keep saying it, revenue just coming on in.
Mitch, I love you. I'm coming at you again. There's been talks that FanDuel, owned by a public company right now in Europe, is not seeing the value in it that they think they should. We do have a lot of SPACs now that are looking for carve-outs of public companies. What happens when FanDuel shows up? And my last knockout punch will be there is no EV industry without rare earths. The end.
Wow. Yeah. Great point on FanDuel. Mitch, you and I have talked about another company in sports betting that I think. So again, DraftKings has an advantage here as they're a pure play sports betting company. To me, one of the leaders in the space is BetMGM, right, Mitch, where MGM Resorts owns them. If MGM could spin off BetMGM, that joint venture they have, I think that valuation would be impressive. And, as Guru said here, maybe having some pure play competitors like a FanDuel or a BetMGM or, again, Barstool Sports, right? But it's stuck in Penn National, which is also land-based casinos. So I think that, again, that's a big advantage for DraftKings now. But, what happens in the future if they can get some publicly traded competition, pure play sports betting companies?
I think the pie just gets bigger, but let's see what the chat thinks.
The chat, I think I saw a lot of early votes, and it looked like a lot of ones for DraftKings, Mitch. If I tallied up right, I think the chat picked DraftKings to move on. Maybe they liked your picture, your GIF you put up there of reaching. But yeah, DraftKings heavyweight moves on with our chat's vote. So. But that was a huge.
What are you thinking DraftKings goes to here, Mitch?
To the moon, baby! To the moon!
Insert pocket emoji now.
This is why I can do this on the March SPACness. If you guys see me on Twitter, you probably won't see any of this. But
yeah,
let me have some fun.
You won't see rocket emojis from me on Twitter, but yeah, we're having fun on the show. Great points. Loving the debates here. SPAC Guru. The chat is loving you as well. We've got one more matchup here in the Elite 8. We've got Butterfly. That's BFLY, portable ultrasound company backed by Bill Gates, versus Skills, SKLZ, as Guru said, the same team, Sagansky and Sloan, that also took DraftKings public. Skills working on, mobile person-to-person betting. It's also in, the Nerd ETF, the Bets ETF. Of course, when we had Roundhill on the show, Will Hershey giving us, some insight in that company. So, Guru, break it down. What do you got? Butterfly versus Skills. Guys, press 1 for Butterfly, 2 for Skills. Let's hear from Guru on, the history of these two companies and what's ahead.
Well, Butterfly, as you said, we have a Bill Gates-backed technology. Some of you remember Bill Gates' other backed technology, QuantumScape, QS, a little bit out of favor now, but, they had some warrant drama. They had a lot of people calling out their solid-state technology. And, it's not a good time for some of these SPACs. It was once a high flyer. Maybe it flew too close to the sun. We'll see. But with that being said, we have Butterfly, great technology. If you know anything about the Butterfly technology, and you know that Kathy Woods has been buying it and adding it, but ARK has also been buying and adding Skills at some points. I don't know if the Skills is still something that's owned there, but I know recently I saw more Butterfly, but that does not mean that we like it or don't like it. We had Butterfly. The Butterfly high was nowhere near the Skills high. Skills almost hit 40. I want to say it was like, it was in the 40s, like maybe low to mid 40s. I remember it hit. Butterfly was higher as well. I think Skills is interesting. I didn't understand it at first. I'm too old, I think. I don't play a lot of these games that are on mobile devices. I do think Butterfly is a breakthrough disruptive technology that could be used in the medical field across the world and in places that don't have the same facilities, such as, first world country hospitals. It's a tough call. But for the long term, I think percentage-wise, this is like a coin toss to me. If I had to put my money into one of them at this price and I couldn't buy half of each, I just think that the Butterfly network has less competition. I think it's a disruptive technology. I like Skills a lot. I see a lot of competitors. I think it's early in the industry. I think we're going to see more competition, but it's a great team. You can't discount Harry Sloan and company. But, Butterfly's pretty insane if you actually go and look what the company does and if you think about how it can be used. So in this coin toss, I'm going Butterfly.
All right, guys, you heard it from Guru. Great matchup here. Two different companies. I would also say I got to toss my hat to Butterfly. Bill Gates, I'd like to think that he knows what he's doing. Also, you have Kathy Wood, ARK Funds, investing heavily in Butterfly from a very early stage in this deal. And then Jonathan Rothberg that founded the company. He's got a couple other companies that are also going public via SPAC. He's a very bright guy when it comes to, creating these companies. So I would have to, lean towards Butterfly and, for the win in 2021. What do you think, Mitch, before we tally up this final vote here for today?
Well. So this is a battle right here, but one of the things is to think about, and really it's just how fast is the technology really going to get picked up in VFly? One of the things that I can think about is expenses that hospitals have gone through and certain things like that. And I think, I don't think there's going to be many new products added that quickly after the pandemic, but this could be something that they could actually use. And so it's either or, I think this one's going to be a close battle really at the end of the day. But the question is at the end of the year. And so I'm going to say that I'd pick VFly for long-term, but I'm going to say, if you know what I mean, and you got some skills, then I say skills, baby. You got to have the skills, baby. Got to have the skills.
Yeah, this one was a close matchup for me too. And as Guru said, based on the price and the performance, it could be a very close 2021 race. I added up the votes, and I see Butterfly as the winner here, getting more ones. But this was possibly the closest matchup in terms of the vote. Very close to that Romeo RSI vote we had, maybe even closer. But Butterfly. Moving on to the final four, what do we got, Mitch? What's our final four look like now through this vote today?
You saw I wanted to put skills there, guys. Hey, all right, guys.
Mitch, we can use DraftKings. We can just take each other's action and not worry about the VIG. We're on the other side of each trade, man.
Oh man, you already know that life. Let's just say I make more money in sports than stocks this year. That might be something that not a lot of people would admit, but
no,
it's just how it goes, Not like promo money.
Make the money where you know how to make it, buddy.
That's right. That's what it's all about. That's what it's all about. All right, guys. So moving on, we will have in the final four, we will have Romeo Powers versus Desktop Metals. Woo! Can't wait for that battle. And then we got DKNG versus the B-Fly. Fly. B-Fly was actually a 5th seed from the beginning in our Midwest kind of bracket. So it's an interesting one to make it towards the end. But I'm going to be excited, as we get closer and closer towards the actual national champion here. It's going to be fun. We might have to bring on that company. We just might have to.
Yeah, that is a exciting looking final four. I'm excited for those matchups. Again, guys, we're not voting on the final four today. That vote is to be determined. We got down from our Elite 8 to the final four. But hey, while we've got Guru on the show today, let's get some thoughts on the overall SPAC market. Guys, we're going through some changes here. We've seen SPACs, take a lot of negative comments from CNBC and the like, that they're trading down. So, it's important to hear from some of the people that have been looking at SPACs, for a long time to get those overall thoughts. So, Guru, what do you see for the overall SPAC market the rest of 2021? And, maybe talk about, do we also have a oversupply issue going on that may need to be corrected?
Well, I've been very clear about my feelings towards CNBC and some of their anchors. CNBC represents the big banks, the funds, the institutions, the 1% who hate SPACs because SPACs have been taking a lot of money and putting it into these new vehicles. You can't blame the institutions and funds because it's a free call. When you can buy a unit at net asset value, your downside is redeeming your common for your money back and free goodies, which are warrants. Sometimes when there's more interest to be had or there's an extension, the sponsor team will put more money into escrow. Therefore, they're guaranteed to make a profit with no downside. They also get as much as 6 times leverage to buy a de-SPAC, unmerged SPAC. So if they have $10, they can now put $60 to work that they have no downside. So with that being said, the CNBC guys, they caca these things. And please don't listen to Jim Cramer. He'll tell you in the morning that SPACs are crap. Him and David Faber, they say it with such disdain, like they want to spit after they say it. It's like dirty SPAC. Tuh. And quite frankly, it's not fair. But when Jim, I don't care about fair, but at night, if one of these SPACs agrees to go on Mad Money, Jim Cramer will kiss their ass in Macy's window. So he'll talk crap in the morning and he'll kiss their ass at night. And when he came out and said, "Oh, look, I was pushing this company or that," oh, CNBC, really? Jim Cramer is admitting that he's pushing SPACs? And Jim Cramer is the only person that ever blocked me on Twitter. And the thing that got me blocked was I used to subscribe to his charitable trust alerts. I set up a separate account to buy and sell 5 minutes before Jim Cramer bought and sold. And this is what I learned. He sucks. The reason he's on TV and not running a fund is because he's a shitty investor. I almost killed myself in losses buying and selling his stupidity. And then all he would do is go and talk his book at night on the stocks that he was down on. He would add to losers and sell winners. The guy might be entertaining, but if he was really good, he'd be running billions of dollars in hedge fund money and not making $5 million a year on CNBC. So know what you're looking at. It's entertainment.
Yeah, you know, absolutely. We've talked about Cramer on here. You know, he does have some influence. He can move some of these SPACs when they do those interviews. But if you're a CEO watching this show, remember, you can always come on SPAC Attack and talk to the people here rather than going on CNBC. You know, we've been fortunate that we've gotten some of the CEOs on here before they went on Cramer, like James Litinsky, like Patty Cook from Finance of America, and many others. Great points, Guru. You know, I got to ask, we've got you here and might as well pick your brain. So, you know, you just saw
it. Hold on a second. I think we have Kramer's response here. Kramer's response. Oh, no, he's just a flip-flop. He's just a flip-flop.
That's right.
He's just a flip-flop. Don't worry about it, man.
I hate all SPACs. Oh, just kidding. I love the SPACs that come on my show and talk to me. You know, Guru, while we've got you on here, you know, we just saw in the Elite 8, you know, many well-known SPAC names. You know, what are some, you know, undervalued, unknown SPACs that maybe, you know, could be good investments for the rest of 2021 or for the long term, you know, looking forward that people may not be as familiar with here?
So I'm going to start with my dark horse. My dark horse that nobody ever talks about is Bullhorn, BHSE. The reason that I like Bullhorn is, first of all, Rob Stryer is a stud. Had a little bit of a go as a professional hockey player, so therefore you know he's tough. He's been involved with strategic planning for companies like Disney and multiple professional sports companies. He's one of the few people that I've ever seen downsize his SPAC. So I said, listen, all these SPACs are getting bigger and bigger. Why did you have the money and decline and go smaller? And his response was incredibly interesting to me. He said, it's a competitive advantage. A lot of these targets are coming in and they see how much the sponsor is getting. You know, you're getting 20% of like a Michael Klein Churchill deal. You know, 20% of $2 billion is a significant holding. Now, granted, after the merger happens and the company comes in and the pipe is done, that gets significantly diluted to a much smaller percentage, but we're starting pretty high. Rob's statement was, hey, you know, with our small SPAC, our promote, our sponsor share is very low. And being a lot of these targets now are negotiating for better deals and better terms from these sponsors because so many different SPACs are chasing them, this actually gives them a chance to say, hey, I don't need as much money now. And I would like to see more of these companies do like some of these secondaries. I'd rather see a company de-SPAC without a pipe on a deal that's a good deal, have stock appreciation like we've seen with Skills or MP or what have you, and then do a secondary at a much higher price. It's less dilutive to the company. It's less dilutive to you and I, the SPAC or de-SPAC shareholder, for them to raise money at a much better valuation. So, with those being said, I own a little bit of the Bullhorn. It's a curiosity to me. So that's one of them. Another one that I really don't understand is OCA. You can go buy OCA right now and have no downside. There are units, there are warrants, and anybody who does not know who Gary Vaynerchuk is, I know Gary V for 20 years. He started Wine Library. He has Vayner Media. The guy is a stud. He grinds. He's actually exhausting to be around. The guy is 100% always on, and he will die before he quits. So here you have a chance. Go look it up. Don't listen to me. Go look up OCA. Go find the link. Go see the team. Look who they put together, and then go look at the price and say, I can own this cheaper than the funds. I have no downside. I have upside, and I've got some studs. So I like to bet the jockey, not the horse. It's why I told you that I like Soaring Eagle. It's why I told you I'm in OCA. And I'm betting on Rob Stryer on some Bullhorn. So
awesome. Excellent picks there. We had Rob from Bullhorn on the show. We also had Matt from OCA on the show, guest judge on Shark Tank. He's been involved in lots of industry. And then, of course, Gary V. Guru, before we let you go, just real quick, those are all ones that haven't announced deals. How about just one under the radar, one that's already completed their merger that maybe people are sleeping on here?
Give me a second. I'm scrolling through. If anybody's seen the picture I posted, I have 9 screens of charts. So
yeah, I love your setup. I've seen it. I know that.
What? 9 screens? You're getting me jealous.
Mitch, I gotta send you the picture. It's insane.
You're getting me jealous here. I got a nice 4-screen setup, but you're making me feel bad now.
We actually named the computer. I want to send a shout out to the Theta Warrior, who does incredible analytics on charts. He was kind enough to build me my computer that runs these screens. Boom. We named it the SPAC, like Spock from Star Trek. It stands for Special Purpose. What the hell do we call it? Oh, SPAC. Oh, it was my SPAC Purpose something center, whatever. But anyway, but now that it runs 8 computers itself, it's Spoctopus. But anyhow, based on all of that, what's under the radar? I'm looking. Oh, there's so many I like. I'm going to throw.
If anything, I can mention one that and then you can tell me what you think.
Go.
I heard you mention it earlier. Everyone knows I like this one. SPNV, Supernova, OfferPad. What's up with that?
Well, the Supernova, and I don't know how many of you guys follow Spencer, but he's a cool guy. Spencer Raskoff. He'll comment on our SPAC conversations. The guy started Zillow. He's a stud. Love it. But I don't know if that one's off the radar. I was buying more Proterra today, and I was buying more Arrival. What company is cooler than Arrival? Their stuff is the best. It's awesome. They have a product. Who are they selling to? UPS, the British Post Office. This isn't 2026 revenue. This is a product. And another one I was buying today is Proterra. They make EV buses. I don't post them all, but every day I get news alerts. Harvard, Stanford, Duke. All these universities are replacing their existing internal combustion buses with Proterra. Yep. And with the current administration, they're very much interested in EV, green, net carbon neutral. Proterra, it got its ass kicked this morning. So if you nibble, and don't go YOLO FOMO or I'm going to yell at you, buy these things small. As they come down, nibble a little more. When you buy things that go up too fast, sell them. Sell some of them. Sell all of them. You usually get a chance to buy them back. As my market maker buddy tells me, they always come home. Don't hold bags. If you say you hold bags, good. You deserve those bags. If you have a little bag, you can add a little more to it, and you'll get an average cost somewhere. So please, everybody, be safe. It's your money. Nobody gives a shit about your money more than you. Do yourself a favor. Buy slow, sell, trim whenever you can.
Awesome, guys. That's going to wrap it. We already went a couple minutes over. I know we got another show ready to start. I got to tell you, Guru, thank you so much for coming on the show. I'm a fan of yours. I also consider you a friend. I love interacting with you on Twitter. Guys, if you don't follow him, that's at SPAC Guru. Great person with knowledge of the SPAC market. So we'd love to have you back on, great debates here, but we're out of time. Thank you, Guru, for coming on the show today. Much appreciated.
Thank you, Mitch. Love you. Love you, Mitch.
Hey, much love, much love. Hey, you guys can check him out. Go to the description down below right now. Hit that Twitter, hit that follow button. And while you're at it, definitely hit the share button. Let everyone know where you can see all this SPAC information and the SPACness. And we'll see you guys next time on the SPACs Attack.
Bye, everyone.
Good night.
Let's get ready to rumble!
Zinger Nation, jam-packed show today. Peloton of 5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley is the CEO of Akerna. The best trade idea resource out there. Yo, what's up, everybody? All right. That's how I used to open it. Now I've been saying yo, but what's up? This is the Power Hour. Welcome to it. This is your idea time, right? The next 90 minutes is going to be focused on ideas, guys. I'm going to start today off the way that I start every single day. Somebody's saying Space Guru needs his own Power Hour or SPAC Guru. I totally agree. But all right, let's hit it. Point of the show, like I mentioned, is to get the ideas flowing. That's what we're doing, guys. Ideas not just coming from myself, not just from our guests, but most importantly, out of all of you in there in the chat, guys. So I'm going to make the first ask of the day. The first ask is going to be put in the stocks you're looking at. Shout out XIII. I've got my glorious air horn back. He's the one who controls all the sounds up here. Oh, but you can't hear it, but that's all right. I tried. I pressed the button. But first ask of the day, guys, drop in those tickers that you are looking at today. Did Jason go to Mars? Maybe. He might make a little appearance sometime this week. But all right, agenda on the day. So a few things. We're going to look at NFTs today and talk a little bit about NFT plays. First, that's the first thing we're going to do. News. We're going to have some news to get to today. Some interesting news, I think, out of PayPal, and then also let's talk about Cathie Wood for a second. And then due diligence. We're going to do a nice little due diligence lesson to talk about how I think through some of these stocks that I own that, for a long time. Not the ones where I'm buying it on sort of like a YOLO swing trade rip. But don't worry, we'll have plenty of those. But we'll actually talk about some of this longer term due diligence that we are doing, guys. 12:30, Alan Trindall is joining us. 1 o'clock, Dave Mazza from Direction ETFs. Really interesting. They just launched a hydrogen ETF, right? We've talked about hydrogen stocks a lot. So we're going to talk about some of the holdings in that ETF, why they hold them, and sort of what the future of the hydrogen space is. And then 1:15, favorite of the chat, favorite of Zinger Nation, all of us out there, we love him. Ripster, that's right. Ripster is going to be coming on, joining us live, 1:15. Of course, always spitting the info both on the sort of the swing trade side of things and the education side of things. So that's what we're going to be doing, guys. I don't see Drew on here, so I'm rolling solo, at least for the time being. I think that means that I gotta roll some sleeves up and really dive into this thing. No, just laughing it off. You know, I saw somebody say, why is Drew here yesterday? The reason why Drew is here is because going for 2 hours straight by yourself is very tough. Okay. I don't get to pause. You know, it's you know, you don't have anybody to do. Just like, why do we do user calls sometimes? Because my throat hurts. All right. If I've been talking for 45 minutes straight, I need a break. I need to take some drink out of my big water jug. Okay. That's the deal. But all right. NFTs, XIII, he threw in the first ticker of the day. So let's look at it. WKEY, WiseKey. It's an NFT play. I'm going to go ahead, add my screen there. Let's get the soundboard going. Time to wake up. Let's try it again. Wah, wah, wah. There's the soundboard for you. Try it again. Producer Rohan Zain, try it again. Air horns of the week. All right. I like it. All right. WiseKey. Adding my screen onto the stream here. Check out this chart. This is a 1 month chart that we're looking at. So all the way on the left hand side, we're going back a month. The stock went from $8 to $17.80. Okay, why is the stock up? I just have this nice little trusty alert here on my Benzinga Pro telling me WiseKey shares spiked to session high following news of Wise Art NFT marketplace. So this is in fact an NFT play. If you have been, if you need to kill some airtime, you can try getting in touch with Voyager customer service. All right, if you guys want the Voyager CEO to come onto the show tomorrow, let me know. I've got a very good relationship with them. So you know, if you want him to come on, hit the one in the chat. If not, we'll talk about other stocks. I talk about Voyager a lot, so I've tried not to for the past week or so, but maybe we'll have to do that today. But all right, WiseKey WiseKey play. If you don't know what NFTs are, they're basically digital art. Futu, I see the Futu on there. But WiseKey digital art, right? We have the NBA Top Shot. That's probably the most well known, at least in society, example of it. But WiseKey, another one of those NFT plays. And let's go a step beyond sort of these stocks that we all already know about, guys. Like, let's go beyond these WiseKeys. Let's go beyond the HOFEs. Right, these are the ones that have already run. Last week we did what I think is one of the coolest things that we've done yet on the Power Hour. Let me bring this onto the screen. We crowdsourced this, guys. We dropped this link in the chat, and we said to Zinger Nation, we said, what are any stock that could be an NFT play? Drop the ticker in the chat there, and we got 45 stocks contributed from the community as, hey, these are potential NFT stocks. These stocks could run up, on speculation that they're getting into NFTs, as we've seen so many times. If you guys recall, last week on the Power Hour, we had the CEO of Liquid Media Group, that's ticker YVR, Yankee Victor Romeo, on the show. And basically, the stock got halted. Live on a circuit breaker on the show. I asked the question about NFTs. Okay. The question that I asked was, and somebody's saying, can you drop the link in here? Yes, I'm going to drop the link in. The sheet is still editable, so please be respectful. Don't go delete everything. I just pasted the link into the YouTube chat for all of our zingers out there to go in and check it out. Be respectful. Don't delete the content. Add, if you have something actually to contribute, please add it in there. So we can grow this community, grow this database. But all right, YVR, Liquid Media Group. Let's go back and talk about it for a second. The stock was way up. I'll pull up the chart here, ticker YVR. Stock was way up on basically speculation, no announcement from the company, but speculation that it was going to be an NFT play, right? They're going to get into these non-fungible tokens, etc. When we asked the question about it, the stock got halted on the circuit breaker. So anybody out there, who was watching, all of us zingers, we were right on top of that one. I mean, we were the room where it happened, where the circuit breaker happened. And so we got the news first. So guys, check out again. I'm going to go back to the sheet. This is a list of all the potential NFT plays. It's in alphabetical order. The reason why we are doing this is because we want to have somebody already effed it up. Jesus Christ, you guys. God damn it. I might have to take off edit history, but somebody already screwed up the sheet. Okay, restoring it to the previous version. I can do that because I'm the admin on the sheet. So there we go. Now it's all fixed again. Okay. So again, please be courteous. But yeah. And why is Liquid Media Group? We never talked about that one after the interview. They never said that they're not getting into NFTs. They basically said, hey, we're exploring it and we want to figure out how to integrate it into our business. So I think that was actually a very bullish comment that the YVR CEO made. I'm not in the stock, right? I'm a little bit too close to the story to be comfortable in making a transaction off of it. But I really liked that he said, we're figuring out how to bring this into our business. The market didn't like it at the time, but when I went back and I listened to that interview again, I thought it was actually a very bullish NFT comment. So I like that one. I'll throw this one out to the chat, guys. And yeah, so somebody else in the chat is saying, Convo's positive. People just wanted immediate news. Exactly. Right. So if you guys like YVR right now, you'd hit it on the long side. Give me the 1. If not, hit the 2. I would definitely be a 1. Again, I'm not making any transactions in the stock. I'm too close to the story to feel comfortable. But I think it's a super interesting one, and I did in fact think that those comments were pretty positive. And let me take this one, producer Rohan. This is going to be one to snip. But let's talk about some of these wins that we had both in our live programming and on Benzinga Pro last week. We cornered the NFT market. So let me talk about some of these stories that we had. Okay. So first things first, ticker YVR, Liquid Media Group. We mentioned the stock was run up on speculation that would be an NFT play. We had the CEO on our show talking about how they're going to be exposed to NFTs in the future. That literally caused the stock to be halted on a circuit breaker while he was talking live on Benzinga Pro and on the Benzinga network. Number 2, ticker HOFV. All right, we got exclusive comments from the company that they are exploring NFTs, right? That went out to our Benzinga Pro users. Stock exploded off of that. And then number 3, we did an interview with the HOFV CEO. Again, the stock moved 20% off of that. So we had a 20% move off of the YVR, 80% off of HOFV1, 80% move, and then 20% off of HOFV2. All last week. So if you are a Benzinga Pro user, shout out to you. You got all that. If not, pro.benzinga.com, 2-week free trial. There's the deal there. And of course, all these other NFT stocks, we're covering all the news breaking in real time. But all right, that's as far as I'm going, guys, with the NFT stuff for today. If you have other favorite NFT stocks, again, drop them in. Holy crap. Okay, I thought it was all gone. Drop them in the spreadsheet. Be respectful, please. It's an open spreadsheet for us all to build a community here and help each other out. Like see somebody saying CSCW. I don't know that one. But again, that's what Zinger Nation is all about, guys. Drop in the notes, right? Go over to one of these columns, drop in the notes on it. Say why you like it, what makes it interesting, etc. That's what we're doing here. And I see that our good friend Mr. Drew is on with us. I'm going to take a sip of water and let Drew say what's up to everybody.
How we doing, guys? Glad to be here. Excited to talk with Hot Stocks Luke, as always.
There we go. Okay. Give me my water break. Drew, let's dig into a little bit of news, okay? All right, we've got 2 pieces of news. We've got PayPal and we have Kathy Wood, ARK Invest. You pick which one we do first.
Let's do Kathy.
All right, so let's do Kathy, guys. So again, we're about to hit a couple quick news updates. Producer Rohan said give him a shout out whenever we're about to do some news. So all right, Kathy Wood, right? Known for her funds, especially focused on innovation, up and coming sectors, that sort of thing. Just yesterday, we have Kathy Wood's Space ETF. The ticker on that one is ARKX. is officially live. So if you are a Kathy Wood believer, you've been tracking her funds. If you are interested in the space sector, right, she now has this ETF to give you exposure to the space stocks. Again, it just opened for trading last, pretty much flat today, right around $20.33 right now. And let's go ahead. Let's look at some of the holdings in this ETF. I'm going to go ahead and zoom us in. There's a couple that make a lot of sense. There are a couple which are sort of surprising. I'll just read through the top 3 holdings on this new, again, Cathie Wood Space ETF. The first one, Trimble, ticker TRMB. Number 2, the 3D printing ETF, so an ETF holding an ETF, PRNT. The third one, Kratos Defense and Security, KTOS, that is a defense contractor. Those all seem like they make sense. Other names that we'll all recognize in here, we've got NVIDIA, you've got Boeing, and now let's do a couple surprising ones, Drew. I'm going to give you what I think are the 3 most surprising holdings in the Cathie Wood Space ETF. And give me your hot take reaction on them, okay? And everybody in the chat, Zinger Nation, I'm putting this call out to you. If this makes sense, tell me why it makes sense. If it doesn't make sense, throw me the one, and you're hanging out there with me. All right. 13th largest holding in the space ETF, John Deere. Okay. No reaction on that one. Ready for the next one. Number 26. This is the one that confuses me the second most. 26 in the space ETF. You have Netflix.
Yeah, that makes no sense. I mean, John Deere, maybe, right? That's like, right, building equipment and all that types of stuff, right? Maybe we're going to be mining some asteroids. Maybe John Deere will get there one day. Netflix, like, are we going to be watching Stranger Things on Mars, maybe? I don't know.
All right. And then I'm going to give you one more out of there. Amazon.com, number 14. You need more Amazon exposure, you got an ETF for it.
Prime, right? 2 days. Doesn't matter what planet you're on. Makes sense.
Yes. Okay. All right. And yes. And I will say this too, right? We'll have some fun today, guys. So first things first, smash that like button, subscribe to the channel if you aren't. Please like the stream. We're only at 550 people here. We've got to get these numbers up. Otherwise, you notice Jason's not here this week. There's a correlation to that, okay? So Benzinga programming, it's a little bit at risk. We got to get these numbers up. So share the stream, like the stream. We'll get this going. And we're going to do a Benzinga Pro giveaway again. I'm banned from pro giveaways, but hey, if we're coming into our last couple of weeks, then we're just giving away pros. I don't care. So best joke of the day is going to win some Benzinga pros. Right now, best joke of the day, my favorite is Nate Miller. I'm gonna write this down on my notepad that I have every day. Okay, if somebody's got to top him, they're gonna get the Benzinga Pro. But I love that. Should put John Deere in there as a summer play. Yeah. Okay. All right, so there's one piece of news for us. I'm going to give us a second piece of news. Let me go ahead and pull up my trusty Benzinga Pro here. PYPL. And dang, they banned you. Yeah, I'm banned from giving away Benzinga Pros. PayPal announcing an interesting crypto play here, right? We saw some great crypto price action if you're a Bitcoin bull, nearing 60,000 mark. I haven't checked in the past hour or so, but we might have reached that 60,000 mark in Bitcoin again. We only hit that a couple weeks ago over a weekend. But PayPal now announcing an experimental program where users will be able to buy and sell products with cryptocurrency. If you guys recall, I was a big Bitcoin bull a few months ago. I've now since exited the position, but it was a nice runner for us. And basically the reason why we liked PayPal at that time was because it was a safer crypto play, right? It was getting some of that nice crypto momentum, and it's also, a mega cap stock, right? It's a $300 billion market cap stock. It's a lot less volatile than these, riots or Maras or even cough Voyagers. But again, PayPal announcing a new pilot program to let users transact in goods with cryptocurrency. Huge move for cryptos, in my opinion, right? Because if you think about the number of people who have PayPal accounts and now can start using cryptos in their day-to-day lives, right? And actually use that to transact rather than, hey, I'm buying this as a speculative thing, or people, who can't figure out how to actually buy cryptos. That's the deal there. Again, very, very interesting move made by PayPal. I'm not in the stock now, but it is one that I added to the watch list, guys. So stay tuned later this week. I'll give a definitive yes, no as to whether or not I'm getting into PayPal. I'm zooming out the chart here. Here's 3 months. We see some nice levels of support right around 226, 227. And the stock's been going sideways for a little while now. If we get a bounce off of support, or we get a break above this cluster of highs in the 240 level, that will be my cue to get into the stock while we're hanging out in the middle. I'm just on the sidelines. So again, guys, ticker PYPL going on the Luke Jacoby watch list there.
That's one of your favorites, Luke. I know you exited it, but I'm interested that you exited it, because I think that's something that you would just kind of hold. PayPal Mafia, great guys that were in it, still pretty good management, very clear, objectives, very clear fintech play. It screams your name.
Yes, and Drew, look at these jokes we have coming in. Suez Canal was a bullish wedge. Okay, that's pretty good. I like this one too. Our space fund hold my deer. Okay, that's pretty good. That's pretty good. All right, he's right up there with Nate. I'm writing that one down too. All right, James is right up there with Nate. All right, Drew. And for folks who are just joining us, I'm going to make the ask that I make too many times a day, but it's important to me. So sorry if we're doing 2 hours a day of free ideas. That I'm at least going to make some very simple asks, which is to like this show, share this show, use the hashtag ZingerNation. All right, that's what we all are. Up on the docket for today, I'm going to do a quick deep dive into due diligence and talk about how I do some due diligence on a stock that I own for the... Actually, you know what? We'll save that. We're going to save that one for after our first guest. Okay, Drew? Hold me to it. All right, we're going to do a due diligence lesson. 12:45 Eastern. I want to talk about support.com. That's a stock that I have a bearish trade in. I want to give you guys an update as to where I'm at that one right now, and if I'm holding out in it. And then major guests coming on today, guys. 12:31, 1:15. Awesome guest lineup. So Alan Trindall is coming on with us in just a couple minutes here. 1 o'clock, Dave Mazza, Direction ETF. So, they just launched a hydrogen ETF, right? We've talked a lot about hydrogen, about how hydrogen is enabling mobility, and a lot of these futuristic stock plays are in the hydrogen space. So we're going to be checking that one out. And then 1:15, Ripster, our favorite Ripster, is going to be coming on, dropping some trade ideas, etc. Drewski, do you follow Ripster on Twitter?
I got up my fintech game. I'm adding more and more people every single day, but I'll follow him now.
All right. There it is. Boom. So, all right, Drew, and give us, but before we bring our first guest on, drop us an idea. Give us a stock you like. Tell us why you like it. And then again, we're going to have a guest. Then I'm going to do my due diligence lesson. We're going to talk hydrogen, and we're going to talk swing trades, all in the next hour or so. So stay tuned. We're going to be running. But that was your cue.
To give us hot stock.
Give a stock you like. Yep.
I think Trimble is really well set up now, just because number one, it's her number one holding, Kathy's number one holding in the space ETF. And, with tech pulling back and a lot of interesting things happening, stock does not care. Stock has been on an awesome trajectory, really going straight up to that right corner. And I think it's really posed to still continue some nice growth. The stock kind of just has been trading a little bit in a channel. But, I think with everything kind of getting pulled back, Palantir, one of my big positions, kind of taking a hit, Trimble looks pretty nice.
Oh man, this stock is poised for a breakout. So check this out, guys. This is something that I always like to look at in charts. This is a 1-year chart with daily candles. So each red or green line here represents a day. Look at how long this thing has been moving sideways for. I mean, basically since early February, so about 2 full months. We have some pretty clear highs right here, right? You've got highs, 2 highs put in, 2 high days right around 77.50. Then you have a third one that just happened, it looks like today. I like this Trimble trade, Drewski. I'm hitting it long. All right, there it is. First idea of the day. Trimble hitting it long. I like how the chart looks. It's been going sideways. It's right at those highs. I want to see a breakout and a move to move higher, a move to the upside. And then I like the positive energy that it gets from being in that Cathie Wood Space ETF again that just debuted today. And so it's going to get more commentary, right? It's the number one holding of that ETF. So we've got some potential positive catalysts, right? We might get the CEOs on Kramer, some of that CNBC chatter. We're going to get Twitter chatter. So I like the energy going into the stock off the name. So you gave me, I always like to look for the numbers in the story. Number side of thing, the chart looks good. Story, we've got some positive energy that could be flowing into this one. So Drewski, I am going to hit this Trimble trade long. I don't have my brokerage account open yet. But while we bring our first guest on here, you'll see me logging in. I'll be doing it.
Yeah, I think it has the numbers on the chart and in the fundamentals on the balance sheet, we'll call it. It trades at like a 30 PE, which basically is free nowadays because what trades under a 30 PE that has that much growth? So I think it's nice and it's really posed to grow, has a great story, has some great numbers. I think it's going to be a really interesting play.
All right. I like it, Drew. I put you on the spot. I said, drop us an idea. And you delivered. And without further ado, I want to get our first guest brought onto the show here. I'm going to roll our nice little guest video. Boom. Alan, what's up, man? Welcome to the Power Hour.
How's it going?
Going well. Good day thus far. How about yourself?
No complaints. It's sunny and not freezing cold, so everything's good.
Excellent. And I'm hearing myself twice. I don't know if you have a speaker adjustment that could be made. If not, it's not horrible. The chat will boo us if it is horrible, so we'll definitely know.
Yeah.
But if there's an easy solution, I'm going to throw the ask out there.
Just make sure you don't have YouTube open too.
Yeah, I do, but it's muted.
Okay. Hold on, wait. There we go. I don't hear myself. Do you still hear me?
I can hear you.
All right. There's the ear horns. We fixed it.
Perfect.
Pretty darn easy. Cool. All right, man. How's your day going? You already said it's going well. Anything especially exciting? So I hate when people say like, "How are you doing?" Right? Because I feel like it's a bullshit question. I mean, let's face it, right? The answer is good. There's one answer. So I always say, what's especially exciting in your world right now? Because then you actually get some interesting tidbit from people.
I guess really just seeing some stuff bounce today. FedEx is running back up. Tesla ran up a little bit, so got to take advantage of some of that. Been holding those for a few days, so things are. I don't know. Things just look kind of mixed. Viacom, that's kind of exciting. I got a little bounce on that today. I was playing the calls for the bounce. So.
And are you still in that Viacom trade?
I'm not. I got out earlier.
Okay. Give us something you're in right now so we can look at it and you can
take
us
I'm
through
still at FedEx. I'm looking for FedEx to break 300, or at least test it.
All right. So I'm going to pull this chart up here. All right. So we're talking about FedEx, guys. It's ticker FDX, Foxtrot Delta X-ray, if you don't know it. Here's a 1-year chart up. I don't know if that's the right time horizon to have up. But if so, will you talk us through what you were seeing on the chart that made you bullish on it?
So let's see here. So I got on these calls. So I've got the June 18th 300 calls. I got them about, it was the last Wednesday or Thursday. Right when everything was kind of selling off. There was a lot of call flow that came through for that exact same strike, and it just looked really strong. And some volume came back in, and so I decided to take it for long. And I really do think you can test 300 here. And if it does, it holds it. It's just a steady grind up. So FedEx is a beast. They're continuing to take over more market share, and I think it's got a lot of opportunity here for the upside, especially for these June calls. There's not a lot of implied volatility on them, but when it runs up like it has today, they do move quite a bit. So.
Absolutely. And so you said you have the 300 strike June calls on FedEx. How long would you plan to hold them?
So I've currently got a stop on them at $9 a contract. So if it drops below that, I'll go ahead and take profit.
Okay.
But ideally, I'd really like it to go ahead and push 300. And if it looks like it's going to hold, I'm just going to keep moving the stop up the entire way. So it's kind of hard to say a time frame with how shaky things have been in the last week and a half. I mean, everybody's confused for the first hour of trading. For every sweep that you have coming in for calls, there's another one that's equal to that for puts, and just nobody has any idea. It doesn't seem, at least based on the flow. So just kind of watching it day by day.
Okay. And it sounds like, tell me if this is accurate, but it sounds like you treat your swing trades in a similar way that I do, which is when the thing is moving, I don't have a target price where I'm saying, hey, it hits 300, I'm out. Right, I say let the momentum ride. I'm going to keep moving those stops up. I do every single day, and I don't know at least when the momentum's going to stop carrying it. So rather than selling myself short and bombing out of the position, I keep that position on there, move the stops up, and hey, when the energy runs out, then I bail on the trade. Otherwise, I'm staying in it.
That's it. My favorite saying is that no one ever went poor taking profit. And I think there's always another buying opportunity. If 2 days go by and the momentum still continues, then if it looks like it's going to continue even further, then great, just re-enter. I mean, it's worst case scenario is you lose a couple bucks on the re-entry, but you could also just stay in it and lose everything anyway. So, that's I've got no emotional attachment to any of this stuff. You have to have some degree of conviction, but as long as you have conviction on what the chart is supposed to do, then you can at least take that variable out. And from there, it's just based on where it actually moves. There's nothing wrong with taking profit when you start getting up in a 40, 50, 70, or 100% return on some of these contracts. It makes sense to start closing things out.
Yep, totally agreed. All right, and do you have another one on the radar that we can look at?
I was actually in and out of Tesla this morning.
Okay. So what chart should I pull up? What time horizon?
I did a daily, and I was really looking at a bounce. Let me flip mine back over to daily here.
And if you have a screen to share, you can go ahead and do that. Right
sure.
now I'm sharing mine, but I don't really have elegant charts.
Yeah, let's see here. There we go. So you had some interactive there too. Always good.
Yeah.
So I was really looking for a bounce. Great, you can see my account number and everything on there. Have fun.
All right, well, hold on. I'll hide it. Tell me when you're ready.
I'm good.
Okay.
So I was really just looking at the supports this morning. This 570 area looked really strong. I didn't really think that we would come back all the way down there and test it, but this morning when I was looking at the 5, I mean, it was really holding here at this 595 area. So I got in a 620, 640 call spread for this week that expired Thursday, and I got in right around here. And so that ran all the way up and was almost in the money. And I ended up setting a stop at around 925, I think. And so it ended up executing and selling out. So that was a good run. That was a 120% run this morning.
That's nice. It's not bad for a morning.
No.
Take that all day.
Still looking at, I followed some of the Alibaba flow from this morning. I've always been a big Alibaba fan. It's been a great stock to trade. So, it got beat down a little bit. Let me see. Let's pull the daily up here. So this is a really strong area. You think of this 220 area right here, and there's a lot of call flow that came in earlier today.
So this is Baba, the guy that we're looking at, guys. And are these daily candles?
Right. Yeah, these are daily here.
Okay. And you're always looking at daily then, I assume.
I look at daily for figuring out if there's going to be a momentum swing. And this has a pretty good history of bouncing pretty strong. There was a lot of flow that came through on smart sweeps this morning, which was actually powered by you guys that we created. So I followed some of that. So I got some of the June 300s, and those are starting to move up pretty nice now. So I got in those at $1.44. And I'll hang on to those for a little bit. Yeah, I do see Alibaba, especially as this trade stuff starts to ease up a little bit. I think that this is going to start picking up. So I definitely could see Alibaba getting back up to 300 in the next, I don't know, maybe 2 months, maybe sooner. Who knows? The market's kind of crazy.
Yeah, let's talk about this one for a minute. The issue that I have with Alibaba is that there's so much headline risk.
Right.
I mean, yeah, we're looking back about a year or so on your chart right now, maybe a little more. That high at 320, the stock's at about 230 right now. because there's a lot of shit that happened between 320 and 230, right? You had the Chinese government canceled the Ant Financial IPO. That was their financial services division, right? They said, "You done pissed off the wrong people, Jack. We're canceling it." Jack Ma went missing. He's just gone.
Still don't know where he went.
No, they found him. Somebody took a picture of him golfing. So I mean, they found him or a body double somehow, right? And then you have the CEO of Ant Financial resigned. Not great sign, right? I feel like especially if they're trying to head into some sort of an IPO, because that's his big cash out, I would assume. So I don't know. Like this one, like I've been so tempted to take a crack at Alibaba with it this depressed, and like you said, there's some beautiful support on that chart right there. I mean, we got all those nice lows in there on the daily candles, but the headline risk is what scared me out of it. So how do you reconcile those two?
Well, I don't know. I do think that that's very valid. But Alibaba is getting to that point. I mean, they're gigantic, and I don't know what percentage of Alibaba's business comes from these these Amazon wholesalers who are sending all this stuff over to Amazon. I mean, you got to watch. I mean, the volume that Amazon is doing right now is insane, and I feel like every time I turn around, there's someone trying to sell a course on how to become an Alibaba drop shipper, and I just don't think that that's going to slow down. I think it's just going to be bigger and bigger and bigger. And so while there is some headline risk, I think that overall the market share that Alibaba is going to take over or continue to grow from is it's just going to get bigger. I mean, there's a lot of manufacturers that are black labeling products from there, and not to mention air freight seems to have been gotten a little bit more reasonable. People are sending more stuff on air freight right now because everything's so clogged up. We're trying to get shipments in. So I just don't see them slowing down from a business perspective. And as irrational as this market's been the last 12 months, a little headline risk is a lower risk to me than having trade risk, frankly. I think trade risk is probably even a bigger risk for Alibaba, because if that slows down, whether it be any other crazy tariffs that come along, that's the biggest question marks. I think those are going to be the first big impacts on whether or not Alibaba can keep its reign over here in the U.S. even. So that's kind of the way that I'm looking at it.
Okay. All right. Yeah. I mean, I think that's pretty fair. It's a tough. Yeah. I don't know. I might take a crack at this one. I'm more than 100% long right now. I'm like 103.4% long. I've got a little bit of margin on, and I don't want to be that long. So maybe Ali, and I just bought Trimble today. Drew's just giving me more stocks to buy. So I don't know. I think the Alibaba one's interesting. I tend to lean towards your thesis on it. Again, the headline risk is just what scares me on that one a little bit.
Yeah, I mean, at the end of the day, look, if we get up to the 240, even 250 range, I mean, you're still going to pull a nice 30-40% off on this trade, I think, especially if that happens in the next few weeks. If we start to get a bit more of a bull run and get back up here trying to push over all-time highs again, I think that either way, I think it'll be a profitable trade. I don't know if they'll hit 300 or not, but that's not really. My intention is not to run this thing out with June and exercise.
Okay, and do you own the 300 strike calls then? No.
Oh, 300 strike calls. Yeah, I've got no shares, no equity.
Okay, and how far out did you go? You did June on Alibaba as well?
Yep, exactly.
Okay. All right, guys, so there it is. 2 trades already. I promised you guys this would be the trade idea show. I promised jokes. I promised trade ideas. There's 2 trade ideas. Somebody in the chat help me out with the jokes, okay? All right, Alan. What else should we talk about? Look at. I don't know if you want to show off platform you've built. If you want to talk about other trade ideas, but let me know.
Yeah. One other trade idea. Actually, never mind. I'm already out of the Tesla. I mentioned that. So yeah, here I'll flip over here and pull this over. So look, I've been paying a lot of money for data for really a long time, and I started thinking about it, and I decided to go out to you guys, and you guys provide the best data, obviously, and you provide it to everybody, it seems like. So I said, you know what, let's see if we can pull in some data here from Benzinga and some news, and let's just share it with everybody. I could go on and name places all day that you're going to go and subscribe, spend $150, $200 a month, and there's not really anybody there to help you interpret the data. So I said, let's build this platform out. We called in you guys' API once we got hooked up with Benzinga, and essentially just built out this whole platform. You can share some ideas and things like that. We just launched last week. So we're really trying to grow, and we marketed this at $49 a month. And if you had somebody paid annually, they're going to take 20% off the entire year. But if you're really looking to figure out what's moving the markets, I've got all the tabs open here just to be quick. But you sit here and watch all the stuff that you guys are pushing out. This is awesome. You can right here in the middle of the day, boom, let's check this out. And we can sit here and just look at what's going on. So I think the data that you guys provide is just phenomenal. And we've got every single stream option I think that you guys have, and we're currently working on coding in the earnings calendar as well. Let's see. It's a little heavy data-wise, obviously. So while that's loading, we'll come back. So like the main page that we typically run is this discussion board, and great. Somebody in here yesterday was riding some Boeing calls. They got us before the end of the day, fortunately, yesterday. I haven't looked at Boeing today, but they didn't look great this morning. But so you sit here all day. Let's just watch the stuff as it comes in, and you're getting some really dense data here for what I feel like is a very reasonable price. It's a third of what I've been paying for the last 3 or 4 years for data until we decided to build it out. So I'm working on doing some education pieces too, so that we can help people understand how to interpret this. I'm not the guy that's going to sit in here every day and tell people what to buy and sell. I have zero interest in doing that. But what I do want to do is help people understand how to read this data and not just act on the very first thing that comes in. Like if you sit here and look at these put sweeps right here for Apple, you'd think that this is kind of ridiculous, right? But so you got to sit here and just look for a few minutes on what's going on. And once you learn how to interpret this data, I think you can make some educated decisions on how to trade it. So that's really what the goal is here, is just to teach people how to do it and not sit here and tell people what to do. I think that's very gimmicky. And ultimately, our value proposition for this is just to simply provide high quality, good, clean data for a very reasonable price, maybe for someone who's not as active, or someone who wants to look on occasion, or somebody that wants to be active every single day and just not have to pay $150, $300, $400 for 4 different services. So that's really what the goal is here. Smartsweeps.com is a 7-day free trial. So
boom, producer AB, can you get that in the chat, please? And shout out Benzinga Newsdesk, Alan. We appreciate the support.
Absolutely.
We had 3 stories last week that moved stocks at least 20%. Exclusive, Benzinga, broken stories. The new Wall Street Journal is what I've been saying all week.
One question I got is, how do you tend to look at unusual options, data and whatnot? I've tried to do some of that in the past. A few of my buddies, they really like to look at that stuff. It's not something I look at too often, but it's definitely something I want to learn more about. What kind of sticks out to you when you look at, some unusual options activity?
So, let's use NIO, for example. That one's obviously a little bit more well-known name, but, it hasn't gotten much love at all. If you pull the daily chart out, it's been getting banged up for a while. Frankly, in my opinion, it should never even have thought about looking at $65. But it hit 65 and ran all the way back down. It does have some pretty decent support around $35. And there was quite a bit of call flow that came in yesterday, and that in and of itself had been unusual for the last several weeks. It's either been maybe some really, really near dated call contracts that have come in. But yesterday we started seeing calls come in that were 2-3 weeks out. And so that was one that I had been paying attention to for a while. So if you're not watching it and sort of staying up to date with what the flow has been prior, you're going to kind of miss the boat sometimes, I think, if you start seeing some heavy call volume come in for particular strikes and similar date ranges. But yesterday, NIO had that coming in. And so I forget what we ended up taking here. Let's see. I'm out of it now, but anyway, I think that we did the $40 call yesterday, and so that ran up. That was like a 65% gain that I jumped out of this morning. I don't know if it continues, and I wasn't really willing to bet on it continuing. So I think I got out of it around 37.25 today. That was where it was actually trading at the stock. But so that's one way I look at it. Every once in a while, too, you'll see something super obscure that comes along where you look at the chart and it's basically been flat for 2 years, and then somebody comes in, they buy 100,000 contracts, and it's dated 3 weeks out. Those are kind of interesting, and so those I'm never going to go heavy on, bet the house on it. But I'm willing to throw some money on them because it's maybe 50% of the time those things hit, and then some random headline comes out that's probably just a bunch of BS anyway. But if it runs up 100%, then jokes on everybody else. I'm going to get out and walk away with it and be okay. So that's usually how I'm looking. So to me, unusual means if you're paying attention enough and you figure out what's the common flow, then if something sort of just comes out of the woodwork and it's like, man, this is a missile right here, then that's something that I'd pay a little bit of attention to. Watching the open interest too, I think on a select number of names is really important, like NIO being one of them, where it can move a lot in one day. So that's really how I'm looking at those.
Okay. And then are you looking at mostly charts? Are you looking at mostly the story? What's kind of, you talked about some secondary information to kind of sway you in the trade?
Yeah. So when I start seeing flow, especially if it comes in early, I mean, maybe I've missed the first part of the move, but I do like to have some degree of conviction if it's not a known name. Maybe it's Apple or something else. But I mean, looking for a catalyst is always ideal. I'll even jump over just for humor sometimes and kind of look at what StockTwits has got going on just to see what people are running around talking about on there. It absolutely is not due diligence to do that. But you can just kind of get an idea of where people's heads are at. And a lot of times there's articles on there that get shared that I haven't seen. And so those can be beneficial just to get different perspectives. And then, maybe that's the point. If I continue to see call flow coming in, I'll take a stab at it and I'll get it in. I'm also going to look at relative volumes. That's another really big thing I'm looking at. Is the volume actually starting to pick up on this trade? Because if there's a bunch of positive news coming out, then, there should be some kind of volume increase on this thing. So it's not like you can't hide that stuff on the internet these days, hardly at all. So, I mean, algos and everything else start picking it up. So if the volume's starting to pick up too, the news is coming out, everyone's getting bullish on it and starting to trend, and there's a lot of call flow coming through, and it's just back to back to back to back to back. Those are good indications that it could be a wise move to follow some of that flow.
Definitely. And then do you like to play the upside and the downside, buying calls, buying puts? Do you buy any credit spreads, debit spreads, butterflies, iron condor? Or you kind of just keep it simple, calls and puts?
I really do all the above. I had a SPY butterfly that I closed out yesterday after it ran up a little bit. I don't even remember what the strikes were, and it's probably gone off my trade sheet now. But I've got some Amazon call spreads right now. I had some ARC puts, and it looked like it would turn around yesterday, and it did. It ran up a little bit today, so I sold some puts. I think I was long the 105 puts. I'm sorry, 90. Yeah, it was the 105 puts, and then I shorted the 95 puts yesterday, just in case it ran up this morning, and it did. So I actually just pretty much offset, the run up on the long puts that I had, and I closed that position out entirely today. The other thing I really look for is implied volatility. My favorite story on that is when Tesla was running up to close to 2,000 last year. Well, actually, it wasn't up that. I think it ran from like 800 to like 1,300 in, 2 days, 3 days, something like that. And it was a Thursday, and right before the close, I decided to sell like $5,000 worth of 1,900 calls, and just didn't sleep at all night long. But I think that those were like $11 a contract or $14 a contract, still like $400, $500 out of the money. And the next morning, those opened up at $1, and so that was phenomenal. But the implied volatility on those were just completely unreasonable. Interactive brokers hated me because I maxed out every single dollar margin I had on those overnight. So, but that's what it's there for. So that one worked out.
Great. I've been there.
Yeah, and I've been.
And they give you a lot of leverage too.
Yeah, no, they really do. And I've been in some precarious positions shorting Tesla too, because it does go on these random runs like over the summer last year. And so I ended up having to wake up at 4 a.m. and long shares to cover the short shares, or the short contracts rather, and just try and hedge it as much as I can. So, you got to be careful with it. But some of those are just really stupid. Implied volatility. There's no reason to pay $1,000 for a contract. Next day expiry, $500 out of the money on Tesla. It's a 40% implied move. Sure, it could happen, but it's unlikely. So that would have been a big continuation. But yeah, so I kind of do all of it if it makes sense, and I'll add positions onto add legs, and then add short calls or puts on either side to help hedge if I want to stay in something longer but not take any short-term loss or drawdown. So kind of have to be nimble to get the most out of some of these trades.
Cool. Awesome. Well, Alan, thank you so much for joining us today. Again, guys, producer AB, drop the link in the chat so people can stay in touch with Alan. Dropping the knowledge bombs on us. Again, guys, I promised you at the top of the show, today we are going to deliver two things, jokes and trade ideas. Alan definitely gave us some trade ideas. We got the BABA long, the FDX long, both of those June options. And we got to check out the platform too. So thank you very much for hopping on, man.
Smartsweeps.com. I did put it in the private chat on this thing. I don't know how to put it in the comment side. I don't see.
Don't worry. Producer AB's got you.
Cool. Appreciate it, guys.
Producer AB. All right. Thank you, sir.
Nice meeting you, man.
You too.
All right, Drewski, for anybody just joining us, I'm going to recap what we have going on for the next hour or so. Let's talk about BFT really quick. I see that one in the chat. Then I'm going to go through some due diligence, and I want you to pick me apart and do a lesson on a little bit of DD. 1 o'clock, Dave Mazza, Direction, coming on to talk hydrogen ETF, right? We talk about hydrogen stocks being futuristic. There's now an ETF for that. They're going to talk about what they put in the ETF, why they think the space is interesting, etc. So hydrogen stocks, hydrogen ideas, stay tuned. 1:15 Eastern, that's about 20 minutes or so from now. Ripster, favorite of the chat, Ripster giving us those nice little rippy trades is coming on. And Drew, I think I found the right folder that I want on the soundboard. Yep, all right. I found my sweet spot. All right, let's go. Let's talk about I just dropped my pen. That's why I have two. I always have like 8 pens with me because I lose them. I write all over my hands, etc. But all right, guys. Ticker BFT, saw that one in the chat. It's a SPAC deal. Let me throw the chart up here. We had some news out of this one today. I'm going to scroll down to my trusty Benzinga Pro. Shareholder approval with PaySafe. It's a SPAC. It's merging with a company called PaySafe. That got approved by shareholders. They voted positively on it. And you see it. The stock is not doing much today. I saw the Twitter sphere going crazy saying, BFD, it's going to be a runner tomorrow. No, not really. Womp, womp, womp a little bit. Let's talk about why for a second. And if you've been following the SPAC space and these SPAC deals for a while, you could have expected this. The pattern that we see, and we'll ask Ripster about this too, because he I know is into a lot of these SPAC plays. But the pattern is you get the pop when the acquisition is announced. When the deal gets confirmed, it's less exciting. Like I'll show you the most extreme example of this, right? If you're confused, why is BFT not running today? I'm going to pull out a favorite. CCIV, 1 year chart, rumor deal with Lucid. Hey, deal gets confirmed. Stock crumbles, right? 64-ish bucks down to 35-ish in a day or so. Now sitting at 23. All right. So that's the deal with the SPACs, guys. If you're buying them when these mergers get approved and expecting some lift off of that, oftentimes they don't happen. So keep tuned, I guess. If shoot me for holding that one. We're fine. Warrior, we told you. I didn't like that one. I wanted to short it, but I was too scared. I don't short stocks at double. But yeah, there's the deal there, and we'll ask Ripster about some of his SPAC trades too. Look at. It says Ripster, SPACs, FDA. All right, there's a couple notes. But all right. Let's dig into. I want to do a little bit of due diligence here. All right, Voyager is going to be the example, Drewski. And I'm going to pull up this Twitter thread that I did sort of to aid me through this discussion. I'm going to drop the link in the chat if anybody wants to follow along. But basically, let me set the stage a little bit. And one of the questions that I get emailed the most is how do you do due diligence, right? We hear all these gurus on Twitter. We see people say, do your own due diligence, do your own research, etc. Well, how exactly do you do that? That's what I want to take a stab at answering right now. there's many forms that it can take, and I'm just going to walk through a very specific example that I actually did on Saturday or Sunday night for myself. For Voyager Digital, a stock that I own. I'm going to talk to you guys. Hey, how do I research this thing? How do I think through it, etc. And Drew, your job in this next segment is basically to pick the thesis apart and stop me and ask questions, because again, we're talking very, very fundamental here. So. All right, VYGVF. All right, Voyager Digital. So here's the chart. I'm gonna zoom us in. Here's the past month on this stock. Right, super volatile week last week. It's the biggest stock holding that I own. Right, it went from as high as almost $27 down to as low as about $17. It's since recovered. Right, but in the middle of last week, right, this is my biggest stock position. I'm waking up, I see my account's down 10 grand off of one stock. It doesn't feel good, right? It's a bad feeling. And so rather than panic selling, I stop and I ask myself a series of questions, okay? This is a good habit that I've gotten myself into over the years. I've not blown up any stock trading accounts for the past 8 years. I blew up 3 before that, and this is one of the lessons that I learned. Stop. Why do I own this stock? Okay, that's the first question that I ask myself. Okay, why do I own this stock? The next thing that I ask myself, what items do I have coming up on the horizon? Okay, and then the last one is valuation. Okay, so let's walk through how I think about these for this stock. Okay, so Voyager Digital, why do I own this stock? Voyager is a crypto trading platform. They're a brokerage, right? Not an exchange, but a brokerage that connects to multiple exchanges, and basically can transact orders across about 12 different crypto exchanges. Okay, why do I own this one? One of the big reasons I own this stock right now is because we have the Coinbase IPO coming. Okay, this stock is trading at about 10 times sales. Coinbase right now, the valuation is somewhere around 50, 60 times sales. When we get that Coinbase IPO and all eyes turn onto this space, it's going to be the biggest IPO of the year, in my opinion, if not in size, just in terms of excitement and energy around it. I think that drives energy into Voyager, okay? So that's why I own it. Does that thesis still hold up? We still have the Coinbase IPO on the horizon. Do I still think it's going to be good for the stock? The answer is yes, okay? What's up on the horizon? The next big piece of news we're going to have out of Voyager is we're going to have their earnings report, right? Q1 is pretty much at an end. It's at an end as of tomorrow, but Voyager is in the habit of sort of pre-announcing their earnings before they do the official release, maybe a month or so from now. So I think about, okay, do I have risk for holding Voyager into earnings? Of course, there's always risk, but I do a little bit of research and I do a little bit of math about that risk. And so Drew, this is where you can start jumping in and picking this apart. But I'll tell you how I think about this. So the big number that I dug into is earnings or revenue, right? So the stock's going to be reporting their quarterly results. Revenue is the big number for the stock. It's more important than EPS right now. The stock moves off of their revenue reports. So I do the work of estimating what do I think their Q1 revenue is going to be. All right, I get started by going through their past press releases and their past SEC filings to figure out whatever information I can about how they earn revenue and how much revenue they earn. Okay, they gave us this really nice table in a past press release. Let me zoom it out here. That told us, hey, in February, they made $20 million of revenue. And they had 70,000 trades per day. The main way that they make revenue is from earning commissions when people trade cryptocurrencies through their platform. Okay. So then the first step that I backed into is, on average, how much revenue are they earning per trade? And I come out to they earn an average of $10.20 per trade. Okay. So now that we know how much they earn per trade, we have to estimate how many trades are going to be done on their platform in the month of March. We already have January numbers. We have February numbers. Now I want to figure out how much trade activity is there going to be in March, so that way I can get the March revenue estimate, put that all together, and have total Q1 estimates. Okay? From this same table, we're able to back into the average number of trades that were done per funded account in the month of February was 15. All right, so per the funded accounts that Voyager has as a crypto platform, those accounts are doing 15 trades per day. Okay, we also know that they ended February with 175,000 funded accounts. So we know that there's 15 trades per day per account. They're starting the month with 175,000 accounts, right? So we can assume that there's going to be at least 2.6 million total trades done on their platform in the month of March. We also know that they earn $10.20 per trade on average. So that comes out to revenue of $27 million in the month of March. This is a very conservative revenue estimate, I think. Because again, we're just taking the number of accounts that they had entering March. That assumes that no new accounts were opened in March. Okay, so if they just had that number of accounts, the trading activity held up, which I have no reason to think, hey, why would that trade activity change? That gives us $55 million of revenue in Q1. So I asked myself the questions. It assumes no new accounts. They are the 11th most downloaded finance app right now. Voyager is getting more downloads than Coinbase. Check this out as of whenever I took this picture on Saturday night or Sunday night. Pretty cool. Compare our estimate of $55 million of revenue to the $42 million analyst estimate. Okay, that's a strong beat. So the first question I asked myself, why do I own this stock amid the volatility? I can answer, here's why I still own it. Number two, what catalysts they have on their time horizon. The next catalyst they have coming up is earnings. I eliminated my fear about earnings. Okay, the very last piece, and we've got to get to our next guest here, so I'm going to go quick, is valuation, right? So I can answer why I still own the stock. Can I get over the upcoming catalysts and risk from that I have? And then the third one is valuation, right? If they had zero revenue growth through the end of the year, and you can see all the math here, I'm not going to talk through it all because we don't have time. If you want me to, tell me in the chat and we'll do it tomorrow. But basically, they're trading at about 13.5 times price to sales ratio. Is that expensive? Yes. But that's if there's no revenue growth through the end of the year, and the stock increased revenue from $3.5 million in Q4 to $55 million in Q1. $3.5 million to $55 million in one quarter, okay? So if they were to at least double revenue through the end of the year, now we're trading at about a 6 times price to sales, 7 times price to sales ratio. That's pretty in line with mega cap stocks, and this is a small, high growth stock, okay? And so that gets me over a lot of the valuation hump. Is it still expensive? Yes. If they have at least some quarter-over-quarter growth, if they hold it up, then I can get over that valuation hump there. So again, guys, the point of going through this was I get the most emails that I get is how do you do due diligence? How do you research a stock? There's my quick little lesson on it. I asked myself the 3 questions: why own it? What's next on the time horizon? In this case, it was earnings, so I've got to back into and come up with some earnings estimates, which I feel good about. And then number 3, valuation. Is the valuation so crazy that I don't want to own the stock? The valuation's high, not so crazy that I'll sell it. And so for that reason, I'm keeping Voyager in the portfolio. It is the biggest stock position I own. My average price is 52 cents. You can see it's at 24, so it's been a hell of a runner, and I am holding long. Whew.
Solid job, Luke. Solid job.
That was a lot of talking.
Little round of applause. If that doesn't deserve a like, I don't know what does. Drop it hard. Smash that like button.
I'm sweating up here. But all right, Drewski, let's talk hydrogen. Let's get to our next guest. Maza, you're here with us. You're on the Power Hour. What's up, man?
How you doing? Thanks for having me on, guys.
Absolutely. Just to give you a little bit of context for the show, this is the Trade Idea Show. That we also have jokes, we have gimmicks as well. So if you hear the soundboard going crazy, that's why. But all right, you have something very interesting to talk to us about today. You're coming to us from Direction ETFs, so some of our favorite ETFs, especially as trading vehicles. You guys just launched hydrogen. Tell us about that a little bit. What caused the interest in the hydrogen space in general? What makes the fund interesting, etc.
Yeah, well, I love your point in regards to why you own a stock, and I think the same idea, the same principles can apply to hydrogen, right? Think about the fact that the world's energy usage over the next 20 years, 10 to 20 years, is expected to grow 40%. Right now, 81% of energy comes from non-green sources. But at the same time, governments in Asia, governments in Europe, and now the Biden administration saying we want to have net zero emissions by 2050. These things don't add up. The one thing that can help make that add up is looking at new sources of energy, one of which is hydrogen. So hydrogen, what we've all learned about it in high school, it's the world's most abundant element, but it has so much potential as a fuel source and for production of different types of fuels. It's going to be a part of the green economy going forward. So we launched HGen, the Direction Hydrogen ETF, to capture.
And that ticker is HJEN, correct?
Correct. HJEN.
I put that in the chat, guys. So look in the chat. You'll see it there. But keep going, David.
Yeah, so the point is how do I get exposure to the hydrogen economy? Look, as we know, there's only a few companies, your Plugs, your Ballards, your Blooms, who are generating nearly 100% of their revenue from hydrogen. But we created a basket that focuses as much as possible on pure plays like that, paired with some quasi plays as well. So you get 30 stocks in the portfolio. It's a global basket offered at 45 basis points to give you exposure to those companies that are most involved with hydrogen today based off of where their current revenues are. So to me, it's an exciting time to get into the space. There's been some volatility there. Many of those names have pulled back from some of their all-time highs. So this may actually be an interesting buying opportunity for those who have been looking at the space.
Okay, and let me ask you this, right? So when I hear hydrogen thrown around a lot, I feel like I hear it a lot of times in mobility, right? Like transportation and that sort of thing. Is that the big angle there? Are there other applications that you think are bigger or more interesting? Tell me about that.
So right now, fuel cells and batteries and mobility is really the biggest utility for hydrogen. So let's think about it this way. So we know electronic vehicles and autonomous vehicles. Electronic vehicles easy. You have a battery, you plug in. You have to wait. With a hydrogen fueling station, of which there already is hydrogen fueling stations in places like California and Texas, you don't have to wait. So it's a much cleaner process to get cars back on the road. But let's think about trucking, right? So cars make sense. Batteries are small, can power a car. If I want to actually truck in the US and China over multiple miles, you know how big the battery would have to be in that particular truck? It would take up all of your cargo space. So with hydrogen, you can compress that fuel source into a much smaller area and keep all the potential storage power. So to me, that's one of the most near-term usage, but also we're going to start seeing hydrogen being talked about in different ways to kind of power bigger projects. So it's a very, very efficient source of hydrogen. For example, in China now, they're taking solar power, which creates the energy, storing it as hydrogen, because if you store energy in a battery, it actually degrades very, very quickly over time. Hydrogen doesn't have that issue. So longer term, we're going to see it being used in much more ways other than the transportation side.
Okay. All right. It's interesting. And what about the holdings in the ETF?
So right now you get about 40% of your fuel cells and batteries. So Plug Power is over 11% of the portfolio. You have
Plug Power is the biggest stock holding, I assume?
Plug Power is the biggest stock. So Plug is the biggest. Then followed by that, you have Fuel Cell Energy, Bloom, and Ballard, all kind of over 7%, 8%, and 10% respectively in their weights. But then from there, you're going to see names that you might not be as familiar with, because some of these are traded in Taiwan, traded in Korea, traded in Sweden. So it's names like ITM Power and F-Cell and other names that are very, very involved in hydrogen. It's just they're not household names in the U.S. because they're traded overseas.
Okay, and let me ask you this. So you guys launched the fund now, basically, or last week, I think is when it came out. Why this timing? Was it because you had investors asking, saying, hey, we want exposure to hydrogen? Is it because you guys are saying, hey, this is the next big frontier, let's get something going here? What went into that decision to decide now is the time to launch the hydrogen fund?
Yeah, so some of you may be familiar with our Direction Moonshots Innovators ETF. The ticker on that is Moon, M-O-O-N. To me, one of the biggest moonshot industries is hydrogen. So hydrogen today is something where the revenue potential for the near term is modest. But if you project out the fact that you have this mismatch from the need for green energy and an increase in energy usage, and we're finally getting the government intervention, particularly with the Biden administration, to make that happen, we now have the catalyst that's needed. All this is hydrogen has been trying to be commercialized since literally the early part of the 20th century, and it's had boom and bust cycles. But there hasn't been, again, the catalyst that's required. Now there's governments around the globe that coordinate to focus on this potential. And we're hearing from investors who are who are interested in these type of companies say, hey, can you just package the hydrogen side for us? And that's when we built a basket to kind of take those well-known names and pair them with some other less well names to kind of construct HJEN.
Okay, and let me ask about the management of this thing, right? So obviously, let's say that the industry is the moonshot industry. As it grows and develops, there'll be companies that become more prominent, less prominent, go bust, etc. How often are you guys rebalancing? How often are you changing, adding, pulling out the losers, etc.?
Yeah, so we actually balance this fund quarterly for that very point. So you tend to actually see modest turnover, but because it's such a nascent industry, we didn't want to wait for an annual reconstitution to rebalance the portfolio. What we also do is we have different weighting tiers. So we overweight those companies that are generating over 50% of their revenues from hydrogen today. So those are your plugs, your blooms, your ballards. Then there's a quasi bucket that's 20 to 50%. They're the next wave. And then there's some marginal players that kind of round it out. Over time, as more pure play hydrogen companies come to market and IPO and get larger, our goal would be to get rid of any of the marginals that are generating less than 20% of their revenue from hydrogen. But as of right now, as you guys may know, to build a 30 stock portfolio, you need to have some marginal players in there. But all of them are connected to hydrogen in some way, shape, or form.
Okay, and I'm going to go off script for a minute. We didn't talk about this ahead of time, but before we get back to hydrogen, but we had the Cathie Wood Space ETF debut. 2 stocks in there that surprised me. We have John Deere in the Space ETF, and you have Netflix in the Space ETF. Drew and I were scratching our heads trying to pull the connection of those two to space. I don't know if do you see it, or is there something a part of like the ETF portfolio construction process that would put Netflix in the Space ETF? Watch TV on Mars. I don't know. Anything you can enlighten us about here?
So two schools of thought that I give some credence to. So one, we know it's an actively managed ETF. So let's for the first day, let's maybe publish a basket with some holdings in there that aren't indicative of what we might want in there to avoid front running. I give some credence to that, but then you're going to turn your portfolio over immediately. But it's a reasonable thing to say, right? So let's mask what you might get traded in there tonight. On the other hand, we know that they're really thinking about creating a portfolio of portfolios, right? John Deere does make some sense. They have some drones. They have some interesting farm equipment that's focused that could have some space applications. But I got to tell you, I'm not a fundamental analyst on Netflix, but I got a hard time with that one. So I'll have to pass on giving you a valid response there.
So Elon Musk launched his Roadster into space, and so maybe like he wants to get some television programming in the vehicle. That's the best I came up with, but okay. All right, that's helpful.
It's a bit of a stretch, but it works enough, I guess.
Yes. All right, and then hopping back to hydrogen for a minute. So when you're deciding the companies to put into the hydrogen fund, how big are they, or what, or is it, are we buying into large caps? Are we buying into small caps? Is it spread across the spectrum? What does that look like?
So it's very much kind of a smaller to mid cap fund on purpose. So the smallest holdings have to have $100 million market cap USD. So that's actually pretty small. You can consider that micro cap.
Oh yeah.
What you're not going to find in here, other than Linde and a couple utility players that are focused actually on hydrogen in a material way, a lot of the marginal names. So for example, many of the global auto manufacturers are involved doing something in hydrogen because it does have some applications, but they're not in this portfolio because I want to own companies that are generating revenue from hydrogen today and tomorrow. If over time, Ford and General Motors really ditch carbon vehicles and things of that nature, certainly they'll make its way in, but their revenue right now is so small, it didn't make sense to put them in the portfolio.
Yeah, and it's not like you're buying a U.S. Steel because they're going to need to have iron ore to create some component. It's like these are like hardcore, actually have hydrogen sales that are in the
fund. I want a Taiwanese company that literally makes a membrane that's required that Plug Power has to use in part of their process. That's kind of the whole point of this particular fund. Again, there are names that we're probably trading and familiar with, your plugs and your blooms. Makes sense to maybe own them, but again, if you're interested in the space, you're going to be able to round that out with what's in this portfolio.
Okay, and David, we just got checked by the chat. Somebody's saying Netflix has a ton of space shows and documentaries. So obvious connection. I missed that one. So thanks for correcting us.
Well, you got always opportunity to keep digging in there, I guess.
Yep, exactly. Cool. All right, man. Any final words of wisdom, or maybe even call it a couple other funds that are interesting for people to look at right now?
Yeah, I know. I mentioned the Moonshot Innovators. That fund has, had a bit of a drawdown over the last couple of weeks. I think as it was, many of the names were really run up since we launched the fund in late November. However, but for someone who had been thinking about it, could be a better opportunity to step in, look at the charts, look at the fundamentals there. All of those company names are still involved with what their long-term goals are, whether it's on the biotech side or on the industrial side. So that's one. That's a name that I think still remains interesting. Lastly, for those folks who are active traders who are looking at our leverage and inverse ETFs, something really interesting has happened on our semis side. So SOXL and SOXS, those are 3 times leveraged bull and bear funds. Again, that's for your real active traders. Usually, when you see semis underperform like they have, we would see money move into the bear fund, SOXS. We are actually still seeing people put money to work on the bull side, SOXL. Very rare to see that historically. Again, most people trade both sides of the trade. So again, those traders in semis are still bullish here, even with the drawdown. So eventually those positions might get flushed out, but I just think it's an interesting anecdote from a market sentiment perspective I figured I'd share before I hop.
Cool. Awesome, man. I appreciate you taking the time to hop on with us, talk hydrogen today. We get a lot of people who come on the show and like to talk about the individual stocks. I like that there's a fund in it. I don't have any exposure to the space yet right now. Let me throw this one out to the chat. Out to Zinger Nation. If you're in the chat, you are a part of Zinger Nation. All of us out there sharing ideas. If you guys are bullish on the hydrogen industry, throw me the 1. If not, throw me the 2. I want to see where everyone is at. And David, thanks a ton for taking the time and hopping out with us today.
Thanks for having me.
Absolutely. All right, Drewski. I see the ones starting to flow. Let's see where they go. Where are you at with hydrogen?
Yeah, I think it's
and if you know it well enough, give me a specific stock.
Okay. I think it's something that has huge potential, and I think there's a lot of stuff going on. You definitely got to do due diligence, right? There's a lot of names that might play it off to get some hype in their name and whatnot, but I think there's a lot of potential, right? I think we saw a lot of people kind of come in with the whole Nikola push, and one name that I think is really interesting is ENG. I know Jack Capital, he kind of brought that to my side, to my eyes. I think they're a really interesting play because they have like a lot of infrastructure and whatnot already built out. So I've watched them recently and I'm kind of following what they do and kind of how they perform. What about yourself, Lee?
I'm not in it yet. I think it's an interesting space. I just don't have any of those stocks yet. And guys, if you are just joining us in just a few minutes here, we're going to have Ripster, favorite of the chat, joining us. I also have a new soundboard. All right, I fuck with that one a little bit. And then what else are we going to do? And then I'm going to talk about support.com. Ticker SPRT. I'm calling that stock out to the front of the class. I hit it. I'm short the stock. I'll talk about why I'm short it. I am short it with options specifically. I don't short stocks that double. Learn that lesson. But without further ado, let's bring the man of the hour onto the stream here with us, Ripster, joining the Power Hour. Once again, what's up, man?
Hey, what's up? What's up?
How you doing?
Good. How you doing?
Doing well. You still got the awesome chairs. My chair's in the background. It's just boring. We got a black one, then we have this orange one. But what's up with you?
Nothing much, man. Trying to get over this month of March,
It has been a tough one. How are you faring? Are you up, down, sideways? I'm pretty much sideways, a little bit down.
I was a big down in start of the March and then up, and then last couple of weeks have been okay. So overall, I think I'm still down for the March. Not much, but we'll know end of this week.
Okay.
But swings. Some micro cap has been doing good. Large cap tech stocks, they have closed bunch of positions and reduced exposure. But micro cap has been good. NFT plays, day trades have been good. So, yeah.
So let me ask you this one, right? So when you're saying, hey, large cap tech taking a little bit of a hit, micro caps that they've gotten hotter. Like how quickly into seeing those trends are you starting to adjust your portfolio? Like, do you give it a couple days? I mean, how do you decide, like, hey, I'm going to trim back on these. I'm going to start loading up on some of the micro cap plays.
Yeah, I mean, I always track QQQ and VIX, right? And then I have my system, which is cloud EMA systems. I track with how the 50 EMAs are behaving, 20 EMAs are behaving, and that's how I do it. It's I share it on Twitter, like how the price is moving. I don't hold and say, okay, maybe it will bounce, maybe it will bounce. I just cut and I just don't look back. So that's the way to do it. So I don't wait for 2-3 days. When the trend is back, I can ride it. It can run and I can ride it back. I don't want to be by the dips, the discount. That's how I did that mistake twice this year. I did that with Zoom and TTD when start of the March, and I was lost $1 million, more than that, just trying the dip buys. So that was the only mistake I did there. So no more. I don't do that.
Yeah.
Got it. Yeah.
Yeah. I've definitely gotten hit on some trades like that, and so I guess there's a lot of comments in the chat that showing the love, and they're basically saying like they love Ripster. You put so much out on social, right? Like you educate. It's not like you're just saying hey, I made $1 million today, or hey, buy this stock. Like you go through the whole process, right? You say, hey, I think this trade is interesting for this reason. And I'm sure that you get like internet hate for it, because I have a much smaller social than you do, and I just get hated on every day, and it's exhausting.
My hate, I see how much I don't have much hate. Sometimes I do, like if I go into micro caps, but then I show everything before and after. So the hate guys don't really have to prove. They can't prove anything, right? So I show my charts before and after, even if, I just want people to see how the price moves. So if you see how the price moves before, and somebody is showing you before and somebody shows you right after with screenshots, then you know that how the price moves. So you trade, educate. I post things on Twitter, so I'm accountable, more accountable to myself, my journal, and even the new folks. They see how the price moves. So that's what I try to do.
All right.
Yeah.
And then all right. So let's get into stocks a little bit. Anything on your radar right now, especially interesting, you're watching, etc. And if you have a screen to share, you can go ahead and share that screen. Otherwise, I can pull up some charts. But you tell me.
Maybe I'll be ready next time to get the stocks.
It's fine. I'll be the chart guy.
But here's the thing, with the large caps, I have a bunch of focus lists. I can tell you 10 tickers now, which are high growth beta names. But right now, it's not the right time. We are waiting for this chop to end. We are waiting for the trend to build. Nasdaq, SPY and Nasdaq. Nasdaq is trying to reclaim 20 EMA, 50 EMA. There's a downtrend line on the chart. Once it reclaims that, I see the trend on the Nasdaq. Then I can, it's time to go into those your tech stocks. Right now, you can make a list. I have a list that I make a list of the high growth stocks on the Twitter. Right, just make your list, draw your prices and all that. So I won't share much on the large caps today, right? But and I have been trading micro cap growth stocks, which are relatively sometimes immune to how the market moves. There have been some successful swing trades recently. The one I am really long right now is AMPG. This one is they have 10 million in cash. There's 60 million in market cap, right? And their back orders just in the first quarter of this year is more than almost close to the revenue of last year. So they make low noise amplifiers, which are used in satellites, military, and EV everywhere. Basically, and their company just starting to grow. And I took a swing at 8. It touched 13. If you see the chart on AMPG, it got rejected from 13 twice. You see those big spikes?
Oh, right?
Yeah. It got rejected from there. So my thing is I'm waiting for that breakout. We took the trade 850. So it did. A lot of people took profits yesterday from my alert, but I'm still holding full position and adding, because I know this quarter, not the last year, because the company uplisted. This quarter that just ended, which will be reported in summers, is going to be big. They are going to show growth. It's still a micro cap. Analysts don't know about it, but I see it doubling down here in few months, because of the growth, and they do a lot of updates and all that. So this is one of the swing I have been playing. I'm pretty confident about. The other swings, which SSNT was a good one. It also paid. So nothing really solid right now. I'm just waiting for the right time. That's why I'm not sharing many plays, because even on Twitter, because when the time is right, we attack. When the trend is there, that is the time you deploy your cash. You don't go buying discounts or dip buying. So I'm I'm just but if there's a strength, like AMPG had a strength in a down market, yes, you trade the strength. So things like that. So yeah, you can.
Okay.
Yeah.
Okay. And so let's talk about this one for a second. And it was AMPG, right? Alpha Mike Papa Golf. I got that ticker right. Okay. So for this stock, I guess a couple things that I think are interesting that you said. One is you said there's not a ton of analysts who know about this stock.
Yeah.
That's something that I always love, right? Is you can. You're not trading Apple, right? That already has 800 estimates and analyst opinions. It's like, let's let the street start to figure this one out and follow us into it.
Yeah.
And you said you're holding a full position still. And I know that you love to trade into earnings. So I imagine that's the next catalyst that's on your radar.
Yeah. Well, the last earnings in the December, those ones should be out anytime, but that is not the real catalyst I'm looking for. The company is working with military and other lot of upcoming projects. I talk to IR often. So one thing is, if you are invested in any micro cap company, take the phone, take the email, call the IR, call the investor relations, try to talk to the CFO, CEO, try to get hold of them. If you are invested, don't just buy something and you try to understand what is going around in the company. How is the management, especially for the micro cap? If you invest in Apple or Facebook, you can't call. You'll be lucky to.
Yeah, Zuck on speed dial. Marky.
Yeah, but these micro cap companies, they are looking for exposure. They are looking for growth, and if they are sincere, and they will answer you. The CEOs will talk to you. Right, get your answer. See how sincere they are. Right, of course you can read the documentation, you read the filings. Okay, no, when you talk to someone, So I talk to IRs. I know the company. I talk to them. I understand what they are trying to do this year. I can tell this company and many other company like APPS was last year. They are trying to grow exponentially this year. So when I know that, I place my bets. Because I have talked to the company, I verbally talked to IR, because that's why the investor relations are. So I'm just sharing something. Everybody who, if you are investing, especially in the companies which are under 100 million, also in biotech. If you are in biotech, talk to the investor relation, try to understand what is the pipeline, how much cash they have. Just ask them what do you think when you will commercialize. They will answer you, and if they do answer you, means they are sincere, right? Then when you put your money in that company, you feel a kind of confidence. That's how I feel. A kind of AMPG goes to 8. I don't care, because I have that conviction, talking to people, talking to the company, right? So that's how I do it. So this is just one example. So hopefully some people learn from this, right? If you're investing your hard-earned money, take a phone, call them. And if you are not able to reach anybody, then is again a red flag if nobody's answering, because a company which wants to grow would like to talk to investors, would like to talk to people who are interested. So yeah.
Yeah, and some work that we've been doing to that point, right? Some work that we've been doing on the Benzinga Newsdesk these past 2 weeks has been calling all these like supposed NFT plays, right? We see all these stocks that say nothing about NFT. They get speculation that, hey, this is an NFT stock, the stock doubles, triples, and we're just calling them, right? Getting the CEO or the IR on the phone, just like Ripster said, and saying, hey, do you have plans for NFTs? They'll go on the record and say, no. right, or they'll say yes, actually, stay tuned. We caught 3 stocks last week that moved more than 20% after we published something, just as simply as, hey, us calling them and saying, what's the deal here? The stock's going crazy.
Yeah, and they bring momentum, right?
Yep, absolutely. Yeah. So all right, a couple other things I want to talk about. We're finishing up Q1. That means we're going to start getting Q1 earnings. I know you love buying strength into earnings. Can you talk a little bit about that strategy?
Yeah. So what I do, if you want to talk about earnings, let's say you are getting into an earnings season. Every Saturday or Sunday, go to Benzinga.com or any other website, find the list of the companies which are going to report in 1 week, 2 week. Take that list, put it in your Think or Swim or whatever, and put it in your watch list, right? And once the week starts, so usually these companies start to run up around 2 weeks, and most run up is around 1 week into earnings. And you can ride that run up. And especially since market is kind of broken right now, a lot of charts are at all-time lows. They are not all-time lows, I mean relatively 6-month lows. If they are good, let me give you an example. Let's say APPS or SI or PINS, whatever. So the earnings is in 2 weeks and you have it on your chart. Keep an eye on it, sort it by net percent change. So if a stock is trying to change, there is every day it's gaining into earnings, then you look at the chart and trade it. But make sure anything that has upcoming earnings, you have it on your watch list in front of your eyes all the time, and you see which one is most running into earnings. So that's how I do it, right? And when earnings comes, I also make sure what was the EPS same quarter last year, what was the earnings and sales same quarter last year. You want to see the change year over year, right? When the earnings comes, that's how you take the trade. So that's after the earnings. So that's how I do it, when I'm doing earnings. But yeah, and it might be actually good time if month of April is, we get on a bullish trend to get on these earning plays. Actually, that was a good point, Luke.
There we go. See, you give me so much, I'll try to give you at least a little bit. I don't know. Yeah. and all right, what about FDA catalysts? You last time you were on, you had your friend Farm DCA, who was amazing, by the way.
Yeah.
Do you think of FDA catalysts, like a PDUFA date, or we'll get like some trial results in a similar way, where you like the strength into the announcement, or any insight there?
So how it works is, if there's a PDUFA, again, disclaimer, I'm not a biotech expert. My good friends, Farm and many other, they are experts. I learned from them. But for PDUFA date is what I think I have learned is what kind of medicine or tech it is. Is it a life-changing thing, right? And also, not only that, look at what else is in the market right now. If there's, for example, KMPH. So KMPH, I gave everybody $6 as a PDUFA. And I was the first one to get on KMPH, biological, one of another.
Very nice trade.
Yeah, and we did it twice, 6 to 9, and then we bought back up again at 6 and sold off PDUFA. So why was KMPH such a big deal, right? They were doing this medicine for ADHD for the kids. There was nothing like that in the market. I guess they lasted more hours, right? So there was nothing. So that's why it was such a big deal. Everybody was buying into the run-up. So you need to see the PDUFA date, what medicine, what tech, what breakthrough are they trying to get approval for, and what else is there. If J&J and all those big companies already have a bunch of stuff out there for the same disease, then it's kind of not a big deal. So you just need to see and what is the market. If its market is like 10 billions, then that PDUFA is big deal. The stock should run into PDUFA. So that PDUFA is kind of straightforward, so I can tell about it. But there are some more intricacies which like a good biotech trader would know about the data, upcoming data, what kind of data it is, phase 2. And again, what else is there in the market? What is the addressable market? So for example, I think there are a couple of stocks. LGVN has Alzheimer data coming up. That's a good one to look at. LGVN, and then I think SEAL has something coming up, SEEL. So you need to get farm with me again. He can better tell you.
Yeah, well,
about-
he was the man.
Yeah.
Like I don't trade a lot of these stocks, but I feel like I have no competitive. Like I don't know the space well enough, right? He definitely knew the space.
Yeah.
But something that we're working on is this has been like my weekend project for the last 2 weekends in a row is building like a sweet FDA database of all the upcoming catalysts. So I already sent it out to Mr. Hugh Henney. I sent it out to Mr. Kenneth Powers. I got to send it to you too to say like, hey, you need to add this on it to make it more useful. Because I think it can be a sweet tool once we get it going.
Yeah.
All right.
So you
go ahead.
Another thing I'm looking at the market and of how the candle of month of April opens on SPY and QQQ. That'll be big for us to see if we are going to trend in April or not. So
wait, talk a little bit more about that. So you're saying you want to see how the first day of April goes?
Yeah. If you look at just at S&P, you see the monthly candle is flagging, right? You see that, So if the monthly candle is over 398, it gives you conviction. It's kind of a technical breakout at monthly level or weekly level, whatever.
Yep, these are monthlies up right now.
Yeah. So you want to see your candle open above that level, but that'll be interesting. See, there was the rejection last month, same level. This month, almost at same level, there's a rejection, right?
Yep.
Right. So if the market wants to trend up, it's still bullish, right? If it wants to trend up, we want to see that candle going up and the buyers coming in, volatility dying under 20, and then all the S&P stocks should be higher. And let me show you the Nasdaq. Right, go to QQ Nasdaq 100.
You want monthlies?
I mean, not really. I mean, but
you want dailies? What do you want?
You just have to look.
Okay. All right. Here are daily candles on Nasdaq on triple Qs.
Yeah.
And somebody in the chat's asking what is the F word? We keep saying it's not F, it's P. PDUFA. PDUFA. What does it stand for? Pharma. It's basically when a drug gets approved or not approved by the FDA, Food and Drug Administration. Okay. But all right, here's the triple Qs. The first day of this month is April Fool's Day. So I'm, a little superstitious,
It's off, right? Friday? No.
It's on Thursday. The market's closed Friday, so Thursday is the first day of April.
Yeah.
There we go. Prescription Drug User Fee Act. Shout out to Riley in the chat for clarifying that. PDUFA.
Yeah, so Nasdaq is definitely lagging behind, right?
Yep.
And it's not only Nasdaq. If you see the growth, hyper growth ETFs or mid cap growth, they are all lagging. So I want to see you see the downtrend line on the Nasdaq. If you can easily see a downtrend line on that right here, 313. If we break that, maybe into next month, that'll be interesting.
What about do you look at IWM at all, small caps? They have definitely been out of favor too.
Yeah, haven't looked at it recently. I actually need to check that.
Yeah, I've been getting hammed on my small cap ETF holdings. All right, can I ask you about a couple other spaces?
Sure.
All right, where are you at with SPACs? I've been foot off the gas on SPACs for a little while now.
Yeah.
Where are you? I'm just waiting for them to come back into favor. So sort of like what you're mentioning with some of the indexes.
So let me explain to you why the SPACs are not getting the love, right? So when the market tanks, when the market is weak, and especially the growth, first of all, the investors bail from speculative plays. Investors bail from the plays where we are paying too much versus the sale, or they're just growing hyper growth, and investors they bail, right? The speculative names and these hyper growth names sometimes take the most hit. So SPACs are nothing but speculation. They are just nothing but speculation. We know that the company is going to be big, huge growth, right? And that they are speculation plays. So money just got out of it. They got shredded. Everybody, they say, we don't want to speculate. Their SPACs are merging with this company or whatever. We just want to park our money safely. So that's why SPACs got hit so bad. But I guess once the money comes back to speculation, high growth, and all that, they should get the love back. The only one, I guess I have two. R2 is the one I'm still holding because it's at base. It's
Wait,
right.
which one is it?
ALTU.
Wait, ARTU?
No, Apple, Line, Tango, Union.
Got you. All right, altitude. Okay.
Yeah. Yeah. See, it's under NAV value now. There's no use of to selling this here because it's it's basically at your NAV value, zero risk. So the thing with R2 is they are merging with the supersonic jet company, which is many years ahead of other companies, and they are high growth and all that. But yeah, it's dead right now. But the day the news comes, and in after hours it'll probably pop to 13, 14, and people take profit and move on. But yeah, that's the one. And I know there was one. She's buying what's her name? Kathy. Yeah.
All right, I've got a Kathy question for you in a second. But keep going.
AONE.
All right. AONE.
Yeah. She keeps buying this. I need to check what's the story behind it.
All right, here's the question of the day for you. Ready?
Mm-hmm.
All right, Kathy Wood, Space ETF launched today, ticker ARKX. Again, get exposure to space stocks and some of your Kathy Wood, favorite of FinTwit. Of the holdings, I've got the holdings up on the screen right here. There's a couple that stand out from the crowd to me. Specifically, we'll call out this one. Where is it? Number, oh, Jesus, 26. I lost it. 26, there it is. Netflix. Any connection you see with Netflix and space? I was going TV on Mars was the best I was coming up with. Somebody else in the chat said they have space documentaries. I don't know.
Are they going to launch their own satellite for movies or?
I don't know. Yeah, I mean, there are some funny ones. If you look through these holdings, there's a lot that makes sense. I think we had Raytheon in there and stuff like that. Like John Deere. We're about to farm the moon or something. I don't know. There's a couple where it's like, don't totally see it. But all right, Ripster. What else should we be looking at? What about cryptos, NFTs? In any thoughts, opinions there? Obviously, been hot.
No, I'm not a big follower of crypto. I played NFT hype a bit. I mean, there are a few stocks. They're like CIDM, right?
Yep.
This float is big, but I guess the CEO said he's looking into it, and they're probably gonna maybe make another announcement. Like all these other runners that might run.
Yep.
Yeah.
That has been the name of the game. And I actually have a sheet too. I'll drop this in the chat for everybody. But we asked at the end of last week, maybe on Friday, we asked the group to crowdsource stocks that could be some of these like NFT rumors, drop the tickers in there. And so if anybody's interested in that, go ahead, check it out. I just put the link to the Google Doc in there. It is an open Google Doc, so please be respectful. The first time I put it in the group chat today, somebody deleted everything that was in there right away, and I had to revert it back. So there's my ask. All right, man. Anything else we should be looking at on your radar, etc.?
Nothing right now. I think once we get into market, April, and we get into a little trend market, then we should get back on again, and then maybe I'll share more insights. Right now, I would just say, like I said last time, just be safe, preserve your capital. There is time to trade. There is time to sit on hands, and sitting on hands is also your execution. So, and you can double down when trend is your friend. Till that time, it's better to de-risk and save your capital.
And when you're saying like sit on your hands, are you still watching as actively as you are, as if you had positions on, or is it like you wake up, you say, hey, today's not the day. I'm gonna go check back in a couple hours.
Yeah, I have drawn my lines on the chart, and like resistance lines and the. So everything right now is like this down, right, and then it is up, down, up, down. This is a consolidation kind of bear flag on most of the charts I'm looking at. So until they break the resistance up and reclaim key EMAs, I have set alerts on them. So I just look at the high level market for most of the stocks. So when I say sit on the hand means is just either have small sizes, right? Or not risk much. You might think something reversing, let's buy, it's cheap. And then you go to the bed, next day you wake up, it's down again. And that's what happened with me as well. There's chop, there's no clear trend. So that's what I mean. Sit on hands means trade small, don't force any trades, wait for the trend to build on long side. I mean, you can do short side, but the short side time I think is gone. You could have taken puts maybe when all these stocks were dying. Maybe right now, even with the puts, you will get stuck in chop. So that's what I would say.
I like it, and then we'll let you go in a minute here. I don't want to hold you all day. But those levels you said on SPY. What's the candle that we're looking for when April opens on Thursday?
SPY 398.
398. You had it there, folks. Boom. Ripster, favorite of the chat, coming on with us. I just put his Twitter account in the chat. Follow him. Again, it's I think one of the best, if not the best account out there to follow. And he always graces us and comes on and hangs out, talks about the trades. So we always appreciate you, Ripster.
I appreciate it, brother. I appreciate it.
All right. Thank you, sir. Talk soon. All right, Drewski. How we looking?
Doing well. Hanging in there. How about yourself?
Doing well. I've got one last stock that I want to talk about, guys. Smash that like button, share the stream, subscribe to the channel. We're dropping ideas every day, 12 to 2 Eastern. This is our we call it the Power Hour. We have a soundboard, a new one. I'm just sort of... All right. None of these sounds I've heard before. I'm just hitting them all for the first time live on the stream. Okay, there we go. But all right, we also bring trade ideas. Drewski, I got somebody who asked me earlier on the show about a trade that I got into last week. I want to call a stock out. I'm bringing it up to the front of the classroom. All righty. Support.com, ticker SPRT, Sandy Papa Romeo Tango. This is like my classic Luke Jacoby, short the shit out of this stock type setup, okay? This is the type of stock that I love to hate because I think that what they're doing is bullshit. I think that it's unfair, like borderline criminal. No, I'm not calling them out as a criminal. That's maybe stretching it too far. But that I'm just trying to get my sentiment out there, guys, okay? But check those out. Support.com. Let's go check out their website. All right. Support.com, Drew. What business do you think support.com would be in?
I think like technical support.
Yeah, Drew's not listening. That's fine. Okay. The world's home sourcing leader for customer support. So if you're a business, you need customer support help, support.com, probably a good solution for you. Okay. I'll give them that, right? It seems like a decent business, right? It seems like there would be money to be made there. They have some scalability. There's probably decent margins, right? Okay. Fair business, customer support. All right. Here's a 1-year chart of the stock. You have the thing floating around $2. To 250 getting as high as, right, but basically just hanging out around this $2 range for quite a while. And we see some weird candles on this chart. We see the stock gap up to as high as almost $9.50 from $2. Do the math there. It's a nice, 400-ish% run. So what happened that triggered that in support.com? I don't know if I'm going to find it easily enough. There we go. Was it an NFT thing? Not an NFT. Close. Support.com is merging with a Bitcoin miner. So your customer support needs, again, I'm going to go back to their website right here, support.com, merging with a Bitcoin miner. Now, all of a sudden, this is not a customer support play anymore. No, they're trying to tell us they are now a Bitcoin play, right? We've seen all the energy that goes into Bitcoin stocks. Years ago, it was 3D printing stocks. We saw it with the COVID stocks. But whenever I see these companies where all of a sudden their main business, that's a wash. They want you now to focus on, hey, we are a cryptocurrency trade. We're a crypto stock. These are the setups that I love to hit. I did this on the first day that we had the pop. The stock was maybe somewhere around $8 or so. We did this live on the show. We make all of our trades live on the show together every single day. We bought the $5 puts for I think it was 65-ish cents. So we're going for about $4.35 break even. The trade is up about 50%. We still have some time on it, but I am waiting for this thing to get back to $2.50. So the person who asked me, are you still betting against support.com? The answer is yes, if only on principle. I hate when companies do this. My favorite one that I love to hate, I love to call this one out, Kodak. Ticker KODK. Kodak does this every time there's some new hot stock market thing. Kodak all of a sudden comes out and says, hey, we are no longer the camera company that you used to know and love. We are now the Bitcoin play. Or my favorite, Kodak, check this out, stock hanging out around $2, all of a sudden said, we are your COVID play. You want exposure to COVID chemicals in your portfolio, COVID vaccines, COVID treatments, look no further than Kodak, okay? That's what they came out and told us. Stock went to $60. That one, we hit it on the short side just like we did support.com. You see that nice little slow trickle of death. Kodak has not gotten on the hype train for NFTs yet. So maybe Kodak will become an NFT play. And if it does, you can come to this stream and I will go ahead and hit Kodak on the short side. We'll do it together. We'll have some fun. We'll pick out the strikes. We'll pick out the time horizons, and we'll be ready to go. Whew. All right,
I want to buy some calls on Kodak. I feel like it's only a matter of time before they announce that.
I was sort of thinking that as well. I was thinking, all right, maybe Kodak is the play, right? Like maybe I buy the pop into the NFT announcement, which I do not know is happening. I'm not putting that out there into the rumor sphere at all. But maybe you hit it into the long, and then we hit it short. So I'm saying if Kodak goes NFT, Luke eats a roll of old school film. Yes, maybe I will go ahead and do that. We'll have to see. Stay tuned, subscribe, like the stream. Preview of what's coming up, guys. I'm going to go over the trade ideas that we had on this show today. So we'll do that before we hop off real quick. And then we are going to be doing crypto. I see Catherine Ross hanging out, Benzinga crypto editor. So she's going to be doing our crypto show in just a second here, talking about what the heck is going on with the crypto market. I saw Bitcoin nearing 60K this morning. This is my Voyager Digital. We did a nice deep dive on Voyager Digital this morning. Okay, stock's hanging out. Come on, let's get some new all-time highs, Voyager Digital. We'll get moving there. Tomorrow, I've got a couple new ideas I'm bringing to the table tomorrow. We're recapping today. Trimble, ticker TRMB. Did I do that right, Drewski?
That is correct.
All right, Trimble, that's a stock that I bought today. Check out the chart. Technically, it looks pretty good. It's now the #1 holding in the new Cathie Wood ETF. Buying it on a swing trade, some speculation. It could get some energy, breakout on that chart. We'll see. PayPal, that's another one I put on the watch list. Guest #1, Alan Trindle today. FDX, FedEx, Baba, those are two stocks that he is long. Ripster threw us a couple tickers, ticker AMPG, ticker LVGO. Somebody out there in Zinger Nation, put these tickers in the chat. Help your fellow Zingers out there. If you're watching the show, you are a part of Zinger Nation. And I think that gets us through the ideas. And if anybody can figure out why Cathie Wood bought Netflix in her space ETF, please let me know. It's powerhour@benzinga.com. You want to get in touch with me, it's Twitter or powerhour@benzinga.com. Leslie's, we'll talk about Leslie's tomorrow. We'll talk about Ford tomorrow. I've got a couple other trade ideas to talk about tomorrow. But I think that pretty much takes us to the end of 2 hours, Mr. Drew. My voice is run out.
Good stuff. Yeah, my throat's been killing, but it was a pleasure. I enjoyed every second of it, and can't wait to be back on soon. We'll definitely be watching what happens with bank stocks, what happens with all this crypto, NFT. You guys know the place to be. Zinger Nation, Power Hour.
There we go. I like it. And joke winner of the day, every day this week, 4-day week. Joke winner of the day, person who puts the funniest thing in the chat, getting a free Benzinga Pro. Alex, your Netflix space joke, that was the winner today. I've got a long list of my favorite jokes of the day on here. Come back tomorrow if you did not pick the joke of the day. All right, let's rip it. I'm going to bring producer Aaron onto the stream. Oh, there he is. Aaron, we
Hello,
ready to roll into
hello.
crypto?
What's up, everyone? We are. Let's get it going.
All right. Can you do that? I don't know how.
Yeah, absolutely. I'm going to remove you and then add Catherine. So
All right,
everyone
peace, guys.
privately-
Dropping my Twitter in the chat. Stay in touch. Shoot me a message if there's anything we should talk about tomorrow, and I will let the rest of the team run with it.
Thanks, Luke. What's up, Catherine?
Hello. I cannot keep up the same energy Luke has. Seriously, I can't.
We'll try. We'll try. We're gonna try to keep up the energy. Keep it up. The crypto space seems like it's doing well today. It's been doing well the past few days. So there's a lot to talk about.
Yeah, well, first of all, hi everyone. So super stoked that you're all here. So let's just look at crypto markets, what we do every
absolutely.
time. Yeah.
100%. And let's get into it after our short intro.
So what does the market look like, or markets? Because there are so many markets, so many exchanges. So can we look at Coin 360 today?
Yeah, absolutely. What coins are on the move? Right? Let's take a look.
Yeah.
Boom.
Boom. So it's actually looking pretty great today. Bitcoin at 58,000. Pretty much, it was actually 59K earlier today. Pretty high to its previous all-time high. And I've seen analysts speculating about the future movement, and an analyst from Cointelegraph.com actually suggested that we're going to see 73K pretty soon as a as a very short dip, but we're going to see this according to this analyst. But it's not, this analyst is not the only one who is optimistic about the future. You guys love Cathie Wood so much, and we all do love her here at Benzinga. She was, again, I have to advertise it. She recently gave an interview to Jason, the CEO, who we call Raz. So go check it out.
Great interview. Check it out.
Yeah.
It's on our YouTube channel.
Absolutely. So she was talking to a panel last week, and she said that 1 trillion market cap is actually nothing compared to where this as in Bitcoin will ultimately be. So what she said is, if we add all of the potential demand relative to the limited supply, we come up with incredible numbers over the long term. We have just begun. $1 trillion is nothing compared to where this ultimately be. She also said that market conditions that we are at right now, which is I think it's pretty sure and safe to say that we are at very favorable market conditions right now. So this is a good time for a Bitcoin ETF. Bitcoin ETF is the question and the issue, I would say, that has been around for a while. A lot of companies tried and applied and filed with the SEC, but it hasn't happened yet. But this year, and even according to Cathie Wood, this is the year for Bitcoin ETF. A lot of Twitter users on what we call crypto Twitter speculating that if the government can print so much money just like that, it's actually pretty insane that they haven't approved a Bitcoin ETF yet. So we are excited about what's going on, and I'm sure you guys. If you guys have watched us, we have speculated about different price predictions for this year. Let me just recap real fast. So we have Skybridge Capital, Anthony Scaramucci, who puts a price target at $100,000 this year. We have analysts from Goldman Sachs who believe we might see a price as high as $150,000 this year again, and we have a management firm, Guggenheim Partners, who believe that we might see $400,000 price level this year. So this is where we at. But again, be very careful. Yeah.
Quick interjection from me. So we're obviously already 4 months into the year, which is crazy to think about. March is done. April's right around the corner.
Yeah.
So when do you think we're going to hit these price targets, right? We only have about 8 more months in the year. There's a lot of time, or I feel like this year has been moving by pretty fast, and there's been not too much movement, but definitely enough, but not enough to like see the 100,000, I guess.
Yeah, I would say that, to your point, it is moving pretty fast, but a lot, so much has happened already, right? We have seen corporations finally coming into the crypto space, talking about putting it on their, balance sheets and investing in Bitcoin and other cryptocurrencies, and, Goldman Sachs relaunching cryptocurrency trading platform, and, all of those different headlines that we see. So, and it's pretty safe to say that we're past what we call a crypto March thing that we discussed with our guests previously, not on the previous show, but previously, right? There is such a phenomenon as crypto March, taxes and all that stuff. We have passed it. So I'm personally, I believe that it's coming, but it's coming, I think, by the end of the year. Everybody seems to think that this is what we're going to see by the end of the year. And if you compare charts, yearly charts with Bitcoin, this is what you see. By the end of the year, we always see a huge spike in prices, with a little bit of a dip over Christmas holidays for obvious reasons. People seem to think that, people are cashing out for Christmas presents and for Black Fridays and Cyber Monday. but usually like November and December, like the hottest month in terms of price. This is what we've seen in 2017 with Bitcoin hitting 20K. This is what we saw. This is what we saw last December with Bitcoin finally going up and, never going back down again. So this is the end of the year. We're gonna see new all-time high. But I'm actually interested in what kind of price this is going to be. Is it going to be like 70K, 73, or 62?
I think a good price for me right now, based on how it's been moving and where it's at and how it's been, or I guess all the news around it right now as well. Probably like 80, 85K by the end of the year is a good estimate for me. That's just my opinion.
Can we ask the chat what they think?
What do you guys think? We'll throw it back to the chat. What do you guys think? Price target for crypto by the end of the year?
Yes.
We already got Foxtail Farms 72K. That's right around. It's not too far off from what I said. It's a good one.
Yeah, but I'm very cautious about where we're going and what's going to happen next, because with everything that is going on in the crypto space right now, with major developments, right, and DeFi is finally taking its place, right? DeFi as in decentralized finance applications and token thriving, along with NFTs, of course, for sure. But it's a pretty exciting time to be in the crypto space. But I'm also worried if we're gonna get like last time we discussed that it's pretty natural for the market to have correction as long as a couple of years. Right. So this is where we're at right now. It's pretty exciting. A lot of companies are coming in. Private and institutional investors are here. We're all very excited. A lot more projects are coming in. And I'm not gonna lie. A lot of them are coming in just to make money, just to sort of make the best of the momentum. But it's gonna be very upsetting if we're going to enter a pretty long-term correction and all of that is just going to be in vain and, very upsetting for everybody in the crypto space. But usually during times like that, only true believers and true hodlers. Oh, wow. Yeah, I see the SPAC broker.
Nice. It's just a meme price. I like it.
But that's not very optimistic, though, compared to but maybe it's like just a pretty solid, reasonable, sound prediction. But hopefully it's gonna go higher. I'm not sure. Hopefully for
I mean, since he started talking, it's already hit 59,000. So Mark S said end of year 115K. So just keep talking about it, Catherine, and we'll get there.
Do we have somebody who's much more optimistic about the future by the end of the year?
Let's see. In the chat, we're getting a lot of 100Ks. A lot of people kind of agreed with me staying in that 80-ish K range. We got Peso, very bullish on crypto. A lot of people are. BTC to about 100K. So a lot of people in that 100K, 120K, 80K range right there. So
Okay,
about
so
40K range.
I'm gonna go ahead and talk about like top 5 gainers over the last 24 hours, but I want you guys to sort of like just text in the chat, leave a message below about why is it so important for the Bitcoin price to hit that high, just for people to make money, or is it to prove some kind of point? Is it just a new financial tool, to stuck it to the government? So if you want to share in the chat, why is it so important that the Bitcoin price, and the Bitcoin price specifically, should go higher than it is right now? It's a pretty great price range, though. I don't think a lot of people have actually truly believed that we're going to be where we are today. So why is it important? Just if we have time to go through it a little bit later today, it would be great. If not, just like hit us up on Twitter, let us know why is this important. It's a philosophical question, but it's a pretty important one. And actually, we haven't mentioned, but today we have a guest.
Yeah, we do have a pretty big guest today.
Yeah, we have a founder of Crypto Fighters platform, a platform. Eli, his name is Eli, and he described it in an email as an original NFT platform because they launched in 2018, and they believe that they have been in the NFT game for a while. So it's pretty awesome to talk to someone who has actually built something, related to NFTs a while back. I know it's been just three years, right? 2018 is just recently, but in the crypto space, it's a while back. So let's look at the top 5 gainers of today. Unsurprisingly, actually, Aaron, I would. Do you know how to do it? You go on CoinMarketCap and just hit 24. You just hit 24. I'm sorry, I haven't wanted to use.
You need to find the CoinMarketCap website.
CoinMarketCap, yeah. So just the main page, you go there and you see all the charts and all of the cryptocurrencies.
Everyone's gonna see how
Here.
bad it.
And hold on, I lost you.
I'm here.
Yes, so just hit 24% icon. Yeah. So this is where we're at. Top 5 gainers. Unsurprisingly, these are not top 5 cryptocurrencies, like top 5 that are on the top 5 list. These are just the cryptocurrencies that have gained, the biggest amount of during this program, 60K. Okay, that's actually a great.
Let's hope it does.
Yeah, but don't forget to share why it's so important just to cash out.
Let us know your thesis there.
Yeah, there's just a greater value behind all of that. So, Holo, which I'd love to pronounce as Holla, but okay. Holo, the ticker is HOT or hot, ranked hot, ranked 38 on market cap. Again, unsurprisingly, it's a token. We haven't seen major announcement from this company in I guess a month. Last time it was mentioned in news. It's just a minor development a month ago, but it's a token of a platform called Holochain, and Holochain is a framework for distributed applications. So it's a peer-to-peer distributed platform for hosting decentralized application or dApps built using Holochain. Again, no major announcements, so we're not quite sure yet. This coin is up. This is just to sort of justify myself. This is a pretty obvious and usual thing in the crypto market. It's not insider trading though. Like if you guys on Telegram, there are a lot of trading groups, investor groups, alerts group that are it's pretty much Reddit. Reddit is actually the same. People are just talking and they're pumping coin for no apparent reason or for some reason that they believe will happen in the future. They are expecting major major developments. So that's why, people are just, pumping. It's the same as with staking and farming. You just stake your coin and you expect it to bring your, to bring money back in just a very long term period of time. So this holo is number 1 according to according to how much it gained overnight, 49%, and which is like pretty impressive, 129% over the last week. Again, like this is personally for me, this is this actually strikes me the most because as what I've just said, right? There are no major developments. There are no tweets around this particular cryptocurrency that I have seen personally, right? And there is no news, but the price is going up. And then this is actually, thrilling. This is awesome, but it's also very unsettling for me as a potential trader, I guess, as well. It's just pumping. So it's pumping and people are buying it. This is where we're at. Dent is number 2 gainer of today. It is up 27% in the last 24 hours and up 10.67% over the last 7 days. It is a cryptocurrency that operates on the Ethereum blockchain, and so they describe themselves as a global marketplace to buy and sell assets like eSIM, digital SIM cards, mobile data packages, voice minutes, and top-ups. According to an official website, they already have 26 million users registered with the platform. Lisk is number 3 on our top gainers list today. Ticker is LSK, ranked 99. A very interesting, very interesting fact for me. But when I was getting ready for the show, it was number 100. So it wasn't 99 on CoinMarketCap. The rank of this cryptocurrency was 100. So the things are changing literally as we speak. Lisk is a blockchain application platform, and so it is operated on what we at the crypto industry call a DPoS. It's a delegated proof of stake. It's a consensus model and is secured by democratically elected delegates. So Lisk is actually a very trusted platform in the space. To clarify a little bit, the delegated proof of stake is a consensus protocol that provides dependable verification and approval of transaction in a blockchain. And this is why it's not surprising that it's built on Ethereum. So what do we have here? Lisk is up by 21% over the last 24 hours and 18.81% over the past week. Number 4, right? Number 4, Thorchain. Thorchain is a decentralized liquidity protocol that allows users to exchange cryptocurrencies, as they call it, across a range of network without losing full custody of assets in the process. So Thorchain, ticker is RUNE for some reason.
No, it makes it's probably the what is the lore? I can't even think of it. It's on the tip of my tongue.
Well, thank you, Aaron.
Sorry, scratch that. Everybody forget that.
Very helpful. Thank you. So it is trading at let me double check, at $7.17 right now. With a 24-hour trading volume of more than 90 million US dollars. So it's up by 16.63%. These are my notes, but let me just double check real time. Oh, so it's 14.95%. See, it's actually impossible to get ready for a crypto show. Everything is changing as we go. Yeah, right. And number just real fast, top 5 gainer. Yeah, 1X, ticker is ZRX. It is trading at $1.75, up 12.5%, and it's an infrastructure protocol that allows users to easily trade ERC20 tokens and other assets on the Ethereum blockchain. This is the markets for you guys, and I believe we have a guest already.
Yes, we do. Eli Steinbach, co-founder of CryptoFighters.io. Fantastic guest. I'm going to pull myself off. I'm going to bring John G on. You guys talk NFTs. This is going to be great. I can't wait to hear.
Thank you.
So here we go. Boom, boom.
Hi, hello. Hi, Eli. Welcome to our show. Thank you so much for making the time to visit.
Thanks so much for having me.
Hey, so are you still based in Tel Aviv? Is that what is the situation there in terms of the quarantine and COVID? Are you allowed to go outside?
Yeah. So the situation is quite good right now. We had quite strict restrictions, but in terms of in terms of vaccines, I think we're probably the furthest ahead in the world right now. I think it's over 50% of the population that has already received both vaccinations. I got both of mine a few weeks back. So right now it's definitely improving quickly.
Wow. So I'm just amazed by, there are 3 people in different parts of the world. This is crypto for you. So crypto fighters. This is very exciting. And I know you guys describe yourself as an original NFT platform, right? Can you tell us a little bit about how and when and why did you start this project and what it was back when you actually did it? It was 2018, right? 2018.
Yeah, exactly.
So tell us a little bit about the background.
Yeah, so we started developing it towards the end of 2017, like really one of the original NFT tokens. The basic idea behind the project was, we saw some of the other NFT tokens coming out and we figured we could have a good take on it. We wanted to build a game based around this where like our NFT, basically crypto fighters, what you can do is you can you collect digital fighters on the blockchain and you can also battle with them. And when you battle with your fighters, the winning team gets a new fighter minted to them in their wallet. And you also get to level up your fighters and improve them. Fights can be anywhere from 1-on-1 versus, and we even have an option for 5-on-5. That's a basic concept behind it. The original we had 6 people on the original team. And we've continued to maintain it over the years. And recently we've seen quite a lot of hype around it again, with a few $100,000 worth of sales in the last few weeks.
Just a couple of follow-ups. You've mentioned that the original team was 6 people. How many people do you have on your team right now?
So all of us are actually focused on other things today. They're all sort of on different successful projects. It's not something we do full time. But we continue to maintain it. Everyone is like still involved in some capacity.
Okay, I've watched your interview, an interview that you did in 2018, right? So, and I think it was Dapp's Lab. I think that was the interview. I didn't hear. Oh yeah, probably that one. So, I haven't actually heard a term NFT there. You've mentioned that it's just a token. It's a very unique one. You can actually interchange it, but you haven't actually used the term NFT. Is that this term was coined a little bit later, or because the technology is actually there? This is what you were describing during that interview, but you haven't mentioned NFTs. Is this something that came later because of what people called it?
I think the term even existed back then. Like we were using the term non-fungible token, like definitely within our team. The basic difference, let's say, between ERC20 and ERC721 of fungible tokens versus non-fungible tokens. I guess it was like in less widespread use. Like if I tell someone NFT today, if they're in the crypto space, they'll know. If we jump back 3 years, like if I told someone what NFT is, like there wasn't the same buzz around it. People wouldn't have understood. So it could well be like I just chose not to use the term in the interview just because they would have had to explain it wasn't. I guess. So
at the time, it wasn't as popular as it is today, correct? Yeah.
Yeah, it was definitely in use. But like CryptoKitties was around at the time, and the The contract itself, the ERC-721 token is the contract for non-fungible tokens.
And
until recently, I would have had to explain exactly what that meant. And now more
yeah, so you see how the industry and the entire buzz about it has actually developed. This is pretty exciting. And can you tell us a little bit about how to actually build your game is built on Ethereum blockchain using our ERC20 token, but how do you actually do it? Explain it to me like I'm a 5-year-old, please. How do you do
it? Today it might be a bit easier. I think like if you were a 5-year-old that wanted to do it today, I think you could go on something like OpenSea and click create like token, and I think you could upload your artwork, and that would be an NFT token, and you could do it all through their interface. Back in 2018, or if you really want full control over the smart contract, you'd write some Solidity code and you'd upload it to the Ethereum blockchain, and that would be the smart contract for your NFT. Probably the easiest way to do it, you take an ERC-721 token contract, like OpenZeppelin and other platforms have them that you can work off of. So that would be sort of the easiest route to go if you wanted to do it yourself today.
If you were to do it today, actually, rather than in 2018, would you still do it on Ethereum?
I probably not. Well, it's a good question, actually. So the reasons not to do it on Ethereum is like the huge gas prices. Like we have a battle element in our game, and that takes 2 transactions, and those 2 transactions together at today's gas prices cost something like $500 or more. Which is like insane, and you get a digital fighter for the end of it if you win your battle, but it's quite pricey to put that amount in. You might as well just sort of buy the fighter on the marketplace yourself. So that aspect, definitely not. The reason, let's say if it was another company that they wanted to do it, the reason to go on Ethereum is I guess a lot of people are already using Ethereum. The entire NFT market is on Ethereum right now. So if you go on OpenSea or something like that, I'm not sure if they support other other platforms, but yeah, so those would sort of be the 2 considerations. It's definitely annoying that every fighter that's bought on our platform, like minimum transaction fee is going to be $10, $20, $30, sometimes even more, just to the Ethereum miners. And then if you want to battle or do anything like that, like if we were going to build that out again today, which it's possible we may still do, but we'd do something like on layer 2 using Polygon or Matic.
Right.
Okay.
So have you found that this has like drastically affected the usage of crypto fighters?
So as like to battle, yeah, we have seen it affect the usage. I think we would be seeing a lot more battles today if the gas price wasn't insane. What is quite interesting, what we've seen one especially rare fighter, it's called the Death Knight. So there were only a handful of them in the market. And the only way really to create new ones is to go and battle with them. So one person bought a really expensive Death Knight. They spent 10 Ethereum on it, around $18,000.
Wow.
And what they did immediately afterwards is they went and created like another 5 copies of it by winning a few battles. And then they tried to sell each of those on for a few $1,000s each. So I haven't been following since, like how they've done in terms of in that investment. But now that person owns most of the Death Knights that are like available right now.
So what is a typical like gas fee for one of these battles?
Pardon?
At current prices, what is a typical gas fee for running these contracts? Is it hundreds of dollars?
Yeah, it's like it could well be. It depends. Like if you do a 1 versus 1 battle, you maybe get away with like $100, $200 for a battle. And if you're talking about a 5 versus 5 battle, it's already like 2-3 times higher.
Wow.
So yeah, it's just really pricey. Like it doesn't make sense most of the time right now.
Expensive.
Yeah.
To that point, what is the business model for crypto fighters then currently?
Yeah, so the business model isn't actually built around the battles. In a certain sense, that sort of helps limit the supply. So there are around 5,000 crypto fighters available for purchase right now. And because it's so expensive to mint new ones, people aren't doing it a lot, and it stayed capped at around 5,000 fighters. The main business model, so yeah, there are 2 models. One is we own a certain number of the original fighters, that we can still sell on. We also have the ability to mint new fighters, which we can sell on. So far, we haven't done that because we don't really want to affect the pricing too much. And there's talk of us sort of trying to cut that off completely, because we can mint around another 20,000 new fighters. And if we do, that would massively crash the price. It's not really something we want to go and do. And the other business model, any fighters that are bought and sold on our marketplace, we take a certain % of the transaction.
So what is the future like? What does the future look like for crypto fighters? Can you scale your business, given the gas prices and everything that you just mentioned? Is there a way to scale a business actually, or?
So there are a few options, a few directions we could go in the near future. We're in discussions with a few different partners to see how we'll take things. One direction is sort of building out a more complete game on top of it, using a layer 2 solution such as Polygon. And yeah, the advantage, for those that don't know, so layer 2 solutions basically, because Ethereum is sort of layer 1 of the blockchain, and it's extremely expensive to do anything right now on it, but you can build on top of that on sort of like a layer 2, and everything that happens on that layer 2 is much, much cheaper. Every individual transaction is way cheaper, basically nothing. And then at a certain point in the future, you move that information back to layer 1. So that's a way to sort of scale out the gaming side of it a lot more. So those are sort of ideas in our mind for the near future if we decide to develop the game a bit further.
So technically, I'm a bit curious. Technically, is that a lot of technical work to switch to something like Polygon? We'd have to see. It's definitely something that's doable. I think we'd have to create sort of another smart contract to be able to move over to it. There would definitely be work involved. It wouldn't be a crazy amount of work. But because the battle itself is a Solidity contract, correct? And so you would potentially just move that same, you'd create a different contract, but the code would be very similar in terms of the logic in how the actual game functions, correct?
Potentially, yeah. I mean, also once we're on layer 2, there's a lot more room to sort of play around with game mechanics. It could well be there's more of an interactive game. It could be sort of right now the battle is sort of the 2 teams enter the arena, and it sort of part of it is random, part of it is dependent on how strong each fighter is. The fighters on each side, and those elements combined, like the blockchain comes up with a random winner for the fighter.
Unfortunately, we
on layer 2.
So on layer 2, we might be able to, people might be able to make more decisions, might be a lot more interactive, maybe like a card game type, game where you choose actions to do each round, or maybe even something more interactive like Street Fighter, something like that.
And then we have to wrap it up a little, just right now. But my last question is how to actually register. Do we still need to use MetaMask, or how would a user just go to cryptofighters.io, and then what are the next steps?
So there are 2 ways to get started. One of them is to use your MetaMask account. You can go to cryptofighters.io and go, coming up on screen here. So I guess if we head over to the marketplace, I think, or start now. And I think let's say if you wanted to go, so you can go connect MetaMask or download Trust Wallet to get it working. And then you can buy a fighter on our marketplace itself. If you click a fighter, you'd be able to click buy now on one of them once you're connected with MetaMask. And the other option is to do it on OpenSea. People have also been selling their fighters over there. So that has sort of that's where most NFTs are sold these days.
So you can buy it on OpenSea and then go back and play it.
You can buy it on either marketplace. There's more marketplaces out there as well. It's all on the blockchain. There's there's no control. It's all fully decentralized. No one decides where these items are bought and sold, how you transfer them. So it can be done on any marketplace, similar to how you might buy Bitcoin on Coinbase or on on Binance. You could choose 100 different centralized exchanges. You could also do it on decentralized exchanges.
We have one quick question from the audience. If you lose the battle, you don't lose your crypto fighter, do you?
No, we don't have sort of a gambling element to it right now.
Okay, cool. Your fighters, if you lose, your fighters do improve their qualities a bit. Like they get slightly stronger. The winning fighter also gets slightly stronger. But the real reward for winning a battle is that you get a newly fighted minter in your wallet.
Cool. Very fun.
Awesome.
Probably Aaron is here to tell us.
Yes, I am here, unfortunately, to put a wrap on this show. Thank you, Eli, for joining us for this BZ Crypto edition. And thank you for joining and, talking about your platform and what Crypto Fighters is. That was truly a fantastic conversation to listen in on.
Yeah, thank you, Eli.
Thanks so much for having me.
I hope we'll be able to scale it. Yeah, excited for Crypto Fighters.
Yeah, exactly.
Thank you.
So, John, I'm going to remove you as well. Up next, everybody, stay tuned. We have the Biotech Buzz with the queen of biotech, Vivi, and the man behind the scenes, Rohan. So I'm going to hand it over to them. Everyone, stay tuned. We have a great show.
What up, what up, what up? And welcome to the Biotech Buzz. Ladies and gentlemen, how are we looking? How are we sounding on this wonderful afternoon? Vivi, looks like you are in quite the lovely place. You are in vacay mode. Love the hat.
I am on vacay mode. Can you hear me well?
Yeah, everything looks and sounds great. I'm excited to have you.
Let me show you guys the surround so you can see.
Let's see it. See it? Whoa. Wow, I wish I was there right now. Wish we were hosting the show completely from there. Maybe we need to move the Benzinga office to Mexico.
There's some waves over there.
Have you been surfing them?
Yeah, I surfed this morning. Yeah.
Oh, wow. Okay.
I went out like at 8 o'clock in the morning. How have you been?
I've been good.
Surviving the crazy market or what?
I've just been mostly crying about it, but that's all right. Folks, all right, before we hop into it, you know what we're here for. We are here to talk biotechs, and let's run with that intro. All right. It's the Biotech Buzz. Vivi's here from Mexico.
Awesome.
I'm here from Detroit.
Somebody was asking me, this is, it's a little town called La Saladita. It's 30 minutes from Iztapa. So it's mainland Mexico. It's just a beautiful place. I've been coming here for a long time. They have a perfect little raft, a lot of long borders in the water. I've never seen so many girls in the water. This is like, if you guys are single and surf, this is the spot. This is the spot to be. I never seen. There's the ratio got to be like 5-to-1 in on a lineup. I never seen so many cute girls surfing there. So it's mainly a longboard wave. So a lot of girls there.
There we go. The advice that really matters. Vivi's handing it out. What's the airport you fly into if you're going there?
So you fly into Iztapa, Zihuatanejo.
Okay.
So it's kind of like a hassle to get here because there's not really non-stop flights. Actually, there was a non-stop in certain days. So I'm heading back on a non-stop, but I usually have a connection in Phoenix. So East Coasters, but probably a little bit harder to get here. But it's a beautiful place for sure. Great place to learn how to surf too.
Awesome. Hey, maybe I'll go there to learn to surf.
You should. Right. And the water is like 84 degrees too.
Oh, wow.
Amazing. Yeah, it's like warm water, like a bath water. It's amazing.
That's awesome.
So well, do you want to pull up our BCRX? Because I think there's it dropped below double digits.
It did, yeah. We are sitting in the 9s. So let me add that to the stream here, and let's get started with some biotech stocks.
Yes.
All right. There we go. BCRX sitting at 992 right now.
Yes. So I added on my long position when it was like 975. I couldn't resist, so I bought more. Being talking to a couple physicians, everyone is really excited about this company. Kind of upset that the price action wasn't as great when we had our Factor D results. But we were able to prove a concept, And the crazy thing is the studies were so good that we skipped phase 2. So we went from phase 1, now we're going straight to phase 3. So when we initiate phase 3 for PNH, it's going to be huge, because not only the Factor D pipeline has indication for PNH, but also has 7 other potential indications, all rare diseases. So I feel like this company is going to get acquired, just like how Alexion has been. I have no problem holding for a few years. I was even tweeting about Fate. Fate 5 years ago was $6, and today it's $74. So I feel like this is one of those stocks that will get you rich if you're patient. So I don't even mind trading it. I just bought it. Now I have 15,000 shares. So if that hits 70 one day, I probably can retire a little bit sooner. So I feel like this is a gold mine. I'm gonna keep telling you guys that at 992 is still a steal. And we have an approved drug already, so it's a lot more de-risk, because now we have a product that now we're gonna have a lot of the sales results, because they start launching the drug in Q1. But a Factor D is where this company is gonna get from $9 to $50, $60, $7 one day, $70 one day, just how Fate was. So I'm a pretty big believer on this one. And then I wanted to talk to you guys about KMPH, because that's another opportunity for you guys to add. I feel like with the market, the market kind of transitions through phases. And I feel like the small cap biotech is getting a hit now, and we are like on that transition phase where they're all just getting hammered. So I feel like you just have to be patient and hold. But I have no concerns about these two companies for sure.
Quick question. For BCRX, actually, I'm going to put that ticker back up.
Yeah.
Because you mentioned that phase 3 is probably like the least likely for it to succeed.
Yes.
Because you mentioned that you have the best opportunity to make money on phase 1 and 2, and you're still saying this is a hold. So you just think it's going to make it through phase 3, or are you trying to just make money before then?
No, I do believe, because phase 1, we're able to do a proof of a concept. I was looking at the probabilities. If you already, the phase 2 is the worst one. When I was showing you guys on my show and looking at all the statistics, actually phase 2 is the worst one, not phase 3. Okay. So phase 1 is the one you make the most money, and then phase 2 is like, and then phase 3 is when you have probably like a 70% chance. But because the phase 1 was so good in here, and we were able to prove concept, and there is a very big, large pipeline that you can have 7 to 8 rare disease products, I feel still very confident that we're going to do well, that we have a good molecule in hand. But like anybody else, some people in terms of a strategy, because there's already an approved drug. So here's the main difference, Rohan. When you don't have an approved drug, it's one and done, right? So when you don't have a product to sell and you don't have a license all over the world, it's one and done. You don't do well in phase 3, you're done, if you don't have any product. So BCRX already got the risk because we have an approved drug. So this changes how I would invest. If there's no approved drugs, yes, I would probably be in and out of the stock. But we already have an approved drug that potentially is going to produce $500 million in sales every year. So it's different how you act in regards to dealing with biotech if you have an approved drug or not. So if you have a company that has everything in phase 1 and you have that one drug in phase 3, yeah, it's going to take 6 years to get your money back if that fails. But right now it's already the risk because we already have an approved drug. Does that make sense?
Makes sense. Yeah. Okay.
Yeah.
Thanks for clarifying that.
Yeah. So the same way with the KMPH, we have an approved drug, right? This is not like, oh, let's try the lotto. Because on BioTech, when we did the conference, I was showing you guys, it takes 10,000 molecules to get to one approved drug, and takes almost $1 billion in investment to get to that one approved drug. So KMPH and BCRX, they both have approved drugs. So it's a different way how we approach investment. So I'm really excited about this. I was able to talk to a manager that's managing down Zona, California, and he used to work for Takeda, which Takeda purchased Shire with Vyvanse. So everyone that they're hiring right now is from the Vyvanse team. And I was talking to one of my psychiatrists, I was asking him about this drug. And I said, hey, this is a Focalin XR, is a pro drug of a Focalin. What do you think about this drug? And he said, well, I really liked Focalin, but it didn't last longer. So the main difference here, Rohan, is we have a drug that because it's a pro drug, we're able to get that fast onset of action, 30 minutes, just like Focalin XR was only ADHD medication that had that onset. But now we got the label that it lasts 13 hours. So we are addressing that one issue that physician, a friend of mine, was telling me that,
it's like
that
best
he
of
didn't
both
like.
worlds then, right?
So this drug is going to be, in my opinion, is going to be a blockbuster, because now you're going to have all those pediatricians changing from Adderall to this drug, because it works within 30 minutes, it lasts 13 hours, and you don't see loss of appetite. You don't see insomnia with this drug. So it's just a cleaner version of a Focalin XR. So they are, when I was talking to the manager, I said, why don't you have a sales force already ready to go? And he was telling me that I think they had some kind of a manufacturing issues, but most kids are off their medications when it comes to summer. So they're launching in July, which is going to be a really good when they launch in July, because they're going to be able to grab all those kids in July and August. They're starting school in August, September. So these kids will be off the meds, and they're going to be coming back into their meds and going to see their peds in a summer. So really, really, really excited about that company. You just have to be patient. Right now we don't have a sales and we don't have a launch. So we're gonna, it's heavily shorted too. So you're just gonna have to sit and wait, unless, of course, what if there's an offer for a buyout? And then if you sold because the market, you missed that opportunity to be sitting on a company that's being acquired by another company. So I'm holding long. I don't care about the fluctuations of the market. These two companies, I'm a firm believer, is already the risk.
I was going to say, there's got to be pretty big demand for a buyout then also, like potential at least.
Oh my God. I mean, this is the biggest, one of the biggest ADHD drugs since Vyvanse. So it brings something different to the table. And Vyvanse was also a pro drug from a different drug in this one. So I feel like a lot of the pediatricians, they don't like Adderall because the kids, they lose their appetite, they cannot sleep well. They have the shakes. So a lot of parents put an Adderall because it works quickly, it works fast, but also has all those side effects associated with the Adderall. So this is really going to kind of take some of that market from Adderall for sure, in terms of being safe and working fast. So these kids can take the medication before they go to school. Imagine you take the medication within half hour before the bell rings, you are already ready to learn, So I do feel like this company has a huge potential. So I don't care to leave it on my portfolio, even if it bleeds or if it doesn't bleed, because I'm a firm believer.
There we go.
For sure. So I wanted to talk to you guys about another one that I'm still holding the fort is ARDX.
All
so
right.
The PDUFA date is April 29th. I feel very confident I'm going to hold through PDUFA, just because I know people that are working for this company. They have their sales force ready to go. So this company already are waiting for the approval, and ready to get this drug to the market. So the biggest advantage of this drug is it's not a phosphate binder. It has a different mechanism of action that blocks the phosphate. So a lot of patients, when they're on dialysis, you get phosphate from foods, but when you're on dialysis, you are retaining more phosphate that you're supposed to retain. So patients have to be on a medication, and a lot of these phosphate binders, the pill burden, they have to take 64 pills a day. So believe it or not, this goes down to 12 pills a day or 14 pills a day. So this is going to address pill burden. So it's going to help with compliance. And there was a physician, a nephrologist on Twitter was telling me that he likes that the pill burden is going to be addressed, but he doesn't like that there is he told me 16% of discontinuation due to side effects. So in my opinion, there's still 84% of patients that did well and did not discontinue due to side effects. So it's still very promising because the pill burden is one of the biggest issue with with this company. So I'm holding through PDUFA. I feel like it's gonna be, but now with the market, Horan, I don't even, we don't even know how this is gonna go. Either way, it can go either way. We get an approval, the sell off. It's so fast that you don't even see, a good gain for the day. I mean, we had I'll put it there, Rohan. We had a KNSA. It got approved and went back like $3, and I ended up having to sell at a loss because I didn't want to hold because they're still going to launch the product. But it was the day of a PDUFA and it went up $3 before the market and completely tanked. So you just have to be cautious that, I got it. I got in at a 650. And so I'm hoping that we still have 3 weeks to go to see some run up. And hopefully we can see some action at the day of the approval, but nothing is guaranteed now with this market. People are just selling, So I don't know how the market is going to react, but I'm holding. We'll see what happens.
Wow, but 64
believe,
is 64 to what is it? 14 pills a day then?
Yes,
that's a big difference. Yeah,
it's crazy. I have here. What did they talk about here? Because I had a whole thing on a company. And they say the pill burden, let me see, I'll tell you guys.
And Jim Stocks in the comments, did we talk about NSPR yet? Not yet. We've just covered BCRX, Chem Farm, and now ARDX.
Yeah, so let me see here if I find here. So here's it say, the unique mechanism of action allows tenapanor to be active in many patients at a dose of 10 to 30 milligrams twice daily, as opposed to the multiple gram quantities per day required to the phosphate binders. Over the course of a week, the amount of a tenapanor required would be less than 500 milligrams, a total of 14 small pills, I guess, a week. Whereas the amount of a phosphate binder required based on packet inserts would be 10 to 30 milligrams or 64 large pills, depending on a phosphate binder. The company believes a significant pill burden advantage will result in better adherence and compliance, which could lead in more consistent efficacy in patients on dialysis. So that is, and that's what they say here. It has been specifically designed to work exclusively within GI tract, thereby significantly reduce the amount of a drug that's absorbed in the bloodstream in the potential side effects that could occur. So it just have a different type of a mechanism of action. So I got a lot of hit with NSPR because NSPR, nothing has changed with the company. I am a huge bag holder right now, you guys. I have an average of like 105, and but it's on my IRA, and I feel like I cannot even claim my losses if I sell. So I don't plan to withdraw my IRA anytime soon. It's my retirement, so nothing fundamentally has changed. But when I talked to you guys presenting about this drug and the C-Guard, we didn't know about the announcement of the RS, and we didn't know the market was going to take a dive. So they had a vote in March, and they postponed because I don't think they got the approval. They postponed the vote for April 14th. And I feel like we're gonna see a lot of pain until the RS vote is up. So if the RS vote gets approved, I feel like somebody was telling me, oh, they've been already through 4 RSs and nothing has happened. But they were not closer to having actual product in the United States and beginning trials. They were not close of having, distribution in China and Brazil. So I feel like now we do have an actual product around the world, and we are closer than ever to get an approval here in the United States. So I think we were like a year and a half, 2 away. So until we don't have the RS vote in, I feel like we're going to see this pain. Now, if they do an RS vote, my only hope is the float of the stock is going to be so small, therefore it's any kind of a news that we get, we're going to be able to push that price up. So if I were in a regular account, I would have had a stop loss and I would have sold. Even if I took a little bit of a loss, I would have waited for the RS vote. And once the RS is out of the way or in a way, I would have buy back. But that's not the reality that's going on. So just like many of you guys out there, I'm feeling the pain. I am completely red. I have a lot of shares of the stock, but fundamentally, I still believe that Seaguard is going to be a winner. So, my only reassurance is that I have all these insiders that actually spend money and bought it, like Gary Rubin, the god of a stent in the United States, bought 700,000 shares at 68 cents. So he is losing money right now. And so when the RS come, he's going to lose more money at the beginning until things settle and we get news that can push the price up. So fundamentally, guys, nothing has changed. The company, I think, is amazing. Seaguard is an amazing product. But, fortunately, we have this RS in the mix. And I think that we're going to, see some bumps on the road before we can see a progress. Somebody was telling me too, what if somebody was telling me about this? Because we talk about the RS. Shoot, I forgot. Somebody was asking me something about Inspire MD. If I have that thought back, you guys, I'll let you guys know.
We'll back to it.
I was going to address something about that as well. So we have April 14th. Oh, somebody was asking me, how about, are they going to be delist? No, because they were above $1 for 10 days. So they got at least 6 months to go. So we need to worry 5 months from now, if we continue below 63, below $1, for 10 days, that we have the risk to be delist. And they'll claim that they wanted to be on ARS because they want to be moved up to Newsdesk. So if they go up to Nasdaq, let's assume if they do a 10-to-1, that would be at $6.38 right now. That would be, but if they did 10-to-1, the float will be only 10 million. It's a very tiny float because the float right now is 100 million. So that is my hope. It's not like they're not doing our ass and the float is still huge, where it takes a lot of movement, a lot of, exchanging hands to move the price up. When you have a small float, you don't need that much volume to move the price up. And that's why Horan with the KMPH, that's why we have such a huge swings. It can go from 9 to 14 on news, because the float is much smaller than most stocks, So there's advantages and disadvantages of a small float, because when you have a great news, it go up a lot. When you have bad news, it goes down a lot, So that would be it. Anybody else? Any questions? You guys?
Yeah, so we have a little bit of time left. I think we should maybe talk about Seal, and also let me bring on your old friend Spencer here.
Oh, I was not prepared for this.
I know, I surprised you.
You're totally throwing me off, Rohan. Oh my God. Vivi, where are you right now?
I am in Mexico.
Oh my goodness.
I still have, a beach hair, don't care. That's what I post on Twitter. I'm like, beach hair, don't care.
Okay.
Love it.
It's downright balmy in Michigan. It's like 50 degrees today, so it's like a heat wave.
Yes. So somebody was asking me about ITRM. You guys, I took a huge loss because I needed to balance my gains and losses for the year, and I already had too many gains. So I took quite a bit of a loss on ITRM when the market was taking a dive, just for my own tax purposes. And I felt that I didn't want to, it was going down. Now it's 134. And PDUFA is not until June, July. And I saw some articles talking about the chances of this antibiotic. There's a lot of controversy about getting that drug approved. And to be honest, I didn't want to hold through PDUFA with this company. And I felt like I could use my money someplace else for those 4 months to go, April, May, June, July, 3 months to go. So that's why I'm no longer hold the ITRM. I took a huge loss on that, unfortunately. But you said you want to talk about SEAL?
Yep. Yeah.
SEAL, I'm not too familiar with SEAL. I'm going to have to get back to you guys on Thursday about that one. SEEL, right?
That's correct. We will bring it up. Alexander will bring it up for the next one. All right. Yeah. Let's see. Do you want to cover? We talked about ITRM.
Oh, I can talk about BRPA.
Sure.
It hit my stop loss, RLFTF, but I saw the warrants for BRPA is still very cheap. I think $15, and the stock is over 40.
What was the ticker?
The ticker is, there's two tickers. The BRPA is the ticker for NeuroRx, because they're splitting profits with this new COVID drug. And the other one, BRPA.
Big Rock Partners, is that it?
Yes.
All right.
So they are doing a merger with the NeuroRx. And the NeuroRx is splitting profits with the RLFTF, a company out of Europe. And they had a huge announcement with their phase 3 results, less hospitalizations. I felt like the results were really, really promising. And I feel like we are going to end up getting approval. It met all the primary endpoints. And I'm still a believer in this company. I just need to find an opportunity. I don't know which one I would go back to, BRPA or LTF. I need to see what upside I'll get the most. But I feel like we're going to get approval. And I feel a lot better being, if I get COVID again, that there's a drug like that available, for patients all over the world. So I think that's a big winner for sure.
All right. Awesome. There we go, folks. And unfortunately, we are running low on time here. But up next, we do have Spencer and the ETF Show. He's got a special guest today. Spencer.
I'll look into the chat, you guys. And on Thursday, I'll touch on those if you guys want me to.
There we go.
I'll do it on my vacation.
Yeah. Vivi, thank you so much for joining us, taking the time out of your time at the beach to give us some biotech stock info. Folks, we will be back for another episode on Thursday.
I'll see you guys on Thursday.
All right.
Take care.
See you then. Spencer, want to hop on? Let's.
All right. It is that time again. It's my time. It's ETF time, right? SPACs is cool, biotech is cool, but nothing is as cool as ETFs. All right, let's do this, everyone. Let's do this. Got a great show planned today. Short show. Actually, maybe not so short because, as I mentioned this morning, Joel Conan is not available for At The Close today, so I may go a little long. We'll see. But my guest today, joining me in a few minutes, super exciting, Will Rind. We're going to talk commodities. He's from Granite Shares. So we're going to talk about commodity ETFs, the bull case, how to approach the sector, why you should have some commodities in your portfolio, whether it's broad-based, whether it's more specific towards something like gold or copper or silver or whatever. We're going to talk about all that in a few minutes with Will Rind, the CEO of Granite Shares. But first, I cannot proceed without reminding you all the purpose of this show. Why do I have a show dedicated to ETFs? We go through this every time, right? Diversification, tax efficiency, low fees, actively traded, and transparent. Usually ETFs are all 5 of those things, and that is why We love them. We love them for it, right? Not like mutual funds and your taxable events and your load fees. Get that out of here. Get out. We don't want it. We don't want it. All right. Let's talk about. We already discussed this yesterday, but I kind of had a little bit more I wanted to add. Really, what I wanted to do with regards to the ARKX thing is wait. You know, I said yesterday I want to wait. I want to withhold judgment until the damn thing opens. Well, it's opened, and that's kind of your ETF news of the day, right? You're really what is your ETF headline of the day? There are some small stories here and there, but no. Everyone's got their eyes on one thing and one thing only, and that's up to space, where Cathie Wood is, apparently, right? So ARKX, the fund is live today, opened this morning. Let's pull up a chart. Can I have a 1 minute chart? Give me my 1 minute chart, guys. Not a lot of price history. Here we go. Just share my screen so y'all can see what I'm seeing. Not a lot of price history, obviously 1 day of price action, but here we go. The ARK Space Exploration. Let's change our background. Jeez. An innovation ETF is live. Okay, so obviously we're not going to react to 1 day of trading because nobody really cares about 1 day. Really, what's going to be interesting to note, as I said yesterday, is what kind of flows does this fund take in, right? Most new funds, you know, we went through that chart. If you watched our show yesterday, most new funds do not attract a lot of assets. We can talk to our guest about this, Will, because he knows firsthand the struggle of issuing new funds and launching new funds. Most new funds do not attract that many new assets. It can take time. If you get lucky and you launch a new fund in line with like a news event, right? Like the hack ETF launched like right before the Sony hack a few years ago. That can help. Most new funds do not launch with the fanfare of an ARKX. Okay, so we're going to be watching this and see what kind of flows does it get. Cat Van is asking the $1 million question, right? Let's say you do want some space exposure. Why ARKX and not UFO? Well, Moon Cat is not a space ETF, right? Moon isn't that the direction? That's the direction Moonshot Innovators. That's more of a broad-based tech innovation fund. But why not ARKX or UFO? That's going to be the question, right? That people who are into the space are going to have to answer. And there really is no right answer, unfortunately. Like you can have your opinion on which is better for you, but there's going to be a lot of that, and I'm sure we'll do a lot of that on our shows going forward. Here is which is better. I'm actually going to have Andrew Channon, the manager of UFO, on this very show next week. What's today? Tuesday. Next Wednesday. Next Wednesday, he'll be on to talk about space and UFO, and we can compare and hear directly from the UFO's mouth. Eric Douglas is bringing up a good point. This fund is actively managed. UFO is not. That's one difference. Obviously, the main difference is going to be the holdings, which we went through yesterday. And if you didn't check that out or didn't check out the list, I recommend it. There are some head scratchers for sure. Talking to you, John Deere, and Netflix, and Alibaba, and 3D printing ETF. But hey, we're open. People were waiting for this for like 2 months. So the day's here. The day's here. Not much more to say though until we get more history and we see some flows data. There really isn't much to add on the ARKX front for now. We will come back to this when we have some data to discuss. Where can you buy Benzinga hoodies, Eli? Swag.benzinga.com is your answer. This is a nice hoodie, actually, if I do say so myself. All right. What else? There really isn't much on the ETF front to add today, guys. There's not much news. The launch of ARKX is probably the big news of the day in ETF land. We went through, if you missed yesterday, we went through the gainers and losers of the last week in terms of returns, in terms of flows. So nothing's really going to change day over day. I don't want to fret too much over those numbers because they're not super actionable. They're really more for awareness and giving you a feel for the market and what's up and what's down and what's popular and what's not. So all that being said, let me bring on today's guest, because one of the main things I want to do for this show is bring on people to talk about different areas of the market, right? Via an ETF. That's how I use ETFs, right? I use them not to put all my money into one fund. That would be stupid. I use them to gain exposure to pockets, right, of the market. I use it to allocate, to pick themes, pick ideas. I'm not gonna gain exposure to an industry via one stock. That's not my style. I'd much rather own it via gain exposure to a theme via a fund. And I want to bring different ideas on, and we can talk about them. The bull case, the bear case. Is it worth a slice of your portfolio? Is it not? So that being said, let's talk commodities here. Let's bring on my guest, Will Ryan, the founder and CEO of Granite Shares. Will, good afternoon, sir.
Good afternoon, Spencer. How are you?
Doing well. How about yourself?
Yeah, good. Thank you. Can't complain.
Can't complain. That's always good when you can't complain. All right, Will. I mentioned this before. You have firsthand experience in the ETF launch.
Yes, sir.
In the practice of ETF launching. Can you remember, and we'll get into commodities in a second, but can you remember an ETF that launched with kind of the fanfare of this ARKX?
Well, actually, yes is a short answer. That I think it was only 2 or 3 weeks ago, but the Dave Portnoy Buzz ETF.
We had Jamie from Buzz Indexes on the show. So all right, you got me.
Yeah, I mean, from an issuer perspective, I think that was the most successful ETF launch that's happened in the last 10 years.
Yeah,
so
I think you're right.
That was definitely one that we were all watching.
Maybe you can answer some questions that I have just about that ETF launch process. So before you launch a fund, you obviously launched it with assets already, and so yesterday, ARK publicized their holdings, and they're like, this is what the fund is going to hold. And people, I mean, they're an active fund, so it's a little bit different. They're not tracking an index like you might be. But how, what is the process for actually going in and buying those securities compared to the launch of the fund?
Yeah, so I mean, obviously, first of all, you've got to go through a registration process. So that involves getting your prospectus and what do you call it, registration statement approved by the SEC. And then the process you're talking about is when you actually seed the fund prior to launch. So this actually goes to the stock exchange listing requirements, and there's a listing requirement of a minimum of 100,000 shares worth of seed capital in the fund before you can go live. And so typically the way that people seem to do it is they go for a number of $25 per share. And so with your $100,000 in terms of 100,000 shares, ends up being $2.5 million worth of seed capital. Now that seed capital is typically provided by a market making firm or a third party firm. It doesn't have to be, but that's just typically what happens. And so the actual seed basket, they will put up that money, that seed capital. Literally, the fund or the advisor will go out and buy those securities before, obviously, launch. So they'll be seeded typically 1 day before. Obviously, the shares will settle 2 days before. And then on actual day zero, I guess on launch day, you have the fund all ready to go.
Got it. All right. That's enough about inside ETF launches. Let's go to the real reason you're here, commodities. I've been hearing whispers of a commodity super cycle or not. First, explain what that is.
So the idea, first of all, behind a commodity super cycle is just a prolonged period of structural demand and upward price movements. Obviously, best example in recent times was the early 2000s when we had a sustained multi-year period, probably arguably speaking went on for a decade, and the principal reason being China and other emerging economies when they were both industrializing and urbanizing at a pace that we've never seen before. So just consuming a massive amount of commodities that drove prices to a high, back in the early 2000s.
Got it. So just a prolong, basically what you just said is we had that weird period sort of between bubbles, between bubble tops, I guess you can call it, right? Between the .com bubble and the top of the housing bubble, where commodity-based stocks, ExxonMobil, everything just sort of value, I guess, it sort of shot up.
Yeah, commodities, they're cyclical, right? So they're a classic example of a cyclical market where you do get obviously these super cycles, hence a super cyclical movement, right? Which is a cycle that lasts longer than normal, but typically because it's supply and demand driven, economics 101 has it that typically the best cure for higher prices, or what they say is higher prices. And so that leads more supply or more production. And then that in itself, once you bring on more supply than you have demand, typically then prices adjust accordingly.
So what is the general consensus out there as far as a potential is there a general consensus as far as a potential commodity super cycle down the line here, or is that the problem, is there is no consensus?
Well, I think that you've seen the beginnings of a consensus, if I can maybe put it like that. So certainly some of the major investment banks, and certainly I would argue the most well-renowned commentators on the space from the banking space, namely Goldman Sachs and JP Morgan, have both talked publicly about the beginnings of a new super cycle. It's something that I've talked about and other people in the space, but I wouldn't say that it's a consensus view at this stage. But I think it's sort of driven largely on the back of sort of two fundamental reasons. The first one is if you just look at the price, if you just chart any kind of stock market index, it doesn't really matter which one, against a commodity index, you'll see a massive dispersion. It looks like a massive sort of, alligator jaws or something. And so the idea there that if you're just a basic believer in some sort of reversion to the mean, then commodities, have to move higher from here, or obviously equities have to correct, or some sort of variation of the two. But if you look beyond that, I think that you have real issues within the commodities sector, namely that you've had underinvestment in terms of capital expenditure by the big firms for a number of years, and that's obvious because prices have been depressed. So you don't invest a huge amount in an area when you're not getting paid for it in terms of end product. And so there's been underinvestment in the sector. And then that obviously got exacerbated last year in the pandemic in particular, where a lot of production was shut down or was sort of put into wait and see mode. And after the vaccine news, towards the end of last year, you had that sort of bounce back as people started to look beyond the pandemic and looked for that sort of reopening story. And I think that's really what's been driving commodities in the short term. But I think the longer term, it's about these sort of structural imbalances in the market and the fear of inflation coming back.
Got it. So you said there were in the beginnings of a consensus. What is your view on it, though?
Well, I do think that this is a longer period of commodity demand kind of outstripping supply. I do think we are in the beginnings of a super cycle. My twist on it is that I think that it's more than just it's a super cycle that will not benefit all commodities. I think short term, what we're seeing is this recovery rally in commodity prices across the board. But the biggest story here is this is about a transition to a green energy future. And we are changing our energy infrastructure globally. It's a transition from hydrocarbons or to fossil fuels to green energy. And that's really going to drive a lot of these commodity price movements, I think, over the next decade or so. Now, obviously, that doesn't benefit all commodities. Obviously, hydrocarbons such as oil, gas, etc., will be the obvious victims. But I think for the metals, for other commodities, it could be a very, very strong sort of decade or so.
So not benefiting everyone, so that would mean maybe more likely to benefit. Like I guess, can you draw the line somewhere for us? Like which types of commodities are likely to benefit and which ones aren't?
Yeah, sure. So, again, broader thesis is that, what we're seeing now is a transition to a green energy future. This is a retooling of our entire global energy infrastructure. So, the Biden administration, they're just putting through, I guess, the final touches on their, $2-3 trillion infrastructure package. You've got other major economies around the world getting serious about making this transition to a hydrocarbon-free future. So that's a huge amount of spending going on at the government level. Obviously, corporations as well spending a huge amount of money on this. But in a world where we are transitioning away from oil, clearly in the longer term, oil is one of the major, if not the major commodity that will be affected by this, negatively impacted by this. But other fossil fuels as well, coal, gas, they're all going to be, in the long run, as we transition away, negatively impacted by this. And obviously, the beneficiaries are any commodities or all commodities that are used in new technologies, be it anything from solar power to wind to any other technology, just more broadly. And those, to overgeneralize, would be most of the metals.
Okay. All right. So, and that kind of leads me to my next question, which was sort of about the metals here. What is the bull case aside from green, a transition into green energy? Like what is the bull case today for metals? You have a couple metals funds. Some are broad. You have one that's super broad based, right? COMB. You have others that are you have a platinum fund. You have a gold trust. We'll start broad and then maybe we can get into the specific ones. But what is the bull case here for the metals?
Yeah, so I mean, broad-based, Spencer, as you just said, I mean, this is just about now people getting exposure to commodities.
Okay.
And for that, COMB or COMB, as we call it, that's just a broad-based commodity ETF with no K1s, which is the lowest cost way for people to access broad commodity futures markets via an ETF in the US today. And that invests in 23 commodity futures contracts, diversification across all the major groups, and it's just a quick, one ticker solution to invest in broad commodities. Outside of that, you have more specific cases. So as you rightly mentioned, we have gold, which is BAR, and that invests in the price of physical gold. So physical gold bars literally sitting in a vault and tracks that price. And so the case for gold is much more predicated on macro conditions because gold is a counter-cyclical commodity. So in other words, it tends to be driven more by things like the dollar, things like interest rates, macro policy, than pure supply and demand. And then we have platinum, which is, again, very similar structure, PLTM to gold, physical bars of platinum. In this case, technically, they're called plates, an ingot, but they sit in a vault and track the price of platinum. But the case for platinum is much more linked to this green energy transition we're talking about, because platinum is a really important element in not just the production of green hydrogen, which is hydrogen that is coming from green energy sources, but from hydrogen fuel cells themselves, where it's used in the catalyst process. So it's a very interesting story, and obviously hydrogen, we believe, is going to be a big part of the economy going forward, and you need platinum for that.
I'm curious what kind of interest, what kind of interest you're seeing in your funds, maybe from like the non-traditional places. I imagine you speak a lot with asset allocators and institutions who want exposure, but we've seen in the last couple months, maybe like the retail lens has sort of expanded. Like the retail investor lens has maybe expanded away from just being zeroed in on like just growth tech to other things, right? And I'm just curious if you have observed that as well, as it relates, whether it's to your funds or commodities more generally, a more broad-based interest in this area of the market.
Yeah, I have actually. Interesting story. So I think from gold perspective, that's really been the one commodity the one product that we've had has universal appeal. So, I always say the good and the bad thing about gold is that everybody knows what it is. Find anybody on the planet, they know what gold is. That's the good news. The bad news is they have an opinion on it, and it's not always favorable. And so it's very hard to sway somebody who's not predisposed to gold to go in the other direction. So gold is something that everybody knows, everybody understands it, and you either want it in the portfolio or you don't. But moving outside of gold, on the retail side, commodities, I'd say just broadly, are not really understood or owned. And so I think in the last few months, we've had a huge amount of interest in COM-B, and that's largely because of people saying, hang on a minute, I hear this inflation story going on. I'm worried about that. How do I protect my portfolio from inflation? And more and more articles are starting to be written about. You need to have commodities, and something like COM-B is a good way to hedge. And then, sorry, I was just going to say then platinum. Yeah. Although early days, I think people know platinum really purely as a jewelry metal, and maybe they've had some experience in terms of shopping for a platinum wedding ring, something like that. But now these stories about hydrogen are starting to come out, and people are starting to say, hang on a minute, could this be the new lithium? We understand what happened with lithium. Elon Musk, Tesla it's been a huge talking point for anybody on the electric side of things, particularly in the batteries. And now could platinum do the same thing, but for fuel cells that lithium did for batteries?
Okay, a couple of things there. Before I forget, though, I want to go back to the inflation thing. Sorry, yep. I just blanked there. Can you walk us through that inflation argument as it relates to commodities?
Yeah. So the two main reasons people buy commodities. Number one, for diversification. In other words, you put a different return stream into your portfolio than you normally get from equities or bonds. And number two, hedge against inflation. Reason why is because if you look at the CPI, or the Consumer Price Index, that people typically, or government typically quotes as a measure of inflation, the highest correlating things historically to that are food and energy prices. And indeed, food and energy are big contributors to inflation itself. And so when you're looking at correlating asset classes, commodities historically have had a high correlation to inflation because they tend to be some of the root causes of inflation itself. When you have rising energy prices, you have a knock-on effect. Same with rising food prices to all sorts of things. And of course, the cost of materials just more broadly.
And then with regards to the platinum thing in the future, I mean that all sounds exciting, but I guess how speculative in nature is that?
Well, like anything, it's not risk-free. There's no guarantees, right. But I think there's enough research being done now that governments, like I said, and it all starts with government policy, starting to get really serious about hydrogen. And so there's a lot of good material on the internet for people to read for themselves and make their own mind up. But I think we're starting to get serious about this technology. The investment is starting to come. And from that perspective, it's, again, something similar to what happened with lithium, with cobalt, with all the other metals that were probably very speculative, or at least modestly speculative at the time. But perhaps people didn't really realize how integral they were to producing batteries and to other new technologies.
Can you speak to the impacts maybe in performance over time, or the differences in performance over time of owning a commodity-specific asset, whether it's an ETF or whether it's like a stock or whatever, versus a broad-based commodity asset like COMB, and maybe how those returns might differ over time?
Well, the first place to start is always that we have to explain to people typically that when you buy broad-based commodity ETF like COMB, you're investing in commodity futures contracts. So that means you're getting exposure to the commodities directly, not to the commodity companies. So when you typically talk about commodity investing, a lot of people initially assume that you mean investing in the commodity companies. And the reason why we don't do that is because that's not a direct correlation or a direct translation of the underlying commodity price. So in other words, if you buy an oil company like Exxon, for example, and the price of Exxon goes up by 10%, it does not mean that the price of oil has also gone up 10%. It could be completely different. And the reason for that is that companies are typically involved in much more diverse businesses than just one commodity. They have other risks attached to them, be it management risks. Typically, they take on leverage, they report to shareholders, they're involved in environmental permitting situations in a number of different companies and jurisdictions. In other words, there's a lot of risks to investing in a company, and that all affects the ultimate return that you get as an investor, as opposed to just buying the commodity itself. Now, I'm not saying that buying the commodity itself is risk-free. I'm just saying that at least you get that direct exposure that you're looking for. So over time, the divergence between the two is largely going to be as a result of what is the difference between the performance of the companies and the performance of the underlying commodities themselves. And so as a general rule, certain sectors, the companies have underperformed the underlying commodities because they haven't been able to use the leverage and other sort of things that they would have ostensibly as an advantage to enable them to outperform the actual commodity.
Okay, got it. And then I'm curious if you can gauge sentiment recently in conversations you're having with clients or with investors and managers and allocators. I'm wondering over the last couple of weeks, say, or a couple of months, how has sentiment changed, if at all?
Well, sentiment for broad commodities, I would say, and for platinum has been the strongest that I've seen it in quite some time. So really? Certainly over the last few months, as typically all the conversations we've had as a firm have been about those. And we're into income products. We have large cap equities. So it's not just commodities. But that's where I'd say the lion's share of the conversations have been. Less so about gold. And again, it's not that people are negative on gold at the moment. I think people still want to own gold. We haven't really seen a lot of redemptions in gold. It's just that people's focus right now are much more on the pro-cyclical commodity side, and that's on Combi and our platinum ETF, PLTM.
Here's a question from chat. I don't know if you can answer, but if you can, great. And if not, that's okay. Do you have any ideas or suggestions for ways to get exposure to maybe the ag side, the ag commodity space? Whether it's whatever, wheat, soy, corn, whatever. Do you have any ag favorites?
Yeah, no, absolutely. So probably the two places I would send you immediately are number one, Invesco. Obviously, the large asset manager has a broad agricultural ETF that invests in underlying agricultural commodity futures.
Is that MOO?
No, it's DBA is the ticker.
Okay, DBA, right.
Yeah. No, but funny you should say MOO, because that's a great example where MOO is a similar product from Van Eck, but it invests in the commodity companies, not in the actual underlying commodities. And then there's another firm called Teucrium, and Teucrium provide a series of commodity ETFs as well, but individual commodities. So ags is their specialty, and they have a corn ETF. They have other individual ag ETFs. So that company's called Teucrium.
All right, Will Ryan is talking about his funds and funds that don't even belong to him. That's okay. Will Ryan, he's the founder.
It's okay. We're here to help people out. That's what we're doing.
The founder and CEO of Granite Shares. Again, if you missed it, COMB, PLTM are the two funds we just discussed the most. Will, a pleasure to talk to you as always. Thank you for joining us, and we'll be in touch. If that super cycle ever comes, you're my first phone call.
It's already here, but thank you.
It's already all right. Thanks a lot.
Take care. Bye.
All right. That was Will Ryan again from Granite Shares. Guys, smash that like button for Will. We don't spend a ton of time talking about commodities, but doesn't make them any less important, right? It's an asset just like everything else. So, I have very, very little indirect exposure myself to commodities. I could probably use some more if I'm being honest. And that's why I love ETFs, because they make it easy. Like otherwise you would have to, you want to own gold, you have to go and talk to your broker, create like a future. I don't even know how to buy futures. I'll be honest with you. I've never bought a future before. I don't even know how to do it. It seems like a pain in the ass. Or I could just buy an ETF that owns the futures or owns a commodity-based company and call it a day. And that's why I love the product, because it just makes investing in things so easy. Sometimes maybe a little bit too easy, but that's okay. That's okay. All right. It is 3:52. I am going to transition and get commodities at Publix. That's good. That's good. Yeah, corn is another good ETF. I've never heard of Eric. He's just messing with me. You're just messing with me, man. All right, let's get off this this branding and go into the At The Close branding. Unfortunately, Joel Elconin is out this afternoon. I'm sorry to be the bearer of bad news, but I've got Mitch Hosh here with me, and maybe a special guest. If anybody wants to get back to me, that'd be nice in the next few minutes. But I'll bring Mitch on here, and we're going to walk you into the close. Mitch, how are we doing today, sir?
What's going on, Spencer? What's going on, man? At least there's some space news out there other than Kathy. So
really?
Yeah, man, there's some space news.
Fill me in.
All right. So first things first, let's talk about the negative. There was the SpaceX.
Yeah, that one got like 9 a.m. though, right?
Yeah, the Starship didn't turn out to be as good as it's having problems. It's having problems, the Starship. But I have faith. We're going to Mars, baby. Come on, Elon. Get us to Mars.
I thought we were going to the moon.
Nah, forget the moon, man. I'm skipping the moon. I'm going straight to Mars.
All right.
But the other news is the Amazon news. Did you see that?
No, I'm a little bit behind on my news today. I confess. Some days I'm on the ball. Okay. Wow, we got a lot of headlines. Let me bring up my Benzinga Pro so y'all can see what I'm seeing. And we've got Amazon Web Services unveils AWS Space Accelerator for startups. What? Okay, what? Amazon, I guess this now makes a little bit more sense as to why Amazon is in the ARC Space Fund. If they're going to have a space accelerator for startups and they're going to take ownership of space startups, then that makes sense. That's interesting. That's interesting.
Yeah, it is definitely. And one of the things is you've been seeing so many kind of space companies go public, right? And so, I mean, this is for startups, but I mean, you can tell. I mean, we're going into another space age. What do you think about that, Spencer?
Maybe.
Space age, man.
It's just, how do we know? Like, how do we know? I wish there was a sign, like. Everyone knew they were in the space age because John F. Kennedy said, "Hey, we're going to space," and everyone's like, "Oh, it's on now." But I need someone to tell me, like, when are we in the space age? Are we in it now? Are we going to be in it in a year, or 6 months, or when? Like, I just need someone to be clear with me so I know we can all be on the same page. Okay, we're doing space. Or I guess Biden has said that. He agrees with what Trump did with regards to the Space Force and all that. So I guess that means we're back in space mode, but we haven't been. That hasn't been a focus for what, 10, 15 years.
Yep. I mean, it's going to be interesting. I would love Biden to say we're going to Mars. We're going to Mars.
That's a good point. Nature bound is a good point. There is a sign behind me. So
right, come on, Spencer, support it.
I guess we are. I guess we are going to the moon or Mars. Or
I'll tell you one thing: we're not short of the emoji.
We're not short the emoji.
The rocket emoji. We're not short of those. So
see, chat
people believing in the rockets.
I can't even agree. Right? You'll know when World War III starts. Yeah, you'll know when you can buy a ticket. I just need to know, man.
I thought we had World War III. That was like COVID.
I don't know what that was. Okay,
but let's talk about infrastructure, man.
It's infrastructure week, right?
Yes, that it is, man. That it is. And everyone wants to know what happened to solar today. I think at the end of the day, you got to really pay attention to 3 industries right now: transportation, broadband, and climate change.
Look at solar. Look at let's look at those solar charts today. Look at that. Let's just start with the tan. First off, tan's a mover and moves. You got to watch this thing because it'll move on you quick. But up 5%. It's sort of off with the rest of the growth trade, because what is solar as an investment? It is a growth investment, and this is really considered growth tech. So it's sort of off. No real surprise there. But let's zoom in. All right, so we've bounced. We're up almost $90 today. We're up 5% on the ETF. What about
there's one that was on my radar, Sol. It bounced up today at least. I'm going to keep that one on watch. It's held 10. Yeah, it's held 10 multiple times. You've seen multiple lows there on the 10. On the 29th, you have a low of 968, 980s on the 25th. And then you got that day back there in the 5th and 8th of March. Let's see if those 10s hold now and we get a move back up in Sol.
And you guys go to the rest of the sector, like for solar, which is up 6% today. You got CSIQ, which is up 8% today. Those are the first two that come to mind.
Sol and SPWR, same looking chart.
One. Yeah.
And then there's the unknown one that I found out about, iSun.
That's a new one, right?
Yeah, I didn't know about that one. I think it has at least a good ticker name, but I don't know anything about this one. But just to put them all out there, certain plays that you can watch in this industry. But those are some solar plays. What about transportation and broadband? What about 5G plays?
5G. I own that 5G ETF, that F5EG. I've got that guy. It hasn't been working out for the past month, but that is quite all right. I'm not holding it for a month or for a trade, but it had that great run, as did everything else last year. And I'll be honest, top of my head, I don't even know what's in this thing. I know it's got like Inseego and a bunch of like connectivity stocks, but anyone else have? Oh, thank you. We missed JKS. I apologize on the solar trade. We'll get to PayPal. COMS for a 5G play. Daniel says. Oh, it's down 8% today. They haven't even reported earnings yet for the quarter. So, okay, lower price 5G play. Daniel says, I don't know. What about?
Yeah, if you guys got some 5G plays, put them up in the chat.
Marvell is a they're like a semi play. It's a semi 5G play. Isn't it? I think it is.
Maybe Nvidia's chart's starting to look interesting.
Nvidia for 5G or for the problem with the stocks like Nvidia and companies that are like this large and the same
they need a lot.
Is right. It's not like unless it's crypto, it's not going to move off of like any one thing I found, right? Like, and the same goes true for like Amazon and Apple and Alphabet, right? These companies are so big and in so many businesses that they're not going to move usually off of any one thing. They're going to move with sort of a secular market trend. That's what I have found. They're all okay. Tiago, I own F5EG. Skyworks is a good one. That's definitely in my ETF that I own. Traveling Trader. We talked about AT&T yesterday. Verizon, T-Mobile. Those are all in there, I believe. Corvo, they're saying QRVO. That chart doesn't look that bad, actually. Huh? That one's held up. That's held up.
Look, Dell is one also.
I always forget that.
Believe it or not,
I always forget that they're public again. Oh my God!
Look at this thing. Look at this thing since year over year. What a ride!
Freaking Dell computer.
Ride. Dell, baby.
Does anyone even have? I have a Dell monitor here, but I don't even have Dell computers because I don't know if anyone still has those.
Yeah, I don't know.
Nokia is a good 5G play, Adolfo. Yep, that's definitely in the 5G fund that I own. That's why I love these funds, because you get lots of eggs in your basket. AMT, we talked about AMT yesterday, I believe. Alt styles. This thing has been a monster the last couple weeks.
I think, one thing that we forgot to do, man, and for Joel's sake, we didn't take a look at the overall market.
There's not much to say about it. I'll be honest with you. Let's go to a 1 minute chart.
We gotta do the classic opening from Joel taught us how, man.
I did the wrong things.
Joel's gonna hit.
There's not much to say about it, unfortunately. I mean, like, look at this is today. This is a 1 minute chart of today, right?
Sideways.
Yeah, sideways, and that's the S&P. That's the SPY. What about the Qs? Right, the Nasdaq 100 looks pretty similar. What about the Russell? That one, I bet you, is getting smacked. Oh no, it's up. Damn.
I don't know, man. I'm starting to feel a little bullish with this infrastructure coming out and all that. I know there's inflation talk with it, but I mean, it's going to bring some money to some industries, and some of these industries are just sitting on the supports. Like a lot of the stocks are sitting on the support. So if they get a good catalyst, it could get them running again.
This Russell chart, this IWM is super interesting because it got that huge run from whatever you want to say, September, October, through when? Through the end of February, maybe early February, and then it just stopped. And on day, like, you can zoom in here, like some of these candles are wicked, right?
Yeah, wicked.
Some of these, I meant
the least.
Pun intended, right? Like, look at these wicks, these lows,
super extremes.
Yeah, and there you got gaps all over the place here. It's kind of a gappy chart. The beta on this has been far greater. I don't have the number in front of me, but it's been far greater than the S&P or the Dow Jones or the Nasdaq. That's for sure. So super.
I'll tell you what you use, man. Like you told me, your bullish indicator for this market, or at least for the growth, the ARKK.
That's because you know how like Dennis uses the Qs. Actually, most people use the Qs as a proxy for tech. I use ARKK as a proxy for growth tech, right? So like if ARKK is up today, which it is, then I just assume that every growth tech stock is up, right? And I'll be surprised if it's not. So what does that mean? That means like Teladoc, right? It's up. It's actually the same percent. That means like Zoom, right? Palantir. These are all
Palantir, baby.
Tech, right? Like Roku, right? I just assume all of these growth tech stocks are up, they do whatever ARKK does. ARKK is my bogey, and so today it is up. It is bounced off of that. Is that a quadruple bottom? What is that on the daily? No, not quite. Kind of, sorta, a little bit.
It doesn't look bad. It really does look like it's trying to hold the bottom. So in my eyes, at least technically, either we're going to come back up or we really crack. So, I mean, that's good side at least. Now it's starting to look like we're going to actually go for like either break out of trend. And that's, I think, what we're all kind of looking for is, can we get out of the trend, the sideways trend? Can we go straight up again? Or are we going to break back down? I mean, that's not even a bad thing if we cut back down, because like right now, I mean, I'm sure there's a lot of people that got some stocks at a great discount. So it's going to be interesting here.
Sam BD is noting a bull. Yeah, this is certainly a bullish candle on IRKK. I'm not going to fight you on that. It's sort of a quad bottom there on the daily chart. So this is interesting. Chat's throwing a bunch of tickers our way. Let's go to XL Fleet. This one was doing some things. They have earnings. Don't forget. What does that say? Tomorrow? Yeah.
So to me, what gets it out is XL needs also catalyst. Good infrastructure bill that could give them support, could get them riding back up again.
Who was it that asked about this in chat? Let me find the person if I can.
It's getting interesting for me down here in the 8s, but I mean, it's just trouble when you're trying to pick bottoms. Always is trouble.
Yeah.
And so you're asking for trouble. The probability of you being right all the time picking bottoms is not very high. I mean, you can be right sometimes, but for you to be right every, like, catching the knife situation, That's why they call it catching the knife.
Yeah.
I mean,
yeah. The real life of Ashley Ann Rogers. Your regular show will be back tomorrow. Joel, we have to tell Joel how badly he's missed. But
yes, let him know. Hit him up.
Man, yeah, tweet
at SPUS.
Yeah, at Spoos on Twitter. Tell him you miss him.
Hit him up.
He had an obligation this afternoon, and he's not home right now. So I apologize again.
Go blue, go blue.
Yeah, I don't know what I'm not saying it was Michigan basketball. I don't know what it is. But make sure you tweet at Spoos and tell Joel you miss him. Hey, speaking of that, Mitch, you know what someone commented in chat about an hour ago? They said, I am their third favorite person at Benzinga.
Third. Only the third. Don't get it twisted, Spencer.
I don't know how to interpret that, honestly.
Don't get it twisted.
I'm number 3. Out of how many? Unclear for now. Kevin Costello, where's PMP? You got us.
PMP.
That's
We're
what
at the close.
That's what you got, man. PMP at the close. You got us. That's it. I actually reached out to a few people today, asked if they want to come on, and I got a few. I got all no's. I got people that they all basically said can't do it today. Would love to do it next week or whatever. But I struck out today in my guest booking reach outs. So it's just one of those days. So we're just gonna.
It's one of those days.
Yep. Still, yeah, I'm still on the podium. No, number 3, still on the podium. All right, I want to bring your attention to this article that I thought was pretty good on Benzinga. Mitch mentioned infrastructure. It is, of course, infrastructure week. Let's look at a couple more infrastructure stocks that this article on Benzinga.com highlighted. Let's start with Caterpillar. Okay, this one, an obvious play, right? So it's up today, a little over 1%. Looks like. Is that the all-time high? Of course it is. Of course it is. Right? Of course, it's an all-time high. So the all-time high is right there. We are knocking on the door of that all-time high of 237. We're $5 off that right now. So obviously, you would presume if there's more infrastructure spending, there's more infrastructure building, that would be good for a company like Caterpillar. That, of course, does the building, right? So super relevant stock. This is also kind of a bogey for the rest of the sector. So I would keep an eye on this for the next few days for sure. See how this trades. Another thing that the article mentioned is the railways, right? We looked at this, was it last week or the week prior? We had that big merger. It was the week prior.
I think it's week prior, but
yeah, CP and said they're buying Kansas City Southern, right? KSU. So is there going to be more rail projects? More need for rail transportation? This is the guy. You know what's interesting, man?
Look at KSU.
Wait, okay. Wait, let's go there in a second. But KSU is going to trade with CP. But look at this CP chart. So these M&A things, these moves, they so often come undone. Whatever the move is, they so often come undone. Okay, so we know the market usually hits stocks on an acquisition, but look at it. It's coming back, baby. It's coming back. So if Joe were here, he would say, well, 50% retracement, you know what, that you're 382 down to, what's that, 354. So, you know, halfway is what, 370 maybe, 369. We're right there. We're halfway between the high of that move and the low of this move. This looks like a nice setup to me. And then you said KSU.
Pushing.
I mean, sure. Wait a minute. Do you remember the takeout price? Let's go to KSU in the newsfeed. Do we remember?
It looks like it's about to take it out.
Take out the takeout price? What do we have? Do we have a price on this, baby? What is it? Yeah, it's cash in stock. I'm not doing that math. Okay, so it's $90 a share in cash plus 0.489 shares of CP. So, again, as CP goes, so will KSU. I'm not doing that math in my head. Sorry.
So another to mention, and you know, I think this is going to be a big focus, is you might see EV focused, right? So we can go to the electric vehicles. But I think what you got to see even more than that is the material plays and what kind of material plays could come out of this.
Sure.
I think that's going to be one of the biggest ones to kind of pay attention. Two names that I got right here. I got VMC. I got MLM, which is Martin Marietta.
Yeah.
Materials. That one's a good one too because they have a lot of steel.
Yeah, let's just add a bunch of things. So MLM, we'll add US Steel to this list. Why not?
Mm-hmm. We can do Valet,
I think.
Yeah,
I think it's Valet.
Yeah, it's Valet. You got it.
Yeah.
That's iron.
You want to do what's the big ETF? We can do let's just look at the XLB, right? That's
yeah. You could look. You could add that on there.
Yeah. And then what to say? Well, Valet is like, isn't Valet OTC? No, it's not. It's
You got also Rio, RIO,
Rio
which
Tinto.
is another.
Man, look at US Steel. Holy crap.
That's what I'm trying to say. US Steel has been doing great. And we've had people mention it in the chat. So you've been mentioning US Steel.
This was a no-go for so long. Well, this is what is it? This is a 3-year chart? This is a 3-year chart. 3-year weekly. Let's go to a monthly. Let's zoom out. No, let's just do a little bit. God, X was a no-go for how many years? Let's go to a monthly. X was it's too far back. X was a no-go for like a decade, maybe more. And look at it in the last year. That blue line, that light blue line.
Oh,
man. Market is cyclical. The market is cyclical. How many times can we say it?
Yep.
Things that are in favor don't stay in favor forever. And the same goes for things that are out of favor. Usually. That is not always true. But in most cases, I feel like it is. God. And then CLF is a good one, Hertz Scrambler. It's a good call. Let's add that to our list here, and we can see how that stacks up. I'm sure there are more that we're missing. This is not a complete list, by the way.
Yeah, there's so much. I mean,
so this jumps out to me, okay? And this is sort of the downside of ETFs. XLB of this group is the worst performer. So what this fund will do for you is it'll give you exposure, and it'll let you hit like a single, right? Maybe a double, right? But you're not going to hit a home run. You're not going to hit a home run owning XLB or most ETFs for that matter, right? Like that's what makes Cathie Wood the exception because that's been a home run. Most ETFs, you're not going to hit a home run. You'll hit a single, a double, maybe a triple if it's like a super niche specific ETF. XLB is a single, right? Obviously, over the last 6 months, US Steel was a home run. Okay, that's the downside, unfortunately.
That's how it goes sometimes.
Yeah, stocks, but of course, chat's mentioning Freeport McMoran, FCX is a good one. MP is another good one. Tickers are flying. Yeah, I mean that's kind of how it goes sometimes. We got a question for Mitch specifically.
Let's do it.
Okay, the question for Mitch is: how do you do your research?
So,
where do you start your process? Example, Fubo.
Okay, so Fubo is an interesting one. So a lot of times when I do my research, I do 2 different ways. So sometimes I'll start with an actual company and I'll work inside a company, like actually find out about one company, find out their revenues, how they make their money, what's the future guidance. That's kind of how I approach GAN. Okay, because I approached it a little bit closer and I looked more inside the company first. But the best way that I've found these companies like Fubo is I'll look at kind of like what I call a bottom-up approach. So I'm looking at more of a macro strategy first. I'm looking for industries, the hype, the social trends. I use Google Analytics. I'll ask people like, what are you looking at? I'll look to see what the interest is out there on Twitter, Facebook. What's moving? Is it streaming that's hot? You know, and that's kind of how I found Fubo. I saw this place switched. I felt it was perfectly timed with the environment. Sports were going crazy. You saw sports gambling plays like DKNG moving to the moon. And so I was thinking streaming play, big sports intended stream, I'm gonna look at Fubo here, and then I saw looking a little bit deeper and kind of you work from the bottom up. So the industry first, then find the stocks that are part of that industry, and then look for those winners that you can grab. Sometimes there's some stocks that have already rocketed to the moon, but you can find the laggard play, and that's kind of how I found Fubo. That's kind of how I found Workhorse. Workhorse was just out of Nicola's big hype move. I looked for the other stock, the stock that I felt had more potential, more revenue, and kind of clear vision for their product.
Good answer, Mitch. Thank you. Good answer.
It's important. This is how I find my plays, really, guys. It's stories. And a lot of times it's starting not focusing on one stock, but looking at an industry. Like we just talked about it, infrastructure, climate change. And then you look like, okay, so if I'm talking about climate change, what could happen? Maybe some material plays. Maybe I look at MP. MP was just on Kramer, so it had a little Kramer love. It just bounced off something near the 30s, and so it looks interesting off support. It could get government support with the infrastructure bill. And stocks like this, when you combine stories like this, and then you look at the fundamentals, look for the guidance to be good in this particular company, that gives you another added variable. And then what I usually do is I go off the technicals. Right here would be the support, so it would look good for me. If everything matches up on the story, the fundamentals, and the technicals, it's a go in my eyes, and it becomes a story stock.
Story stock. And that's what Mitch loves, the story stock.
Story investors, baby.
That's it. All right. Oh, it's 3:58. Jesus, Louise. All right.
Boom, baby.
We're gonna hang on. We're gonna hang out through the close here, and as we like doing, as I like doing, narrating any news as it comes in. I neglected to mention Biotech today, BNTX. They had earnings this morning, which I don't know how much earnings matters to a company like this right now. Again, they're sort of right in the thick of the COVID vaccine thing. The one thing they said that I thought was most notable was they raised their production target for COVID-19 shots. They said they're now going to be able to produce 2.5 billion doses of COVID vaccine shots this year. And obviously, look, they gave some revenue figures and year over year that there is really not much of a comparison to be made. But raising their COVID vaccine production target from 2 billion to 2.5 billion, I thought was notable. And I guess they previously said they're going to be able to make 3 billion doses in 2022. BNTX is having a good day today. If you go to the chart, you can take a look, up almost 9%. If we zoom out, the stock never really it got a lot of love early on, but it hasn't gotten a lot of love pretty much since they announced the vaccine. That high, let's see where the vaccine high was. That pop, I think it was that one. I think it was November 9th. There's our bell. November 9th was the day they announced that they've got the vaccine. So hasn't gotten a lot of love since then. Okay, enough of that. Let's go.
We're pushing on the market. We're pushing.
Final tally on the day. What the hell?
What's up with the imbalances? Can you check those imbalances for me?
Yeah. Wait.
So that was a really quick move, right back up, right near the close. So like 2 minutes right before the close.
No, not even. Like that was like a minute before. That was less than a minute before the close. You guys are watching, right? What the hell just happened there?
Good amount of volume too. Also came through there. It's going to be an interesting move. I mean, we've been sideways all day long. I think we might get out of it after hours. So let's see what happens in the next 15 minutes. See if we get a move back above. You never know. We could be going for the. I have this feeling that we're going to get this big breakout over 400. I don't know about you, Spencer, but I feel like the day that we do break over 400, I don't want to miss it. I tell you that much. Yeah, I've been pulling more cash, but at the same time, you don't want to miss out.
Wicked little reversal day. Tomorrow, Mitch. Tomorrow's the last day of the quarter.
That's tomorrow.
So definitely there's going to be fireworks at the close tomorrow for sure. End of Q1. That was a nice little reversal, though, at the close. That was interesting. And again, this is a 1-minute chart, so the moves are magnified to an extent, but interesting little reversal on spot.
I wonder at what time Biden's going to speak. I know he's speaking tomorrow for the infrastructure bill.
Yeah, I don't know. Sorry.
No, it's going to be interesting. I mean, I'm going to be paying attention to that. I'm sure everybody else will. And then I think that might decide a lot of kind of that rebalance. I mean, it's going to be interesting. I mean, we've had so much kind of for a while. We had a lot of monetary policy, and now we're kind of getting kind of more focused fiscal policy. It's going to be interested to see how we react. What do you think? Do you even care about inflation, Spencer?
Do I care about inflation?
Yeah. Do you care about inflation? Do you think the market even cares about inflation?
Yeah, of course the market cares. So the difference probably in what I think versus what everyone else thinks is, like, the market is obviously reacting to a change in potential, not even inflation, but potential inflation. I mean, yes, there is inflation. Denying that is silly. We haven't gotten the inflation that perhaps some people thought we would. But the bottom line is, I'm not going to let that color my investing for one reason, and that's I have one advantage on my side, and that is time. I have a lot of time. Unless we get something like we got in the 70s, where we got like a decade of inflation, that would really suck. But I don't know. I look, I'm not smart enough to make that call, so I can't. I don't know what's going to happen. The market certainly cares. I don't spend a lot of time thinking about that stuff, just because it's not going to change my mindset at all. It's not going to change my opinions that the bulk of my assets should be in stocks, right? Which is how I feel. And inflation is not going to change that. Like I don't pay too much attention to like the dollar and rates for that reason. Like the macro stuff is important for sure, because the macro stuff decides which way the wind blows, but I'm going to stay invested through the storm anyway. So what difference does it make? It's kind of how I feel about that. Do you have an opinion about that stuff?
I mean, I just kind of like, I'll base it off of what I see on TV right now. I mean, because I'm not too big of the inflation expert here, but it looks like Mara's on the move there. But the real question, I think, to me in the long run is that, you know, you're starting to see everyone recognize that inflation's hitting. It's not just like kind of, you would say, the kind of the inflation bulls or bears, where they're all kind of starting to agree that there is some sort of inflation definitely hitting the markets. So it's going to be interesting the next couple of months how much that inflation talk takes over.
Let's talk Mara here, guys. MARA,
Bitcoin.
Marathon Digital Holdings just announced minutes ago that they're launching a North American-based Bitcoin mining pool, fully compliant with U.S. regulators, including anti-money laundering and the Office of Foreign Asset Controls Standards. The stock is up in the after-hours session. We closed at what? 40. What did we close at? $44. So we're up about $1 in the after-hours session for now, and we've seen, Marathon is sort of is at the center of this Bitcoin trade. And that was a fat finger. I don't know what the hell that was, guys. That was a like a FINRA trade. That was not a real trade that just happened there that you just saw. That was not a real trade. But that was a trade that already happened probably at the close or something weird. But Marathon up after hours here on news of their U.S. Bitcoin mining pool. There, Chewy's out. Let's go to Chewy, guys. We do have a couple of notable earnings reports today. Chewy is one of them.
Chewy with the move.
The report is out just now. Let me just read you here from the Benzinga Pro. Q4 adjusted EBITDA of $60.8 million. GAAP net income of $21 million. Sales of $2.04 billion versus a $1.96 billion estimate. So they beat the sales number. You can see the stock bouncing immediately off of the report, at least off of the the release of the report, and now it's giving back some of those gains. So it'll be a volatile overnight session for Chewy for sure. The conference call is not until 5 p.m. Eastern, so we'll hear more from the company. But looks like at the very least, it was a top line beat for Chewy in the fourth quarter. Let's move on to Lululemon. They're out as well. And this one's moving as well. Q4 earnings per share on Lulu.
It's like a good day to be reporting.
$2.58 versus a $2.49 estimate. So they beat the earnings per share number for the fourth quarter. Sales $1.73 versus $1.66 billion. So they beat the sales number for Q4 as well. They gave some guidance. Let's see it. Q1 earnings per share guidance. They gave a range of 86 to 90 cents per share. That is above the 82-cent per share estimate. And sales guidance for Q1, 1.1 to 1.3 billion. That was also above the estimate, which was just below $1 billion. So they came in above estimates. To recap, on the Q4 earnings, on the Q4 sales, on the Q1 EPS guidance, and on the Q1 sales guidance. Stock is volatile in the after-hours session. The market still has to figure out how it's going to interpret this. But early on, the headline numbers look good for Lulu. What else we got here?
I don't know if it trades after hours that much, but Clever Leaves came out. Clever Leaves,
CLVR.
Mm-hmm.
Jesus, these companies are so small.
This is a small one.
Oh, did Lulu also give? What was that? It looks like it was. Looks like they gave fiscal year numbers as well. Yeah, it looks like they gave. Randy, can you fix the headline there? Yeah, all right. Randy's got it. Lulu also gave fiscal year guidance, EPS guidance above estimates, sales guidance above estimates. So it was the beat across the board for Lulu.
Yeah, I thought the pandemic was going to hurt Lulu, but I mean, I think in the overall, I think you're still seeing ways people are finding ways to stay fit. I think you still see this company long term.
Great. Let's go, guys. Let's go into the PR filing. PR, and let's see. Do they have comps? We do. Total comp sales increased 21% for the fourth quarter, year over year. That doesn't blow me away. Do they have any e-commerce figures here? I don't see anything top of my head, or I'm skimming real fast. Don't see any e-commerce. I mean, probably most of it is e-commerce, but I'm curious if they separate out their e-commerce growth versus their general comp sales growth. No, I'm not going to look through all this. So, direct to consumer. I guess that's what this is. Direct to consumer net revenue increased 101% year over year. Direct to consumer is probably e-commerce. All right. Let's go back to the chart and see how it's doing. 1 minute. Its stock is not super volatile on earnings. Doesn't typically move a lot. So there is your Lululemon Athletica earnings report. There's a couple more earnings we're going to get tonight, right? I had my calendar up earlier. I was glancing at it. We got Chewy. We got Lulu. We're going to get BlackBerry tonight. We're supposed to get PVH tonight, which is interesting. Home builder, right? We're supposed to get.
We just got a new another SPAC Porch, PRCH, the report.
Porch? Is that the name of the SPAC?
PRCH, yeah, Porch Group.
Another SPAC.
It's a home services industry. So it offers software and services to home inspectors, moving companies.
So wait. So Porch is the name of the SPAC. And what do they announce, that they're merging with someone?
No, I think literally that's it's already de-SPAC'd. So that's the actual company. Oh, I know. It would say holding group. It just says Porch Group. I'm pretty sure that this is the company. So it's just services in the housing essentially, but
got it.
Home services.
Got it. Home services. Well, that makes sense. Okay.
So not doing too bad though.
So what is this? Their first quarter as a public company?
Mhm.
No,
Is it? Is
No.
it their first or?
This is like their second. Or third.
Nice. Well, I mean, we're seeing at least the good reaction off that.
Oh, actually, maybe it is. Maybe it is Q4, right? Yeah, it probably is their first quarter. I take that back.
It's up there now to 1777.
Donkin Dave is. I saw a few people mention CCIV today because when Lucid had some news that I glanced at but didn't look too closely at. So
that's the cheaper vehicle.
Yeah.
I honestly started.
Guys,
I did a little bit of a bull call on this one today.
You
to tell you
did?
the truth. Yeah.
This chart looks is so.
If you look at it, it looks kind of like a middle finger.
I'm sorry. Yeah, that's what honestly, that's what you get. That's what you get for chasing.
It looks like a middle finger.
You get the middle finger. That's what you get for chasing this stock up at $60.
Oh man!
Why? For no other reason than they might merge with this company. What? Get out of here! Yeah, exactly. Trade Nomadic's right. It's the bearish middle finger formation. That is the bearish middle finger formation if I've ever seen one. You're asking, what is the bearish middle finger formation? That's it. That's what it looks like.
We just named it. We just named it.
Just named it. Nomadic just named it. And by the way, he'll be on the stream tonight at 6 p.m. 6 p.m.? Yeah, 6 p.m. Eastern time, talking crypto trading. But there it is. Jeez Louise. Yeah, that I mean, look, sorry if anyone's long that stock, but it's kind of what you get.
Doc and Dave getting the finger. Yep, that's me.
For chasing the stock up, 100, 200% off of pure BS speculation that they might merge with the company. God only knows. All right. Keeping an eye. Let's do this. Let's go to the movers tool, which I utilize more than any other tool on Benzinga Pro. See what's moving in the after hours session. Okay, what's up? What's down? We talked about Chewy. What's EQ? Equilium? That's DQ. That's Dairy Queen.
Don't get me excited.
Looks like some phase 1B clinical data on EQ. They announced favorable top-line data from the Type A group of a study in patients with lupus. Okay? Sounds bullish to me.
Sounds bullish.
Don't know the company. Don't know the company. Don't know the stock. I don't know much about lupus either, honestly. So, but that is your top gainer in the after-hours session. Oh man, yeah, the BMF. That's it. The bearish middle finger. Okay, so back to Chewy for a second because I just want to see how the chart's doing. Their numbers were a little bit weird. I don't know. I don't know how comparable this is because their earnings per share was 11 cents, and the estimate was that they were going to lose 10 cents a share. So either there was some crazy ass adjustment, or the estimates were just off, or what. But or it's just a big beat. That could just be a really big beat, like a 21-cent beat. The stock is up and rising after hours here. By the way, guys, if you like this sort of like free form closing session, like we don't really have anything scheduled at this time most days, and I like to keep it open because I like talking about the news as it comes. But if you like it, if you don't like it, let us know what you think of this sort of like free flowing show. I'm literally just watching the pro news feed right now and seeing what they're reporting and what they're posting. If you like it, hit one. If you want something that's a little more structured, let us know. We've got other shows in the works, but this is sort of a new thing that we're doing just to keep it light and keep it unstructured at the close because we're getting news now, and it's light. It's light. The flow will be really heavy in about 3 weeks when we get back into the next earnings season. All right, PVH was just out. Let's go to that chart. PVH, EPS missed, sales missed. All right. Earnings per share for PVH, they lost 38 cents per share last quarter versus a 34-cent loss. Estimate sales 2.09 versus $2.12 billion. So as I said, a miss and a miss for PVH. What I said earlier? I said PVH was home builders. I don't know why I said that. I meant retail. That was a misspeak on my part. PVH is like mall-based retail, right? Yeah. Pretty sure it's mall-based retail. And you can see the daily chart. It looks like a mall-based retail chart if you go back and look. All those years. That is mall-based retail right there. So, what else am I seeing? Not seeing much on the news front. Anything else in Chatland? I do not see BlackBerry out yet. I've not seen BlackBerry. I've not seen.
Someone mentioned hydro farms. I think they come out at 5 p.m. D-Train.
No, they're out. They're out now.
Hydro?
HYFM is out. Yep. Q4 EPS, 2 cents per share. Let's go to one chart. 2 cents per share. Jeez, Louise. Versus they lost 29 cents per share last year. So there are no estimates on these smaller companies. Sales 87 million versus 77 million figure. Well, actually, that's an estimate. So there was a sales estimate, no EPS estimate. So year-over-year growth, obviously. Let's go into the release and see for ourselves. HYFM. And the beauty of Benzinga Pro, it is right there at your fingertips. Otherwise, you'd have to go to the website, hunt it down. It's a pain in the ass. All right. They're going to offer some bullish highlights at the top, as they're wanting to do. So it all sounds bullish, right? Net sales increase, 62%, gross profit increase. You're generally speaking not going to learn a ton from these. I mean, like this will give you an overview, but this won't tell you whether it was a good report or bad report. If it's a bad report, they're going to, disguise that. You're going to want to go a little bit deeper into this section or this section to see for yourself, or that section to see for yourself. Guidance. Look at that. Net sales guidance for the year, sales growth between 20 and 25%, with stronger sales in the first half compared to the second half, giving adjusted EBITDA guidance between 28 and 31 million dollars for the year. So let's go back to our HYFM chart and look at that. The algos, I know this wasn't you guys, the algos are jumping on it. Maybe it is.
There you go.
One thing I'll add, and Mitch can also attest to this, is if you're trading earnings reports, you got to be quick, right? You got to be really quick, and it's sort of a fine line you want to walk, right? You don't want to jump on the move right away, but you also don't want to take forever going through the release. So that's why, it's good to have a process in place of whether you're using Benzinga Pro or something else, and you have to really know what you're looking for. You have to know what you're looking for and how you're going to find it, because it would behoove you to maybe not jump on the first move, because those can often be fake outs, but understand, look for specific keywords, or understand, know going into it what the estimates are, know going in what constitutes a beat or a miss, or what constitutes a good quarter or a bad quarter, and skim it real fast, right? And maybe you find a nugget that the computer's missed. So with these earnings reports, if you're going to trade them, you got to be quick, but also make sure you know what you're looking for in the reports, because it's a fast game. There's a lot of bots out there, a lot of algos that trade out just off the headlines, and it would behoove you to dig a little deeper, not so deep where you're buried in the same report for an hour, if this is a trade, but deep enough where you can maybe get some sort of an edge. Something that wasn't in the headline. I didn't see Cleveland Cliffs on my list to report, but I see guidance here. Speaking of steel stocks, Q1 adjusted EBITDA guidance of $500 million. They gave Q2 adjusted EBITDA guidance of $1.2 billion and adjusted EBITDA guidance for the whole year at $3.5 billion. Those seem like raises to me. So Cleveland Cliffs up in the after hours session. Check out HEPA. Is it like the regulation? Oh, that's HIPAA, isn't it? I think that's HIPAA. That's HIPPA, not HEPA. What is this? I do not know anything about this company. I will tell you. I'll be honest with you. I will tell you if I do. Tell you if I don't. I know nothing at all about this company besides the fact that it's a pharmaceutical. That's all I know. Liver disease is what they're treating. Okay. Let's go back to the chart. You know what I would do if I were you? Who asked this question? Joel, save this for a Vivi. Tuesday and Thursdays at 2:30. See if she knows.
The V was having some tequilas today.
Yeah, she was on the beach.
I was jealous.
I saw that. D-Train's asking if Romeo Power is reporting. Yeah, they're on my list. They're on my. I know you didn't ask me, but you asked Mitch. But I'll tell you anyway. They're on my list. D-Train, RMO, on my list to report.
Romeo,
have not seen it yet.
I'll tell you, this was going to be interesting because if it could do a great report and then get a nice infrastructure bill being talked about the next day, I mean, the reach could be good. I've owned this one at like $12, made a really small profit, and then got out of it, thank God, before it went down to like $8. But it's an interesting stock. I like it. I really do like the stock long term. It's just, where's the evaluation meet the price, right? I mean, we went all the way up to above 30s. I mean, think about that. I mean, if it goes back up there, that's 3x. But we'll see. We'll see what happens here at the earnings. It's going to be an interesting earnings call. I'm definitely interested to see what happens with this report. It's going to affect a lot. I think, you believe it or not, I think this one report will affect a couple of different stocks.
Why do you say that? Because
it's just such so with the battery plays, a lot of people are trying to pick winners.
Mm-hmm.
And I think, with that being said, I think everyone's waiting for that one earnings report or something to like just stand out just that little bit more so that they can just be like, oh, that was the winner. I've been saying Romeo Powers this whole time. And so I think what ends up happening is you have to see which of like the 5 or 6 really get the kind of the wins. I mean, it's hard to determine really right now. It's just about partnerships and customers. That's why I like Romeo Powers. I mean, you can see their customer line. It's almost endless. And then you can see other people's. They just got big customers also. So it's future revenue, guys. So it's hard to really judge.
Yeah, but I mean, I hate to be that guy. Actually, no, I don't hate to be. I love to be that guy. You talk about orders. We never know how firm these orders are. No, that's a serious thing. Like
it is.
Oh, these companies, they talk about orders. Oh, we have an order for 100 of our trucks from Budweiser. Anheuser-Busch has ordered all the order trucks. But they're not orders. They're just they're emails that say, hey, when you make a truck, let us know. We might buy some. That's what they are. They're not orders. Like me expressing interest is not an order. Sorry, that's just a stupid thing that these companies are doing.
Hey, well, I'll tell you one thing. You're going to continue seeing that often, at least in the EV game. It's always going to be future orders that probably are not binding. So we got to keep an eye on these.
Pisses me off. Jim is like it should show up on their balance sheet. They took deposits. Actually, Jim, that was Tesla's whole thing, right? Is that they were taking deposits for cars that hadn't even made yet. So Tesla went the other way. Tesla's like companies like Nikola were like, we have orders. We have orders eventually, right? We'll deliver eventually. Tesla's like, no, we'll take your money now. We'll take it now. We'll get your car to you, in a couple of years, but we'll take your money now. So more than one way to approach the whole EV order thing. But it's a good point, Jim. No doubt. Okay, waiting on BlackBerry. We have 5 minutes before Cannabis Insider with Elliot Lane and reporter extraordinaire Javier Haas. And I'm waiting on BlackBerry, guys, but I have not seen it. That's the one that I want to see. Oh, I brought up a chart. I brought up UDR because they had an offering. We saw a lot of offerings. Like, was it last week or the week prior? I think it was the week prior. Haven't seen too many this week. It's only a couple of weeks. The week is young yet, but a 7 million share offering. If you missed it this morning, Brent Slava from our Newsdesk did a really good segment about the different types of offerings. You've got your generic stock offering, like this one on UDR, is 7 million share offering. You've got your shelf offering, and you've got your offering via selling shareholders. I recommend you watch that. It's about a 15-minute segment. Should be up on our YouTube channel. Should be here. You know what? Let me see if I can find it real fast, and I will.
Yeah, definitely check that out, guys. It's one of the best things you can find out about it. I know a lot of people kind of judge it, but don't really know it. So definitely check it out.
That's the one. I found it, and let's cue it up to the exact spot.
He knows.
Oh, wait, this whole damn video. Okay, it's the whole video. Right. All right. Here's a video of Brent talking about offerings and the different types of them, and what you should know about a shelf offering versus a common stock offering versus an offering via selling shareholders. Was that today? That was today. Yeah. Okay. I thought that was notable. Let's go back to my charts. We got 2 minutes before Cannabis.
Yes.
Well, BlackBerry, are we out yet? BlackBerry, we do not look to be out yet.
Time to get the clever leaves going.
Oh, that was out, right?
Yeah, it already went out.
CLVR.
I'm sure they'll talk about it on Cannabis Insider.
Jesus. Q4 sales 3.3 million, up from 2.6 million a year ago. They gave guidance, fiscal year sales guidance of $17 to $20 million. CLVR is your ticker on this thing. Not really active in the after-hours session. Why would it be? Small stock.
Yeah, not going to move much.
Not going to move. Small stock and a young stock. Not going to move much after hours. Let's not forget about our overall market here. Let's keep one eye on the SPY.
What a weird close there. Look at that swing down, swing right back up.
Yeah, that was weird.
That's why it's hard. Like some people try to trade the SPY. I've seen moves like this happen in the SPY all the time, and so that's why I don't try to trade it, because it seems like you could trade it. It's going to go up, right? Usually the overall market goes up, but I mean a swing like that, it's kind of hard to get through.
Wait, is this coming from Johnny? Is that an insult or a compliment? I can't even really tell. I think Johnny is insulting us, which is fine.
I mean, of course, Benzinga is the only one that counts. I mean, what would you be watching? CNBC?
Among idiots. Is he saying we're all idiots? And he might be right. What do I know? I don't know, Johnny. Clarity. Okay, it's 4:30. And
let's do this.
We didn't get BlackBerry yet, which is unfortunate. So we've got Cannabis Insider right now. After that, we've got a window. We'll do a rerun at 5:30 though. Mitch, we've got a new show.
Yeah, new show, man. You gotta check it out, guys.
Mike Dinella, right?
Yeah, it's going to be all about swing trading. You know, at the end of the day, I know there's a lot of day traders out there. Yep. There's a lot of investing out there, but there's a lot of us in between. It's kind of, you know, maybe you have a job at home and you just can't watch the market every day. This is going to be that perfect show for you, kind of looking more at stories, approach, and kind of swing trading approach. So it's going to be a fun show. Check it out, guys.
We've got Trading Nomadic at 6 p.m. Eastern time tonight. Trading crypto. Not talking about crypto news. I'm sorry, he doesn't do crypto. He does stocks. He does everything. Does
it all, man.
Does it all. All right. 4:31. Mitch, you and I are taking up way too much time. Let's get off.
Getting out of here.
Well, let's get Javier. What up, Javier? What up, Elliot?
Yo, what's cracking?
Can you hear me?
Is it going?
Oh, welcome to Cannabis Insider. Javi, this is your second day. This is my first this week, but it's been like a whole week since I've been here. I've missed you guys. Welcome. If you're ready to talk about some cannabis industry, some cannabis stocks, drop a 1 in the chat. It's going to be a fun day. I have some companies that I want to call out. I know you guys touched on some yesterday. I kind of want to throw my insights into those. But Aaron, cue us up, man. Let's get pumped. Javi, how you doing today, man? Happy Tuesday.
Happy Tuesday, man. I always feel like dropping some bars, on top of that intro music. I won't. Don't worry.
I mean, I'd pay for some bars. Drop a 1 in the chat. Listen, we just dropped some 1s. Drop more 1s in the chat if you want to hear Javi drop some bars tomorrow or Friday, whenever he's on next, or whenever. Thursday, who knows? Thursday. If you want to hear Javi drop some bars, drop a 1. All right, that's 1 for bars. Awesome, Javi. Welcome, man. We are going to chat about some cool stocks. Can I start?
Yeah,
please. Started. All right. Yeah. So this is one that I have been looking at for a while. I've been back and forth on myself. Auxly. AUXLY is the name of the company. Their ticker, CBWTF. This one, I have been very... back and forth. I don't know how else to say it. I've been waiting for a little bit of value spike because they've gotten some interest from tobacco players. They're big. They consider themselves a pure CPG play in the cannabis industry. Mark. So, I want to hear your thoughts, but also let's get the thoughts of our friend Pablo Zwanich in here, who thinks they are an under the radar player. And for me, that may just push me over the edge here. What do you think, Javi?
I mean, I like his thesis a lot, right? Yesterday, we heard news about Auxly graduating to the TSX. So the senior exchange at the Toronto Stock Exchange from the Toronto Venture Exchange. And Pablo Swanich's report came in before that. But he believes the stock is mispriced or undervalued in comparison to some of its competitors, based on the their smaller size and some other things that the investment thesis. I mean, his thesis is that the market's investment thesis is outdated.
Yeah, well, they're an LP too, right? So I mean, the value there, at least for what everybody is looking at right now, has a bit of a ceiling. No.
Yep. Yeah. I mean, they have a franchise model, which is interesting too, and that is something else that should be.
Yeah. What do you think about franchising? People, drop your comments in the chat. What do you all think about franchising? Is it too soon, or are the people franchising now the geniuses? Javi, you first.
I don't even know how I feel about franchising in general outside of cannabis, right? A part of me says it's an awesome idea. It's a safe bet. I've seen incredible success stories. I was reading over the weekend a story about an African-American mother and daughter who started with one McDonald's franchise in Oakland and now own every McDonald's in Oakland. But at the same time, I have like this little voice inside my head saying, this is for suckers, dude. Like, you can start your own business if you're smart enough.
Yeah, right? But here's my thing. When you look at like a Zone Properties or Open Door / Zone Properties or an Item 9 Labs and one, Unity Road and one cannabis company, I think what they're doing, they're doing it the right way. Like, I think they're franchising intelligently, but it takes a lot of funds. So I'm just curious, is that capital flowing in quite yet to go that deep into the cannabis space for franchising? I don't know. I personally think, I don't know.
I mean, I think the median target or the average target for a franchisee is actually more of like an independent entrepreneur, right? Not necessarily institutional capital, right? Usually what I see in franchisees is people who don't have like massive business experience or don't want to build a brand from scratch, right?
Yeah, look at that. Great comment. You have to, I mean, it takes a while to make money. And, you know, perhaps the fact that there are so few franchisors in the space and, you know, maybe that helps here. Maybe that there's, you know, maybe two really well-known ones that I can think of in the U.S. Oxley, you say, on the Canadian side. I'm sure there are others.
What was that company we had at the last Benzinga Cannabis Capital Conference, and they set up this fund to fund franchises and eventually, you know, return the entirety of the equity to the franchisee?
Wasn't that one of the larger ones?
Mid-sized. Jarrell.
I don't know. Well, we'll come back. Rob, I agree. Don't get me wrong. The model of franchising is very important, especially when you consider giving access to owning cannabis businesses to those who wouldn't be able to otherwise. Rob, I completely agree with you. I'm just curious if it's a successful business model right now, or if it's something that maybe will be successful in 2 years. Regardless, it's going to be a successful model. I don't know. I'm just kind of, it's playing more of devil's advocate.
Franchising a brand also, you know, you got to look at how well known the retail name of the brand is, right? If you told me, hey, I'm franchising cookies, right, like Burner's brand, I would go like, oh,
you're
that's
fine.
hard, right? Yeah.
You're totally fine.
People know about it. I don't feel like it's better or worse than other options, right? Same like if you told me, hey, I'm gonna, you know, license a Metman store, you know, franchise a Metman store, I'm like, okay, that makes sense, right? People know the brand enough. I don't know how many other dispensary brands are nationally recognized, right? Either in Canada or in the US, right?
You
or
know,
anywhere.
You know who's making a good push there, at least on the eastern seaboard, is Jushi. Their Hello Beyond brand, in my opinion, is they're really building that in a very interesting way. In fact, I think they just brought on a creative director who has won a Grammy. Complete, like, how cool is that? Like, I mean, Jushi to me is such an interesting play. That's ticker JUSHF. JUSHF. I think they're going to be winners of the space personally, but they are probably going to win in the Virginia market once that gets going. I think they're in Pennsylvania pretty strongly. Some of these other kind of Middle Eastern states.
Here's, you know, the other day, I mean, often we mentioned this article series by Andrew Ward on low cost stocks to invest in. Jushi was in Tahira Rahmatula's list. In case you don't know about Tahira, she is a very prominent and successful investor in the industry. Worth checking out. Go to benzinga.com/cannabis and find out the rest of her picks for low-cost stocks.
Yeah, and, you know, Mark, to your point, I mean, if you're looking at kind of, you know, value stocks to make some bucks off of right now, shorting, Jushi's not your play. Like, Jushi is a long-term growth option.
Yeah, no, I mean,
I would almost guarantee value with them.
I mean, also, it was also included in the lists of Mike Susano, Somai Pharmaceuticals, and Poseidon Asset Management's Morgan Paxia. It's one of the recurring, you know, relatively affordable plays mentioned by smart investors. That's all I'm saying.
I mean, they are one of the MSOs, and for all of you who may not be as associated with cannabis, that's multi-state operators. I'm probably preaching to the choir there, but they're one of the MSOs that I think put such a high priority on data that they understand what their not only what their consumer wants, but what the overall state trends are and what the overall global market trends are for their products. And they just seem to have such like a well-planned, developed goal each quarter, each year. So I mean, that's my, I guess, my value stock of the day. Javi, I keep trailing on here though, but
I'm fine. I have an interesting Reg A Plus to mention. Ooh. I know a lot of people ask us every time we mention a Reg A Plus, and then I get a slew of emails saying, "Hey, which other Reg A Plus offerings have you seen?" You know, for awareness, a Reg A Plus offering was, you know, a mechanism created by the Jobs Act in the U.S. that allows retail investors to invest in pre-public companies, right? Before this, this set of regulations came out, only institutional and accredited investors could invest in private companies, raising money among the public. Now anyone can invest. And we have an exclusive today at Benzinga about emotional intelligence ventures, or EI ventures, announcing a Reg A plus, right? They are they're seeking to raise, I think, 15 million in Canada, and I may be forgetting now.
That's very cool. So they are a psychedelic company.
50 million in
So they're a psychedelic company, though, right? They don't come. Or do they come from? Yeah. So, for everybody, I mean, hey, tell us. Do you like psychedelics companies? Is that something you're interested in? We are starting to see some legalization efforts across the country here, and already in Canada, especially R&D. I think one county in Michigan made it legal. Oregon has legalized it, among other states.
I mean, yeah, that's part of their project here. Is they want to work with some plants and sell in the future, for instance, psilocybin products in Oregon where it's legal. At the same time, they want to list in a major U.S. exchange. We cannot mention which, but they say they're in talks with a major U.S. exchange. But I don't think they will be able to list right now. Neither the New York Stock Exchange or the Nasdaq are listing companies operating in federally illegal industries, and this would be kind of the same. So I don't know how they will do it. I really want to see if they do. If they do, they will be the first. So
I don't think it's going to be a same pathway as cannabis, though. I think once you and plus it's been illegal for a much shorter period of time than cannabis. So I mean, you have already data from studies done 20 years ago, but you're going to start to see a lot more data come out, I think, about the benefits of psilocybin and other psychedelic chemicals, if you will, or natural. I guess chemicals is not the right word. You understand what I mean. You're going to see more data come out, and I think you're going to get more support for a medical legalization effort that could, in maybe not, but it could be quicker than cannabis. Overall.
I mean, for this guy right here, actually, the guy running this company, one of the things he told our reporter Netamponiaman was he doesn't see legalization happening before 2027, right? It's a very controversial piece. Go read it, benzinga.com/cannabis. I know it's psychedelics. It's part of our plant medicine universe now. So
there are companies like Red Light Holland they're public. What's their ticker? Red Light Holland out of they sell recreational psychedelics.
In Amsterdam.
That I just don't see ever happening here, or at least not for the next several. I don't know. Maybe that's just me and my closed-mindedness. Red Light Holland, super cool company. I think Todd's done a great job at building that out. But I mean, we'll see. We'll see when recreational might happen here. But I think medical is definitely something to look at investing in. What do you think of MindMed's earnings? Didn't they took a little bit of a hit, right, Javi? Did he leave? It's just me. Hey, everybody. It's just me.
I'm back. I'm just scrolling through a bunch of screens, always trying to find what's up. What did I miss?
No, I was just saying Todd's done a good job at building it out. I brought up MindMed's earnings. They took a little bit of a hit, but I mean, I have a lot of confidence in JR and his team over there. So thoughts?
I mean, same thing. It's very early on. As you said, the stock was down today after the earnings report. A net loss of 35 million. On the other hand, they have, interesting assets and over 80 million in cash. So, for all things related to biotech, you gotta be patient, right? It's not something that happens overnight, right? And in that line, we had another biotech company operating in the cannabis space, very biotech focused, called Avicanna. Today, they because they are developing, pharma products, and that takes a lot of time and clinical trials, and it's years of R&D. They also have operations in Colombia and are selling finished products, and partnered up with Hal Harrington last week to launch viola in Canada. Today we heard they got a quota from the Colombian government to cultivate and process up to 10,000 kilograms of dry flowers for exports. And they also completed an export of 20 kilograms of high THC and high CBD full spectrum psychoactive cannabis resin to Chile. And 20 kilos is a lot. And it's, I think, from what we've seen, the first major export for commercial purposes between Latin American countries. We see a lot of press releases, of different Latin American companies, especially operating in Colombia, saying we struck a deal in Peru, we struck a deal in Brazil, we struck a deal, but these are LOIs, letters of intent. And what this means is, they're softly committing to working together when they get the necessary approvals and the framework is there, et cetera, right? So many of these deals that we're seeing all the time may take 2 more years to materialize. This was interesting because it's a big, more than 20 kilograms of an extract being sent to a traditional pharma company in Chile.
Very interesting. Oh, I'm hearing myself. I'm sure. Well, regardless, Caramel, you're correct. Decriminalized. Apologies there. I use the term legalized too loosely. So Clever Leaves, we're getting some questions about CLVR and their earnings report increased 28%.
That's what's going on. I say Colombia again. We're just talking about it. Kind of now Clever Leaves. It's Colombia is hot today.
Yeah. Well, I mean, Clever Leaves is going to be a winner in my opinion. They're so easily going to take over. One of the companies that I think will win in the Latin American community, but they're also expanding both north of us to Canada, to east to Europe. I mean, they're going to be a global player, and this is definitely a play. But they increased 28%, 3.3 million compared to 2.6. Is that quarter over quarter?
Yeah. And it's the thing is, it's still low, right? I like the prospect of this company, especially after their restructuring, their SPAC deal, their debut on the NASDAQ. I like their future. 3 million still seems very low for me.
Yeah, and you saw with earnings for a lot of these larger U.S. players, you saw 3-digit growth percentage-wise. So you saw, I think, 157 for GTI, Consortium 3 digits, Trulieve 3 digits, Columbia Care 3 digits. All these big players had 3-digit growth. You see 55% growth here for year over year. So, I mean, from 7.8 million to 12.1. So, I mean, I think that goes to show you a lot of the value of the U.S. market. But, I also would say don't underestimate the value of the Mexican market when that comes online within the next year or so. Anything else you want to add?
I mean, I'm thinking we'll probably have Kyle Detweiler, who's the CEO of Clever Leaves, on next Monday or Tuesday. So tune in next Monday or Tuesday if you have questions for him. Very interesting player in Colombia. Interesting entry point to Latin American markets, and the fact that it's NASDAQ traded is never bad for transparency.
Yeah, when you look at these Latin American companies, they really are looking at a global footprint because they're able to. U.S. companies, not so much. I mean, you saw Curaleaf with IMAC.
But they don't need to. That's the thing. Most U.S. companies are focused in the U.S. because there is enough market in the U.S. to buy everything they can produce, right? Canada needed to look outward because there was a limit to the market. And same for Latin America, right? Their whole bet is placed on the international market. But again, it's much harder to export cannabis products, right? To commerce with cannabis products. And this is why we're seeing 3 million in revenue and a negative EBITDA for a company that is producing super low cost flower, a bunch of it, and has a lot of product available for sale, but doesn't have they can't sell it, right? They don't have enough buyers. They don't have the mechanisms to sell it, right? And this is happening not just to Clever Leaf, to be clear, it's happening to all Colombian companies. I have not heard of any company that has more demand than supply.
The exact opposite problem of the U.S. We can't grow flower quick enough legally, which is why there's still a pretty massive illicit market. But Michigan, February sales, 105 million. I believe, if I'm not mistaken, is that not 3-digit growth year over year? Am I crazy?
We were talking about that last week. I don't think it was triple digit, but it was pretty high. Let me
160%. 160, 160%
from last year.
From last year to this year. So I mean, and last year the big storyline, we can't find flower. Can't find it. You know, I think Michigan, Illinois, you know, I would say 2 of the top 4 markets, right, in the cannabis space. I mean, there are some major players. I look at Red, White, and Bloom wrapping up Platinum Vape. You know, putting they're a big winner. You know, I think to keep an eye on, I should say. What do you think of them?
I always liked them. I like Brad. I think the strategy is interesting, and they have a good M&A strategy, solid, you know, balance sheet, and taking growth seriously, right? It's one of the MSOs competing in the mid-sized tier, right?
Yeah. Well, they've been pretty consistent, I will say, through the pandemic, which I think is good leadership there. You know, there hasn't been a whole lot of volatility. Sundial. I'm sorry. Did I cough?
Forget Sundial. I would rather go for others. Organigram today. They launched
Organigram!
new product lines for the adult use markets called Indie and Edison Cannabis. Nothing else. That's it. And financing. You know, I love financings. I love when money flows into the space. We have GTech Holdings Limited. That's OTCQB GGTTF.
Mm-hmm.
They're doing business as GTech Cannabis Company. They completed a bought deal public offering co-led by Desjardins Capital Markets and 8 Capital, and they raised 23 million Canadian. That's a little bit over $18 million US.
I have never been. I've never just bought into them. Maybe I need to look in it a little further. But to me, do you see them winning out, or maybe M&A taking them eventually? I'm curious your thoughts here, but I don't know. I think there's a lot of steps they need to climb to be a major competitor in this space.
Oh yeah, I mean, they're there. It's fine. I mean, the market reacting negatively to the race is also an indicator of something that Spencer was saying the other day on one of his shows, right? Are they raising money because they can or because they have to, right? Because you go to public markets to raise money whenever you want because you can, right?
Every CEO is always looking for money, even if they don't admit it.
This year, I think, is more of a need to situation.
Fair, even for optics. I mean, people want to see some movement. But as Patrick said yesterday, cannabis stocks have settled in a little bit, and there's some long-term growth value here. Who else? I think Grogen had a nice day. GRWG. Canopy was having a nice day. Didn't have, kind of tailed off at the end there. Who else? CBDHF. Decent day. Overall, I think you're starting to see everything kind of mellow out a little bit. And I think you're going to see a lot more acquisitions. Things will get crazy again. But ultimately, I love Next Green Wave. I've said that before. I think they're an easy one to see value in. I like Oxley.
What do you think of WeedMD? They got added to the Horizons ETF today.
I have always loved the quality. It seems that WeedMD, that they always look for quality, whether it's partnerships, whether they get good coverage on their product. They just can't seem to keep a hold of management.
True.
Like I mean, there just isn't consistent leadership there.
What about MariMed? They reported earnings today too, and I think they saw a turnaround.
They were a big winner, I thought. Where is that? MariMed. I just had it up 290% increase. Let me say that again. 290% increase. I mean, that's insane. Granted, the revenue is 20.4. So you're not matching the larger MSOs like a True Leave or Columbia Care or GTI. But I mean, Bob Fireman has just pounded the pavement, and he is starting to see the fruits of his labor. And that is consistent leadership.
Yeah, indeed.
I like it. I don't know. Did that answer your question?
Pretty much. Yeah. I mean, we've had Bob many times at Benzinga Cannabis Capital conferences or shows. And he's always like presenting the larger thesis, the overarching thesis for the company. And I think that is really starting to take on, right? Their focus on certain markets, right? And I think it's proof, right? You can see the proof is in the pudding. And, strong earnings, a recent financing, things, seem to really be starting to turn around for MariMed, small company.
Nah, I think Bob's done a great job there. I was going to ask you a question. Oh, did you all talk about Air yesterday? Air Wellness? And made two pretty major moves with a $101 million acquisition in New Jersey, and then the Arizona $75 million acquisition.
Yeah, big moves. And huge. Remember we were talking about Jersey yesterday and about different plays you can do, Cresco or TerraSend. And I think, this adds Air to the list of New Jersey plays if you think New Jersey will beat New York to the punch in implementing the.
When I first came across Air Wellness, and by the way, this is AYRWF, if I'm not mistaken. AYRWF is their ticker. Yes, when I first came across them, I was like, is this a real company? Like, their website didn't tell me anything. I was confused. I was like, what's going on here? And now they are easily a tier 1 MSO. And that was pretty rapid. I mean, that was middle of last year, maybe early last year. I was looking at their website. And they've exploded. And it's how they're spending their money. It's the fact that they are spending money, which I think also creates excitement. But, and I think the value will be there. I think it's going to be backed up pretty easily, personally. But this is one that has just come out of nowhere. And in my, going back to Jushi, this is where I see them moving. Maybe not quite as quickly as Air, but they are making very intelligent acquisitions. And once these markets that they're in start to become a little bit more, we'll say liquid, I think you'll see a lot more money flowing through.
Totally.
Anyway, Javi, 2 more minutes, man. Give us a shout out. What do you think is the major story everybody should leave with today?
Man.
Major stock.
Major stock? Not Sundial.
No, never. No, I'm just kidding.
You can check out the channel and pennant patterns on the technical analysis on benzinga.com/cannabis. Yesterday we had a technical analysis on Sundial. If you want to, learn more about it, just read. Don't be lazy.
Hey, we're all smart here.
Private company news. Yesterday we had an exclusive out of Banks. That's a recruitment platform for the cannabis industry. They expanded their offering to include an executive talent search service. And they added a 20-year veteran headhunter called Jennifer Bedford to lead this effort. And then the rapper, very well-known rapper, Russ, Russell James Vitale, but better known as Russ, launched a cannabis brand called Chomp in partnership with Wonder Breads.
Rob wants to know which cannabis companies we have positions in. My portfolio, I have several ETFs. I own CNBS. Obviously, all my own opinions. This is all what I own. I own CNBS, Tim Seymour's ETF. I own THCX. That's Innovation Shares ETF. I've seen huge value there. In John and Jarian, yeah. I've seen huge returns on THCX since I bought in. So I think they've done a pretty great job over there. Again, my opinion, not advice. But I also, I mean, GrowGen and Canopy are a must, in my opinion, for any portfolio long term. But I mean, past that, Akerna is probably another major one I can think of, an Organogram.
I mean, you're mentioning many of the safer bets in the sense that they're not competing for a piece of the retail sales pie, right? The operators are in this battle to get a larger piece of that consumer.
I also started investing on
Akerna. There's not a lot of competition for Akerna. Grow Generation has a lot of competition, but no one at their scale, right? And mom and pop shops are competing at a different level. It's a completely different league. What else did you mention? Well, then some operators, like Organigram, but
yeah, I mean, there are other, like I have positions in as well, but for me, like, I mean, there are some value plays. There are so many value plays that you're going to make money in this space. Like, I could promise you that. But, and we're here to tell you about the news, but there's a lot of good resources. And I'll tell you what, this guy's one of them. There we go. This guy's one of them. Awesome. So follow us both. Elliot Lane 10 on Twitter, Javier Hasse on Twitter, benzinga.com/cannabis. Javier gets to talk about this stuff all day long, and he's a genius at it. As Spencer called him, a reporter extraordinaire. And I'm just Elliot Lane. He just said Elliot Lane, and you're reporter extraordinaire, Javier Hasse. I'm never going to talk Spencer up again.
Master of partnerships. You could be the master of partnerships.
Master of partnerships. I do work on the B2B level here at Benzinga, so we'll say master of partnerships. Spencer, I hope you're listening. Javi, it's been fun. We got through a lot today.
As always.
To answer your question, Oliver, I mean, I think Organigram has so much room for growth. I don't know, Javi, why don't you answer that? I don't want to speak.
They were asking if they will
I would say yes, they will.
Because of the deal with British American.
Yeah. I mean, I think
they could. I mean,
yeah, it's like I think they will, but
yeah, why wouldn't they? I don't see it as an unlikely happening to see British American, by the way, ticker BTI. Confusing, but it's not BAT. But British American Tobacco acquire
your ticker. Got me too. I think they will, personally, Oliver. I'm a big Organigram fan.
Or why they would go acquire another one. And at some point, they will need to acquire a specific company. And unless, there's like regulatory, probably that's what they're waiting for, right? For some of the regulatory issues to clear so that they can, easily continue to be listed on the New York Stock Exchange. And
we got to throw it back to the team here, but Oliver, come back tomorrow. We'll talk about more about Organigram and BAT and maybe some more tobacco interest. But I mean, tons of news every day. So much happening in this space. We can talk more about our portfolios and our opinions if you want, Rob. Appreciate you all being here. If you had fun, drop a 1. Follow us on Twitter. We love talking to you guys about stocks. Ask us questions. It's been real, Javi.
Yo. See you Thursday? Yep.
Thursday, Cannabis Hour.
4:30 tomorrow, Eastern time for Cannabis Insider. 4 p.m. on Thursday for Cannabis Hour. Friday, 4:30 p.m. as well. Tune in every day. Don't miss us ever.
Boom. All right, Aaron. We'll throw it back to you, brother.
Get it. Oh, no Friday.
I'm here. Let's get these guys off. I'm here. All right. We're gonna re-air a show we aired last week. We have this show called First Trade that airs once a week. And I'm going to replay that right now. Producer Rohan, can you...
Welcome to...
There we go. He did it, guys. Look at that. Oh, now he stopped. Let's play it. Oh, my goodness.
We recognize that some of us are experienced traders.
And some of us aren't. That's why we wanted to level the playing field and make the markets accessible to everyone.
Thanks for tuning in, and we hope you enjoy the show.
What up, everyone? My name is Michael Murray. That's Rohan Makecha, and this is First Trade. Just wanted to welcome you guys to our 5th episode. 5 episodes. Wow, we're moving along here.
That's
one a
fast.
week. Time is flying. Today we have an exciting episode for you guys, and I don't want to spend too much time messing around. Mike, I know you like to mess around, but we have an amazing guest. I'm not even gonna try and build up to it because you know what? Austin Hankwith, financial TikToker.
He's awesome. One of the best. He's a
total
legend.
finance badass. I don't know if he wants to be described that way, but I definitely think so. Awesome educator, and we're gonna get into that.
Yeah, no, I've been watching Austin's journey now. Obviously, I watch all of his TikToks. The guy's awesome when it comes to financial education, and yeah, I think he's one of the best out there doing it right now. I think he's amazing at balancing financial advice with actually maintaining your money, staying safe in the stocks that you're trading and stuff. Not just making money and doing well in the markets, but in actual financial preparedness too, knowing what you're doing, protecting the downside, growing your assets.
For sure.
He's got the whole package going on.
He definitely talks about both sides, and I think that's important, especially for us beginners and noobs out there, to keep ourselves, financially strong, stay protected, but still have fun investing.
Exactly.
You want to hop into it?
Well, you got any big weekend plans?
Okay, folks, we record on Fridays, as you know, and today's not a Friday, it's a Wednesday.
Yeah.
It is Wednesday, my dudes. And so the weekend plans, I don't know. I'm thinking about just like relaxing, getting some work done. Typical weekend, nothing crazy. I am looking for a place to live in Detroit, though, so I might spend some time hunting around.
Any landlords down here? Let your boy Rohan know.
Hit me up. All right, folks, it is about that time. Like we like to do over here at First Trade, we're going to bring you the best guests, because you already know we got the best guests.
You can't call them all the best guests.
Of course they're the best guests.
They're not all the best guests.
No, they are like some of the best guests.
They're all one part of the best guest?
Yeah, like
Okay,
I'm not
that's
saying the
fair, I
best
like that.
guest of our show. I'm saying the best guests around.
Oh, the best, plural best guests.
Yeah, I know. I have to
Okay.
enunciate more. Sorry about that. All right, come on.
Okay,
Let's
all
get
right,
into
all right,
it.
let's do it.
The audience has been waiting. They don't want to listen to us. They're here for our amazing guest, Austin Hankwitz. Amazing, amazing guest. So excited to have him on. He's been on some Benzinga stuff before. I know he's worked with my pal Drew Levine. But Austin is a TikToker, finance TikToker, who is just doing good stuff out there, educating. I think he'll have a really interesting perspective, especially for you beginner traders. You might have seen him on TikTok, and you're about to see him here.
A legend. Let's bring him on.
Hey,
Austin, how's it going?
Good. I definitely not the best guest. I'm sure you guys are going to have incredible people after me, and you've had some incredible people before me, but it's nice to meet you all. If you're watching, you probably have seen me on maybe TikTok, and I've made a couple features with YouTube stuff and maybe Patreon or just whatever's going on there. But long story short is I picked up my cell phone about a year ago when quarantine happened. Super big into like Dave Ramsey and personal finance. And I was like, how can I share those ideas with everyone else? And I thought YouTube was the way to go. Turns out I'm terrible at editing videos, and it doesn't work. So I was like, well, what can level the playing field? What is everyone using to edit their videos and then sort of distribute? And that was TikTok. And so I shared a couple of videos about stocks and personal finance and investing. But actually, the first one was about dividend investing, right? Passive income, things of that nature. Did really well. People loved it, and just sort of built on top of that for the last year or so.
Yeah, no, I'm excited, and I love how you just got right into it, because that was gonna be one of my questions. I'm glad you knocked it out. As I was gonna say why you chose TikTok, and I think right here if we should play his first TikTok, so we'll cut it in.
So I'm sure you've heard from the coronavirus that the stock market is dumping. It is, but this could be good for us younger generations. Boomers have been able to invest in these dips. This was the housing crisis, mortgage crisis. This was the tech bubble. Here, this dip is the coronavirus dip. People think you need thousands of dollars to invest in the stock market. You don't. You really just need about 30 bucks. 420 blaze it. SPHD is a ETF that pulls together the highest paying dividend stocks, lowest volatility. They average 11% every year for the past 6 years, except for right now. This is what they contain. If you buy one share every single month for the next 12 months, you'll have invested $366, dividend cash paid to you $22, market value $423, profit almost $60. Let's pretend you're 19, you do it every single year till you're 25, only one share per month, market value almost $4,900, 35 total invested, that's a lot of profit, 88 shares, that's the dividend, cash paid annually $303.
What was that experience like posting your first TikTok? How did it go?
It's a good question. I was nervous, and as you probably all just saw in that video, my voice was nothing like it is now. I didn't have a personality. I didn't have any confidence. It was just like, here's my dividend ideas. What do you think about it, right? It was like just, first time really putting out stuff like that into the world. But I had some incredible feedback. I got like 1 million views in a couple of days. People were really excited to understand what passive income means for them and how easily obtainable that is by investing into dividend stocks, right? So, people might be like, well, what's a dividend? And just simply put, it's a cash payment to shareholders for owning stock, right? So I own a share of Apple, and so Apple will pay me cash for owning that share of their stock. And that's really just them saying, hey guys, we appreciate you all being shareholders. We're just going to take some of our profits in cash and just disperse it out to you all. So, and again, that's super simple passive income. It's probably the lowest, barrier of entry into that low-hanging fruit into what passive income can mean. And I think that's why it did so well. It just resonated with a lot of people.
So there's a question that we pretty much have to ask every show. The name is First Trade, and so that's why we want to, whether it's a trade or investment, we would love for you to walk us through. If you remember, whatever that ticker was,
I remember
how it went. sounds like
He
it's a pretty good
remembers.
story. So love to hear about your first trade.
Okay, so the first trade was back in high school. What happened was me and a bunch of friends got together, and it was just right after So quick background is Dave Ramsey was, obviously you guys know who that is. He has a class that he teaches that high schoolers are able to participate in and better understand financial literacy and investing. So we all went through that class and we're like, yo, stocks are dope. Let's do stocks. And so the first trade we thought about was Apple, iPhones, big stuff. We all have iPhones. We've got it. How can we maybe profit from Apple creating iPhones? And we did some research online, and we swear that we found the Chinese company that was creating the LCD digitizers for the next like iPhone 4 or 5 or whatever, 6, whatever year it was, right? And it was a penny stock. It was going to be great. I was like, oh, it's like 2 cents. It's going to go to $1. We'll make all this money. Like, didn't happen. Lost all of our money. It was a terrible idea. But that was probably that first, rude awakening to what, just how, I guess, volatile stocks can be, how unpredictable and how risky investing into things that you might not completely understand can be, right? And so that's why every time someone asks me about a penny stock now, or just, a micro cap company, I always make sure they understand just how volatile these companies can be. They're micro cap for a reason. They're penny stocks for a reason, right? If they had a lot of revenue or they had, an awesome product that was global or selling or something, they wouldn't be trading at a $40 million market cap, right? So, but yeah, that was my first trade, and very, very fun story to share with people. But it's it was a swing and a miss.
I like where your head was at though, because I was like, all right, Apple, pretty solid. Invest in what you use, and
he digs into like the company that's
you went into like you did your like investigative research, and not everything pans out, but I like where your head was at. That was
a
really
swing
great.
and a miss, but it was a better swing than my first swing. I mean, I didn't even like have any research into my first one. I'm just like I don't even remember what I bought.
I'm kind of on the same boat there too. So you're most well known for your content on TikTok, right? And as we kind of get potentially a lot of new beginner investors, the younger audience, into investing from there, where do you see TikTok taking a place in that? Do you think people stay on TikTok for stock ideas, or where do you see them like graduating to, I guess, as they become more advanced?
Most definitely. I think now as cable television becomes outdated and networks like CNBC and Fox Business, aren't really meeting people where they are, which is the TikToks, the perhaps Snapchat. I never thought about that, but Snapchat's the Twitters, the Instagrams, all that stuff, right? I feel like the traditional old financial media companies just aren't meeting people where they are. And I'm not saying that they have bad content. Obviously, they have great content. But I think a lot of people now are consuming their news, consuming their education, consuming every piece of their just social whatever, not on cable television like it used to be 10 years ago. And so how does TikTok contribute to that? Is obviously TikTok's not going away. There's no ban on it, right? That was definitely a big worry, but no longer something to worry about. Personally, I think that since it's such a low barrier to entry, there's going to be a lot of people that if they should be teaching stocks and personal finance and investing, probably not, but they'll still try. And they might have a quick little run up or like they'll got an audience from an idea or two, but eventually the cream of the crop rises to the top, right? And so as time develops and as time goes on, we'll see more and more people try and jump in, maybe to sell a trade, maybe to sell a course, maybe not for the right reasons. And those people will likely be kind of pushed out. And the ones that have continued to be value-added content, focused on answering questions, focused on education, focused on understanding where their audience is and meeting them where they are, both from a education perspective and social media perspective. That means are we hopping over to Instagram too? Are we hopping over to Twitter? Like whatever that looks like. But as that continues to develop, I think TikTok's stock talk, whatever, inside of the app will begin to mature a little bit. And people, I think, at least I hope, will be able to begin to see the differences between people who have been around like myself for over a year, or those people who are just trying to make a quick buck selling trade ideas or access to a Discord. I want every time I pull up maybe a financial report or some sort of information about a stock that I'm trying to relay to my audience, I show them where to find it, right? If that's the investor relations page of a website, if that's the SEC reporting files, like the raw files, or if that's maybe a press release on Global Newswire or whatever that stuff is, right? So I would hope that these people begin to graduate towards not just being inspired or blindly follow someone that creates content or has ideas, but then to look and find those ideas for themselves, and then also act on those ideas with information that they've gathered in the process.
Yeah, and that makes sense because Well, I mean, in general, right? You always want to recommend people to do their own research, do their due diligence, and that was part of it, right? Because TikTok, I feel like it's great because like people like you are providing really awesome due diligence, providing the research and the ideas together, right? So it's a really concise way of presenting that information. And there's an element of who do you trust, right?
Right.
Because I mean, in finance, in stocks alone, you know, how many pump and dump sites are there out there?
Lots. I would know.
Yeah. So stock Twitter has been a thing for a while, but that's more of people who are experienced. Things like Reddit too, you know, Wall Street Bets, obviously big in the news, big in the space. It's not only that like TV was kind of dying in the background and people realizing it's like right in front of their faces now, where, you know, the TV people are talking about Wall Street Bets and how they're controlling the market, right?
Yeah. So when you're talking about, you know, social media influencing finance, which is something that we haven't seen before because TV's been dying off, and not necessarily dying off, but it's had like the predominant hold on like investing and the thoughts and landscapes there. But now we're seeing like Wall Street Bets, you know, the social platforms being able to have an influence and a foothold in like what people think about finance. Do you see that happening with like TikTok or some of the other Stock Talk, some of the other social platforms being able to influence like moves in stocks and prices and fluctuations and stuff like that? Or do you think TV is still going to have the predominant hold in that for the foreseeable future?
I most definitely do. And yes, TV has a predominant hold in that. You know, CNBC, I think, is a very influential network. And when they have someone like Kathy Wood or Chamath Palihapitiya on there, they will, you know, whatever they're saying, whatever they're talking about is going to be influenced. You know, it's we like to hear from these people. TikTok, Twitter, you know, it all just comes down to the spread of information, right? That's the democratizing information. It's no longer just found on CNBC or Fox Business or behind a paywall on the internet. If it's like Bloomberg, if it's Business Insider or the Wall Street Journal, it's a level playing field, and people are now able to comprehend, understand, receive, get all the information out there at scale. I guess the only experience I have with this is you guys, I'm sure, remember Nikola Motors and the SPAC that merged with it. And I had a lot of people reach out to me about the SPAC, and I was like, dang, this is really cool. Like, they seem like they have billions in pre-orders, and if they do anything Tesla did, their stock price will go up like crazy. So I made a video about it, and it got like 3 million views in just a couple days, and their stock price went through the roof. And I was not sure if I had anything to do with that, but it's just that, you know, the spread of information on TikTok, it just spreads like rapid fire, and it's crazy. But I absolutely do see a world where information is taken from just every source of, I guess, social, if that's on TikTok, if that's on Instagram or Twitter, or if that's on traditional newsletters or a cable television.
Okay, so I actually had a follow-up question. The app Griffin, I'd love to hear you talk about that and how it might impact the future of investing.
So you download the app, you're able to sync up your debit card or a credit card, and then also your bank information. And so you go shop at maybe Target or Walmart or Starbucks, you buy something, and then they tack on an extra $1. And that extra $1 is invested into the company's stock, making sure that as, you know, consumers of products and services, we're also owners of the companies that produce those products and services. Super awesome. I love the idea. I was introduced to Aaron, the CEO of Griffin, a couple months ago. We at the time, he was pretty close to my house here in Nashville. Drove out, hung out with him, grabbed some beers, some chicken wings. It was cool. But I think why TikTok and why that video resonated so well on TikTok is, first off, if anyone's spewing, I don't know if I'm allowed to cuss here, but if anyone's spewing bullshit online, it gets sniffed out real quickly, right? If that's a pump and dump, if that's, let me just get rich quick, it gets sniffed out very fast. Aaron's app, Griffin, is very genuine. It's the underlying mission is so everyone is empowered to invest. If it's a level playing field, right? That's why I think it resonated so well on TikTok. Is there are humans on TikTok across tons of different backgrounds, and to have an app that can just, I guess, tick the boxes across all those different backgrounds and really resonate with people that can smell bullshit from a mile away, just like everyone else can on the internet, is meaningful. But, as it pertains to what I see that sort of transcribing into is now everyone is able to have the opportunity to invest into the stock market at scale without having to worry about, what do I buy? What do I sell? What was the name of that biotech company you told me to buy? What was the name of who's the next EV again? What's a SPAC? It's just like, live your life normally. It's a bottom-up approach, right? So like we've seen with Robinhood and Public and some of these other online brokers, it's it's a broker at the top, and then they make it more human by putting in celebrities or social media or gamification, where with Griffin, I see it as a bottom-up approach where it's like, you guys just live your life how you normally do, right? Go shop at Starbucks, go have your Netflix subscription, go buy stuff from Amazon. We'll just sprinkle in investing on top of that to bring you closer to where we think you should be. And I think that is what makes it truly revolutionary.
I think that's really cool because it takes the thinking out of it.
Yeah.
And I feel like once you see the investing and once you see it grow, that's where it clicks in your mind where you're like, okay, I want to get into this. I think this is good, right? And
I feel like it also plays into the psychology too of like when you're looking at, you know, your money and which stocks it's going into or which investments it's going into. I think it really brings the gravity in for people of like, wow, my money goes a long ways.
That's
love
awesome.
that because the psychology is like, it's bringing people to the point where they're realizing I don't need to be wasting money on this kind of stuff. I can just put more money into my stocks. And I think that's an awesome feature of it. I think it helps people grow.
No, that'd be awesome to see. And I think it'll be great for introducing a lot of new investors, especially like that younger crowd, you know, like whether or not they're of the 18-year-old limit yet or whatnot, but they'll get there, you know.
Yeah, talking about new traders in this climate, because this is honestly, this has got to be like one of the most interesting times to be a beginner trader. And obviously we've got so many new traders in the market too. Everybody on Robinhood, everybody get into it with their stimulus money and the money they've got sitting around. In this market, since we've had so many new people join, and now we've had the corrections and the rockiness and the red days and the green days, what advice would you give to beginner traders on how to handle a correction, specifically like people who have just gotten into it in the pandemic and are now dealing with the rough patches of the pandemic too? What advice would you have people for brand new there?
AKA me.
I guess there's two sides of this that I want to try and answer. The first side is my main advice for someone new in the stock market is I want them to understand that they need to have a foundation laid before they jump in and say, let me just go invest thousands of dollars into stocks. Right. I want them to say, I have my emergency fund. I don't have $20,000 in high interest credit card debt. You know, I've got everything figured out. You know, I'm investing towards my retirement through a Roth IRA. Now with this extra $700 a month, or now with this extra $4,000 or whatever it is for them a month, this is what I now want to invest in and trade with in the stock market, right? Because once you have that foundation laid and you see you're down 20% in a day, like some of these companies have been, or in a week, right? You don't freak out like crazy. You're like, whoa, okay, that was crazy. But like worst case scenario, I'm still retiring a millionaire because I'm doing the Roth IRA thing, and I got my emergency fund, no problems there. So that's the first big advice is like, make sure you have this foundation laid where when these market corrections do come, you're not over emotional because you need to pay your rent. You're not over emotional because you have student loans. You know what I'm saying? And then the second part of that is to make sure that the companies you're invested in, you understand, right? I understand if you're a new investor, you might want to jump on the hottest SPAC or a brand new biotech or a really cool EV company. But it's also super important to understand what these companies do, how they make money, and your investment conviction about them, right? So if I see a company trade down 20% in a week or 30% in a week, because I understand what the company does, I say, oh, sweet, no problem. It's now trading at 7 times forward gross profit instead of 14 like it was last week. This seems like a great buying opportunity considering that they're projecting great, revenue growth and high gross margins and things of that nature, right? So lots of profit in the future. They're trading at a discount. Let's do that. But if I was a brand new beginner and I didn't understand what these companies did, how they made money, it would be hard for me to really stay in the game and keep that long-term mentality.
Michael and I had talked about this a couple times too, is like in our first episode, we're talking about all these, meme stock traders or people getting interested in trading meme stocks, which I think is fine, honestly. But, just like know what you're getting into.
Really, yeah, go have your fun, do your thing. But like, let's make sure we don't have 14,000 in high interest credit card debt while we do it, right? Let's make sure we can pay our mortgage,
Good call.
And that's something I appreciate about you and your content too, is like, not only are you teaching about stocks and investing, but also balancing it out with like having solid personal finance, which I think is, really important. And I think one of the more recent ones you posted was about how do you choose how much to invest, like the percentages and stuff like that. Mm-hmm. And so I might even link to that in the description, because I think, we talked about it earlier in the show, and you did a really good job of breaking it down. So I definitely recommend the audience go check that one out.
That Dave Ramsey training shining through.
That's right.
Showing up. Love it. Yeah, I feel like, and playing off of that, probably our last question for you, I feel like really plays into that topic of, advice to new traders and how to handle the market and the corrections and having the balance of risk and also knowing what you're getting into. I feel like there's a way for new traders to take advantage of this correction in the market, but it has to be balanced with playing it right. right? Like you don't want to jump all in. You want to mitigate your risk. You want to, protect your downside and not jump into anything one eye closed, So in your opinion, what advice would you give to a new trader that wants to capitalize off of the correction? Because we have had a dip recently. And in that dip, where do you see the potential for a new trader to make a profit or capitalize and get something out of this dip that we've seen recently?
Most definitely. And just so we're all on the same page, you guys say traders, if they're trading, do that, all cool. I'm more focused on like investing, right? So we're doing like 6, 9, 12, 18, 3 years perhaps. So we're not just like trading on a week basis there, but
right.
Assuming, it's how do investors capitalize on, this recent downtrend? I would say, and here's what I'm doing personally, is I'm identifying secular growth trends, and I'm figuring out the companies that are operating best inside of those secular growth trends, and I'm investing into them. So you ask, what's a secular growth trend? Super simple example is the baby boomer cohort, right? 3.6 million people turn 65 every single year, and they will through about 2029, 2030. That means it's a lot of old people. What do old people do? They go to the hospital a lot. They need to get their, activities of daily living, which means they maybe help with dressing. Maybe they have mobility issues, transferring, things of that nature. And so you find the companies that are helping serve this larger growing population who are doing that very, very well, and invest in those companies. A great example of this is actually the company I just stopped working for recently is Amedisys. Ticker AMED. They've been crushing it lately. They're the nation's largest home health, hospice, and personal care company, right? So they have all those fun, those 3 things that happen when you're older, all packed into one thing. So it's like, yes, the market's down, which pulls Amedisys' stock down, and all these other companies' stock down as well. But with that being said, we understand where these companies are going. They're operating in these really cool secular growth trends that aren't going away overnight. They'll be here for the next 5 to 10 years. How can we invest into those secular growth trends? By investing in the companies that these trends will propel further, right? So that's the Amedisys in that that's the LHCG and that secular growth trend of like the baby boomers. But another thing on the other side of that's like streaming services, right? That's the Roku, right? That things of that nature. That's what I'm doing. I'm focused on these longer term trends. I'm trying to buy quality companies as they're dipped down with the overall market pulling everything else down. But I'm confident as these trends continue to come to fruition in the next 5 to 10 years, the companies that I've invested into will see the upside in that.
There you go, Rohan. There's your advice.
There we go. That's what I needed. No, I do really appreciate that answer. And I think, Jack Hurley also similar sort of thing he was mentioning with the secular growth trends. Basically, watching out for those industries like energy or whatever it might be, EVs, that's something that's like, going that direction. But the point that I think was really important out of that is trying to find the company that's doing it the best, right?
Yeah. Yeah.
So
huge. Yeah.
No, that was great. Austin, awesome to have you on.
It's been a pleasure.
Loved having you on the show. Loved hearing from you. I will be, continuing to tune in from your TikToks or to your TikToks.
100%. Oh, yeah.
But no, I mean, I really appreciate it. And quick question for you. I'd love to know what's next for Austin. You've been growing a lot this year. So, what's in the, I know you just mentioned you left the company. And so congrats on that.
So what's next, right? I have this sort of overarching idea that, maybe it's a realization. And I alluded to it earlier about traditional finance being sort of tired, lazy. It's not meeting people where they are. It's, Jim Cramer yelling at you on TV, or it's Fox Business trying to interview someone and it's boring. There needs to be finance content created and distributed where people are. If that's TikTok, if that's Twitter, if that's Instagram, if that's wherever, right? So, what I'm working toward over the next 6 to 12 months is creating some sort of finance media company with different personalities underneath of it that focus on almost every pillar of investing, if that's equities, if that's real estate, if that's cryptocurrency, if that's alternative assets like trading cards or Masterworks type stuff. But creating this company where we create content that's digestible, understandable, and meeting people where they are. So that's my game plan for the next 6 to 12 months. Can't wait to give you guys updates along the way, and would love to have you guys on for sure.
Dude, we'll be looking out
Absolutely.
for it. Sounds awesome.
I'd take you up on that for sure. No, that's awesome. And meeting people where they are is so important. Me coming from like a media and social media background as well, like that's always been the biggest thing is serving the content to the audience where it's at. That's where everything's headed. And I love your idea to cover every the spectrum of finance. So I'm looking forward to seeing what you create. Good luck with that. If we can do anything to help, absolutely let us know. And I appreciate you coming on, Austin.
Absolutely. Really appreciate it, guys. Thanks so much.
Good luck, man. Talk soon.
See ya.
All right, folks. Austin Hankwitz, solid dude, great guy. He's been on Benzinga like once or twice before. Shout out Drew Levine, you did the last interview. But you know what? What a fantastic guest.
Yeah, no, he was a fantastic guest. I mean, that was good information. Yeah, he taught us a lot. I mean,
It was
could've been
evident.
better.
So I loved what he had to say about stocks and finance because, I mean, unlike me, and I know, unlike me, he was very concise. He got to the point and he was providing that knowledge. But also, just for me, like, that man knows what he's doing. You can tell that he is a content creator.
He's sharp, yeah. And he didn't just
he's a content creator and an educator, which is why I think he does so well, which is why I recommend you guys check out his content,
Check him out
especially
on
if you're
TikTok.
beginner investors, because he gets right to the point, makes it easy to understand. It's like the best teacher you could have, you know?
Yeah. I love it that it wasn't just like general financial knowledge either. Like he covered the stuff that's in trend right now, the Wall Street bet stuff. Like how can the newer traders take advantage of the dip in the market? I love that because I feel like there are a ton of people that have just gotten into it.
He brought a different perspective because we do have a lot of traders on here. A couple episodes ago, Hugh Henney, we're also bringing in that investment side of things, and we want to make sure that the show, whether you want to invest long term, whether you want to make trades, whether you want to do both, we want to make sure we're providing that info. And I think Austin is a great guy to follow, great resource if you want to up your investment game.
Check him out. Look for his new company coming out. Everybody should
there
pay
we go.
attention for that.
I'm excited to see that too.
That's awesome. Yeah, super pumped for him.
And hopefully we can, maybe have him on again, or maybe some sort of work. But that was great.
That was sweet. It's a great interview.
Before we let go of you guys, though, just a couple things. We normally like to just talk about where our portfolios are standing, where my very beginner portfolio is standing. So, want to talk about that real quick?
Yeah, no, I mean mine is doing decent actually. Obviously it started red. It was a fucking catch up week. Brutal the first couple of days, but then it tailed up. I had a good couple of days in the solar stocks. Enphase really popped up for me again. I'm still holding Dogecoin for some reason. I couldn't tell you why. At this point, it's like, what do I have to lose? But I've got Enphase. A couple of other stocks I had did really well. One of them is Canopy Growth.
Nice.
Love that company. Still bought into the cannabis field, and I'm getting back into Calavo growers, which is actually what I'm really psyched about. Avocado grower and shipper and distributor.
Gotta love them avocados.
Very interesting, yeah.
All right, well, it was a mayo week for me actually, maybe a mustard week.
What's a mayo? What?
You said it was a ketchup week for you.
Yeah. What does a white and yellow week mean?
Dude, it was just a dad joke, okay?
What the?
Just let me be.
I thought you had like a point to that. I didn't realize it was just a terrible joke.
Well, it was a bad joke of mine, but let's talk about my portfolio. I have it pulled up here. How are we looking? Celsius Holdings. I was talking about it in the last episode.
You bought it?
I bought in, but get this. I'm so proud of my one with this one, and I'm not going to get overconfident. But so here we go. Starting of the week. Last week, I was like, I kind of want to get into it. Starting of the week, It was running up. It was 55, 60, 60, and we had earnings in the middle of the week. And I'm just like, everything I've heard is earnings can be risky. But I also was fairly confident. Luke was talking about it, that they were going to do well in earnings. So I was really struggling. I was like, do I buy this or not? And I was like, you know what? In the wise words of some other traders, even if I could grow, it's just not worth the risk at this point, right?
True.
I didn't have the appetite for that risk. So I was like, here's my guess. It's going to run up after earnings, and then for some random reason, it's going to drop off. Guess what it does the next morning?
Did it run up and then it dropped off after earnings?
Exactly.
Look at you go. Market pro.
I felt so proud of myself. It went from like the 51 when I first got interested but I couldn't buy in because the market was closed. And then it went up to like 67 or something like that, almost back up to its high, I guess. And this was right after earnings. And then like 3 hours later after earnings that morning, it crashed down to like 41.
Is that where you bought in?
I'm a little bit behind. I'm at like 45 because I got it on the uptrend.
Not bad though. Not bad.
I didn't want to catch a falling knife, as they say. I'm learning this terminology.
Terminology too. Sexy.
Yeah.
Man,
so like that's when the
nice
stock is
job.
dropping, but you don't know if it's gonna stop. So
yeah. Yep.
So I picked it back up on the uptrend.
Wait,
now it hasn't gone anywhere
what are we
crazy.
talking about again? Just mental exhaustion.
Celsius, the energy drink.
Yes, that's
one
what
you
it
could
was.
probably use right now. And so it is sitting. Oh, well, it just dropped back down to 45. Anyway, it's kind of been hovering around. It went up 47, 48. But I just have a feeling that this might pan out well for me. if anything, it was just a better place to buy in.
Love the read though. There was self-control. You didn't buy in before the earnings and just see what happened. You held off. You went with your gut there. That's impressive. Yeah, it's hard to go with the gut, man.
Yeah. And then I also got in BCRX. I bought $100 of BioChrist Pharma because I'm on the Biotech Buzz, and that was just like seemed like the stock to get at that time. But
Kirk's nice.
But Kirk's, and that's been going up and down. But overall, still in the green on that. All right.
Solid.
So we're making some recovery, although I'm still losing big on Torch and Huya.
Oh yeah, Huya was mine. I won't comment on that.
So that's how our portfolios stand. Maybe getting a little bit better. We'll see. Not don't want to get too excited. But
Subtle
with
brag.
that, folks, that is episode 5 of First Trade. We're chugging along here. 5 episodes already. Whew.
That's quick.
Anyway, if you want to be part of the community, make sure you hop in, join our Discord. And also, it is important to leave a review on Apple Podcasts. Why? That helps us grow. And if you want to spend time listening with your ears and you're tired of our faces, you can, listen to us there as well, or on your favorite podcasting platform. Speaking of Apple Podcasts, I put the challenge up last week. Whoever leaves the funniest review today, I would personally Venmo them, or I'd get their info.
Dude, apparently viewers don't like money.
No,
Do
I know.
people
I
just
was
not
shocked.
like cash.
$50. That's $50 to write 2 sentences or something like a meme on Apple Podcasts. And you know what? People didn't take it up. I don't know.
I'm just gonna make
we got
like 4
some
ghost
reviews, and to those of you, I don't BS around. Even though we didn't get the results I wanted, I will send you the money. So if you're one of the 9 people who decided to take that opportunity and go for it, leave a review on Apple Podcasts. 1, we appreciate you. But 2, looking like your chances are pretty good. So let's pick a review here.
1 of 9. That's pretty solid. Wait, are you just gonna pick from random right now?
No, I said the funniest one.
Oh yeah.
All right. The first one, Virgin Trader here. I am beyond pleased to find information on trading that begins with my kindergarten trading brain in mind. Seriously, I sat here with my notebook. I took a ton of notes. For full disclosure, I'm a former teacher and mostly self-proclaimed nerd. So note-taking is a thing. I've learned a lot. I'm home full-time. Time to learn. I'm willing. Excited for each episode. Thank you.
That's strong.
Kiwi Rick, thank you. Appreciate that. And you know what? Me too. I'm right there with you. Glad you're enjoying the content. Thank you for leaving a review.
Rohan's
Appreciate
also a
it.
virgin trader.
Yes. Waiting in line for tendies. Thanks, Rohan and Michael, and the Benzinga crew for guiding me through my financial journey and embracing me as the Titanic sinks. All right.
Ouch. That ended sad.
I feel it, though. I feel it. All right. I'm going to have to give it to Virgin Trader over here. It made me giggle, and appreciate your thoughtful review, even though it was funny. So I will be sending you $50. So make sure to email me, Rohan, ROHAN, at benzinga.com. And if you have a Venmo, if not, we'll figure out, whatever way you want that sent. But appreciate you.
Congratulations, Kiwi Rick.
Congrats. Maybe
Yeah,
next
man.
time we do this, you guys will take action because I don't BS around.
Dude, use the $50. Go buy a stock in Calavo Growers. That's what I would do.
Nice.
CVGW.
All right, folks, that was a good one. I think that just about does it for this episode. We're going to wrap it up. And Mike, my name is Jeff, and I'll see you next week.
Your name is Jeff? Wow. I didn't know you were actually going to do that, but I kind of like the way to end that as the show.
What up? Oh, that was... What is your ear shape like?
Fucking pear? I don't know. Wrap up the what the fuck? Use
Bye,
that.
Daddy.
All right. So give it up for First Trade, guys. Hey, let me know, guys, if you guys liked First Trade. One of the things is I know I enjoy that show. I've seen it plenty of times, and one of the things that I love is just how they look at each other, and it looks like they're just like right next to each other. I've always told them that. I know you guys probably enjoyed that. So up next, guys, I want to let you guys know we got a brand new show for you. I know that you guys are out there, probably just like a lot of people out there that have to go through trading, have to go through the ups and downs. And one of the things that I've gone to is swing trading, right? And so I wanted to bring on somebody that does some swing trading. So I'm going to go ahead and bring on my friend here, Mike, with one of the best shirts I've ever seen. Let's bring him on here. What's up? What's up, man?
What's up, Mitch? Good. How you doing, brother? Gotta rap. I'm a company man, Mitch.
Hey, I see it. I see it. The Detroit looking good on you, man. I'm interested in hearing what kind of stocks you're going to be talking about today. So definitely that's going to be fun. So if you want, go ahead and get your shared screen ready. But tell us about why the working man and how do you get to work and swing trade at the same time? How does that happen?
Well, I know I can't be alone in doing this. I know there has to be plenty of other people out there that do this, but I got to pay the bills. And with what I have available to me right now, I couldn't possibly trade and pay the bills. I have 2 children, so that's the most important thing. So I have to work full time. So in order to do that, you have to have your travel station ready to go. You got to have whether you're on your phone or you got a laptop or you got your tablet, you got to be ready to rock and swing trading in between work. And it's possible. It's definitely possible. I do it.
Yeah, definitely, guys. I mean, smash the like if you've ever done
sure
some
there's a lot more people
work
out there
and
smarter
swing
than me.
trading at the same time. So smash that like. I'm sure we'll get some likes after that. I mean, that's what I do now a lot of the times because, as you can see, I'm usually on screen. So a lot of times it's kind of hard to stay with my trades, right? Like you'll see me do a little peek over my shoulder. Like if you ever see me do one of these in the show, if it's my right shoulder, that's that trading platform look. Oh, okay, all right,
Stop
we're still
losses
good
are
there.
so important to the work and swing trader.
Yes. It happens, I don't know if you use stop losses, but I'm interested in hearing more. But let's get into your show. So I'll go ahead and I'll hit it on in the back. If you need me, let me know, Mike. But I'm gonna let you take over, and you guys check out the work and swing trader here, guys.
Thank you, Mitch. Appreciate it. Well, Benzinga, what's up? For the first time ever, I'm on the other side. Usually I'm in the chat watching, so it's kind of cool to be on this side. And let's see if we can't make some money together, because that's really all it's about, right? We'll get some swing trading ideas and some stocks that I like. And,
Hold on. I just want to interrupt you there, Mike. Sorry about interrupting, but looks like the chat wants to know, where's that accent? Is it New Yorkin? Is it Boston?
Boston, baby. Park the car.
There you go. There you go. Talia's stepping up for you. She stepped up for you. She said, no. Don't talk about New York. He's from Boston. You're going to upset the man
Never. I got Red Sox on my skin, baby. Never.
Hey, I can't blame you for that. I'll tell you right now, way more of a Red Sox fan than a Yankee fan.
Well, I knew you were a smart man, Mitch.
And Fenway Park, that's a beautiful field. So I'll let you take over. Have fun, man.
Thank you. Anyway, yeah. Boo, Yankees. Let's go, Red Sox. But there's, we'll start like that. Red Sox, Yankees, big rivalry, right? And just like what's going on in Washington right now between the Democrats and the Republicans, big rivalry. But what we can do as work and swing traders is we can find the stocks that will make money on a rivalry. Like tomorrow, Joe Biden is going to be announcing a big infrastructure plan moving forward. So I think what we're supposed to do right now as what I do as a work and swing trader is I'm looking for what's going to give me good play. So what I've been looking at for stocks is, of course, when you're making an infrastructure bill, they're going to need steel, right? And everything has been so geared towards American-made steel. What better than the biggest American steel producer in the country? My screen should be coming up. Here we go. It's mega zoomed. I'll fix that. Sorry. Not really sure why it's like that. Help me out, Mitch.
No worries. Go ahead and do a reshare. Maybe it's just a zoom in the top corner. Not a worry. If anything, I'll let me get my.
Here we go.
NUE, right?
Okay, sorry. That should come up now. Okay. NUE, New Core Corporation.
No worries. I'll help you out here with my charts
Here we go.
All right.
Yeah, you pull it
So
up
we
on
got
Pro for me because apparently this is NUE Nucor. Yes, sir.
There we go. We got the stock up here. I got the daily chart looking like we got up towards
Let you bring up
the
yours
80s here. So there you go.
Okay. All right. This stock myself. Yes, I've been in this stock since the 60s myself. I have two really good friends of mine who will do the same thing. They're doing the same thing from their phones and tablets every single day. The DeFrancesco brothers, and we were really after once we saw the cyclical, we saw everything being cyclical. You know, we saw that once the yields were rising every day, everything was coming out of tech and going into your steel, lumber, things like that. Plus, with the infrastructure on the horizon, we started researching what American steel company, which is what I feel is coming, because as we know, as traders, it's impossible to time the market, but it isn't impossible to time politicians, right? So we can time what they might do. So that's why I took a look at NUE, Nucor. They have their hands in everything that has to do with construction in America. They have their hands in non-residential construction, residential construction. They have their hands in auto. They have their hands in renewable energy. They have their hands in heavy equipment, agriculture, everything that has to do with construction, they own it. And 2 days ago, they just bought a wind farm. So they're really getting big into the renewable energy as well. And as you can see from this chart, it's just been a straight up ride since the 55. And luckily this chart does go back. And now I think, can you pull it over to the left a little bit? Something I always like to do when I pull up charts is look left, right? So you see where the stocks came from. And as you can see, this stocks, this is the highest this stock has ever seen in its life. So, thank you. There we go. There it is. All right. As you can see, it didn't benefit much from COVID, from the crash from COVID. But as you can see before in 2000, what was that? I'm sorry, I can't see yours as well. In 2008. Now, why is that? That's the year that's the year I was most interested in. Why was it so high in 2008? Well, that's the last time a Democrat did an infrastructure bill in this country. And look at that. So, and that's before the technology we have. That's before Nucor had started dabbling in renewable energy. And now, again, can't time the market, but we can time politicians. And right now, the politicians are big on green and renewable energy. And in that infrastructure bill, they'll probably be tying in higher taxes for corporations that don't invest in renewable energy. So a company like NUE will see a big kick if they do make some type of tax breaks for companies that invest in renewable energy or that own renewable energy. So I see NUE again getting a big kick from the infrastructure bill. But even if it doesn't, this country is about to be on a boom in building. I mean, the building that's about to take place in the U.S. is unlike anything seen in the last 50 years. So even if there's nothing inside the bill that could give American steel a kick through NUE, I think NUE still has room to run. Now, Neil, my guy Neil Hamilton, 9:15. Get technical with Neil. I'm a company man. 9:15 a.m. He stole this from me on Twitter. He didn't ask for any tickets or anything. He just saw me tweeting about it. And he stole it from me. So he featured it on Monday. So thanks for that, Neil. It was Monday or Friday. I can't remember. Thanks for that, Neil. But he did shout me out. So I will give him that, even though he stole it from me. But so yeah, NUE. But sticking with the infrastructure, Mitch, do you mind pulling up IEA for me, infrastructure and energy alternatives, please?
Let's do it. IEA here.
Now
I
this
like
one's
these names. I haven't even seen these before, so I like these.
Yeah, we try to find ones that aren't oversaturated. I don't personally. I'm not a fan of Reddit and Wall Street Bets and all that because they mud up my good trades. Anytime I get a good trade, it ends up on Wall Street Bets. I try to get out if I see a volume kick because a lot of the times I don't need 200 million volume to make something go. I like slow, steady builds. I don't always like a big kick because, you get the rug pulled out from you pretty quick. Now, before I came on today, IEA, thank you, Mitch. Before I came on today, I noticed that this was kind of starting to have a falling wedge, which is a good thing. I found in the past that sometimes falling wedges, sometimes not all the time, but usually a bullish falling wedge can mean a breakout soon to come. Now, I like as well, as much as I like fundamentally looking at a company and looking at the trends, seeing what's in the pipeline, I always pull up the chart first. And when you see something like that, it's always promising. But if you want to talk about a company that already has its hands fully in the the cookie jar on renewable energy and green construction alternatives, this is the company. They're the leading green infrastructure. They've been the leading green infrastructure company in this country for a few years now. They have wind farms in Georgia, Hawaii, the two biggest ones in the country, in Texas. They have wind projects in 36 different states. And again, I am banking. This is more of a gamble than NUE because I feel this, I'll be upfront about that, because I feel this stock is going to need some play from an infrastructure bill to get a nice kick. Again, the chart does look a little bullish, so that's good. But I do feel that for IEA to have a nice run, maybe up into the 20s or something like that, to be up there again, you would have to see a good kick from a Biden bill. And I just can't imagine that the leading green construction company in the country isn't going to see some play from an infrastructure bill. And, I can't help but think about just a few years ago that anytime Trump would come on TV and say a company's name, they would absolutely run. So, maybe this company comes up through Biden. Maybe Biden drops a company name and we get lucky. Doubtful, but you never know. But I just like this company from a green standpoint, especially the way this country is really gearing up for green building, for changing the way we build, for changing the way our buildings last through, green energy. And like I said, they've got their fingers in the bowl here. And just for reference, back in 2012 in lovely Detroit, Michigan, they came in a 61-day overhaul on Marathon Oil. Everybody loves Marathon Oil, MRO. Everyone always talking about Marathon Oil. But back in 2012, this company came in and actually made their refinery more efficient by like 250%. So this is a company that knows how to work with other companies, can come in and get out. And if you I listen to Bloomberg Radio a lot when I'm not watching Benzinga, and all I keep hearing on Bloomberg Radio is that they're going to concentrate on the joint efforts of public and private construction. The IEA, again, it's the biggest country for doing that. The biggest company for doing that in this country, joining private and public ventures. So I'm very bullish on IEA. It had a tough run in the last couple of weeks, but I own this stock. I've added to this and I'm holding. So I like IEA. Now, I was going to go three for you guys. I was going to do 3 infrastructure bill plays, but I just feel like everybody's talking about infrastructure bill right now. You can't help it because it is, there is going to be kicks from it. But now I'll go to one of my favorite stocks. I own shares of this in 3 different portfolios, and I own calls on this. WWE, please, Mitch.
Boom.
Boom.
You got it.
What is, if you smell what this stock is cooking, right, baby? Let's go. Okay. Look at WWE pre-COVID, $95 stock. Okay. Obviously fell off because when you have, it falls under the sports parameters where, ticket sales is a big part of the revenue for this company. So when ticket sales fell off, obviously the stock fell off, just like everything did in this market around the pandemic crash. But they have a WrestleMania coming up on April 10th and 11th. It's the first time that they're doing WrestleMania on 2 nights instead of 1. So that's big. And it's also the first time they're going to have live fans since the pandemic. So that's also very big. I was looking at ticket sales. There's like $4,000 per ticket and they sold out, within a day or two. So there's definitely people wanting to go. It definitely still has the eyes that it used to have. Not just that for WWE, but recently they did 3 big deals. They extended their partnership with USA, and that's more than just Mondays and Friday nights, because on Wednesday nights, and I think it's Thursdays as well, they have shows that they get paid for. They have the Miz and the Misses, and they have Stone Cold has a show as well. So that's something that you can look at for a longer period of time. Even if wrestling falls off, you still get ratings for WWE from these other shows and these other kicks. Not only did they extend their partnership with USA Network, but they used to have, WWE used to have a subscription, a pay for subscription. You know, you get all the old wrestler matches. You get the pay-per-views for next to nothing. It's like $7 a month instead of paying $60 per pay-per-view. I was a subscriber because I have a 6-year-old who is nuts over wrestling. So, I saw that any subscription you got to pay for, that just drives revenue all the time. Oh, we smell it, Johnny Brooks. We smell them stocks, baby. Let's go. No, but anytime a stock can create revenue is good. And where was I going? And anytime you have that paid subscription, that's the best because that's money always coming in. Now, they did just end that because they did another partnership with Peacock. That's NBC's streaming app, which ends up being, I think that ends up out to $10 a month. They gave WWE Network subscribers half off, and that's where all the pay-per-views will be listed now, which is good because if you have cable through Xfinity in this country, in the USA, you get you either get it for free for the first couple months or you get it at a discount. So that's good. That puts more eyes on WWE. And then on top of that, they did another partnership with DraftKings. They're going to have a free-to-play type of game through the DraftKings app, which should make for interesting eyes because now you'll have not just people who follow wrestling, not just people who follow sports, not just people who watch it because their kids watch it like me, even though I'll be honest, he goes to bed some nights and I watch the end of it. And then I'm like, oh, I didn't watch it. Let's watch it on YouTube. I watched it. I watched the whole thing, texted my friends about it, but that's neither here nor there. So they did a partnership with, that was what I was saying, with DraftKings. So that will bring the eyes of sports bettors to it because now, you could have a couple bettors that are ass out for the night and they want to play some free-to-play games. They can win some cake. You'll have more eyes on these WWE events. So I am very bullish on WWE. I see WWE going back up to the 90s before the end of the year. I don't like to hold stocks that long. There's not many stocks I do hold long. I have a long portfolio for that. But I have WWE in all my portfolios. I swing out of Moomoo, which is by Futu Trading, and I swing out of Robinhood. I am a proponent of Robinhood. I like Robinhood. I know a lot of people hate Robinhood and hate Vlad, and that's another take for another day, but I am actually a Vlad guy. So sorry if you like me, but I'm a Vlad guy. But so I'm bullish on WWE. This is a great buy. It's only going to grow. And I think after April 10th, I think that's when the real climb begins for WWE. Now, I wanted to kind of go over with you guys about how I set up for the day. Now, my wife and I, we use the 5 Ps in our home, and now I've used it investing now as well. The 5 Ps are piss poor planning prevents perfection. Now, we can never be perfect on the market. It's impossible unless you're Warren Buffett. And you can even make a case that he's not perfect on the market, but it's not possible to be perfect on the market, but we can be fully prepared for each day. So what I like to do every night is I'm going to try to screen share again, Mitch. I like to use a stock screener by FinViz. It just gives you an idea. I use 3 different types of presets. Let me pull it up and I'll show you guys what I'm talking about. 1 second. Now, here we go. All right, good. That one's a lot better. Okay, so FinViz is a free-to-use website. They have an elite subscription that you can use to get more out of it, but this is a free website that you can use, and I use it to scan to look at what stocks were hot during the day, what stocks are moving after hours, and what stocks are shorted overnight. Now, while that last one that I mentioned doesn't always turn into money, I used that stock once to make the most I've ever made on a stock was by using the most shorted overnight scan. And so this first one that I use, I'll be honest with you, I got these scans off a guy on YouTube. Everything that I've learned about the market, I've pretty much learned off YouTube or from reading books. I didn't go to school. I make gravestones. I'm literally in the cemeteries every single day, and when I'm not in the cemeteries, I'm in the office. So when my kids go to bed, I'm watching YouTube videos. Benzinga has unbelievable seminars over the weekend. I've learned a lot from that, especially the penny stock ones and the small cap trade ones. Unbelievable. But basically all my resources are through YouTube and Google Play Books. I just read everything. So I learned these scanners off a guy, Mike Silva, on YouTube. I forget the name of his channel, but it's definitely been good. And as you can see, they have your presets. If you want to copy it, you can take a screenshot of this or something. But so it just shows you that the industry it's in, it's stock only. It gives you an average volume over 1 million, because if you're going to be swinging something on the short term, you do need the volume. I know you heard me say that I don't like volume in some of my trades, but when I want to make a quick buck, of course I want volume. And you're only looking at the performance from that day. Okay, so this should show you stocks that have an unusually high volume from the day. So I just like to click on, and I'll scroll down, and I look certain on the chart to see if I'm even going to click on. But the biggest thing I like to do here is, before I do anything, I see what sectors are coming up the most and in what industry, right? And look at that. Top 4 communication services, they all had insane volume. The top 3 all had huge volume, 9-figure volume. And as you can see, some of them went through some big changes. So this kind of gives me an idea of what's going to be hot the next day or that week. So, what I'll do here is I'll look, see if these charts pull up here on for, but they're not pulling up. I'm going to click on Viacom real quick, because I have Viacom as a buy right now. Not that my word means anything, but they've had such a horrible run the past couple of days. I just can't see that staying the same. So it's not going to pull up for me. It's giving me a hard time. But this is, as you like, I'm just trying to relay that these are the stocks that had the highest volume uptick in the day that don't normally see this higher volume. So this gives you an idea where the money is going for the day, which is huge to know, because then you can start to think about where the money's going to go the following day. And now it's going to pull a chart up once I'm done about it. But I'm going to go back. I'm not even going to pull that chart up. I'm sorry. But
all right, Mike, I'm going to cut in here a little bit. I'm going to cut in here a little bit. We're losing you a little bit on the audio side, so I want to make sure.
I don't know what everybody's financial situation is, obviously, but what mine is I don't have $25,000 of liquidity to put into an account where I can day trade all the time. So what I'll do is if I have a stock that I think is going to pop the next day, or one that comes up on one of these scans that I think is going to pop the following day, is I'll buy it at if you have the capability. If you're on only Robinhood, you don't have the capability, but I'll buy it at 10 minutes of 8. I'll buy it with little time to go the night before. That way I don't waste one of my day trades come the next day. So a lot of the times the stocks I see, something is going to get bought usually. Not today, and there's a reason for that. There's a reason I'm not doing much the next couple days. I've just got my holds and stuff, but that's something for another time. So my next scan here, I got 2 more. I don't know if I'm overrunning my time or anything.
I'm gonna cut
2 more scans here real quick.
I'm gonna cut in here for you. Mike. We got the next show coming up, trading Nomadic coming up, but definitely one of the major stocks you called Viacom, but I'm looking at Discovery, so I'm gonna definitely keep that one on my radar. Like always, guys, if you guys enjoyed swing trading here and want to see some more, leave us some comments after this show. And like always, you guys can find him in the description below. and hit him up on Twitter if you got some questions about some of these swing trading strategies or maybe some swing trades here. So definitely check it out, guys, for the working swing trader. We'll see you next time, Mike. I think we're losing you a little bit, but we'll see you next time, Mike. Appreciate you coming by. Love the shirt. Looking good. And go Red Sox, right?
I'm not even sure Mike can hear us. Mike, can you hear us?
I'm not even sure, but you got to work with what you got, right?
I guess. Mike, if you can hear us.
We love you, Mike. We enjoyed it.
Do not endorse the Go Red Sox comment. All right. That being said,
whoa.
We ran. No, I'm done. We're not doing this. We ran a few minutes over. It is time for trading Nomadic. Let's get him on. And no, let's run the video and then get him on. How about that? How we doing, sir?
There we are.
There we are. Look at
that. I want to address the elephant in the room. This guy's got the fancy shirt. I don't have any fancy shirts, and I'm wondering what that's all about.
That's okay. You're rocking the deep V, and that's.
I have about 120 of these of the different colors. Every one.
Okay.
It works. I roll with it.
All right, share your screen for us. Show us your charts.
Yeah, let me share here. Screen. There we go.
There we go. We got it. All right.
Well,
tell us what we're looking at here.
I'm on the Bitcoin chart right now.
Okay.
Last time I talked to you guys, we were down in this area right here waiting for a recovery of some kind. And obviously anyone who's into crypto, into Bitcoin, obviously has noticed that we've totally changed directions. And this is something that I called out on my Twitter. One of my main strategies when it comes to trading, when it comes to swing trading, is identifying harmonic patterns on bigger time scales. And this is a 4-hour chart here. And this structure right here is a bullish harmonic. It's shaped like an M. Anyone who was here last week, this week I'm trying not to get into the strategy as much as I did last time. I want to talk charts. I want to talk trades. I want to give you guys some stuff that's actionable. And this is one of them. This is one of the ones I brought up on my Twitter. But anyway, it's a bullish harmonic. This is a bullish Gartley. And with bullish harmonics, you generally get this M shape. And your entry is going to be right here. It's an XABCD pattern. You start out, the X is going to be the bottom of the first impulse up to the A. You got the B, which is going to be this area, your first swing low off the first impulse. You got the C and then the D. And this is something we identified on Twitter not that long after I did a show with you guys last week. And the D point is going to be your entry, generally speaking. A lot of the times with bullish harmonics, you'll get an initial reaction at this D point, and then it comes down and you get a confirmation low that basically says, hey, we found a bottom here. We retested it here. And as a swing trader, that's where you're going to want to enter. You want to make sure that this is valid. One of the ways we discussed it last week is using the MACD or the RSI to identify not only the end of the formation, but a bullish divergence in the trend, which means basically from this C point, we're coming down with a price action. And then down here on the MACD, we identify that the momentum at this point, which is right up about here, and this point, which is our D, which would be the PCZ of this harmonic formation, you can see the momentum is waning. It's reducing. There's not as much negative pressure trying to bring this price down, which would tell anyone looking for an edge to get into a trade on Bitcoin or any asset. This might be a point where the price action is going to make a turn. And as you can see, at this D point, after we identified bullish divergence on the MACD, the RSI has bullish divergence too. This is more of a continuation divergence though, Class C bullish divergence. It basically says we're going to continue this trend we've been on. And I mean, anyone who's been following Bitcoin, you could tell we're on a hell of a bull trend. We have been, this year specifically is big for Bitcoin because it's a 4-year trend when they do the halving of the Bitcoin supply. So generally speaking, this is a bullish year for Bitcoin, and we're in a bullish trend. And we have support from the oscillator saying that we were going to continue that trend. The MACD was implying that we were going to stop this downtrend that we've had going on. And this is something I put up on my Twitter. If anyone follows me, it's Trade Nomadic on Twitter. But you can see right at this point, we never got a confirmation low. We're in such a bull trend when it comes to Bitcoin. The supply shortage is a factor as well. And you can see right from this D point, it's just been up and up and up and up. I've made some targets here. I think eventually, whether it's a straight shot to it, or we cool off a little bit, come down, maybe retest some of these highs we've had previously as we came down on this harmonic trend. Eventually, I believe, it's not trading advice, but it's something I believe in. I believe our next target's going to be up around 72,000. I think my number was like 71.80 pennies when comparable to, the ultimate trend that we're in. But I've got a lot of interesting plays this week, and this week I did come bearing gifts. Somebody asked me last week if there was some kind of indicator that could help them identify these patterns, and I did come up with one that I like. It's not perfect, it's all algorithmic, but if you're in TradingView, if you're in Benzinga and you type in harmonic patterns, you're going to see this second one here. I'm not sure what the rest of it is, but it starts out, Lonesome is the guy who wrote this script. If you add that to your chart, it'll identify stuff like this. This is a bullish Gartley formation, a little bit off, but it's a bullish Gartley formation. And the idea of it is once you get this first spring up, and then you get this retrace, which would be down to the 618. If you're familiar with Fibonacci, it would be the 618. And then you're going to get a second swing high up here, which it is going to ultimately give you, if you're trying to identify a harmonic, it's something that you could look out for. Once you see this first impulse up, you see this impulse down to the 618, the retrace. That's when I would start looking for this D leg. Whether it plays out or not is a whole different story, but it's something, it's just one more edge that you can kind of keep an eye out for if you're trying to identify harmonics. And the D point, ultimately, when you get down here, is going to be where you'd want to enter the trade. That alone isn't enough for me. If you guys were here last week, I want to take into consideration every variable that comes with this trade, right? At this D point, we also had the bullish divergence on the MACD, and this is on a 4-hour chart. When it comes to harmonics, generally swing trading alike, I like to stick with the 4-hour and the daily charts, because with swing trading, you're looking for a longer move. You're not looking for, hey, can I scalp a few dollars here and then change my position by the end of the day or within the week. This is something that's going to usher in a massive trend, whichever direction that it's implying. And on Bitcoin, this was an uptrend. This is something I've been sitting here waiting for. I've been waiting. I'm not the type of person that really tries to get ahead of the trades. I want everything to agree with, what I'm seeing, my philosophy. And in this case, we had the MACD implying, this is, this trend coming down is changing. Same thing with the RSI. And as you can see, this played out pretty well. This was our first target over here at the B point. But when it comes to the textbook targets for bullish Gartley, you're going to be looking for C, which we've hit. A, which is going to be about 61.5. That would be our next target. Now, it's not necessarily going to be a straight line there. But if you get a proper entry, which is something that I teach, I've got a group of friends, local traders that I teach this stuff to. If you get in at the proper time, you don't got to worry about all this mess in between, and that's the beauty in swing trading, right? I can set my trade up. And with any trade, I like to go for at least 3-to-1 reward to risk. All this stuff in the middle doesn't matter, because I would set my stop loss underneath this D point with a little bit of room, for volatile markets, for, news that might drive the market in the direction that kind of invalidates all this stuff. I'll give it a little bit of room to breathe. But as far as swing trading goes, I've got all this. This is just, it's just profit. It's just static in between my entry point and where I'm going with this. So it doesn't really matter to me. But ultimately, one of the targets of the bullish Gartley is going to be this 1618 Fibonacci. And if you're not familiar with Fibonacci, the way I ran this is from the X point to the A point. And it's going to bring you up in this area. With harmonic patterns on these time scales, I always set up my trade in pieces, right? When we get to this point, I'll take some profit. I'll take some profit up between the A and the C. And then ultimately, the home run Casey Stubbs target is going to be this, whether it's the 1414, the golden ratio, or the 1618 with a bullish Gartley, which is confluent with this other target I've had in the past, which is going to bring us eventually to 71,800. And nothing's changed my mind about this since I entered here. But my whole philosophy between setting targets and stop losses is, if I'm entering this trade because I believe this harmonic pattern between the oscillators is going to play out, if it falls underneath D, well, that kind of invalidates my entire thought process behind the trade. And not to say that I can't re-enter this trade. Say we broke below D and ended up finding support at one of these other historical levels. I would still re-enter the trade when we get back up here, because 84% of your trades, 84% of your good trades that fall below your stop loss and end up coming up and re-entering your initial trade zone with your same trade variables, 84% of them trades are going to end up playing out and being profitable for you in the long run. Whether it happens the first time or whether it doesn't, the stop loss is going to get you out because initially your trade was invalidated. And if you can get in at a lower point with support from other variables like the oscillators, or whatever it be, that's going to give you an even better edge than entering where you were. And it's going to eliminate the risk. You know, say something happened outside of the normal variables that would make this trade equitable. It's going to get you out. You've got your money, you've got your cash on the sideline ready to go. So if you do find another entry that makes sense, you're ready to go. You minimalized your loss, and that's the beauty in swing trading when you have a good entry like this. Because if I enter here, there's only so much room for my calculations to go wrong, right? If I enter here with confirmation, obviously from my little laundry list of variables that I like to look at, I've only got so much room before I get stopped out. So if I lose, you know, a couple percent on this trade because it was invalidated, it takes all the emotion out of it. I don't have to think about it. I don't have to question, hey, how long am I going to wait before I get out? I don't want to deal with that. Like, you know, the guy before me was saying, it's swing trading works great for people who don't have time to look at the screen all day. We're looking for big moves. I'm not looking to make a couple bucks here and there. I'm looking for a big move, and that's why I use 4-hour daily charts. I'll look at weekly charts for confirmation. For scanning, I start with a 4-hour. I look to the daily to confirm what I'm seeing on the 4-hour chart. And you know, if I want to add to it, I'll go to the weekly. And if the 4-hour, the daily, and the weekly chart are all telling me we're looking for higher prices, well, that's a trade I want to take. But this week I want to do it a little bit different. Last week, admittedly, I kind of slacked a little bit when it came to the chat. And that's something I want to do this week a little bit different. So anyone who has a ticker they want me to look at before I get out of here tonight, I'm going to add all these tickers to my watch list specifically for this stream. And I'll try to catch as much as I can at the end of the stream. And if there's anything I don't catch, I'll add it on my Twitter. I'll add a chart, something that kind of goes along with it. If we get a lot of them today, what I'll do is I'll go through them quick. You know, I'll analyze a chart just from what I see real quick. And if there's something I want to add to it, I'll go ahead, I'll drop it on my Twitter. But again, nothing I'm going through today, nothing I'm looking at. This is not advice for trading. It's not something I'm going to give you. All I do is read the charts. And ultimately, with swing trading, the more variables you got that agree with your sentiment, the better. You know, obviously, Bitcoin's an easy one. This is something that if I was wrong here, if I didn't have a stop loss, I'm okay with it because Bitcoin's been in a massive bull trend. And so far, there's nothing here that has told me otherwise. So if I end up, you know, losing a few bucks, I get stuck with, you know, an entry on Bitcoin that isn't favorable to me, I can always dollar cost average. You know, if I see another point that seems like a bottom, I can average my way down. And ultimately, when it does turn around, it's in a bull trend, I'm in a better position. You know, my cost basis is lower. So I got in the chat here, I think this one's for me. I got Fubo, I got AI, Baba's one I looked at the other day. I'm going to toss this on here. Just so I give you guys some value here. I'm going to go through a few trades that I've personally been looking at, just real quick, and I'll tell you why I've been looking at them. And at the end here, I'll go through these trades quick. If I don't get to all of them, again, I'm going to put it on Twitter and try to give you guys some value, some actionable plays here, some trade action, and we'll go from there. But another one, Palantir. Palantir is another one somebody brought up, I think last week. And we initially had this bullish harmonic on the left here. And if you look, I got these red lines lined up with historical support. And with harmonics, that's what you want to look for. If you get a D leg of a harmonic, you kind of want this to be at an area that is historically important, right? Because a harmonic in most cases is a reversal formation. This harmonic is developing while we're on this downtrend, and D would be the reversal leg of it. And if you look right here, and if you look right here on Palantir, those are both historical areas of support and resistance, and that's where the D leg ended. So that gives it a little more credibility. And obviously the oscillators is very tough to see, but we have this bullish divergence here, which shows that the MACD is coming down while the price action was coming up, which would make this hidden bullish divergence. It's more of a continuation pattern than a reversal pattern. But you could see we got this reaction. This little scam wick came down, hit the D point of the harmonic, and came just straight shot right up here, and then came back down. And that brings me into a whole different pattern completely, because this whole structure, including the harmonic, is now formed what's called a bullish dragon harmonic. And if we zoom in here a little bit, you could see we retraced from this point here. The C, this is part of the bullish dragon harmonic. The other one ended right here. This comes down, and we've got this area where the price action's coming down a little bit. If you look down here at the RSI, I can zoom up. The RSI is gaining strength, right? We bottomed out here, and by the time we get to this point, we're moving up. It means this asset's gaining more relative strength to the market. Same thing with the MACD. The MACD's got all this negative momentum, but when you get over to this point, the negative momentum has waned down so much. But if you look at the price action, it's different. Price action was still trying to make a lower low, which is the opposite of your oscillators, which is telling you that this price action coming down is changing. Oscillators changed before the price action did. And if you look at this D point, we're starting to see a reaction. And that's what you want to look for. ZYNE, I'll put that one on there. It's just one more variable that gives credibility to my thought process that Palantir is going to make a change. The price action has been coming down, but that's about to change according to the oscillators here. And I've got these price targets based on Palantir. My price targets on these are based on the candle formations. You see at this C point, we've got a double top. As soon as we hit this point, we got this big bearish engulfing candle coming down. So what that tells me is traders set up that point in the price action to take some profit. So my first profit target is going to be just underneath that top, because we very well may come up to this point and then retrace. That doesn't mean the trade's over in my book. That's why I've got these other targets, because what we could do is if this price action comes up, again, profits taken, we might come down, retest this area, which we've already done once. We've got, the initial reaction. We've got a confirmation low, which means, yeah, this was support. We retested it as support, and here we go. So, well, now I'm just zigzagging all over. But at that point, I've got these other targets, and with harmonics, there's always specific targets, but it doesn't necessarily mean you're gonna reach all of them. So that's why I usually, if I'm confident we're at least going to hit this C target, I'll take, a certain percentage of my shares out of this trade to secure it. Because if we hit this target and then bounce under my stop loss, I don't want to walk out of this trade, with nothing to show. And sometimes, not always, it depends on the trade. Sometimes after we hit this first target, I'll move my stop losses up, just so I hold on to everything I've gotten out of this first target. But I've got these other ones here, and with this bullish harmonic specifically, my target's going to be this the 618 retrace. But I set up my target over here because if you look to the left, which is always important, historical historical data on an asset is always important. That's where I always get my support and resistance trend lines or horizontal lines from. But if you look right here, we've got another double top. Same thing right here. You've got this this price action right here that comes down right here. You get kind of a double bottom. It tried to make it, tried to make some positive price action here, and it just got rejected. But we've got this close right here. And if you look with my target, that's where I'm at. Always want to look at the price action correlation because it gives you an idea of how the candles, how the price action is going to react to certain areas on this chart. And if you look right here, at this point, it was a straight shot all the way down here. So obviously this is an important zone. That's an area that traders before historically took profit. So that's where I'm going to take profit. Like I said, I like setting this stuff up because no trade, no matter what, is 100%. You could have every bullish variable telling you something's going to happen, whether it's, news, whether it's just market sentiment. All that stuff can derail a perfect trade. And that's why with swing trading, I like to take what I can get when I can get it. And, these higher targets, will it reach it eventually? I think so personally, but I'm putting my money on, some of these lower targets first. And if I hit this first target and start to, move up to the next target, if I had the confidence in the trade, I'll add, I can add a little bit to my position, adjust my stop loss if I needed to, and just go with it. On a 4-hour chart, on a daily chart, you got more time to think. You got more time to adjust. You've got more time to react. And that's what I like about swing trading, especially if you're busy, if you're working, whatever the case is. It gives you more security. It gives you more time, and it gives you, and in my opinion, it gives you better odds to coming out successful in a trade. You know, one little mistake isn't going to mess up this trade. You know, this is stuff that you're looking from C, March 15th, to D. You had 2 weeks. 2 weeks to, you know, analyze your next step, to decide what you're going to do next. Before I spend too much time on Palantir, I'm going to go to another one. Do you have time frames associated with those price targets? Jennifer, not always. When I do time frames, I start on a 4 hour because that's one of the quicker time frames I like to deal with when it comes to swing trading. I'll even move to shorter time frames just to find an entry, but 4 hour, that's where I want to be at. As far as, you know, how long do I anticipate this trade taking to hit my targets? That's not something you can always forecast, but if you look at the price action correlation with these price targets, and it's part of the reason why I like this trade, it's because it's straight up, straight down, straight up, straight down. You know, this is an asset that, and you want to find an asset that reflects price action with your time frame. So if you're like, you know, I only want to stay in a trade for a couple weeks, look at the historical information of the asset. You know, if you're looking at a stock that moves slowly, that, you know, it takes its time anywhere it's going, then obviously you're going to have to set your time frame accordingly. With this one, that's something I took into consideration. You hit certain zones, straight up, straight down, straight up, straight down. And with every asset, it's going to be different. And listen, I've set up trades that, like any other trade, I got impatient on. Unfortunately, this market is designed to reward people who are patient. If you're confident in a trade, let it go. If you're not, if you think there's a place you can put your money that is going to bring you a reward quicker than a certain asset, then by all means. But this is one I'm confident in. I've liked Palantir for a long time. This is actually one that originally caught my attention from Pre-Market Prep, another show Benzinga runs in the mornings, one I've been watching for years. And I've been following along ever since. ETH, that one's on the list. I'm going to go over Ethereum too. And while I'm on that topic, let me bounce out of this one to Nicola's another one. This formation right here, which is, the context is perfect. With harmonics, a lot of the times a bullish harmonic is a reversal pattern. You've got this huge downtrend coming. You start to get some attention on this swing low, which ends up being your X. You've got a swing high up to A, back down to B, C, and then D would be your entry point. That's when this harmonic is completed. And if you look, you don't even have a lot of closing action down in this area. You just got this pin bar scam wick coming down to D, hitting it and reacting. First thing I see immediately, you got this double bottom, come up a little bit. You've got, oops, you've got your initial test, which if you, there it is. If you look, that X point, or I mean, I'm sorry, that D point is historically support. Some of the, you know, historical information about this asset tells you that that should be a support area. And guess what happened? If you look at D, we tested it once, just like I talked about earlier, you've got a confirmation. You tested it once. Yeah, that's still support from back here. Now you've got a retest that tells you yet again, that's still a support area. That's a good place to set a stop underneath it. And that's what I did here with Nikola. With the butterfly pattern, if you want to go by textbook, you've got C. The C point of the XABCD is going to be a pattern. I mean, not a pattern. That's going to be a target to take profit. And instead of setting my take profit right at the top of C, I looked over here. Well, actually, I didn't. I should have, but I didn't. But if you look over here, just under C, you've got this double top. On a 4-hour chart, that's important. That shows you that even though we wicked above that double top a little bit, twice, that's where we close. That's, you know, an important area to look out for. So that's where I would set my target. Even though it's below C, I think that's an important place to set up a target. And with swing trading, I would rather take my profit when I've got my profit than let this trade come back down and get stopped out. The second point on Nikola that I'm going to take profit, same thing. If you look at the price action from X to B, it's basically just straight down. So instead of setting my target at the very top of A, I have it down here a little bit where you've got these bearish engulfing candles that just drop the price action that pulls a rug right out from under you. So I would rather get out with my profit instead of trying to get this little bit at that point. Now, if I was going to add another price target to Nikola, I would, again, refer to the price action. Before we got to X, where'd we come from? Look at this. Straight down. We stopped a little bit in here, a little bit of chop here. But if you look, that kind of aligns with the top of A. So I might leave a little bit in this trade and try to get, you know, a third target on Nikola up here. If you want to get into it, I mean, you could follow the stream all the way up to here. You know, this point at 27.22 might be a good area too. But I'm not looking for home runs with swing trading. You know, I'm looking for something that I can rely on. I would rather take, got 15%. We're risking 5% on this trade. And then you got 24%. That's 5 to 1. With swing trading, I like to stick with 3 to 1. It gives me 3 times the reward to 1 time risk. And basically that means that I can enter into 3 trades and be wrong twice. And I'm still in the game. I didn't lose. You know, if that one trade is getting me something like 5 to 1 and I lost 2 out of 3 trades, well, I'm still well above where I was. And that's what I want. I'm not looking for every single nickel and dime I can get. Do you tend to penalty years ago about BTC? BTC, that I'm biased when it comes to Bitcoin because I wouldn't say a maximalist by any means, because I'm in a lot of altcoin trades right now. Ethereum is one of them. And I'm only in them. I'm not in them because I believe in the project. I'm not in them because I think, you know, a year from now they're going to be Amazon. I'm in them because there's a trade opportunity, and that's the strategy I teach. And a lot of people that are in this swing trading, you know, it's people that are in my group, they're losing money because they don't know when to get out, or they don't whether it's on the upside, you know, they're like, oh, I made this much, but I could make more if I waited. And you're right. You could always make more, but it's a numbers game. My strategy, at least, right? I could wait for Nikola to come all the way back up here. And mind you, after this plays out, after I've secured my trade, which I'm trading on this harmonic, which my targets are C and A. After this trade, if I still see this bullish trend taking me to higher levels, I'm going to look for an edge, you know, somewhere where I've got defined support, resistance, and I might add to it. I might try to swing, and on some trades, I'll set up 4 targets. I might try to swing for these upper areas, but I want an edge. I always want an area that says, hey, we've got support, like this double bottom here. We've got support here. If it falls underneath that support, then my whole theory about this trade is gone. So that's a great area. If I can get in right at one of these double bottoms, or, you know, the D point of a harmonic, I know that if it comes underneath this D point, I was wrong. And I don't lose that much because I'm in right where all these things are telling me to get in. So if it's wrong, if I lose, you know, whatever, a couple percent compared to how much I could have made, I'm still good. And it's a numbers game. If all my trades are 3-1, I only got to be right once. Out of 3 times, you go 4-1 or 5-1. Like technically, if you wanted to hit it out of the park with a butterfly harmonic, I'm 5-1. I could be wrong 4 times in a row, and especially if I'm making these type of returns, I'm still good. That's successful. And, you know, those odds are great. Another one I'm looking at, NEO. This is another one that's got, this is a dragon formation. You've got this initial rundown. I'll try to go over this while I'm doing it. You got this low right here. Oops. On the way down, you've got these little accumulation points. You know, these bottoms show a little bit of accumulation going on. You come down to, again, the D point is where we wanted to get in for any type of bullish harmonic. Well, let's look at the oscillators. At this very bottom of our negative momentum on the MACD, we're right here. Then we've got this D point, which if you look down at the MACD is another area where the negative momentum was gaining. But look, negative momentum is waning. It's less negative momentum, and the price action is going down. So they disagree with each other, which means that's a divergence area, which means even though the price action is still coming down, negative momentum is saying, hey, we're about to start moving up a little bit. And if you look what happened. Price action came down. As soon as we've got confirmation that this trend is changing, same thing. You get this reaction. NEO is another one that I like because if you look, got a bottom. Oops. And then right after that, if I can get my scribbles out of the way, you've got one bottom, two bottoms. So not only did you get your low at D, but on this 4-hour chart, you had 4, 8, 12 hours to say, hey, we just got a confirmation that that's the bottom. So I set my stop loss underneath that, because if that's the bottom, that's the bottom. If it goes underneath the bottom, I was wrong, which is fine, but you got to get out. And granted, stop losses they'll work against you sometimes. You might get stopped out, and then the price just goes ballistic. It's especially in the market that we're in right now. That's a common trend. I've gotten shaken out of a few trades in this market because, whether it's volatility, whether it's, other market conditions, news-driven catalysts that drive that price a little bit further than I was comfortable with risking. And then it reverses. I lose. But at the same time, guess what? I didn't lose capital. I didn't have to sit here and say, hey, maybe I'll stay in a little bit longer, because that is a slippery slope, and it's not a position you want to be in. When it comes to trading, you want a plan. You want a place, that you're headed to. You want a place that you want to get out. You want all of that stuff to be figured out. Hertz Scrambler, I got Fubo coming up. That's one of the ones we put on the list here, and I'm going to get to that real quick before we get out of here. But yeah, with swing trading, that's what you always want to look for. And with NEO, real quick before I get to some of these ones you guys mentioned, NEO, I like this price target specifically. Yeah, it's a historical area, but with NEO, you could probably actually go up to this 236 because of this double top. That's where I would want to take profit, just in case we get to this zone and reject again. We might still keep going after that, and if your stop loss is down here, you could just leave it. But if you wanted to, you could take some profit here and add to it if we retest a lower level. Second target on this harmonic here would be, this would be your C point, and this would be your B. It's labeled different because this is another harmonic. It's a huge harmonic pattern. So what I would do with my C point is same thing. I could go right up to the top, but I feel more comfortable because of this wick here, because of this wick here. I want to get out a little bit below where everyone else might be looking at, or where traditionally textbook that would be a target. I want to get out a little bit early. I'd rather take my 26% with a 3% risk. I'm out. I don't got to think about it. I don't got to worry about it. I don't have to, be up Tuesday afternoon, wake up in the morning tomorrow and have lost that. I'm already out. If there's another entry, I can get on top of it with my profit secured, and that's what I like. I'd rather take a bunch of small, good decisions and just compound the money that way. It's a lot safer. It ends up being a lot more profitable, in my experience at least. Before I start drawing any more weird designs on my chart, let me look at Fubo, because that's one that a couple of you guys brought up. And this is one I don't have charted out. I was in Fubo earlier in the year, I think the end of last year too. So this is going to be new territory to me, but look at this. And mind you, I told you guys about, if you want a harmonic scanner, go to the indicator strategy on TradingView on Benzinga Pro, which I'd fully recommend, by the way. Type in harmonic patterns, and this one right here, the writer of this script is Lonesome the something, but I like that one. That not only will identify some of these patterns, but it'll give you some targets too to look at. So Fubo, this is a deep crab, and it's coming off a reversal, this big downtrend. So that's good. I like that. We got A, B, C, D, and this is early. This is good. Whoever picked this one, you guys, I don't know if you noticed, but that's going to be a good trade because you're right down here at the PCZ, the pattern completion zone. So if I was going to set up a trade on Fubo, not advice by any means, I never give advice. I just read these charts, okay? I would set up my long position, or I would have, above D. If it falls underneath D, I'm out because that's not how harmonics work. I'm not taking chances. My thought, I'm making a trade based on this harmonic. So if it goes beneath D, I'm either wrong or, market conditions. I don't know what's going to happen underneath here. And if you look at Fubo, which this is another good aspect about this trade, you've got historically resistance and support, and look where that is, right at the pattern completion zone, which makes sense. You want that. If it's going to reverse, why would it not reverse at the pattern completion? I mean, not why would it not reverse at historical support or resistance? That makes sense. So that makes this trade that much more credible in my book, but we're not done. If I was looking for targets, you could swing out of the park all the way up here at C. But I'm looking at, you got this kind of choppy zone right here. I would probably set a target at this bearish engulfing candle coming down. I would not stop there. I'm going to look price action correlation. Chop up here. So let's set price target at the 618, which is one of my favorite areas for a retrace. Your golden zone on Fibonacci retrace is going to be your 382 and your 618. This area is the most probable area for a downtrend to retrace. So that's price target 2. I'm going to do you one more, and we're going to go up here. Instead of going to C at this very top, we're going to take our target right here. This bearish engulfing candle, double top area right here, because the price action correlation says at this point, what happened with the price action? Straight down. A little bit of chop, why I've got these other targets. But ultimately, if you look on a daily chart, I'm sure the daily chart says straight down. And that comes to another factor that I haven't brought up on this stream. But you want confirmation from other time, other charts or other time scales. So if the 4 hour says something's good, well, let's check the daily, because if the daily says something different, like if this is bullish and the daily says we're running out of juice, and I use the same variables to verify that, but if the daily says we're running out of juice, well, I might not be so optimistic about these higher targets. I have noticed a correlation between Fubo and Bitcoin. I mean, there's a lot of Bitcoin sympathy plays that I go after too. The guys at Benzinga have brought up a few of them today for Bitcoin sympathy plays. I like I like Mara. I like Riot. Let me see. I've got a few other ones here. But while I got that loading, same thing. We're going to look at the oscillators on Fubo just to confirm this stuff that we're seeing. If we look at the MACD, you got price action coming down. On the MACD here, it's also coming down. Same thing with this island here. If you look over to X, from X to D is coming down, but if you look at X to D on the MACD, it's coming up a little bit. But on top of that, if you look at the MACD, at this PCZ, you would think momentum is going to start getting to the upside. It's going to start getting some positive momentum. Well, look at the MACD. Right at point D, we're losing negative momentum. We move to the RSI. This isn't your standard RSI, but it's still all the same. The RSI here, price action is coming down. The RSI is going up. So that tells you that even though the price is coming down, you are looking at, I can find my right things. The price action is about to turn to the upside. So with Fubo, mind you, I'm not in this trade, but I'll tell you what, I'm going to get in it after this show because I've got a lot of variables that are telling me that we're going to see a change in the price direction of Fubo. Is that gonna happen? I don't know, but you know what? I've got a risk of about 4% if I entered. Actually, let's move this up.
Hey, Trendy Nomadic. Just don't want to cut you off here. I want you to finish your thought,
No,
but
okay, brother.
just want to let you know that we're coming up on that next show. But go ahead and finish what you're
I'm with it
talking about
because I'm wrapping up right now. With Fubo, if I set this up, entering right now, I would probably look at, if the momentum has changed, we shouldn't be coming down. So I'm going to set up my stop loss below the wick of the last 4-hour candle, giving me, I might lose 4%, but if I hit my first target, I'm at 20%. It's 5-1. If I do this trade 5 times and I'm wrong 4, I still win. So this is a good trade. And this is something I'll post on my Twitter. If any of you guys want to follow me, I'm going to go through. I'll add these other ones you guys brought up onto my Twitter tonight. And again, it's not advice. I'm not telling you where to put your money, what to trade, but I'm telling you that these variables say upside.
There we go.
I appreciate you guys coming through. Anyone who came back from last week, again, hit the like button. Give me a little bit of credit so we can keep this show going. And check out the rest of the guys on Benzinga. Benzinga has always been one of my favorite places to go for news, for trading, for everything. It's a one-stop shop.
There we go. And hey, we haven't met before, but my name is Rohan. I'm a producer here at Benzinga. Jameson, good to meet you. Thank you so much for providing this amazing content over here. Folks, definitely got to drop a like for Jameson because he's out here dropping the knowledge. All right. And with that, thank you. And we're going to move on now. Upcoming, we have the Benzinga Biotech Small Cap Conference. If you didn't catch it live, you can catch it again. I'm going to actually play like a little bumper first. That just says next show, and then that'll go ahead and get started. But folks, there's a bunch of, this is gonna be a long one. It's gonna be like 5 hours of content for the next 5 hours, of just absolute, great knowledge, great presentations, all biotech stuff. So if you're interested in investing in biotech, this is a great source of knowledge. And keep watching, keep one ear open, and hopefully you'll learn something. All right, that will be up on screen in a moment here.
All right. Welcome, everybody. Welcome. Patrick Lane here with Benzinga. I've got my pal, Luke Jacoby. Luke, say hello, man.
What's up? What's up? I liked that Nirvana cover. That was a nice way to get the day started. Okay.
Why not? A little finger picking. Come on. It's nice. It's nice.
Exactly.
A little mood music to get us in the spirit of things here. So Luke, we've been doing this for a hot second now. We've been hosting these investor conferences. And for our investor audience that's here, what are they here for? What are they here to get out of this day, or really 2 days, today and tomorrow, that we're doing this?
Yeah. So what I'm going to say is keep in mind that this is a day for you, right? As much as Patrick and I enjoy this and all the companies that we have today, there's over 30 companies we're going to hear from today. This is a day for you. Right. And seize the day, take advantage of all the opportunities that we have. If you're on the event platform, make sure you go set up the meetings. Right. We're going to hear the overviews quickly from the companies. Let's go. Let's get those meetings set up so you can really learn about the businesses, the problems they're trying to solve, the approaches. And of course, if you're watching with us on the YouTube stream, drop the questions in the chat. Right. I'm here. Patrick's here. Your moderators are here for you. We're sort of the voice of the chat today. So drop those questions in there because we want to get them answered. And let's face it, the companies want to get their stories out there. That's why we're all here today.
Yeah, no, this is the best of all scenarios, right? We get to hear from some of the coolest companies in the space. You guys, it's no secret that those companies who were treating cancer or GI related diseases are now moving into things like COVID, right? And creating treatments every single day, right? So you're going to hear from a lot of those companies. Companies like Sorrento Therapeutics, ticker SRNE, Greenwich Life Sciences, GLSI, among many, many others. But you guys should be excited because some of these guys are on the cutting edge of what's happening in this space right now. And specific topics that are relevant, right? We're going to have a couple panels throughout the day, transforming COVID-19 diagnostics, cancer immunotherapies, and what's happening with T-cell treatments, right? This is the cutting edge of what's next, right? And obviously all you investors out there who are looking at this space and trying to figure out where to place your bets, now's the time. Now's the time to come and look, ask your questions. Any question is fair game here, and we'll see where we can get, right?
Yeah, and like a couple of things I'll add on to that, Patrick. You know, on the human side of things, right? This track right here, track one, there are 2 tracks. So if you want to hop over to the COVID track, that link is in the description. But this track right here, we're going to be focused a lot on cancer today. You know, as somebody who has 2 family members who are in remission, I mean, these are the companies that are shaping the future of the world. I mean, the work that they're doing is amazing. And then on the other side of things, I'm also an investor, right? I'm actively managing a portfolio. And when I look every single day at the biggest gainers and losers, that's how I start my morning. It's always the biotech companies that are moving on and where investors see a lot of opportunities. So, I mean, it's really amazing to look at all these stocks because we get both sides of the spectrum.
Yeah, well, and this space in particular is really interesting, right? And that's why I'm excited that we also have a few investors here to give us their take, right? Like Vivi, our bio queen, right, who does our Biotech Buzz show, and several other folks will be giving presentations on, hey, this is how I diversify my portfolio. This is how I read FDA announcements, all these types of things. I mean, biotech is a tricky space. You've got trials that last years, right? And these readouts that we're waiting for at the very end, I mean, that's really at the end of the day what we're all here to learn more about, right?
Yep, absolutely. And just to give everybody a little bit of a preview as to what we're going on for the day, Patrick teased it a little bit. So throughout the day, we're going to have a few investors in the space, and they're basically going to be talking about, hey, here are companies that I think are interesting. Here are treatments that I think are interesting. Here are approaches that I think are interesting. And then, of course, we're going to be hearing from the companies themselves. Like I mentioned at the beginning, we have more than 30 companies just today that are going to be telling us about their businesses in a very quick format. Quick 20-minute presentations. We're going to have panels where we can compare and contrast, how different firms are working towards the same end. So there's a lot. My one tip, I give this for every event we do, is the notepad. All right.
Yes.
Have the notepad out.
He's religious about the notepad.
I'm religious about the notepad. Okay. Somebody asked me the other day, what brand notepad do you have? My answer is whatever brand they sell at CVS. But have the notepad out, jot down the notes. There's a lot that's going to be happening. And again, make this day about you. If you're on the networking platform, go set up those one-on-ones, dig deeper, really understand the approaches. And if you're hanging out with us on the YouTube stream, drop your questions in the chat. We are here for you. That's why we're hanging out all day. We'll pop in, we'll get them answered, and we'll learn a lot together today.
Absolutely. And we'll also be dropping links in the chat as well. Both chats, right? The networking platform that Luke referred to and our YouTube chat, where we'll be dropping links of the company websites. We'll probably also drop our own stock pages in there so that if you're on Benzinga.com, you don't have to leave. You can look at it right there on Benzinga.com and look at the quote, look at the articles that we've written, and go from there, right? But as Luke said, right, this is about you guys, and no small number, right? Last I checked, there were over 36,000 investors registered for this conference. That's insane, right? And the numbers that we're seeing, it goes to show you, Luke, ever since, I mean, we could talk about GME earnings last night, right? Ever since this whole Reddit nonsense, right? We've seen a ton of eyeballs, and it's been fun to watch.
Yes, yeah. GME earnings, okay report, Rippy.
Did they end the call early? Did they abruptly end the call? That's what I heard last night.
They didn't do a Q&A session, which I think was disappointing for some folks. It led to some speculation that, hey, if maybe they didn't do the Q&A because this current management team who's on the call isn't going to be that management team for a while, and Ryan Cohen, Chewy.com folks are going to get in there more. The other thing, Patrick, I'll point this out to you. You might not be aware, but we broke 2 stories yesterday that caused major stock movement, both on the NFT side of things. Ticker HOFV, the stock was up as much as 100% after we got an exclusive report that they had a partnership to work on NFTs with Dolphin. And then ticker YVR, we had on a live program like we have today, that the stock started moving so much while they were on the live stream on this channel that it actually got halted by the exchanges. There was such a flood of volume, right? So if you're a trader, you're an investor, we promise you we are very deliberate with this content in trying to bring you very interesting companies, very interesting situations. Again, literally yesterday on this channel, we had a stock get halted because of the volatility. So 30 companies today, it's going to be fun.
Yeah, absolutely, man. Absolutely. Well, you guys in the chat, throw a 1 in there if you are interested in learning more about these companies today. Throw any tickers that you're interested in today, ones that you see on the agenda, ones that you may not. We'd love to answer your questions. We'd love to have you participate throughout the day today. God knows the companies are going to want to answer your questions too. So we're really, really excited about that. There's a ton happening in COVID these days, right? And I'll say COVID, this is our cancer track, but one more thing about this, you've got a bunch of these companies like a Sorrento, like a GLSI, who have been treating cancer for years, right? And jumping into the COVID game, right? We're going to ask them specifically why and how that's changed their business model, right? Infectious diseases, sure, but the greatest infectious disease in the last 100, 100 plus years, we're going to hear about that today. That's for sure.
Yeah. And I mean, what I'm especially interested to hear from the investor side of things is, okay, we're at this point where vaccines, at least in the U.S. and in a handful of other countries, are becoming pretty widespread, right? The rollout's been pretty quick. What happens next? What's the future of these treatments? Where are we heading? What is the outlook? How do these companies play a role on an ongoing basis? That's something that I think is especially compelling.
Well, and the other part of that, man, is that when you think about it, at the end of the day, we're obviously hearing about the major vaccines out there: Moderna, Pfizer, J&J, AstraZeneca, right? Yep. But at the end of the day, there's going to be room for multiple treatments, right? There's all different kinds of variants, and obviously that's why some of the companies on the show today matter, right? Because they're getting in there and they're creating what will be the next wave of vaccines and therapeutics for that disease.
Yep. And Patrick, I see a question in the chat again, guys. We are for the people here today. We're here for the chat. So as you have questions out today, drop them in. But one question, Patrick, it's saying, are the tracks other than cancer up and running? Can you talk a little bit about how that's going to work and how the folks both on the event platform and on the YouTube can navigate to those?
Absolutely. So 2 tracks today, and then 2 more tracks tomorrow. Right, the track that you are currently on is cancer therapies and treatment, and we'll go back and forth between whether or not we're talking solely about cancer therapeutics or companies that have really made their way in cancer but are now treating COVID and other infectious diseases. Right, that'll be on this track, and then we also have a simultaneous track that starts in about 10 minutes, covering therapeutics and diagnostics for COVID specifically. Right. So either track, please jump back and forth. You're going to see a ton. You can navigate that on the event platform up at the very top of your screen or on YouTube. Right. We have a YouTube playlist. You can see both tracks on the Benzinga YouTube and navigate between them. And I highly suggest you do that. Right. There's going to be interesting companies and panels on both tracks.
Okay. And Patrick, which one are you more excited for?
Oh, I can't say that, man. I mean, I guess the one I'm emceeing. Probably that one, or whichever one you're on at any given time. That's the one I care about the most. All
right, thanks, Patrick. And the feeling's mutual.
Oh,
I'm not here for the companies. I'm just here for you.
Oh,
I don't see you enough in the
sweetheart.
The Benzinga Zoom meetings. It's yeah. I gotta watch you on the YouTube. So.
Oh, come on. No, I'm excited about this. I really am. And listen. We've been doing this for a while now in cannabis and fintech and some sector agnostic events that we've thrown. And it's really exciting for me to hear from companies that we've been reading the news about, that obviously, they're these newsmakers and our reporters are covering them day in and day out. I'm really excited to hear from them in person today and to get to ask them some questions. So again, do not hesitate. If you have questions, hit us. We are happy to pose those for you.
Yeah, and something that I want to reiterate too, as you're thinking about questions throughout the day, what's really unique about this event versus like if we were doing a banking event or an EV event or something along those lines is that you've got 2 sides of the coin that are really important. And so as you're thinking about questions, keep both of these in mind, right? That we have the actual health side, right? Like I mentioned at the beginning, I've got 2 family members who are in remission right now with cancer treatments. And then on the other side of things, I'm also an investor and I want to find promising companies and identify them early, because every morning when I look at the biggest gainers and losers, it's always a lot of these drug companies, these treatment companies, et cetera. So keep both of those angles in mind as you're asking questions. Again, if you're in the networking platform, set up those one-on-ones. If you're on the YouTube, drop them in there. We're ready to rock and roll. And I see somebody in the chat saying, don't forget to like and share the video. Absolutely.
Absolutely.
Put that in there. Thank you for doing part of our job for us. Hit that like button. We're bringing 30 companies in one jam-packed day. We're going to be going from now until 3 o'clock Eastern. Correct, Patrick?
That's it. About 9 to 3 today. Same tomorrow. We're really, really glad to have you guys here. And Luke, I believe we have our first guest of the day. So as we get her moved over camera on and mic up and running. You guys, this is Vivi, the Bio Queen. We are thrilled to have her with us today. She's going to give us the investor's perspective right off the bat. Right, we're going to start with stocks that she knows and are interested in, and obviously we'll take it from there and figure out what insight she has for us.
Yes, and I've got to give a big thank you to Vivi. Great friend of Benzinga, actually helped me over the weekend, donated part of her time this weekend to help us with developing our FDA pages. She's also in California, so it's very early for her. So we love Vivi, and she's definitely our biotech expert.
Well, welcome, Vivi. Can you hear us?
Yes, I can hear you guys. I had some technical difficulties, but finally I was able to get into my main computer here, which is nice.
Awesome. Well, we will let you take it away. Thank you so much for being here. Luke, I'll see you shortly.
All right. See you soon.
All right.
Hi, Luke.
Hey, Vivi.
Hi, everyone. Good morning from California. I missed a little bit of the introduction, but I am Viviane Mason. I've been in the pharmaceutical industry in biotech for the last 19 years. My last company I worked for was Gilead Science. I've been a biotech investor for the last 7 years, and I hope I can share with you guys from my mistakes, what I've learned in regards to investing in a small biotech. It's a very rewarding industry, but you need to learn how to navigate. It can be a little bit intimidated because when you have a company that needs to raise capital, you kind of feel a little bit lost what you're gonna do in regards to holding that company long term. But I hope I can give you guys some clarity. I wanted to really talk to you guys about the phases of the clinical trial. So when you own a Tesla stock or you own an Apple stock, you're looking for earnings, right? You're always looking, okay, the earnings are coming up. What should I expect? In regards to small biotech, what you needed to look for is your catalyst, right? Because in regards to the catalyst, you needed to figure out what phases are you in the company and what you can expect in regards to a share price movement in case that company goes through those trials. So when you look at I wanted to just share you guys here. When you look at clinical trials, you're gonna have the phase 1. So you have a company that initiates a IND, a new drug application, and it's phase 1, right? The phase 1, it's a human pharmacology, and then you go to phase 2, you explore therapeutics, and then you have a phase 3, and then you have a new drug application, and then you have a PDUFA. And so what do you have to expect from each phase, right? So I want to go here and share with you guys. When you go here and so here, look at this craziness. So how is the new product development works, right? So you have 5,000 to 10,000 compounds that you're gonna screen. You're gonna send probably 250 for preclinical testing. You're gonna maybe five enter to clinical testing, and then you have just one drug approved for FDA. So the cost is almost $1 billion invested over 15 years. And if you guys look at here, between discovery and preclinical and phase 1, phase 1 is always determining the safety and dosage. And then you have a phase 2. You usually look for efficacy and side effects. And then phase 3, you actually have a larger scale of patients, and you're looking for also the long-term adverse events. So, and then you have the marketing, post-marketing. So it's a very, very lengthy path to discovery, right? To have that approved drug. And so that's why I wanted to tell you guys that here are the success rates for clinical trials, right? So most companies will do really, really well from phase 1 to phase 2. So there's a 70% overall response rate when it comes to phase 2. Then I think the most crucial phase, it's a phase 2, right? So phase 2, it's you determine efficacy. You see here is only 40%, 45% of the companies are going to be successful in that phase. Then you move to phase 3, and phase 3 is around 63% approval. And then you go into a PDUFA, which is like a 93%. So 9 out of 10 companies are gonna make. So from my previous experience, you needed to be very conscious, because when you do have when you are doing investing, you got to look out for what are we going to do in regards to this catalyst, because the share of a price, it can drop 50% when you going from there to one phase to another. So my strategy is I will invest in an early on stage pharmaceutical. I'll give you guys an example. Fate, I got it at $3 and it went all the way to $100. I will so let's assume that I want to, 200 shares of a Fate. I would probably buy 400 shares, and really every time there's a catalyst, I will, before I have the catalyst, I'll probably sell half of it just to make sure. And then if it drops, I'll buy back. So you kind of have to be kind of in and out, and I was keeping your core position when it comes to investing in a small bio. Why? Because they are, they don't have a product. They don't have a revenues, right? So they are still, they're still in phases of development, so they don't have a product, so they're gonna have to continue to do offerings. So the best way for me to invest in a company is after a big offering, so they have the money for trials for a couple of years. So I hope that has helped you guys. You guys can also hit me up. I'm in a Twitter at biotech_SD. I'll be more than happy to answer any questions. Thank you so much for listening, and hopefully for the younger new investor out there, hopefully that has helped you guys as well. So that would be it for me. So
thank you so much, Vivi. Oh my God, I know it's early.
Were you guys able to see all the phases and all the slides? Okay.
Yes, I mean, you guys, this will be live on YouTube. You must go back and watch this. It's going to be instrumental for the rest of the day. So
yeah, I mean, there's a lot of investors out there that doesn't understand each phase of a clinical trial. So
yeah, and just what that means for each of these guys. I really, really appreciate it, Vivi. Thanks for getting up so early. We'll let you go for your cup of coffee and maybe see you a little bit later.
Yes, watch the market and have a coffee. Okay, take care, you guys. I'll see you guys in the next session. Bye-bye. All
right, thank you so much. So my friends, if you have any questions at all, please do not hesitate to throw them in the chat. It looks like we just missed what if the stock misses a clinical trial date that was expected. So I will message Vivi and get you an answer to that question, Jonas. Okay, so moving right along, if we have him ready, I'd like to introduce the Chief Executive Officer, President, and Director of Lantern Pharma. This is a stock listed on the Nasdaq. The ticker is LTRN, a company I've been following for a while, and this is Panna Sharma. Welcome, sir.
Hey, Patrick. Thanks for having me on.
It's my pleasure. My pleasure. What did you think of Vivi's presentation?
I think it's table stakes. I think investors need to know the odds at each phase in the trial, and most importantly, how value gets created. So it's actually was a perfect intro, because our whole premise is to change the risk and pace of that process that she talked about.
Beautiful.
So instead of getting, only the pipeline she showed was for all drugs. In oncology, if you can imagine, the pipeline is even more severe. Less than 10% of drugs get to approval.
Wow.
And the costs can be higher. Other than Alzheimer's and neurodegenerative diseases, it's probably some of the most expensive drugs to develop. because of all the, especially counting all the failures. There was a tough study a few years ago that put the number somewhere close to 2 billion. There are other studies that say 800
per
million.
drug.
Yeah, per drug.
Wow, that's insane.
So it's you really it's like a military project. I mean, getting a drug to market can be a decade, and it can be $1 billion, and it takes teams and teams of people, and of course patients at the very end, and you have to monitor every piece of it. And the way we like to think about that is that really is a huge data problem. How do you know which compounds to advance and which ones not to advance? How do you know which patients are most likely to respond? And so this is why AI has the ability to totally transform how modern medicine is made.
Well, and I'll let you get into your presentation here, Pana, but one question from the chat that may be interesting for you. So then given that only 10% of these drugs get to approval, how do these investors know how to separate the wheat from the chaff, right? A great question, and one that is a loaded question. So yeah, I'll let you get into your presentation, but maybe if you have any thoughts to that, I'll let you go.
Yeah, it's tough for anyone to have like the magic 8 ball. I think a lot of funds and groups try to think they have that, but you got to take a look at the early data on the trials, and of course, one of the most important things is to look at similar drug classes, how they performed, and how has the company tweaked or modified this drug, either in terms of the patient population or the mechanism or combining it with other drugs. But I think a lot of historical data can be leveraged today by investors, and that's the core of a lot of the things that we do is leverage data.
Leverage that data. Awesome. Well, thank you, Pana. I appreciate that. I'll let you get to it. And while you're pulling up your screen, just a reminder for those folks watching, the ticker is LTRN, Lantern Pharma, LTRN.
Hold on a second, I'm trying to load my presentation.
Sure. Pana, while you're getting that up, I'll probably ask you just another question or two, if that's okay.
Sure, go ahead.
So the advent and sort of the addition of artificial intelligence to this industry, right? I know you're going to cover some of that in your presentation, but I know it's something that Lantern seems to wholeheartedly embrace. When it comes to talks I've heard you give in the past, it sounds like, and it should be no surprise to us, that when we think of artificial intelligence, we think of supercomputers or big tech in Silicon Valley, right? But those processes that it took to build those softwares and those platforms are now being applied to drug development, right? So I don't know if that's a good jumping off point for you, or if you want to say anything more about that, but I, for one, am excited in terms of what you guys are doing.
Yeah, thank you for that segue. I appreciate it. I'm not sure why my Adobe file decided to reset, but
all good.
Can everyone see the presentation?
Yes.
Great. And so, Patrick, as you pointed out, we're leveraging all the tremendous advances in AI and machine learning that are occurring in every industry. And there's no problem like the improving patients and improving human health, like we've seen in COVID-19, that is really central to our future. And so AI has the potential to change the cost, the risk, and the timeline of drug development. We do it specifically in cancer. There are thousands of drugs that are abandoned in oncology, and a lot of them are really great compounds, but they haven't found the right use. What drug do you combine it with? What subtypes of cancer? And they're just case in point. Today, we know there are nearly 100 different types of lymphomas and leukemias. 20 years ago, we only had 5 or 6, maybe 10 that we differentiated. And before that, they were thought of as blood cancers. So just think about the tremendous advances in subtyping disease And so if a drug that failed 5-6 years ago because we didn't know that there was a different type or subtype of cancer or different patient population can be rescued. Likewise, there's so much more patient data and so much more data coming from laboratories to understand these cancers that data can be mined, and there's no central place to do that. And so we're really performing, multiple processes to correlate patient outcomes, to correlate compounds and understanding how compounds work. And the core of what we're trying to do is have a more fast, more efficient path to getting these drugs to market and reducing the costs and reducing the timeline. And the core of what our AI engine does is patient stratification based on biomarker discovery and understanding how the compound works by looking again at biomarker mechanisms. The entire industry in science is really just thinks this could be the future because, as we pointed out before, the success rate in oncology is very low, sub 5%. There are thousands of trials that can be mined for data, and the investments required to bring these new drugs to market is massive. So if we can make a 50% improvement or 25% improvement or 75% improvement, as some people are talking about, this can be met by a whole new revolution in medicine. And I think a revolution that will actually bring costs down a lot in therapy development and bring drugs to fundamentally different price points. In cancer specifically, what we're doing is we believe that the ROI in the top 12 pharma, this is according to Deloitte, is painstakingly low, lower than their cost of capital. And one of the reasons is that, actually two big reasons, is the promise of these drugs that's seen early on gets diluted in late stage trials because the specific patient group isn't understood. So you have a very broad-based patient group. The second thing that often happens is the genetic biomarkers that you can exploit with in that cancer or with that compound aren't understood until too late. And so the trials aren't designed to actually use genetic stratification or exploit that mechanism. And our AI platform, Radar, which has been developed internally, now has over 1.2 billion data points and growing. I believe will be well over 3 billion this year. Allows us to basically increase the odds of success and design trials more succinctly and design drugs that are more targeted. I'm going to walk a little bit through, kind of our major points of value is that we have a platform that's grown, it's scaled significantly since we've gone public. We have now over 7 programs that are in very, very targeted areas with our molecules. And we just announced another program last week, LP284. And so we're beginning to get new indications faster and faster as a result of our platform. And we're now in one of the most exciting areas in cancer drug development, antibody drug conjugate. And this is where we leveraged our Radar platform to identify ideal targets. And then we went out and struck a deal with a partner to use their linker technology to link our drug, LP184 or other drugs, to specific antibodies to target some of these cancers. And as our platform grows, as I mentioned, we believe will be 3 to 5 billion data points. Our team is well ahead of our schedule in terms of by attending many of our daily scrums and sessions. And we're just getting faster and faster, being able to collect, curate, tag, index, and clean up all the data. And so I think we're going to crush that number this year. More importantly, another way to look at our productivity is the number of programs. And as I mentioned, we added another program to this pipeline. So we went public, we had 3 programs, we now have over 7. And so this accelerated development is not only happening faster and faster with Radar. The other thing that's happening is that we're also patenting all these insights. And so we have a very significant patent estate. We have over 80 issued patents pending, issued and pending across about 14 patent families, and that'll continue to grow. And these patents span a wide range of topics. So our 3 molecules that were, actually 4 molecules now, but the 4th one is 284. So molecules that we are developing are all small molecules with the exception of the ADC. They show very targeted results. 2 of the molecules are rescue agents, meaning they have a lot of clinical history, and LP184 and 284 are both new agents. One of the reasons, and you asked, how can we determine the success of a potential molecule? One of the things that we did in one of our drugs, LP300, this is targeting never smokers with non-small cell lung cancer. And never smokers are a very different subgroup of patients. Their pathways are different. Their molecular alterations when they get lung cancer are different. And this drug seems to work very well in that group. If you take a look at this slide 15, this is from a historical phase 3 trial. And so we're going to build on this trial and understand why the never smokers, which you see on your right-hand side, why they had a 125% increase in 2-year survival compared to the rest of the patients. So this trial, it didn't meet its endpoints, and so the drug was shelved. But for these never smokers, and in particular the female never smokers, they had a 2-year survival rate that more than doubled, and they had overall survival numbers that approached 90%. So in that sense, this was very successful. This drug would have been approved probably if it had been designed to look at never smokers. And so then the question at the time could not be answered, why never smokers? We didn't understand enough about the biology of never smokers. The trial wasn't powered to look at never smokers as a population, and there was no plausible mechanism that was suggested about why never smokers are responding differently. And that's what our engine solves. We put a lot of this data back into our radar engine. We went back into the lab to test various hypotheses about which markers were involved, which pathways such as EGFR, KRAS, ALK, ROS1, and we know that this drug works by modifying the cysteines on those proteins, and it makes the lung cancer more sensitive to the therapy. If you also look at the Kaplan-Meier curves, again, in this patient population, you can see that there's significant separation in the red and blue lines. And so the blue lines, as you can see, there's a very, very high p-value for never smokers and female never smokers. And this is what we're building on. So we're building on this insight, but this insight has been replicated in the lab. It's been remodeled in our platform. And so it gives us confidence that there's going to be some improvement for these patients. These patients, unfortunately, have a very poor survival. And it's about $2.4 billion is spent annually in the never smoker population, treating them with drugs that sometimes don't work that well. And again, we applied for patents. We believe it's about 20% of the global lung cancer cases. So it's a fairly significant market, and we'd be very excited to bring this to patients in the coming years. We're launching this trial in a phase 2 program, probably the end of the summer in Q3. And so that's what we're targeting to do. So that, as for many of your audience members, and what, as the last speaker mentioned, that's a catalyst. That's a big deal to launch that trial. And in the back of the success of that trial, we'll probably partner to license this program out. The other program I wanted to talk about is LP-184. LP-184 is a new drug. It doesn't have the experience that some of the other drugs have, but it's very unique because it's shown nanomolar potency across lots of different tumors. The other thing that's very unique about this drug, it's a chiral drug. So if you make it synthetically, it means you can separate the right and left-handedness of these drugs, which is really important because what we've now observed, and we've filed 7 patents on, is that the stereoisomer of this drug has a very different profile in terms of killing of cancer cells, and we'll build on that later. And again, this is an observation that we've also modeled using radar, using our platform. So what we saw in the lab, we modeled in radar, we went back to the lab, and this iterative process gets us insights quickly. So 284, literally less than 6 months after we started observing this phenomena, is now a program. And so it's very rapid. 184 is in multiple programs already and in collaborations with leading cancer centers globally, such as Georgetown, Hopkins, Fox Chase. And very importantly, this drug shows that it can cross the blood-brain barrier. And we've shown this now in steroids, in small animals, and in trials that we're doing with Hopkins. And so we see tremendous tumor regression so far in small animals, and we'll be launching this into a phase 1 next year or earlier if we can get all the IND-enabling studies done. On the basis of what we saw with what drives this drug is high PTGR expression. We published this at ASCO and AACR. And so we worked with our team at Fox Chase to actually validate what other tumors can we take this drug to. So we selected 4 or 5 top cancers where we're taking this drug to. And then we asked ourselves, well, what happens if there's no PTGR1? Very important experiment. So if you look at on slide 22 on your right-hand side, This is a CRISPR gene editing experiment. So we took the pancreatic cancer cells that were very responsive to the drug, meaning it would be a very good drug to use to kill cancerous pancreatic cells. And we said, well, what if we take out PTGR1 or suppress that gene using gene editing? So our team at Fox Chase did that, who we have a collaboration with. And if you look at the top line, the red line, when PTGR1 and 2 are suppressed, meaning you quiet it or they don't express themselves, the cells live. They're pretty much 100% viable. You don't see really any change. And so when PTGR1 is expressed or overexpressed, you can see massive cell loss in the curve. So this is one of those aha moments. This is something our radar engine had predicted based on its analysis of RNA from various types of tumors that responded. And so this gives us a lot of comfort. This is a very well characterized drug with a known mechanism of action with cancers that we can target. And so we've looked at them across a range of cancers. Our drug is in the green, and you can see that drug has tremendous potency versus other standard of care drugs. So we're very excited. We're seeing that the observations from radar are holding up in the lab, including our GBM observation. This is actually a very important observation that occurred a little over a year ago when our radar engine suggested that GBM would be a really good target. And we validated it, and we continue now to develop it. As I mentioned to the audience, we're going after GBM, but also we're going after ATRT. So the ability for us to now go after CNS or brain cancers is really important because very few drugs can cross the blood-brain barrier, and very few that cross the blood-brain barrier actually leave the neuronal cells intact and only kill cancers. So this is a very unique compound. And so we're looking at this compound across a wide range of brain cancers. And so we have pinpointed the ones that we think show sensitivity. One of them is ATRT, and we've seen very good values in terms of cell kill. So we're expanding the shots on goal for our investors, but more importantly, it all comes from data. It's a data-driven process. Take the data, drive insights, go to the lab, test, validate, use that data again, and constantly iterate. And so as our systems become larger and as our team and platform becomes larger, we'll be able to do this at, I believe, an unprecedented level. We've also used this data and rapid method to actually launch our ADC program. Some of the data from our early lab work with Califia is shown in that slide, and we showed pretty exquisite data. And this was the data that really pushed us to launch this program and raise the additional capital we did in January. I mean, for the sake of time, I'm going to skip a couple of the other important topics. Radar today is about 1.2 billion data points. We think we'll crush the 3 billion number this year. We continue to get additional patient records that are, of course, de-identified. And we publish. We just had a major publication at BMC Bioinformatics. And we also had a poster accepted at AACR, where we'll be talking about our process. So these to us are very important signals that our science is being accepted. We have very important signals from leaders in the industry like Hopkins and Fox Chase and others that we collaborate that our programs are valid and our programs are progressing down the clinical pipeline. And we have sufficient capital to execute for the next several years, both on growing the platform and entering into clinical trials. As I said, the patents are critical for our development. We have over 80 patents that have been issued and pending applications as well that span about 14 patent families. And we patent everything from composition, the matter of the drug substance, to how we make it, to biomarker signatures, to the methods of use, the cancers where it's used at, and of course we have a very aggressive global patent strategy. As I mentioned, our insights are important, but it's also equally important that we get validation from top partners. That's a key part of our strategy, is to leverage the labs and smart minds at top tier institutions. We have a number of milestones this year, as I mentioned, Catalyst, the 300 launch, the advancement of our CNS program, which you'll hear more about in the coming months. We'll have data from Fox Chase at AACR, actually, data from Georgetown, data from Hopkins. So all those data events could be catalysts. We'll finalize our IND enabling studies so we can start the phase 1 trials, both for our ADC program and also 184. Our radar platform is expected to reach well over 3 billion data points. And recently we announced at our earnings call a few weeks ago that we'll also be aggressively now talking with multiple biotechs and pharmas on how they can leverage our platform and entering into relationships with pharma and biotechs so that perhaps we can take a piece of the upside that we generate for them. And so there's been a lot of insight in the industry, interest in the industry to using these insights. So that's a quick overview. I think we're one of the unique companies in the space. It's a space that I think has the potential to really help advance our understanding and management of human disease. It's a space that investors can make a lot of money at because it's transforming and disrupting a massive industry that is in need of it. That's the most important thing, is we're in need. So as the saying goes, software has eaten entire industries, but in drug discovery, it's just kind of nibbled at corners of it. And as AI eats software companies, this is what AI is going to do in drug discovery. It's going to totally transform this industry over the next 5 to 7 years. And I believe we're at the forefront of that with a very experienced management team, proven platform, growing pipeline, and collaboration with leaders that showcase our experience.
Wonderful, Panna. Thank you so much. I really, really appreciate you being here. Shout out to Merrick in the chat, answering questions for us in there. So thank you, Merrick, for that. A really, really cool company. I have questions, but I know that there's going to be opportunities either in articles on benzinga.com or future events where we can get you in front of the audience yet again to answer some of these. So really, really wonderful. Thank you for taking the time with us today.
Patrick, thank you.
A pleasure. We will keep this moving, my friends. Keep this moving. Next up, as we move him over, is Saeed Zurabian, President and CEO of Kantara Therapeutics. That is a NASDAQ-listed company. KTRA is the ticker, KTRA. Very cool, very cool. Saeed, welcome.
Good morning. Nice to meet you.
Good morning. Nice to meet you. Nice to meet you. I have your sound. I don't have your video yet. Just a quick heads up there. But this has been informative right off the bat, and we're getting some great engagement in the chat from these investors. So guys, keep it coming. Thank you. I'm sure there will be plenty more things that we'll want to ask some questions about. But Saeed, whenever you are ready.
I apologize. I have my video is on, my sound is on. I apologize that you can't see me at this point. Let me try one more.
That's okay. Maybe check. I don't know if you have a camera cover, but maybe see if that is. No? Okay. That's okay. If you want to share your screen, perhaps we'll dive right in.
Give me 1 second while I do that with the.
Not a problem. Looks like we almost have you here. Yep.
Hopefully you can see this presentation.
Yes, we can.
Good morning. Sorry for the little snafu here.
No problem.
My name is Saeed Zurabian. I'm president and CEO of Kantara Therapeutics. We are a Nevada-based company focused on really 2 major advanced indications. The company was renamed in August of 2020 after we made an acquisition that added a very important asset. Our first indication for oncology indication for underserved patients is glioblastoma multiforme. I'll go into deep discussions about that. And we have begun a registration study for that effort as of January 6th of this year. The second indication we're going after is cutaneous metastatic breast cancer. It's a phase 3 ready asset, and we're in the process of manufacturing the drug so that we can start our phase 3 study. Both of these compounds were in-licensed from others, and we estimate a combined $240 million had been spent on these assets before they were in-licensed by us. And our go-forward plan for the GBM assets is through Global Coalition for Adaptive Research, which is we consider a major win for Kantara and a great path with an optimum trial design for our go-forward GBM studies. In addition to GBM and CMBC, both of our compounds have been studied in multiple other solid tumors and other indications. So, and we have multiple additional INDs and orphan drug designations that we already have in hand. The current status of the 2 compounds, the lead indication GBM is a started registration study, and CMBC is expected to start phase 3 study, the initial portion of the phase 3 study this year. I have mentioned about other orphan drug designations, Nevis syndrome and ovarian cancer as follow-on potential indications. Regarding GBM, estimated to be 800 billion, growing to 1.4 billion. These patients have really no viable current alternatives. The median survival is less than 18 months, and less than 5% of these patients actually survive 5 years. As you know, Senator McCain passed away from this disease, as did President President Biden's son, Beau Biden. Pretty large opportunity, 30,000 in US and Europe, as well as the recurrent settings. We have started a phase 2 registration study that's got an FDA-approved adaptive design, supported by multiple KOLs. And we were uniquely the only company who was authorized by the FDA to go into all 3 patient groups, which adds 3 opportunities for Kantara to succeed in 3 patient groups. And of course, we're optimistic that not only will we succeed in a single, but we actually have a good shot at succeeding in all 3 patient groups. Prior study data that was published at Society for Neuro-Oncology meeting last November shows that in every patient group that we have been studying in the phase 2 studies, we showed progression-free survival and improved median overall survival for the ongoing studies. We expect that the study at MD Anderson Cancer Center for the adjuvant setting patients and the recurrent setting patients will be completely enrolled, and we will publish the top-line results for these studies by the end of June. The first study for newly diagnosed patients has already